morning, my friend. How are you this bright and shiny and most importantly, slippery Thursday?
Yeah.
It looks spectacular.
It looks awful. I'm like sweating and freezing because, it like rained last night and then it froze overnight. And so my walk in this morning took like 60 minutes.
I couldn't imagine what the walk was because I backed out of my driveway and I got to back out and then turn around to go down the driveway. I backed out. I stopped the car. I start to put it into drive, and the car just keeps. And it was going like 5 miles an hour. It just keeps going backwards.
Dude,
and I'm like, what the frick? And once I got onto the grass, it finally stopped. But then, I mean,
scary.
It's weird because it's that ultimate thin layer of ice. You don't even see it.
Yeah.
I couldn't imagine it would be like a cartoon character trying to walk to work.
Yeah, I did not see it. There was one especially treacherous moment where I was trying to walk past a guy with two dogs, and we both almost ate it. Yeah. I went full hands on the pickup truck that was parked on the side of the street, and I thought I was going down. You should have
called me. I would have come and gotten you.
Oh no, I didn't. I honestly didn't know until I was 5 minutes into the walk at that point.
And it's funny, once I got on the highway, it wasn't bad. But of course, you get people on the highway who are like, there's traffic on the highway, assault the highway, and they're still going 40 miles an hour. It's like, dude, it's not the road, it's the highway. Just go. But the roads in town were just absolutely horrible.
Yeah,
so,
I bet. Yeah. Well, I'm just glad that I didn't eat it and end up with some kind of
No, we don't need you on the injured reserve list. We need you full functioning.
That would have stunk for sure. What's going on, man? It's Thursday. What happened? There was a Bank of England meeting? Was there a Bank of England meeting?
There was.
Okay.
What do you think happened?
I think they probably cut. It's cutting season.
They did cut by 25 basis points.
Oh, pound no likey.
But again, they got 9 dudes who vote. 9 people. I don't know their gender makeup, and I want to be politically correct. The 9 people that vote, whatever.
It doesn't matter.
Right. Two of them actually voted for 50 basis point cuts.
Really? Yeah. Oh, so that's why pound no likey.
Yeah, that's why pound no likey.
Wow. Yeah. I mean, yesterday you and I were staring at this, and if we could bring up the platform, we could tell a little story of sterling this morning. But, this rally from the low, first of all,
Sunday night lows.
Pound has been one of the stronger ones. It's been kind of the trend the last couple of years amid all the U.S. dollar strength. Right. Pound has been relatively stronger, so it didn't sell off as hard. But we were all looking at this rally here, and you can bring it across a bunch of markets. Bring it across Aussie.
10-year lows for sterling are 105. We're at 125, where Canada multi-decade highs, Aussie multi-decade lows, Kiwi multi-decade lows. So, yes, is it softer than the 135s we lived with for part of last year in sterling? Yeah, but not to the same degree as you pointed out.
And maybe what we're seeing, we'll get into it, maybe what we're seeing today is that they have more room to run. Yeah. But anyways, we're staring at this rally yesterday, Pete, and just continuing. Aussie getting back to almost 63 cents.
Yeah.
And it's interesting that, this pound got all the way up to 125.50, and now it is sinking all the way below 124, which again isn't the extreme. It's not 148 in dollar CAD or 60 cents in Aussie, like to your point. So it's not the most extreme from a price point. But this is a big friggin' move. I mean, this is 1%. This is 130 pips.
Absolutely. And the change in the difference in rates between the U.S. and the UK, they're 25 basis points lower. So, yes, it's different. But it's whenever we talk about rate differentials and currency pairs, it's also what the actual nominal difference is, what it currently is, and what the trajectory is. Mm-hmm. Right now, the trajectory in the U.S. is,
flat, down-ish, flat-ish.
Yeah. Maybe a little bit lower. I think there's a cut built in somewhere at the end of the year, which in my mind is like no one's got a clue.
Yeah.
Here you've got 2 of the guys saying that we should have done more, which leads you to imply, and the market implying a little bit, there's definitely another one coming out of the woodwork in the next policy.
Well,
next MPC
would have to change. Their data would have to be screaming off the page in the other
So
direction.
they're down today, and the trajectory is down, where ours is relatively flat. The trajectory piece is what drives. Again, the market had completely priced in a 25 basis point cut at this meeting. So it's like, well, if it's priced in, why you keep saying the markets are efficient? Why did we move from what was already priced in? It was the statement that, again, some guys were looking for even more. So that now starts to get priced in on the fly. That's why we see pound so much lower.
And you can even see it here. It doesn't tell the full story, but previously 3 of the 9 Bank of England members had voted for a cut. They were expecting 8 of the 9. All 9 voted for the cut. And to your point, it sounds like a few of them were even more dovish on the future path for interest rates in the UK. So really interesting one there. Yeah, man. I mean, don't we live in such a globalized economy though that if the first domino to fall were some of the more risk on economies, I don't even know if that's the right way to the commodity economies.
Traditionally, that's where you see the stress of pricing and demand show through first.
Sure. Australia, New Zealand, Canada, Australia, New Zealand ties to China.
Right.
So some of the just more, let's say, more volatile economies.
Yeah.
You see those dominoes fall, and then you see some of the dominoes fall across Europe.
Yeah.
And now the UK. The US, and I'll pull up the FedWatch tool while you enlighten us here, Pete. Are we now in an economy where the US is more siloed off from some of these other economies? Or, I mean, if you think about the last 10 years, every central bank has moved pretty much in the same direction, maybe give or take a few months. But yeah, now you're seeing all of these central banks move. And again, the expectation for the Fed this year is maybe 25, maybe 50 basis points lower throughout the entirety of this year. And it's the beginning of February.
Right. So we talk about, you mentioned the globalization of the economy, but we're seeing very disparate performance metrics.
Yeah.
The Chinese stock market dramatically lower, the German stock market lower, the CAC in France, the FTSE in the UK, and along with their employment numbers all contracting. So, yeah, there is this global, part of what we've seen in the last 2 weeks is that there may be an interest from the U.S. to again, we don't care about you guys. We don't want
to
your
take
products.
The global piece out of it even
right.
more.
We don't want your products coming in unless you build them in the United States to silo it even more. That's kind of a little bit of a different discussion, but yeah, we're definitely seeing a dichotomy in how the market is digesting this, and the UK being very comfortable. Again, their rates are still relatively high to
Sure.
rates in, Aussie rates in the 3s level. Kiwi
Even
rates
the
in
Euro
3
area,
level.
right next to them.
Euro, right, in the lower end of the 3 levels. So one of the tools you go to is, again, rates to stimulate your economy. And one of the good things that come with that is your currency softens up to get a little bit more competitive.
Well, we're definitely seeing that today. Yeah, I mean, let's take a look at
this will be interesting because they did try a little bit of a bounce right after the number. Okay, we got the bad news priced in, and the tape statement around the 2 guys wanting 50 was priced in. Now, what's interesting is we either see that kind of that spike lower, that algo-driven headline news, and then it kind of recuperates. And when we're back to 124.20 or unchanged on the event, in my mind, from my years of doing this, that means, okay, that's parsed with, and chances are we trade a little bit higher. Now we had the lower trade, a little bit of a bounce off of that.
Yeah.
Now we're rolling. If we roll in to the U.S. session, getting through 123.5, I would think the market's going to be a little bit challenged as to how much more downside there is to do. So it'll be interesting to see. And again, this is downside not from 121, which we were close to at some point, but this is downside from the upper end of the range.
Well, yeah, you look at this, and it doesn't look like strength, but this is relative strength to almost any other major currency outside of maybe the yen. The yen depends on the week. I don't know what the heck's going on with yen.
No, but and Glenn ran a great series of correlations yesterday. I think he posted it on YouTube or on our somewhere on social. That yen correlation to the other currency pairs is zip.
Yeah.
I mean, it's 0.16, it's 0.06. Yen's just, when you trade, you may have an idea about Aussie yen, and that actually has the highest correlation. And I don't know if that's because there's more trade or whatever. None of them significantly correlated. So do you have a pairs trade offsetting risk? I don't know in that one. That's a harder thing because they seem to be kind of independent, uncorrelated occurrences. We do know euro sterling and
So let's take a look at that euro sterling just to see some of this. As you can see, we've been hanging out here around the lows for euro, highs for pound, showing you a little bit of that relative strength. And historically, you see the last several years, again, we've been here at not the lows that we saw back in this 2015, 2016 kind of price extreme, but the lows for the last several years, euro versus pound. And so you start to wonder, okay, well then let's take the US piece out of it, Pete. Let's say they're siloed off and, it's going to be tariffs and kind of all this other stuff. And the interest rate story maybe isn't as interesting. Is there potential for mean reversion here? Let me go to the weekly chart just to maybe show probably a better picture. Yeah, is there potential here for mean reversion in the longer term? Who knows what's going to happen today, obviously.
Right.
The pound's going to be flying all over the place just based on what's going on. But in the long term, is there something here for the euro closing the gap on the pound if interest rates in the UK close the gap on where the ECB has them?
Absolutely. And I hate being armchair quarterback, but when you look at that euro yen chart, even on the shorter term basis, and you were going into this event risk, that gave you an interesting level in terms of a low within the range if you wanted to be long some euro against sterling.
Yeah.
And that would be one way to actually play, kind of take out just a pure dollar cable exposure and play the relative value of the two at a better. So in other words, buying sterling here, hoping that they are dovish in their statement. You're buying a market that's rallied 350 pips. Here, the euro sterling trade gave you the ability to get a little bit of value in that euro piece at a much lower level.
Yeah,
So
I can see
right there. You look at it. That's a great time zone to look at it. You don't want to bury yourself in so many pairs you get paralyzed as to what to do. But if you're again a pot odds trader looking to trade the range, you want to be long at the bottom, short at the top. This is a great way to find that versus trying to buy sterling or even buy euro up here, the euro sterling pair. And to build this anywhere else, ETFs would be such an expensive exercise with FXE and FXB. Futures, you can build it, but it's difficult to do and it's hard to construct. What I love is that I don't have to go build something. The product's here. I can just trade it.
Well, and a nice piece of this that I personally look at with markets like this, or markets like crypto or whatever, where the nature of them is so customizable.
Right.
Let's say, is you can say, okay, I have X dollars or I have Y number of lots that I want to trade in Forex or crypto or whatever. Versus, a futures or more structured market where it's like, okay, I want to chop up though, going into this Bank of England meeting. Okay, I've got an idea of what's going to happen pound dollar, but instead of putting it all on the line there, to your point, Pete, going into this, if you're going to short the pound, let's say, doing it with a long euro versus pound exposure versus a long dollar versus pound exposure is a better value play. Now, that doesn't value plays aren't always the winner, and you especially look at the stock market, the growth play, the trending play has been the winner.
We can't all be long Palantir. So,
but this allows you to say, okay, I can, if I wanted to just put on one futures contract, I've kind of have to put on one futures contract, and replicating a non-dollar cross is actually really hard to begin with. But what's really cool about these events in a Bank of England and a pound here is you can chop up that money, that exposure, whatever you want to say, that trade idea, 3, 4, 5. I mean, actually, I think you can do it. Most Forex providers have, I think, 15 to 20 pound pound pairs. But that's a really nice piece, Pete, because a lot of times it's a binary bet. I mean, let's say it is Palantir earnings, and it's like, okay, I gotta. Even if I'm using options, I'm pretty much betting up or down on this Palantir earnings. With this, a lot of nuance to it that, at the end of the day, pound gets smoked. That's the story. But you can layer that in so many different ways. And I totally agree with you. We haven't looked at this euro sterling in so long. Right. This would have been a better value play from shorting the pound versus you go to the daily chart over here, and it would have been like, all right, I'm shorting at 124.50, maybe 125 if I got a really good price. And this market can easily run into the 130s and get away from me. Right.
And that's what, the fact we offer 82 FX pairs doesn't mean we want you to go down the rabbit hole of all of them. But when you look at, okay, I got a binary event, we know that looking at that euro sterling, just eyeballing it, the vol on that pair is a little less than having euro US or sterling US. So you're mitigating a little bit of the event risk. And from a value level, from a pot odds standpoint, you're getting the lower end of the range. So it gives you the market anywhere from a pip to a pip and a half wide. So it's a liquid market. Gives you a little bit different way we talk about how do you shape exposure around binary events. We always talk about getting smaller, or how can we sometimes optimize the fact that we don't know what these guys are going to do. We don't know what the outcome is going to be. How can we find opportunity in it? This is a case where you move one level down from the core all dollar-based pairs into a non-dollar-based pair for a little bit better opportunity.
Well, and it's all risk-reward as well. So, I mean, take a look at it this way for a second. I'm just going to put these right next to each other so it's easy for me. Euro sterling, up 0.6, 0.7%. So essentially, pound is down 0.6, 0.7% against euro. You look over here and you say, well, Frank, I would have gotten more bang for my buck being short this pound versus the dollar. It's down 1%. Okay, this is a 100 pip move. And looking at the same, we're going to look at the same time range for both these markets here. Looking at the last several months, this is a market that has moved more than 1,000 pips. And so this is 100 pips on more than 1,000 pips. This move here is about 50, 60 pips over the same time range here. This is a 300 pip range. Yeah. And so when you're talking about risk versus reward, and it's, of course, I have to caveat this, anything can happen at any time. The euro can, for some reason, get annihilated relative to the pound, but the US dollar, it's a euro-US dollar story. They're both getting hit. Anything can happen, weird stuff. But when you look at, okay, I want to try to make X amount and only risk Y amount.
That's the key.
Here, you're looking at what have been a smaller gain in your short pound position. But to your point, Pete, the market is only 50 to 100 pips going into this event, 50 to 100 pips away from its low for the last year, so a little bit better value. And this market has only tended to move, a 30, 40, 50 pip day is pretty much the biggest day you can see here in all the data for the last several months. And so you got to weigh these things,
And you're right. Your statement around, I would have made a full percent on that sterling move. That would have been the place. we don't know what these events are going to take place.
That's if you were
could
on the
have
right side.
lost a
Yeah.
percent on that full move. I don't want to. You've got to always think about not what you're giving up, but what you're protecting around uncertainty. Again, this is a known unknown. We know it's coming out. We don't know what the market's going to do with it.
Sure.
And I would always look to find a way to get the exposure I want, but how do I do so in the most efficient way, both if I'm right and if I'm wrong?
Exactly.
And I think this is one case where going one level down the chain is a really interesting way to do it.
And that's why so many people, and again, I don't want to make it seem like the pound dollar pair is like the most volatile thing in the world, but it's relative. And this is why so many people, Pete, can and should, I shouldn't say should, so many people starting out in, let's say, the options world go to SPY.
Right.
The options aren't the most expensive. You can go to Palantir, you can go to Tesla, but the risk to reward is probably the same, maybe more risk per reward in those markets.
Right.
Whereas the SPY market, it's 500 stocks, it's more diversified. There are a lot more people in there who've been efficiently pricing those markets. And so the options prices aren't the highest, but it's a good spot for I can make X amount and only risk Y amount. Of course, again, anything can happen. And same thing here. I don't want to make it seem like it's crazy, but this is why so many people stick to the majors versus, for example, no reason not to necessarily trade the peso, but the peso is going to be way more risky than the pound dollar or the euro sterling pair. And so you got to weigh these things. It's not always, my whole thing is always, Pete, that like the greatest potential reward isn't synonymous with the best reward to risk ratio.
Right.
Just finding the biggest number doesn't mean it's the best number for you to buy, sell, or whatever.
We want to all convince ourselves we're going to dance through the raindrops and always pick the right side. In trading, no one
It doesn't happen.
picks the right side all the time.
Yeah.
Some of the most successful firms in the world make it by 52% right, 48% wrong.
Exactly.
So we need to accept that. So we got just a couple minutes left. Binary event risk coming up for tomorrow. And again, the one thing I wanted to talk about too, Aussie's down today, dollar Canada's back up today.
Dollar's making a comeback.
Dollar's making a comeback. That idea that, I missed the bottom in all these because I didn't step in Sunday night when it looked like the world was collapsing. Nothing goes in a straight line.
Yeah.
This is giving you a nice opportunity to, if you think the dollar has kind of put in highs, it's giving you the ability to buy euros at a better price. It's giving you a better level of self-Canada. So this is where we look for opportunity. Tomorrow, both Canada and U.S. have non-farm payrolls. We will take a look to see how we'll get movement off of both of this. We'll see movement in Canada off their number and movement in
Canada, this is the employment change. They're looking at 25 versus the previous 90. Remember, the last employment data from Canada was actually more positive than expected. Again, they're expecting the unemployment rate to rise. Unemployment's supposed to be flat in the U.S. 170 for the non-farm. I'll ask you over/under in a second, but isn't that the most like -3 kind of spread for this market? If you're talking about football spreads, -3, very like normal, middle of the road.
Yeah.
170 is kind of like they just like fart out a number that's like 170.
Well, yeah,
it's right in the middle.
I don't care. All I want to know is what the forecast is, which is a semblance of guys who've got the miserable job of trying to guess at this thing.
Yeah.
Because the market won't move off of the number itself. It'll move off of what the forecast is versus the actual. So if I know the forecast, the actual comes out, I'll know what the market will do. And all I want is movement. I don't want to worry about what the number says.
Yeah.
So this is never a macroeconomic exercise. This is an exercise around opportunity. So it's 7:30. I get 2 bites of the apple, one in the U.S. numbers, one in the Canadian numbers to find opportunity.
And it actually sets up, the tariff talk has calmed down so much that this number will probably be a big mover. I was kind of worried it was going to overtake all of it.
It can get lost in the noise. Yeah. Now we're back to U.S. noise. So, again, some good stuff to talk about, and we'll talk about this tomorrow. See if any of these have changed and where the setups, some interesting setups may lie, whether it be in the dollar or non-dollar based pairs. So, guys, coming up next is Tom, Tony, and Vanetta. Great to see you in here, my friend. Safe and sound. We'll be back with you tomorrow at 6:30. Have a great day.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Forbes called us best online for options trading. With stockbrokers.com, we're number one for options and futures trading. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
I bought a stock when I was first old enough to open a brokerage account. It went up 1,000% and I made a bunch of money and I was hooked. I felt like I was just pretty much gambling in the markets. I had a big win and it was mostly failures thereafter that. And I thought I need to find a way to consistently pull money out of the markets and find a more consistent, repeatable system. Fast forward, I ran into tastylive, really loved the market measures and the data they had behind to back up the research they were doing. My biggest takeaway is that you can find an edge in financial markets. It lies in volatility overstatement, volatility mean reversion, and having solid mechanics.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade.
Know someone who needs a better broker? For 1 month only, earn $500 for each qualified person you refer to Tasty Trade. See how it pays to have friends? Terms and conditions apply. Tasty Trade.
Come on, you know it, can you feel it? We got some things to talk about. Pre-market, it's early, but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Oh, yeah. Wake up, knuckleheads. It is Thursday, February 6th, 7 o'clock a.m. Central Time on the dot. And no, I am not your Lord and Savior, Tony Batista. I am instead Victor Jones, but you're not here for me, of course, the guest host, the Raggedy Ann of the bunch. You're here for the roses amongst the thorn. You're here for Tom Sosnoff and Vanetta. How you doing, everybody? Good morning.
Oh my God, Tom, what are you gonna do? Look at all this Black history.
We got
yeah,
you, Tom.
this is yeah. You know,
They
it's been a
can't
fun
cancel it.
Yeah, what's with this DEI thing, you know? All right. But I it's fun. This has been a fun week with different co-hosts every single day.
It has been super fun. Victor, it would be super helpful if you were on an early 2000s reality show and we had some footage of that.
Is that who is the person who was on that? Was that Rich?
Rich.
Yeah.
Rich.
Really? I missed the segment.
He texted me last night. He goes, that really caught me off guard.
So you've got Rich on an old reality TV show. You've got Scott on Oprah. What else do you got buried in the archives around here?
Ooh, yeah, I forgot about Scott on Oprah. Yeah, Rich was on a reality show. Who else was on this week? Yeah, I don't think anybody else. I don't have any good old videos of Vecchio, you know.
I bet Vecchio is in something. Probably not like a reality show, more like maybe like some security tape footage.
Like C-SPAN. I'm calling C-SPAN.
Maybe. What's that police show I used to like, Vanetta? What was it? Live PD?
Oh, Live PD. Live PD.
Live PD is great.
Oh, goodness. You were addicted to that.
Live PD? Yeah, that show was great. I just want to know how these guys can just drive around and like you can every time you pull over somebody, automatically they've got drugs in the car.
Wow.
I don't understand. Is this like a a new version of Cops?
It was, Victor, yes.
I don't have a television, so you're going to have to catch me up on everything that happened after 1994.
Wait, why don't you have a television?
Is O.J. Simpson still a hero?
Why don't you have a television?
Because I think we're going in the wrong direction, Vanetta. Do you want to down that path?
No, I don't. I like to watch shows about sexy realtors, so you leave me be, Victor. You leave me be.
All I can say, I don't watch a lot of television, but my dad was very anti-television, so we barely had televisions growing up, and we were only allowed to watch a very small amount of TV, like a half hour a day. And I think it backfired. Like I definitely, I rebelled against that TV stuff. My friends be sitting there watching TV for like 6 hours a day, and I had like half an inning of a Mets game. Yeah, it didn't
So
work.
you're telling me my son, who is also going to grow up without TV, he might turn out like Tom Sosnoff. Is that what you're saying?
Well, I think your bigger risk is Tom Preston tried to raise his kids without TV. And so I think if you want to look at role models, it all depends how you want to view TP. I mean, he's TP. He's kind of normal, kind of crazy.
But Victor, I saw that video of your kid doing, is it Muay Thai or Jiu-Jitsu? He's such a little peanut. He's such a little cutie patootie.
He's a cutie, but he will tear up your shins if you let him. If you let him anywhere near your kneecaps, he's busting out both of them. But that's more us preparing for the rapture than anything.
Oh, no.
I'm sorry. I'll stop. For me, it's the evening here, so these jokes fly. I know for you, it's early for end of the world jokes, so I'll that stuff.
But are you gonna let him compete? Like, is he gonna go?
Are you kidding me? He's mandated to participate in physical combat.
I have to tell you, I love watching the. There's a lot of TikTok videos where these young kids, they're like 5, 6 years old. They have some it's probably the same stuff as your son's doing, but I like when the girls kick the boys' butts and then the boys just start crying on the mat. They're so good. There's it's like cats versus dogs type thing, Mm-hmm. and it's just the videos are just so good. The girls are so cool and calm under pressure, and they just destroy these boys, and then the boys just lose it.
So my son's 5 years old. Our daughter is 3, and he's been in BJJ and Muay Thai for a couple of years now. Muay Thai just started, but BJJ for a while. My daughter She's the fighter. She's a gangster. She's got a nasty left hook that nobody is taught.
Oh my God, good for her.
Oh, she's a fighter, and you can't tell her anything. She's in her no phase, Vanetta. It's like, hey, baby girl, are we eating breakfast today? No.
Where did she get that attitude from, Victor? Where did it just spontaneously generate? Where did she get this attitude and this know-it-all sort of vibe?
Hey, Jazzy, we're in the middle of a crowded mall right now. Do we want to put our underwear back on? No. Okay. So that's how things are going over on this side of the world, Vanetta.
Oh, man. I still think it's a crime against humanity that you didn't name your son Dow, so he would be Dow Jones.
I didn't have a choice.
Now that I'm thinking about it, I'm a little upset that he didn't either.
Right? I mean, iconic.
It would have been on point.
It would have. But he's a third generation. Do you know that?
A third generation Victor?
Yeah. My father's name was Victor, and my name is Victor, and little guy. He didn't have there was never a question.
Aww.
Well, there might have been a question from your wife. There was never a question.
His legacy was set.
I will say one thing. There's not a lot of Victors in Singapore, so he's going to stand out.
Yeah, he will, for sure.
Yeah.
Are you still calling me your resident Asian? What do you call me? Like your Asian analyst?
Oh, yeah.
It says it on the bottom of the screen right now for you, Victor. Can't you see? No.
Well,
no, but how is it to trade in the hours that you were in? Like, what is your setup like?
I don't know. It's put the kids down. It's get a few hours and then get up maybe like 1 in the morning and then trade and get a couple hours during the day. That's about it.
It's really hard. When I was in Singapore, I've been in Singapore twice, and both times it was really hard for me.
It's 14 hours, right, ahead?
Mm-hmm.
I know.
So you just trade the open, you get a couple hours, and then you're at it for the close. That's
I thought I was going to be able to pull. Like, I was convinced before I got there that I could pull this off easy and trade when I was there. And then as soon as I got there, I was like, screw it. I'm just putting whatever I want to do, and I'll see how I do in the morning. I couldn't do it. I
had to change my style coming out here. Like before, I'd be winging them 140, 150 times a day. Now I gotta pick my spots and like set it and forget it type stuff. I'm playing more the 30-day stuff than the 30-minute.
I mean, there's some futures you can trade, you're overnight, but daytime here, I'm sorry, the other way around. But daytime here, you're wherever it is. But you're talking just pure futures. That's it.
Yeah, it's pretty much. But that's what I wing anyway. I became a complete degenerate as soon as I figured out I could wing these things nearly 24 hours, 6 days a week. I never went back, and I'll never go back.
Yeah, it is a weird place to trade, and there's a lot of traders there. I don't know. I always found it weird.
Are you able to trade things like earnings, Victor, or you more just like stick to like indices or?
Got to stick to commodities.
No, I'll trade. I'll do binaries too because it's just like it's just the close is relatively early in the morning, but I'm up for it, so I can get stuff in on the close, and then I'm there for the binary, and then the open is like 10:30 at night here, so I'm up by then. I'm up at then.
Okay.
Yeah, I trade binaries. Faux show. You know what's hard? It's hard keeping up on politics, though. That's what it's gotten a lot harder to do that.
Oh, poor baby.
Hey, you're not missing anything. Okay.
Okay.
It's been about 2 weeks since the inauguration, and we're all over. We're all done with politics already. We have to figure out.
Wait, Victor, I do have a very important question though. Can you watch the Super Bowl?
Oh yeah, it's very weird though. Have you? It's weird watching something at Super Bowl 7 in the morning.
Oh, it's 7. Okay.
Yeah, especially I've done it here in the past, and I was with my girlfriend, now wife, but my girlfriend at the time, and my wife was asking me like, Like why are they kicking it to the other team? That questions. So that's always fun, watching it 7 a.m, and my wife is like, who's that team?
Why are they stopping again?
Yeah. How many points do they get for that?
Yeah.
They went out of bounds, honey. There's no points for that.
Well, Victor, I don't know if you heard or not. Well, Tom is off on a little adventure. Tom, why don't you tell Victor where you're going?
Oh, do I have to?
Yeah.
Where are you going?
I'm going to Vegas today.
Are you really?
Yeah.
Gonna go see about some nieces? Frankie Walsh?
No nieces. No nieces. This one is on the up and up.
What are you doing?
Just hanging out for 2 days with my wife, and I are just going, hanging out, and gambling. She wants to see a show, whatever. We're just going for 2 days.
What show? What are you going to see?
Oh, wait till this, Victor. This is the best part.
What are you going to see? What show? What show?
She has been bugging me. She wants to see Blake Shelton. And so I'm going to see Blake Shelton against everything I believe in, but whatever.
You know what? I think you're going to enjoy yourself.
Oh, I love Vegas, so I'm fine.
No, I think you're going to love the show.
Oh, whatever. I'll be fine.
Tom did learn how to line dance last year. Katie
didn't.
taught it.
No, he didn't.
No, there's video. It went viral.
Yeah, I saw that video. He didn't learn. I can tell you, he didn't learn.
I can tell you, I didn't
Shimmy.
learn. I mean, I took dancing
God
lessons.
bless Katie. God bless Katie for the attempt.
I didn't know Katie was that good, and I didn't know she knew all that stuff. But yeah, she's really good. But I took dancing lessons when my daughter got married. She made me take dancing lessons with her, and it was like, she's like, Dad, we're going. I bought you a package.
How did you not record this? This would have been more viral than like Dancing with the Stars.
I know.
You know how crazy people would have.
It was a closed set. It was a closed set, Victor.
Oh.
So there's like a dance studio just a couple blocks from my house, and my daughter bought. I don't know. But my daughter bought this package for me, like 3 or 5 nights I had to go, and we played one song, which she picked out. We did one dance, and it took me 3 or 4 times to learn the whole thing. And then at her wedding, I forgot everything. I panicked.
You panicked. What was the song?
It was Butterfly Kisses.
Of course.
No, it was a Bob Marley song. It was a Bob Marley song.
What?
Yeah.
You know, Kate is about that Rasta life.
That came out of left field.
It was actually, it's a song I like. I forgot. It was, I don't remember which one it was, but it was a Bob Marley song. And
I know. He's got a lot of good songs. That's very true.
So what kind of dance? It was just like it
was a bachata.
Yeah. What could you have been learning to dance with your daughter? Just a simple 2-step, was it not?
I don't know what they call it. It was like, they have an instructor, and she taught me how to, I had to, and Case would get really mad at me. She'd be like, "You're not even trying." I go, "I am trying. I'm just not very good." I'm like, "I'm trying." She goes, "Dad, we did the same thing 30 times. Okay. It's not that hard."
So there's video of the wedding dance though.
Oh
100%.
yeah.
I did. No.
100%.
You're right, Victor. Yes.
Don't touch your collar. Don't give me that nervous tick. There is video, and we're gonna get our hands on it.
I don't think there's video.
No.
But,
oh my God.
That there is.
Well, buckle in, everybody. We are in for a very interesting show today. We are so honored to have Mr. Victor Jones himself with us all day long today on our cavalcade of stars. Victor always bringing the heat, bringing the thunder. For you today at the top of the 8 o'clock hour, I'll get some interesting insight because Trades from the Research Team, the world's greatest financial think tank, is going to present their trade ideas to Tom and Victor. And Victor, please don't make the research team cry.
What? Me? If they can handle Tom, you think I'm going to come in here and do some damage? Do they play the music still? The entry?
Yeah, they do.
Who does the Rasputin song?
Oh, that was Anton.
Anton.
Yes.
God,
Yeah.
that's my. It's one.
What would be your walk-up song?
That would have been one of them.
Oh, Rasputin.
I would probably do something like Tyson's walkout music. There's no song. It's just one note that plays. And I would come in with just a towel over my head and no socks on, just leather boots strapped up, ready to go.
Just your jock strap like Tyson.
Hey.
All right.
I hate to burst your little bubble there. I hate to burst your bubble, but the only way that works is if you're Tyson.
That's true.
Like that does not work for anybody else. That doesn't intimidate anybody.
I mean, to be fair, Tom's walk-up song is Pink Pony Club.
I think if I was trying to raise capital for a startup or something and I was coming in for a pitch, I think that's what I would do, Tom.
That's pretty good.
I would go Tyson. What do you think the odds are that like somebody would give me money just on the theatrics?
As someone who has had to make that presentation in front of a private equity board, I can promise you this right now. There is no chance that you're doing that when you get to one of these private equity firms.
Give me old razzle dazzle.
And you have to make your pitch. It is it is absolutely one of the worst experiences ever is going to make a pitch in front of a private equity board, because just you sitting down there, like the one thing you have to remember is that every single person at the table has to put their money, like the way private equity firms work is that it's all for one and one for all. Like they all have to invest personally into the deal because it's just the way their corporate structure is. So every one of them wants to find a reason to hate you. Like only person that wants to get the deal done is the person that brought it to the board. The other ones are all like trying to find problems with it because none of them get along. And so it's never ever an easy thing. It just really isn't.
All right. Well, continuing with our run of show, we are bringing in heavy hitters. We got Chris Vecchio in the house for Let Me Explain. Tom, how are you going to survive a Vecchio Jones 1-2 punch?
Oh, no, I'm used to these guys.
You're going to get buried in macro analysis.
I mean, I spent all week doing Last Call with Vecchio. I mean, we're in a good spot right now.
Well, that's going to be at 8:40. Then 9 o'clock, headed your way. A new market measure is part of our Zero DTE series, Diagonal Wings for Zero DTE. Oh, that's interesting.
Well, we got a lot of requests from. It's a tough segment, but we got a lot of requests from viewers who've been writing trade zero DTs, and they're like, why don't we just diagonalize this? I'm like, I don't care. Do whatever we'll give you a study. Sure.
All right, I would be interested to see how that breaks down. And then my personal favorite, live from the trade desk, around 9:30, Victor Jones and Scott Sheridan. Have you guys done a segment together before?
Scott? Oh yeah, a couple.
Okay, I couldn't remember.
It was so funny yesterday.
I'm looking forward to it.
Yesterday we had Rich on and we were doing all this stuff and the whole show was funny, and then Scott comes on, and he's Mr. Depression, he depresses everybody.
That's not even remotely true, Victor.
Anyway,
oh my God.
So not true. It's such an unfair characterization.
Scott is literally living his best life.
He's like
chilling
Mr.
in
Negative.
Arizona, straight pure vibes, man.
So somebody writes to me yesterday, right during the show, and they go, oh, you brought the KOD on to depress everybody. And I'm like, I know, exactly. I wrote the guy back, exactly.
Was that you writing from your own burner account to yourself? Hey, I got to keep it moving here. That's our run of show. We got a great show for you today. Programming note tomorrow is #Fan Friday, and you're getting an all-lady show tomorrow. Ooh, I will be joined by the very talented Liz and Jenny, but they would love your trade idea. So if you have a trade idea for Fast Market, we would love to see it. But hey, in the meantime, in between time, you guys want your daily dose?
Oh, yeah.
Yeah. All right. Hit me with my theme music. Let's go.
Our leading story. Breaking news.
Coming
across the wire. Leading story. Top story. Just in.
In today's headline.
This just in. Breaking news.
All right, everybody. Today is a very thrilling Thursday. It's February the 6th. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news And headlines. My name is Vanetta. Are you ready for the news?
Sure.
A couple earnings. I finally was able to pull this up. See, BAT is very useful, but on the earnings horizon, Eli Lilly reported this morning, so did Peloton and Roblox, but coming to you after the bell today, you have Yum Brands, but you got Amazon, you have Pinterest, Elf Beauty, and Expedia.com.
You know what's weird is I thought somebody emailed us yesterday and said that MSTR had earnings last night.
Yes, they did, yes.
Well, the stock is unchanged.
Well, I have some interesting news, but give me 2 seconds for that. But hey, do you want to get into the headlines?
I mean, but the expected move was wasn't it like, well, it's weird. Anyway, go ahead. You sure? Go to the headlines.
Yes. But I have a MicroStrategy story, and I will break it down for you. So let's just go.
Beautiful.
All right. This headline says why individual investors may want to rethink a set it and forget it strategy in 2025. The torrid 2-year stretch that prompted the S&P 500 to gain around 70% is stalling, and analysts are worrying or warning that individual investors that reaped large gains but just by parking their money in an index fund that was buoyed by the Mag 7, those glory days are over. Would you offer similar advice?
Well, first of all, the only reason that those people made as much money as they did is because they didn't listen to this kind of advice. I mean, I'm not a passive investor like that, but what I will say is that if you are a passive investor, you've got to turn everything off and just close your eyes and not listen to that kind of advice, because I guarantee you 2 years ago, they said the exact same thing.
What about you, Victor? What are your thoughts on this advice?
I don't know. I'm biased because I'm an active investor, and I think there's some parts of my, I don't know, money. That seems weird, but there's parts of the money that I have that is it passive that I don't touch.
Right. I think there's all components to some people that some of their money is in a more passive environment.
But that wasn't the question. The question is,
no, I know.
Yeah.
But if I'm a passive investor, there's a 0% chance I come across this article and go, hey, honey, we got to throw caution to the wind here and start and get out of our robo advisor and start winging futures around. I don't think the article matters to anybody. So it's not going to active investors are already active. Passive investors are not going to change based on some person's point of view. I do think as soon as we jacked rates up to 5%, we entered into a brand new world, and the set it and forget it became a lot less easy. It's in my personal opinion.
Okay.
We're in a world for the next decade that it's going to be really hard to just put park money in a thing and then watch it run. But
hey, here's something interesting. Fed Reserve Bank of Richmond President Tom Barkin says the economy is fine, but government policy is the real wild card. He says he doesn't see signs of an impending recession in the data or in anecdotes about the economy, but he does say that there are plenty of unanswered questions on the Washington front. He says that list includes tariffs, immigration, deregulation, tax cuts, and energy policies. Again, these are not my words. This is Tom from Fed's Barkin. What are your thoughts?
I mean, that's such a. I mean, listen, I'm okay with doing news and stuff like that, but stupid ass headlines where some guy just quotes every single thing.
Not some guy. The Federal Reserve Bank of Richmond president. Put some respect on his name.
The Federal Bank Reserve. I mean, somebody that just lists out the 6 major headlines is not actually adding any value to anybody. So that's
there's some. It's kind of hard to separate the two.
It's a clickbait story. It means nothing.
Okay, how about you?
I wish I don't know, but I wish people who said this stuff, the economy is fine. I wish I could go send them to certain I wish I could send them to a certain part of Chicago. Go, you know what? Stand here and say that.
Sure.
I wish I could take them to certain parts of Denver, LA, and just go, I'm going to drop you off here for 5 hours, and all you get to do is just go around telling people that the economy is fine.
I do want to talk about bonds. Will that make you salty, Tom? Can we talk about bonds?
You can talk about bonds all you want. Talk about
all right,
bonds
what are you doing in bonds?
We're flat on this morning, but
okay.
We've been long. We're just looking. We're hoping that they pull back a little bit here, so go lower so we can buy them. That's all it is.
Why? You think 116 is rich? Why?
I don't think 116 is rich. I think 116 is
just because you're too fast.
No. I just think 116 is not cheap. So I like buying things that are cheap and selling things that are expensive. I don't think it's expensive, and I don't think it's cheap. It's right in the mid range. Like I was buying them all the way down and selling them all the way back up. It was a good trade. Right here, they're not that interesting to me.
Okay.
I mean, we're traders, right? If I think it's overbought, I'll sell them. If I think it's oversold, I'll buy them. But right here, I think it's mid-range.
Just so I understand your range, though. So if 116 is not interesting, what is? Is it like 114 or is it 112?
Anything
is their value?
Anything under 114 gets interesting again, and 112 gets really interesting, and anything over 120 gets interesting the other way. So they're right mid-range to me. I mean, listen, I've traded bonds every single day in 2025 so far. So it's not like I'm not participating. Today's the first day I don't have a bond position on. I closed it out yesterday into the rally.
Interesting. Hey, well, let's check in with our Asian correspondent, headed to you, Victor Jones. China is challenging Trump's tariffs at the World Trade Organization as package shippers warn of chaos. I know you might have a hard time following the news, but Victor, we were on tenterhooks because we had received information. It was a 12-hour period where the U.S. Postal Service said they would stop shipping packages from China to Hong Kong. Your girl was upset because I'd buy a lot of crap from China and Hong Kong. But then they did reverse it. But China is appealing to the World Trade Organization. They filed a complaint that the 10% tariff on Chinese imports and their cancellation of a duty-free exemption, this is the de minimis exemption for low-value packages, they're arguing that the actions are protectionist and that they are in violation of WTO rules. What are your thoughts, Victor, on the ground in Asia?
What are my thoughts? Are we one of the only ones with the de minimis carve out?
I think so.
And if we are, how can you go to the World Trade Organization barking that this is somehow an unfair practice if we're one of the only ones who have done it? That's one. Number two is,
if it's the largest trade partner, like even it may only be one of one, but that one is.
If I'm not mistaken, 30% of the de minimis the shipments that come in under this de minimis carve out, which is under $800, it used to be $200, they moved it to $800. 30% is coming from China, 30 or 50%, I can't remember the number. So it's 100% a China issue, and I couldn't imagine why the World Trade would rule on this in any one.
Well, 1.36 billion shipments entered the U.S. using that de minimis provision in 2024, and that was 36% up from 2023. That's from U.S. Customs Border Protection data.
People are getting mad at me, but do you get to not pay sales tax because something is cheap? If I buy something $10, I don't get some de minimis carve out. So I'm down with giving people de minimis carve-outs if it applies to me, the consumer. And if it doesn't apply to me, the consumer, I could care less if anybody, China or anybody else, has to start paying for duties on shipments under $800. I know that's going to make stuff difficult for people who pay for Shein or Temu stuff. I get it. But logically, I don't understand why this is a problem.
Tom, how about you? What are you doing in your Chinese retailers? They're taking a hard PDD hit, especially hard PDD owns Temu, Alibaba. Don't make that stank face at me.
I mean, I'm long Baba and Baidu. That's it.
Okay.
And they got hit a little yesterday, and I think they're both higher. Yeah, they are both a little bit higher today. I'm playing the big tech stocks. I don't really care about Temu and Shein.
Okay. All right. Hey, how about this headline?
I think, by the way, I think all that stuff is a buy. I think all that stuff will just be collateral. It'll be negotiation collateral. And if you're lucky and you got long enough time horizon, you just buy all the rubble through all this chaos.
Tom, where do you think all of the stuff from TikTok Shop comes from? You love TikTok Shop.
I mean, I've never bought anything from TikTok Shop. I know Beth has, but I don't really, none of this applies to me personally because I don't buy this stuff, but I trade all this stuff. I've been long China for 2 years. I mean, it hasn't gone anywhere. It's probably been the most consistent premium sale that I've had on the board for tech stocks because I've taken no heat to the upside in like 2 years. So all the calls we've sold over 2 years have just kind of all melted to zero, and the puts have done good. So, I mean, selling premium in these Chinese stocks.
Victor, you're making a face.
Because what the hell are you talking about? These stocks were up 50% minimum. Some were up 100% in a 2 weeks in a 2 week span. So you saying they haven't gone anywhere is crazy.
I'm only
in September,
talking about
all of these stocks almost doubled.
I'm only talking about Baidu and Baba. That's really it.
Oh, fair.
All right.
I mean, I only trade those two.
Hey, keeping it moving, Tom, this headline is talking your book. Now tell me this is a stupid-ass headline. The yen is back in favor as currency traders shun the dollar. Ha, ha, ha. Let's talk currencies.
Okay, well, you could talk about the yen back in favor all you want. It's still trading for 65, almost 66. Yeah. I mean, yes, we are long the yen. We've been long the yen now for a year. I don't know what to say. Like, I don't trade it. We're just long. I'm long futures. I'm short puts. I'm short a few out of the money calls, but basically I'm just straight long yen, and I've been that way for 2 years. In about another year, I'll probably get back to even.
Victor, do you trade currencies?
I wouldn't call myself a currency trader. I'm leaning long yen though.
Oh, okay.
Not good. If this thing gets moving to the upside, it's not a good thing.
I was gonna say, is it not good because you and Tom are on the same side of the trade?
I don't think. I think we were long the last time this thing spiked higher. So I don't know.
I mean, I need the yen to go back to I need 68, 69 in that range. We're like 66 right now. But I also need the British pound, the Canadian dollar, and the euro all higher too. I'm long everything.
What do you think is the dopest physical currency? I think the yen is the actual piece of paper. I think the yen is the dopest physical piece of currency that I've ever personally seen. That's a really interesting
question because I've never even thought about that. I've never even thought about that.
I mean, I love the pageantry and the majesty of Her Royal Highness on a pound note.
I mean,
I love the colonialism.
Personally, I have the most risk in the pound, but I don't know. I'm not sure I would agree with you, but
I always find it fascinating the faces you find on the notes. That's why I like to ask the locals. Hey, what's up with this guy?
What's his story? What did he do?
What's his hell about?
Well, you have to go back to Coming to America, where they go. And he's got his own money.
He has his own money.
And you're either going to get the local propaganda spit at you, or you're going to get, I got in the wrong cab, and this guy's going to tell you all the underground info about. Anyways, I'm sorry. Let's go. Let's move on to the next headline.
Just keeping it moving. BlackRock is gearing up to launch a Bitcoin exchange-traded product in Europe within weeks. The product will likely be domiciled in Switzerland. The Wall Street giant has incorporated a Zurich-based company focused on digital assets. Let's just talk crypto in general and what you think of this move by BlackRock.
I don't think anything about that move for BlackRock. But I think in crypto's it's truly stuck in a range here. I think it has a lot of risk. I'll just leave it there. I think the crypto is very well saturated right now. Let's put it that way. Everybody's long.
I think didn't the other day you were saying how you thought the market was exhibiting strength here, and if you believe the market is exhibiting a lot of strength, how can you also simultaneously believe that there's a lot of downside risk in Bitcoin? Don't you see these things as highly correlated?
I do.
In the case of volatility shows up?
I do see them as highly correlated, but because the volatility is so much higher in Bitcoin and because the beta is so much higher in Bitcoin and digital assets, that if the market was to turn south, I think there's bigger risk in digital assets than there may be in the equity marketplace. I do think they're highly correlated. But when I made the statement the other day that I thought the market looked strong because it came back from that big sell-off on Monday, I was really talking about on a very short term, just saying, hey, I thought the market would be down more than it is today. The market is really strong on a short-term basis, and it has been. I mean, we've gone from under 6,000 to almost 6,100 this week. But that said, Bitcoin to me looks Bitcoin and all of its little cousins here and all the altcoins, everything just looks heavy to me. That's all. It just looks heavy.
Well, here's a fun story. MicroStrategy, which seemingly had their earnings, they're rebranding. You're going to love this, Tom. They're henceforth shall only be known as Strategy. Yeah, it's a move to emphasize their Bitcoin position. The brand's primary color is now orange, which they say represents energy, intelligence, and Bitcoin. It's like every woman you go on a date with. Here are my colors. I love my crystals. This is my sign. I love this. I am this girly. And they say, that's what they're doing. Their total Bitcoin holdings are around $44 billion.
Vecchio told me that last night on Last Call, and then somebody said, hey, they have earnings. And I've been managing a small MicroStrategies position on for the last, I'd say 2 months. I've just been staying short of Strangle in there because the Ivy rank's been high. So, I mean, you got to do small size in there. And I've kept it small. I've just been managing every single day, just adjusting my strikes. So it's delta neutral. But yesterday I sold a bunch of premium on the close, really wide strangles. I sold like the 700 calls and the 200 puts.
Whoa, wow.
I know, but there was like a lot of juice. I think it traded almost $6 for like $500 wide in March for earnings. I thought that was ridiculous.
That is juicy.
It was juicy. So I sold a bunch on the close, but the stock hasn't moved. I mean, are the earnings out? It hasn't moved one tick.
I think so. We'll get confirmation. Yeah, that's it.
I know it's up $3, but Bitcoin's up 1,500. Yeah.
Can I tell you what I think about this, Tom? And I'm curious to get your response.
Yeah, sure. Go ahead.
Before this, I used to think Michael Saylor was an absolute genius. Every time I would listen to him talk, I thought he was brilliant. I'm starting to rethink everything. If you can get talked into your marketing team to doing a giant rebrand from MicroStrategy to strategy and just tinkering around with your colors, it's such a gigantic waste of time and energy, especially he's got all this brand equity that he's put, what is he expecting now that he's strategy? There's going to be this big crossover and he's going to be a household name. It's such a stupid thing to do.
I mean, why would you nuke your SEO like that even too?
Long term, he probably has some, he's got some statistics. He was sold by some, consultant and that works for his marketing, his CMO. But it's just like, this is such a gigantic waste of time when companies do this. I hate that Meta is Meta. I hate that Google is Alphabet. I hate when all these companies go through this ridiculous rebrand and nobody cares. The Square is blocked. Nobody cares.
Mondelez
cares about them in a way that they actually do not. And you've got the world to care about you. Yeah, you got the world to care about.
Yeah, Square, block, Square is now XYZ.
So I don't really study that many companies. I don't really care that much. I just trade them. But MicroStrategies, because I've written about it a couple times, I've spent some time reading the pros and cons. There's a lot of articles on the pros of Michael Saylor's strategies, and there's a lot of articles on the cons. I am in the con camp. I do not understand this play. I feel now listen, if his bet's right and Bitcoin continues to go higher and it goes to, 150,000, 200,000, a million, it hits unbelievable play. And he's clearly made his bet. But this is the biggest one-trick pony kind of at this point, I want to say idiot trade that I've ever seen in my life. Like this, there is nothing to this company other than his ability to raise capital at below market rates so that he can buy Bitcoin and they can trade at a premium to market rates for a bunch of what I think are the dumbest reasons ever. And I look at this almost like I look at a closed-end fund trading at a premium. This is a closed-end Bitcoin fund that's going to trade at a discount at some point in the future. And I don't know when that point's going to be, but I wouldn't buy this with your money. I'd trade it.
I gotta keep it moving because I got some earnings plays from last night. My only 2 cents is they should have called it strategery. Hey, real fast, Qualcomm reported earnings last night and they topped estimates on revenue and strong smartphone demand. Their Qualcomm revenue came in at $11.67 billion versus $10.93. What did you do in Qualcomm?
We didn't do anything.
Okay, well then that was worth it. Okay.
Qualcomm is, I mean, they might have done whatever they say they've done, but the stock's down $10.
Yeah, well, of course. In other chip news, ARM also reported earnings, and they narrowed their full-year forecast, sending their stocks lower. They said they would no longer meet the top end of their previous full-year guidance. ARM went public in 2023 and has more than tripled its market value since then. Yes. I don't know that you really trade ARM, but
I did trade ARM. I did not trade Qualcomm. I did trade ARM, and I took a shot, and it's going to work. I sold naked calls in there, and I didn't sell any puts. Stock's down $10.
Oh, how does Daddy do it?
Yeah, Daddy got a good one in there this morning.
I'm creeped out. Okay.
I'm a nickel bid. I like that. Can you say it again?
Nope. I'm going to bring you down to earth because Broadcom and 9 other stocks gained from Alphabet's big investments. I know you've been fighting Broadcom like Don Quixote this week.
Literally hate that stock.
I brought you back down to earth. But look, Google announces $75 billion in capex, and all these other companies are like, whee! But let's talk about your Broadcom position. I guess that's the big matzo ball that's out there.
Just short some strangles in there so far. No bueno.
How about you, Victor, for your chip stocks in general, whether it's Broadcom or ARM or NVIDIA or AMD?
Palantir only. I think I have a little NVIDIA, but mostly I'm riding Palantir into the techno dystopia hell we're all bearing.
So you didn't get caught in a bad way in that 24% massive up move.
No, but I told Tom. Tom kept saying if this thing could cut 25% in an instant. And I said, yes. And if it does, I'll be buying more because I think there's more upside than downside to Palantir.
Okay.
But he just laughed in my face and goes, you stupid public millennial. And then he proceeded to get his face ripped off on a 25% upside day. That's what happens, Tom. You just, you try to fade me all the time. Every once in a while, broken clock's got to be right.
Hey, I'm skipping a story here, Beth. This is interesting. OpenAI.
You didn't even let him swing back at me?
Well, I'm over time. I don't want to go too much over
my
the
bad.
research team today. But OpenAI is set to make its first ad foray with a Super Bowl spot. What do you think about an AI dominance that we maybe had? Remember when we had all those crypto ads? I think a lot of the ads for this Sunday's game are going to be AI ads. But OpenAI coughing up, I don't know, several $1 million to make a Super Bowl spot.
Yeah, $8 million. You know what? Maybe that's the top for AI.
Maybe they'll get Larry David
won't be
in their
well
commercial.
received.
I predict it will not be well received either.
I'm guessing a bunch of people sitting at home having some beers are not exactly going to be super excited about the OpenAI commercial.
What ad agency would even want to advertise? Like, you're trying to replace us all, right? You know what I'm saying? Like, if I was a copyright and I'm like, I don't want to write for this ad, they're trying to replace me.
Well, if they hire copywriters and marketers to make their ad, isn't that
right? I don't even know.
It's saying that it should replace all of this, and if it can't do that for $8 million, maybe you shouldn't have paid the $8 million yet.
I don't know what to tell you. Just real fast, Apple shares slid yesterday after China reportedly considered a probe into Apple's App Store practices. I don't know, Victor or Tom, if you have Apple positions.
I do have Apple positions, but they're really small, and I just need Apple to do what it's doing right now, which is nothing. Just sit around.
Okay. Here's something interesting. Amazon set to report after the bell, but they're announcing a hardware event for February 26th as they race to release a new Alexa. What are you going to do in Amazon for earnings?
You know what's funny? I don't have an Amazon position, and I don't really have a lot of thought on Amazon. I'm leaning towards I'm leaning on just selling some front month calls, and that's it, above the market. I'm leaning there, but I haven't.
Victor?
I wouldn't buy whatever hardware they're going to sell me.
Okay.
What person is getting in line to buy some new spy hardware from Jeff Bezos and saying, let me plug this in so you can hear /see/
Exactly.
Like get some heat wave technology, X-ray of what's going on in my house? Who the hell's still getting in line to buy this stuff and plugging it in?
Put your long talent
It makes
here.
my life
Pick
so
a
much
defense,
easier.
Dude, pick a position.
That's called an emotional hedge. So what happens is when my life goes towards this technocracy, I
gotta keep it moving here.
All right.
This is hilarious. United Healthcare is raising concerns, and they are tattling on the SEC on Bill Ackman. Bill Ackman made a post on X, formerly Twitter, that says that he was going to short the shit out of UNH, and then he deleted. He didn't say that, but he said if I still shorted stocks, I would short United Healthcare. Ackman said in his post, and has now been deleted. Who has a claim here?
It'll get denied if we're talking about here. Nicely done, Nonetta.
I don't know I don't know where Ackman has finally started to feel so empowered to talk about every topic. I think he thinks he's like, for some reason, I think he's got a little bit of the Elon Musk syndrome going on. Like he wants to chime in on every single thing. And I mean, he's not even like a good, crappy Elon Musk.
He's a bad shit poster, you're saying.
Yeah. He's kind of a turd. Yeah.
No.
I'll put it this way. I'll take his long scroller X posts over him getting on CNBC crying about, the world is ending like he did during 2019 or 2020, March of 2020.
That was during 2020. But he's an annoying creature in my world.
He's not wrong. Annoying. He's not wrong in this case.
He's been very wrong on a lot of things.
Can you do anything in UNH? Are you doing anything? No.
I'll tell you what I'm doing. Free Luigi.
Okay.
I got no.
Gotta keep it moving. I'm going to the last story here. Beth, Starbucks is offering free coffee the Monday after the Super Bowl. Super Bowl 59 is this Sunday, meaning millions of people are going to stay up late to watch the game, whether for football or the halftime show. Starbucks is hoping to wake up fans on Monday with free coffee. If you're a Starbucks Rewards member, you can get a free tall, hot or iced brewed coffee at any time. Tom, how is bad coffee going to counter?
We're actually not going to counter the Starbucks offer. We don't need to. Okay, so I thank you, but we're gonna pass.
All right. Well, finally today,
every day is Christmas at Bad Coffee. Just so you know.
I've been trying to play this video for the last week, but I'm going to play it today. I was going to play it yesterday because Rich was here. This is sort of a humorous video of a bunch of people who are trying to leave Wembley Stadium, and they're stuck in traffic. But Brits are having a good time. I didn't know that they were fans of this particular artist, but watch this. All right. I did not know they were such big fans. It was just I thought it was mildly amusing. I was going to show it to Rich because it was at Wembley, but whatever. Victor, this has been a pleasure and a delight. We're going to take a quick 90-second break. When we come back, Tom and Victor are going to answer viewer-submitted questions in a little segment we like to call Confirm and Send. You're watching Tasty Live.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
If you don't come from money, working with money sounds like the quickest place to get to money. So this idea of allowing money to work for you was fascinating with me. And then the more I get into it, the more I realized it was just a big competition. You know, it's like a big poker game with really smart people who know game theory, and nobody knows tomorrow, but they're all just taking calculated risk. And when I figured out that's what it was, like it wasn't this weird world of like somebody knows exactly what's gonna happen and this guy's got great stock picks, it's all just calculated risk, that gave me inspiration that like, well, I can do that. So I think spending a lot of time when I was young to learn different option strategies and to learn stocks, options, futures, Forex, crypto, to be able to go where the opportunity is, I think is the most important. Getting hooked in a strategy, it's cool, I respect it, but I tend to think I like to go wherever the opportunity is.
Oh yeah. Tasty Nation, good morning.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options, profit, and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Know someone who needs a better broker? For 1 month only, earn $500 for each qualified person you refer to Tasty Trade. See how it pays to have friends? Terms and conditions apply. Tasty Trade.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
We are back. You are watching Tasty Live. I am your guest, co-host, Mr. Victor Jones. I should just say Victor Jones. And I'm alongside Tom Sosnoff. Tom, time for Confirm and Send, my friend.
Yes, and everybody, hope you've enjoyed this week with a bunch of guest hosts. Bat's out this week, and sitting in for the Bat. Let's see. On Monday we had Dr. Jim in studio, which was fun. On Tuesday we had a little Julia Spina in the studio.
Fan favorite. Lots of great feedback on Julia.
Fan favorite, with along with a little Chris Vecchio for the second half of the show. Julia did the first half.
Fan favorite.
On yesterday, we mixed it up once again. A little Rich McDonald from the UK got to rave reviews. Rich is really funny. He does our UK show in the morning. And then Rich was on for 2 hours, and then we switched over to Dylan Radigan, who's in Milan, Italy, and Dylan was awesome yesterday. And then today,
you couldn't find anyone for Thursday, and so last minute you said I'm forced, as much as it pains me, to ask you to get in here and fill in this empty seat.
Well, I mean, you know what it's like, Vic. You played a lot of sports in your life. We looked down at the bench, okay, and we're like, what? Who is that guy on the end of the bench? And it was like,
I've been warming up. Do you need me, coach? Like, do we have anybody else?
Is that guy a walk-on? He's not a scholarship player. Is he a walk-on? Where did he come from? And
I'm not even wearing this year's uniform. I'm wearing like a uniform from 1970.
All right, kid.
I'm ready, coach.
Okay. All right, kid. Get ready. Okay, get ready. Take your shirt off. Let's go. Victor Jones today, and tomorrow you've got Liz and Jenny. This afternoon on Last Call, Ilya Spivak will be with Chris Vecchio. So we've been broadcasting this week from the floor of the SIBA. We've been broadcasting this week from a bunch of our remote studios in San Francisco, in New York, in Milan, in Singapore, in Florida, in Chicago, and all over. So it's been just a crazy week. And also from London. I'm sorry. Wow, forgot. Yeah. From our offices in London. And so we got studios all over the place, which is...
You've finally done it. Your dream was to go global. And I would say this week is sort of...
My dream is to go 24 hours. I want to go... You
keep moving the goalpost on all of us, my friend. At one point it was global. Now we're global. Now your goal is to make everyone work 24 hours a day.
Well, right now we are 15 hours a day total. We start at 1:30 in the morning, London time, and we start at 1:30 in the morning, Chicago time, and we go till 6:30 at night, Chicago time. But there's a little break in between. There's like an hour break in between. I want to go and broadcast from Singapore full, like another 5 hours of content, so that we literally go around the globe. We just rotate around the globe, and that's the long-term goal. So we'll do like 5 hours from Singapore, 5 hours from London, and or 4 hours from Singapore, 5 hours from London, and 12 hours from Chicago.
That sounds fantastic.
It's an ambitious goal. We're not quite there yet, but we are, we're getting pretty damn close. We're at 15 hours right now, a little over 15 hours. So let's do it. Confirm and send. Emails that came to us from viewers all over. We're running late, Vic, so I got to move. I'm sorry about that.
All right.
Hang on, I got to put this up so I can read it. Let's see. Unpin. All right, Beth, how do I do this?
Oh, sweet Jesus. This is terrific. This segment's called Watch Tom Learn How to Use Teams.
We will make it bigger for you.
I got it. Don't worry, I'm fine. I saw that the CBOE is going to offer 24/5 trading. They made the announcement this week. Mm-hmm. My question is, why isn't 24-hour trading already available?
Good question.
Now, Vic, let me just mention on this comment for a second. The CBOE did announce that they're going 24/5, but it was equities 24/5. So the CBOE owns an equity exchange. So what they're doing is they're going to compete with the NASDAQ and with Blue Ocean and a couple of other 24-hour stock exchanges. This is not options. And the reason that we don't have 24-hour option trading is because we don't have 24-hour stock trading, so there's nowhere to lay off the trades. And the way the option exchanges work is you can't have an option exchange without a stock exchange. Hope that makes sense.
How long until you think that changes? Because it will change.
I don't think there's enough liquidity to go 24 hours for stocks and options together. I mean, the stocks that they offer 24 hours now, it's a very limited marketplace.
Yeah, it's like Apple,
thin.
Google. It's the biggest ETFs, all that stuff.
But it's also thin. It's not. You can't trade options on it. The CME goes 24 hours a day. You can do that, futures right now. Let's go next slide. How do you know when a specific position is too big?
When I'm curled up in the fetal position under my desk praying that the next tick is in my favor.
The fetal position.
When I'm chain smoking cigarettes outside our condo.
I mean, you're not a smoker, so that
that's
when you are chain smoking, that's a pretty bad sign. What I will say is that Victor's not too far off with that comment when you're in the fetal position. I mean, when Scott used to have a great answer for this, and his answer was, if you go to Vegas or you go anywhere where there's a casino and you place a bet, let's say you're playing blackjack and you're dealt an 11, so you can double down against anything basically, and you decide you don't want to double down because you don't want to lose the additional money. If you're wrong, you're playing too big.
Yeah.
So when you're trading, if you're nervous about your position and you don't want to adjust, you don't want to do anything with, you're just nervous about it. You're trading too big. If you're uncomfortable, you're trading too big. And if you're over, let's call it 3, 5, 7, or 10%, depending on your account size of net, if your buying power for that specific trade is greater than that portion of net lick, like if you're over 10% of net lick for your BPR in a certain trade, you're trading too big. If you're at 20%, you're too big on a single position. If you're defying risk and you're at 3 or 5%, you might be too big. So it's when you're uncomfortable and when your your buying power as a percent of net lick is just too high. It's more than a couple percent. Let's go to the next slide. So, question for you about the 45-day strangles or iron condor strategy. Do you use these for stocks, ETFs, or just indexes? I'm having trouble with stocks because if the IB is high and the earnings are coming, which is risky, and then if you go after earnings, the IB seems too low. So do you just hold them through earnings or just not really use these strategies with stocks and just use them with ETFs and with futures? It's a good question, especially during earnings season.
You want my answer?
Yeah, sure.
Yeah, you use these for earnings. Why wouldn't you? Well, prior to.
Yeah,
Am I misreading this?
No, you're not misreading it. Listen, here's my thought process on this, and I've been pretty consistent with the way I feel about like earnings coming up. You have to just trade the way you would normally trade. But if you want to close the position out on a strangle or an iron condor, or you want to widen the strikes or do whatever on the day of earnings, that's absolutely acceptable. If you stick to liquid underlyings, for sure, recenter, widen, close out. Never feel like you have to trade earnings just because you have a position on. If you're uncomfortable with it, take it off. No harm, no foul. That's the beauty in today's world of like being basically commissionless and being and liquid markets and everything's a penny wide. Cost you a penny. Take it off. Move out. Move on. Let's go next slide. So this person writes, Vic, I have a broken wing butterfly that has moved into my short spread side. How do you manage these? Or do you just close them out when this happens?
What do you do?
Well, when you have a broken wing butterfly is just an embedded short call spread or put spread. In this case, it's a call spread, I'm assuming, but it's just embedded short call spread inside of a butterfly. It has defined risk. I mean, is there a way to adjust this? Not really. So our preference in this case is if you're uncomfortable with the position, close it out and you're going to take a small loss. If you're okay just letting it, seeing how things play out over time, then just leave it. It's a defined risk trade with, and obviously the butterfly itself helps to protect the position. It is something that we kind of don't like to touch this one. We either close it out or we just let it go. And there's not really a kind of a cool adjustment you can make to this. Let's go next slide. So I know you said, and this is a good question, I know you said that inventorying volatility is too expensive. What that means is buying puts, okay? Just buying puts to protect your position or buying calls to protect your position is just very expensive. So why wouldn't it make sense to use like 97% of my account for selling premium and the remaining 3% to be long VIX? Wouldn't carrying the long VIX protect my account? Where is my thinking flawed?
You're going to say no. You're going to say you hate the idea of carrying burn, and you're probably going to
don't answer it based on what you think I'm going to say. What does Victor Jones say?
I don't. There are times when I'll carry long VIX, but it's not like I want to protect my account. It's usually because I think there's pot odds to the downside, or if like we're in 18, I've made this comment on my show a lot, 18 to 22. To me, there's a big opportunity. People think that's, it's expensive relative to the long-term historical average. But in reality, you have higher probabilities of spikes when you get into 18 to 22. You have higher probabilities of getting up to, like, let's say 25. So when the pot odds favor, let's say, sort of quick vol expansion or hitting on a fat left tail, I'll carry long VIX, but it's not like to hedge against the downside of an account. I'll turn big long positions into like synthetic verticals by collaring them, because that way I get to buy puts, but I get to sell something against those long puts, so it minimizes sort of my capital outlay. So I like doing that stuff on some of my biggest positions versus just carry long VIX as a protection strategy. That's me. But you're going to say you hate the idea.
Yeah, I'm not. First of all, long VIX is a very challenging approach because you're going to pay a lot of money to buy. The VIX is huge call skew. You're going to pay a lot of money to buy junky VIX calls or VIX call spreads, and 3% is a heavy draw. It is a heavy draw against your account. Personally, I would prefer to see you reduce the size and not use 97% of your account. So I would reduce the size of your commitment, and that's what I would do. So instead of, I would use less capital, stay smaller, and that gives you the same, if not significantly better protection without the drawdown. Let's go to the next slide. And this is the last one. This person writes, I have some large long stock positions, but I'm feeling confident with my trading and my ability to manage bad trades. Do you think it makes sense to close some of these long stock positions to free up some additional capital to trade with?
Good question.
This person is not borrowing money from their 401k. They're not borrowing money from their IRA. They're not taking out a home equity loan, which is all things that we would immediately say we would not do. This is somebody that's simply saying, should I sell some of my long stock to generate some cash to trade with?
This is the brokerage part of me says, what's the account size? Because if it's a qualifying account size, I would say look at portfolio or risk-based margin as an option first to free up additional capital before you close down positions that you actually like. And then there might be some flexibility without you having to close down positions. But assuming that isn't the case, I don't know. What would you tell somebody? Close down long stock positions to get the theoretical delta equivalent and get more trading capital?
Well, Victor's right. If you have over 175,000, you can go to portfolio margin and free up plenty of money. If you have less than 175,000, that's not an option. So personally for me, because I am an active trader and this is exactly how my mind works, I would sell some of the long stock to free up capital to trade with. I mean, especially given the fact that you've proved concept and you feel comfortable, with more active trades. I think it's healthy. I think it's good for engagement. I think it's good for a lot of reasons. So I would do that. Would I sell it all? No, but some of it for sure. I wouldn't even hesitate. It'd be done in a second. All right. I am Tom Sosnoff. He's Victor Jones. We got the research team coming in next. It's going to be fun for a little trades from the research team. Let's see what those boys and girls have up their sleeves today.
You can get up to $4,000.
Know someone who needs a better broker? For 1 month only, earn $500 for each qualified person you refer to Tasty Trade. See how it pays to have friends? Terms and conditions apply. Tasty Trade.
Dear Cheapo Airlines, thank you so much for sending my luggage on a magical side quest instead of my planned destination. I am glad that I had the sustenance of the single pretzel I was served on board while I was waiting for my bag to arrive. Looking forward to your reply, because surely the response can't be as delayed as long as my flight was. Warm regards, Bettina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
Every day I do God's work here.
From the smart mouths at tastylive.
If you missed the live show, here's our cherry on top weekly recap.
I got my Ted Lasso. You actually have pants on. Yeah, of course. I'm in school. Huh, got it.
You're flexible.
It's cool. Yeah. Oh, nice. You are pretty flexible. Let's see you get that leg up again.
Oh yeah, he's really.
Right now, my other leg is cramping. I believe that to be true.
In the world of options, somebody once said, for every gimme, there's a gotcha.
It's all about generating positive expectancy in your portfolio.
Welcome to Option Trades Today. I'm Tony the Bat Batiste, and I've got not one, but two trade ideas for you today.
Exploring zero DTE. We promised you we would take a look, and here we go.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move. Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade.
Don't die like squirrel.
Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Oh, yeah. Welcome back to Tasty Live. Am I supposed to do that stuff, or was Vanetta just messing with me?
Oh,
do you want to do them?
Supposed to do it.
I feel weird doing them. Yeah. He says thumbs up. Whenever you say that, you do not mean it. If somebody does a good job, you don't say anything, and that's how you know you might have done a good job.
No, you're
if
doing
you
great.
say you're doing great, you are most certainly not doing great.
All right, dude. What do we got today? We're running late, so we got to move.
Okay. Well, I think it's time for trades from the research team. I'm not sure who's up first. Let's play the music. Don't they all have intro music?
You have to tell. You get to tell by the music. Sahil, hold it. What is that? What is that uniform you got on there? What is that?
This is the Emory School logo emblem thing.
Oh,
yeah, I know.
Nice.
Thought it'd be a little nice because we were talking about colleges yesterday. So, yeah.
I like it. A little Emory. I like it.
Little Emory action. Got to represent the school still.
Yeah.
It's also
nice.
cold and icy outside, so I needed a vest on. So.
Did it get icy? I can't tell.
You can't tell what?
Can't tell. I can't tell that it's icy out.
No, it is. It is a little bit.
Oh, all right. Yeah. I can accept that.
Yeah.
As long as there's no snow, that's fine. So what do we got here today?
So PDD, Chinese stocks. How are we feeling with the Chinese stocks with all the tariffs and everything?
I mean, I'm feeling pretty good about Baba and Baidu. They've been relatively strong. I mean, PDD is up about $1.50 this morning pre-market.
Oh yeah, it is like about 111 right now pre-market. So about 1.5. Yeah. Up about $1.
I mean, it's pretty far off its lows. Mm-hmm. I mean, I give PDD like maybe 3 stars.
Maybe 3 stars. Okay. I mean, relatively high IB rank compared to everything else. Earnings are not until like after management time and stuff. So nice and neutral.
Did you understand his ranking system? He just 3 stars. What does that mean?
I'm assuming it has something to do with liquidity stars.
No, that's liquidity. That's just liquidity, not 3 stars.
Yeah.
I thought I'm like, is this Ed McMahon? What the hell kind of system we got going on here?
He has a new system.
Know what this star system is?
A new system almost every single time.
And I'm ranking the stock based on what I think about PDD. No, this is just we use a star system just based for liquidity only.
I know on the platform we do, but I thought you were just randomly assigning 3 stars.
No.
I'll give it 3 stars. Go on, Sahil.
No, I thought it was the liquidity, but yeah, he could just have any random system that he has on the day. So
you got 95 to 95.
Yeah, it's around the 16, 17 delta, 95, 140. So price is 419. So.
Get you're adjusting this in the money call, baby. This thing's going to the moon, Sahil. Don't you want to be rich? Don't you want to be in the corner office with a nice, driving a yacht somewhere off in the Mediterranean, bro?
That is ideal, Victor. But then it works out until you have something like the past 2 Mondays happen, and then you blow up your account. Okay.
Oh, bro, come on. What are the odds it happens again? Come on, baby. Gambler's fallacy. Let's put it all on black. Victor, and me and you are going to be in the Greek Isles.
Victor, don't be talking to my research team about the Mediterranean. They don't know anything about beaches and things like that. We keep them in a very dark, damp environment, okay? They don't know about this stuff, all right? They don't know there's a Mediterranean, okay? They don't know there's beaches.
I saw one of them trying to put a landscape as their wallpaper on their desktop. Tom came up to him and goes, I don't think so. Turn that back.
Right. No. We got to keep everybody, in our ecosystem. Yeah.
So all right,
just puts us in the basement until he needs some.
It's an amazing.
Until he needs some nerd to take out, and until he needs some nerd to talk on the show, he just keeps us in the basement.
All right, we got to go, boys. We're way behind.
All right.
Thanks, Phil.
I'm messing up your timing. My apologies.
Oh, nice.
Oh, yeah.
Oh, yeah.
Welcome everybody. Welcome, Tasty Nation. Good morning, everybody. Here we come, baby.
Look at that energy. That's what I'm talking about.
Gad comes ready to play, no doubt about it. Arm, you're doing a little post-earnings trade, huh, Gad?
Yeah. So today I got Arm. So I'm gonna play Showtime in kind of.
The stock, did you adjust for the stock? I think it's down about $10 pre-market.
Yeah, I adjusted this morning, but I have some skew on cost side.
Okay, so you're doing what strikes you're doing? 135, 145, 200, 210.
Yeah, 200, 210.
Yeah, it's definitely got some call skew. Let's take a look. I think the best time to do this trade will be today because I don't think you're going to get the kind of liquidity in ARM, other than this morning. This morning it should be jam. I mean, there should be plenty to do in there, and then later today, start to get quiet. So let's take a look. And you adjusted, you said, for price, right?
Yeah, this morning.
Okay, cool. Sure, I'll give it a shot.
Okay, let's give it a shot.
Yeah.
Let me ask you, would you ever wear alligator shoes?
Yeah, sure, why not?
Just asking. Just curious if that's still, and you're a young guy, a well-dressed man. I'm just curious if alligator shoes are sort of, in. You know what's wild? When I was in high school, I sound so old right now. It was like people were in baggy jeans, like Jinko jeans.
Mm-hmm.
And now all the young kids are wearing baggy jeans again. Like,
my God, Victor, we need better stories out of you, Victor Jones. Gad, you're a sneakerhead, right?
Yeah.
Yeah. All right, I like that.
Oh,
we got to go.
That's
We're
your
behind.
story?
Yeah,
your story. Gad, you're a sneakerhead, right? Yeah, I am. Terrific. We got to go.
Thank you.
All right.
Thanks,
see you,
Gad.
bro.
Who's
Thank
next?
you.
We just got to move forward, Vic. We're behind. You're too chatty.
All right, my bad.
What's up, Victor?
Got a little Kai in the house. What do you got, Kai?
All right, I got
my fellow
Nike.
Asian brother.
I'm bullish in Nike, but I'm putting a skew strangle. It's kind of a bullish strangle because it's a premium is high. After earnings, 35% IVR, rare to find. And also, this is Nike. This is not like high-tech stock. 35% IVR. I'm selling the at the money put, and I'm selling probably 2022 Delta call. I just want to collect rich premium on this one.
You and your boy Nicky Bat got into this yesterday. I did a Nike trade yesterday.
Oh,
we did the 67.5, 85.
Right, I heard it. You sell the put, right?
Yeah.
I want to be slightly more aggressive. It pulls back in 2 trading sessions, probably 1 or 2. I think it's a good price to long again.
All right. I'm going to change a little bit. I'm going to do the 70, 82.5. I like a little out of the money. I'm not as bullish as you guys in there.
Cool.
All right. I routed it. We'll see what happens.
Kai, I'm not allowed to chit chat, but I would if I could. You know that, right?
We got to keep moving.
Brother, you're my brother from another mother, Kai.
She blinded me with silence.
Little Dr. Data in the house. Hello, Data.
Hey. So today I'm looking at VIX, the VIX. VIX is down pretty low.
Ooh.
Okay,
It
so
is.
yeah. So look at this is what I'm looking at. Okay, so I'm looking at a 16-15 put spread here. Doing this for credit, about a 52-cent to 55-cent credit. If you look at the /VX, which is the VIX futures in March, it's more around 1740. So this is an out of the money short put spread. It looks like it's at the money, but it's really out of the money on this one.
Yeah, it's a. Here's the only thing I'm saying about the VIX is you have to hold off for your price.
Yeah. I mean, you can't go chasing this thing.
No. But with the market you're selling a put spread, so with the market up today and the VIX down a little bit, it should be down a little bit. It'd be easier to get a fill in there this morning.
Absolutely, yeah, totally agree.
I have a small call spread on in the VIX right now, which has not worked. I mean, it's small. We're down about
a debit call spread.
Debit call spread.
Yeah, okay.
I have the 15-18 call spread. We're down about 18 cents on it.
Okay.
So you want to sell the 16-15 in March, right?
Yeah, I'm doing this a little narrow.
It's a baby spread. So you want to sell it 50 cents? Where do you want to sell it? 50?
Yeah, I have it at 55 cents. I think that might be a little rich, but
yeah. I think it could trade there on a down move today. All right, let's do it.
Cool.
55 cents. I like it.
Yeah, just looking to make a bounce on this thing.
All right, we'll see if we get filled. Thank you, Data.
Thanks.
We got to move. We got one person left.
Missing the ping pongs from Tony. Hey guys, what's up?
Hello, Miss Spina. How are you?
Hi.
Julia.
What up?
I have I'm feeling big shoes, and I'm not talking about Tony. You set this place on fire the other day.
Oh, yeah?
There's no way I can live up to it.
I don't know. I think I'm enjoying the banter so far. 10 out of 10.
That's all I got. If I don't got dad jokes, I got nothing.
See, like, I have a hard time making Tom late. But yeah, so like we're usually on time. I think that's a bad sign actually. But we got like 3 minutes now, so I might as well talk about Google. I was trying to put my mind in the sick, twisted perspective of Tom Sosnoff. What would he be looking for this morning? I wonder how close I got. I was looking for
earnings trade. Well, you're
it's
not
a post earnings trade.
In there. You're not going to get a lot of vol. So what's Google doing this morning?
Well, I was really surprised. I was looking for a post earnings trade, and we've had results all over the place this week. I thought there'd be a little bit more juice in some of these names. I think Google, like the vol's not as high as I'd like it, but still tradable. It's down about $1 this morning. So I was looking to do a $10 wide iron condor, 180, 215 short strikes, collects $2 in credit for about $800 in buying power for the 43 days. Not as much juice as I'd like, but I wanted to find a post earnings play, and this one just kind of, is a big move.
I think you moved the call strikes down to 210, 220, and you can get a little bit more juice, maybe 250.
Maybe 250, a little more. So this is skewed for a little more bullish of a directional assumption, which like I figured So it's a little bit tighter on the put side, a little bit further out on the call side, and that's my Tom Sosnoff imitation trade of the day.
I like it, Julia. I just routed. I just changed the call side to 210, 215.
Hell yeah. Cool.
All right. Sorry to bump you so quick, but we got to get back for the opening bell. Thanks.
Hell yeah. Thanks, guys.
See you, Julia.
See ya.
You totally hamstrung me.
Know someone who needs a better broker? For 1 month only, earn $500 for each qualified person you refer to Tasty Trade. See how it pays to have friends? Terms and conditions apply. Tasty Trade.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
We're back. Got it. We are back. It's time for the opening bell.
That was awfully quick.
We're back on time, just like that, sort of.
Well, Vic, what do you think today? Maybe a little reversal the other way. We've had every single day. We've had down moves followed by up moves. I think today you could see the other way around.
Yeah, I think they're heavy. I have no particular reason to feel that way, but I don't know. I think we're top end of the range, 6,100. Maybe you squeeze 50 more points out of this thing, but I think pot odds. I'd be betting the other way, but I'm a crazy man.
I kind of agree with you. That is ARM. We are buying our stuff back cheap in there. Julia's trade filled. Sorry, I'm just listening to the beeps go off, dings go off. ARM, we finally made a good earnings trade. Sold them for a lot, bought them for a little. Okay, let's see this MSTR. Is it open? Let's see. It's the craziest thing.
Nothing.
It didn't move at all. The stock's down 59
Are they halted
cents.
or something?
No. No, it hasn't moved at all. It hasn't moved one bit. But here's the crazy thing. Almost like the options were not priced for earnings. So when I sell earnings premium, in March, Feb, whatever you want to sell, and the stock doesn't move, it's got to come in something, right? In this stock, I don't think anything came in at all. I kind of feel like they didn't have earnings. I hate to say it. I kind of feel like they didn't have earnings. I know they had earnings, but I kind of feel like they didn't have earnings.
Doesn't look like it. I can't believe they changed the name. Are you going to change the ticker? That would infuriate me if they change the name and they leave the ticker. It would infuriate me to no end.
I'm taking
All right, so what do we got? The S&P 500 up about 0.5%. The NASDAQ just slightly negative here. The Dow up about 0.1%. And the Russell, what is this, 2 days in a row? Up 0.2%.
Don't be jinxing it. Okay, that's my boy. Those are my boys.
You know what I was going to ask you, though.
Yeah, it's the first time we've had any kind of
follow through.
Like decent Russell move versus S&Ps, that kind of thing.
Well, no. Last week, the Russell was up 200 basis points over the NASDAQ one day before everything puked. But yeah, now you've got 2 days in a row because the Russell outperformed everything yesterday. And at least for now, not trying to jinx it. Sorry, everybody out there. I likely just did it like a mush mouth. Russell outperforming here. Not by much.
I cannot believe that this stock, and I'm just blown away by MSTR. The stock did not move. And
welcome to Trump's presidency. Version 2 of absolutely no vol, just sucked vol. Absolutely chaotic geopolitical shenanigans, zero market vol. Welcome.
Don't say that, because that will drive me, that will push me over the top.
I know, man. It's infuriating. It's truly infuriating. Bonds at 116, not doing much. Rates are slightly up across the curve, but only by a few ticks at each of the maturities. What's the dollar doing? Dollar's getting a little stronger. They're going to go negative. Stocks are going negative.
I think so too today. The only trade from the research team we got filled on so far was Julia's trade. Let me just take a quick look. In Google, we sold the Iron Condor in Google. That's all we've done so far. Still working Monster, Nike, VIX, all the other trades.
By the way, did I hear you mention your long VIX call spread? So you took a confirm and send question where you poo-pooed the idea of buying long VIX. You shit all over that idea. Then you go to the trades and research team and you go, oh yeah, I'm long some VIX call spreads as we speak.
Okay.
Am I the only one listening to what you're saying and catching these inconsistencies?
It's a little bit unfair and confusing because I do a lot of customer related trades, like on what's your assumption. That was not my trade. I like to support our customers, so I do a lot of trades that I probably wouldn't do on my own.
Blame it on the customers, Tom. That's real customer centric of you.
So I sold a March strangle in MSTR, and I just bought it back. The stock did absolutely nothing, and it made 60 cents. It's not worth it. Not the risk for 60 cents. That I'll tell you, it is not worth the risk for 60 cents.
170% front month implied vol. And it doesn't do squat.
It didn't do squat. I'm also have another March strangle on that is it's come in $1. It's bigger, you know, a more premium, and I closed at like 13, and where did it close? Yeah, like $13. It's $11.80 right now, so it's coming at $1.40, but still, it's like nothing. Yeah, it's like nothing.
What do you do with gold here?
So in gold, I just covered my monster position because post earnings is kind of how I stay disciplined. Gold
post earnings. Okay. Sorry.
Yeah. Sorry. MSTR. Gold. The premiums coming in today, it's a little bit, you know, I mean, I think gold's so overbought. Let me see what we got in here.
I'll see you at 3,000, Tom. I'll sell you a shiny yellow rock at 3,000.
I think you're out of your mind, and I think gold is grossly overpriced here. Grossly overpriced. I don't think silver's as rich. Where's silver right now? Silver's kind of rich too. I think gold and silver are both high. I wouldn't buy either one of them here, but I am short premium in gold because the IB rank is super high. So I did maintain some short premium in there. Looking at the market here, just as a quick on the opening recap. And by the way, the S&Ps are up more than the Russell now, so that little move reversed itself.
Sorry.
Biggest winners for us this morning are ARM and MSTR. Biggest losers this morning are MU and maybe Palantir. What's Palantir doing? Nothing really. That's a tough stock, by the way. I don't know if you trade Palantir at all.
I only long stock. You would hate me. Long stock, God. And sometimes with covered calls. I'm like a grandmother trading that one.
God, I don't care.
Oh, I got my short call premiums.
I do not get that. I do not get why everybody loves that stock so much.
What do you mean? What have you done to try to learn about it? Here's my thing is like, I guarantee you 100% you haven't watched any interviews with their CEO, who you would love. You haven't sit down to read anything about the company. You just go, here's a price. It went up too fast. It shouldn't happen.
Okay. Couple things. First of all, I bought the stock at $9.50 when it came out after the IPO and sold it at $11. So that made me mad.
What do they do?
I don't know. They do, like it's just a bunch of. I read an article last weekend that was written. That was an interview with their CEO. I forgot the guy's name.
Alex Karp, I think is his name.
What's his name?
Alex Karp, I believe is his name. You would love him, by the way. Don't read him. Watch him. You love him.
I never watched him. I read this article, and it was interesting, really interesting article. They were making the case for why the stock is worth what it's worth. But you're putting a lot of faith into. There's a lot of faith. There's a lot of good faith in that number at 102.
Oh, it's stupid. The price to sales is like 60 something. The next closest price to sale is like 30. So it's double the next closest in terms of valuation in the S&P.
It's also a company that's very dependent on government contracts.
It used to be. They're getting more corporate contracts, though. That's why their revenue spiked.
They're still, it's a big portion of their revenue. And I don't know. And you know what's another interesting stock that we haven't really touched on recently is Tesla. After the election, when the stock went from like 270 to 480, whatever it did, the stock has since, it's under 370. So now it's like kind of mid-range for that entire move. And nobody's talking about it here, which is kind of interesting. Bullish or bearish in Tesla? You.
Bearish.
Yeah, me too. I have no position on, so I'm not talking my book. I have no Tesla position on right now. I covered it after earnings, and I'm probably glad I did because it has not acted well after earnings. But
like, I'm not actively short. I'd say bearish, but I'd be neutral until a more attractive price. I don't think we're in an attractive area. And I also think, like, why would you pay up for a President Buddies premium? That's what you're paying up for right now. There's probably a fair value.
At 480, that's what you're paying up for. I'm not sure what you're paying for 370. So
I think they're still there.
I saw the greatest Tesla bumper sticker.
What was it?
It just said before. On the back of a Tesla, I want that bumper sticker. It just said before.
That's good.
I did see another person who had one that said, "I bought this car in 2018." Like, people are apologizing for owning a Tesla, but my favorite is before. It's
kind of like wearing the Yeezys at a certain point,
Yeah, I mean, before. I thought that was just the best.
What did you? I don't know if I'm allowed to ask this. Probably not. I'll save it for later.
No, you can ask it. Go ahead. We have a minute left. Go ahead.
All right. Yesterday, Elon said something about putting treasury payments on a blockchain. And I had a nice little back and forth with Chris on that topic yesterday. Do you have an opinion on that? Whether or not government?
I'm not sure what's the purpose of putting.
The idea would be to make money flow in the government more transparent and trackable to the public. Is I think the idea behind it.
So on a U.S. government blockchain.
Yeah, something like that, right?
Yeah, I mean, that would not bother me for 1 second. I don't know the level of sophistication, and I don't know that everybody would understand that. But for me, if the U.S. government created their own blockchain and they put payments on there, I don't know that would change too much, other than it would increase transparency.
I like it. If my knee-jerk reaction was I liked it, and then I thought about it some more last night, and the only downside I could think of is it's probably a first step on a slippery slope towards CBDCs. Because if you tell the government they need to use a blockchain for their payments, then the next step is likely, okay, we're going to pay you Social Security payments or benefit payments through this sort of mechanism, and then it's just sort of the first step in a slippery slope. That would be my only concern.
As somebody who's in the financial business, if the U.S. government put payments on their own blockchain, it would open up the opportunity for us in the world of finance to potentially clear trades on the blockchain, which could make like like the challenge we have right now going to Canada or Singapore or any places around the world to execute trades is clearing and currency conversion. If we could clear them on the blockchain, everything, all those crappy ass legacy clearing platforms go away. And so if the U.S. government put payments on a blockchain, it would almost legitimize the space enough that it might impact the world of finance, which would be a positive for us. So I'm not.
You don't think when Larry Fink says he wants the SEC to basically use that technology for clearing stocks and bonds, isn't that as good as gold? Or doesn't that basically say that we're now going to do that? It's just a matter of how long. When Larry Fink of BlackRock says it.
My experience with Larry Fink is that Larry Fink cares about Larry Fink and only Larry Fink and only BlackRock. And I'm not saying, and it's his job to care only about BlackRock, but whether BlackRock supports, stable coins or does Bitcoin ETFs or whatever they're going to do, I don't necessarily think that lends the level of credibility to the space that other thing, that what Musk is proposing would. I don't know if it's the same thing.
I get it.
Yeah. All right. We got to go, Vic. We got to bring in Chris Vecchio. He's waiting in the green room, and we got to get this thing moving.
All right.
world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
So what are some things that we know? We know that time will pass. We know that the hourglass will empty. We know that the calendar will march forward. So what do? We sell premium. We generate positive theta. We take the short side of the options contract. Before you ever think about generating returns, you need to control that risk. The returns will come. You need to make sure your risk is mitigated in the most efficient way possible. Now, the fun stuff. Let's talk about managing those winners, right? You have a long put spread on and the stock goes down. That's going to work out pretty well. You have a long call spread on and the stock goes up. That's also going to work out pretty well. You set your profit target at 50% of max profit. When it gets there, you take it off, you move on, you find another opportunity.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Your crypto needs a wallet, and crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Know someone who needs a better broker? For 1 month only, earn $500 for each qualified person you refer to Tasty Trade. See how it pays to have friends? Terms and conditions apply. Tasty Trade.
We're back. That music sounds familiar. It's time for Let Me Explain.
My music.
Let me explain. Explain.
Okay, here. I know what to do. We're back. Thomas, enough out of you, my friend. We've got my favorite on. We've got Chris Vecchio. Chris Vecchio, how you doing, my friend?
Thank you for that generous walk-up music, Victor Jones. It's unique. It's mine. Red Hot Chili Peppers are a band that perhaps you should go see in person around people.
You know, I've never seen the Red Hot Chili Peppers in person, and I really want to. I've wanted to for like 20 years. I don't know why. I keep missing them.
They're a great show. I saw them in 2007 at the Izod Center in New Jersey. A girl on my rowing team won tickets to a box on Z100, so she took a bunch of us.
What question did she answer correctly?
I have no idea.
I have a question about that comment. A girl on my rowing team. Isn't it like guys? You know.
Oh, so it was a club, right? And so they're both men and women. Yeah, sure. No, they're both men and women in the club, right? So it was just a co-ed club. There were men's boats, women's boats.
Oh, got it. Okay.
They're both men and women in the club.
You de-escalated that quickly. Let's move on.
Anyway, so today we got Victor sitting in for the bat. We got Chris sitting in for Victor. We did a little flip-flop this week. What do we got today, Mr. Vecchio?
Hear me out, Tom. I really don't like this Treasury Bitcoin deal, but that's something that you guys discussed, so I figure we can move on to something else.
Yeah, I mean, I don't actually. To be fair, he didn't say Treasury Bitcoin. He said Treasury on the blockchain.
Right, and you know the world's largest blockchain right now processes around 380,000 transactions per day, and the U.S. Treasury's payment system processes north of 600 million per day. So, in terms of facilitating payments, we'd have to scale this up enormously, several magnitudes, or just come to the realization that the technology is not there for the scope and scale of a project this is.
And I haven't read enough on it, but I don't. I mean, when we first got into the brokerage business 25 years ago, we were doing, something like, I think it was total of 25 million quotes a day. And now we're up to like, a couple of billion. I mean, it's insane. So the technology moves so fast nowadays. I don't see that as here. I guess the bottom line for me is where I am in my life, whatever pushes the technology forward at the fastest pace is the most interesting thing for me.
It almost seems diametrically opposite. Yeah, but that feels like that's as most people grow. They're like, I want things to be the way that they were and not change.
I don't ever want things to be the way they were. I mean, because even though things are always great the way they were, because that's all you know, when you move forward, things are always better. Like, it's my whole argument about positive drift and everything. Like, everything is like when you're doing it, like in the 70s was great, the 80s were great, the 90s were great, but whatever we have now, it's way better. How do you can't ever go backwards.
Yeah, whenever someone asks me, like, if you could revisit any time period, and they're like Victoria, England, good luck stubbing your toe and finding some Neosporin. See you later. You're gone. That's it. Send me further into the future, right? Like, that's where I want to be.
I mean, would I love the chance to go back and maybe go to Woodstock and, back in the day or something like that and be cool as hell? Or, or some of the things that happened, over the last couple of decades? Sure. But no, let's move forward. Let's put everything on the blockchain. I'm fine with that.
Well, the transparency is necessary. Whether or not it amounts to, a significant change in trajectory for the U.S. fiscal position is another story unto itself. I suppose just to give a macro level explanation before we talk about maybe the importance of tomorrow's jobs report, Victor, just some back of the envelope math here. Given the growth of the U.S. labor market and workforce in recent years, while the native-born population has overall been relatively stable, it's been foreign-born workers coming into the country, legal or otherwise, that have driven up the unemployment rate. Why? More people. It's a full labor market. We have excess individuals right now for the jobs available. As it were, though, if you were to take out that labor market growth, you could basically strip away a good chunk of the GDP that has been moving forward in recent years, probably 2/3 of it. So there is this interesting setup now moving forward, where as the Trump administration's immigration or deportation efforts pick up alongside plans to cut spending, substantially moving forward, words there, we find ourselves looking at a potential, deflationary outcome moving forward. But the reality is, based on the number of deportations thus far, I would look at this and say, this is probably not a risk that's going to be realized in the very short term. Why is that? Because we're running at an annualized clip right now of about 300,000 people per year, given the rate of deportations in the first 2 weeks of the Trump administration. Now, cutting back on all the immigration that would be coming in the border, that's going to roughly round out to maybe 1.5 to 2 million people, less in the country, fewer people in the country by the end of this year. So GDP probably going to take a hit as a result of this, but maybe not as much in the first and second quarter. And then alongside the Treasury's quarterly refinancing statement yesterday, it's pretty clear that the Trump administration is focusing on keeping longer end rates lower now. Scott Bessent was talking about how he doesn't necessarily want the Fed, or thinks that Trump wants the Fed to cut rates. Instead, they're thinking about reducing longer term borrowing costs. Because again, if those longer term rates go lower, then home borrowing costs go lower, auto loans go lower, credit cards go lower, the cost of living for Americans can start to go lower overall. I think it's early days here, right? Tom, you and I have been talking about this week the desensitization of market participants to some of the tariff news. I would point out tomorrow we are walking into another situation similar to last week, where we have a U.S.-Canada economic summit after the non-farm payrolls report. And so we could be heading into another weekend where markets are closed and we have tariff headlines to deal with. But I would posit that they may not matter so much anymore because the market seems to think they're a big bluff. Victor, am I out of my mind? Oh.
This weekend, you're out of your mind because there is no chance that Trump's going to be sitting at the Super Bowl tweeting about tariffs. There's just zero chance. So I don't think that this weekend has the same risk of, some dramatic tweet as maybe last weekend. I don't think we're going to open down 100 points on Sunday night in the S&Ps, right, at kickoff time. So I think this weekend will be a little different. Tomorrow might get interesting, but I think Victor brought it up best earlier. Like, are we going back to that 2017-ish, like levels of volatility where the market initially just, like as soon as it gets used to this kind of drama or this kind of like, or all these statements that it hasn't been used to for the last couple of years, is it going to digest everything and just crush vol because it just takes all the risk out of it, like almost immediately? And I think Vic could be right on this.
You had a really interesting take on that yesterday, Chris, when I asked you, there's a president who clearly feels he has a mandate for change, for massive reform at a societal level, at a trade level, at an economic level. And in the first couple of weeks, there's an executive order every few hours, and not one, not two, but three trade wars started and finished in the first 3 weeks. And the most they could do with vol was pump it to 20 and change for a few hours before selling it back down to 17. And so I asked you, does it make sense to you, the relationship of price of equities to VIX? You had a really interesting response, Chris.
Did I?
Yeah, I think you said either vol's a little cheap and massively underpricing the real risks in the marketplace, right, or this is a 7,000 S&P.
Right, because we joke about VIX being around 18 is kind of like the gray area. You frequently bring up this point. This conversation yesterday was contextualized by the banana zone comments, but VIX around 18 is kind of the banana zone where it can jump up to 20 in a heartbeat or collapse all the way right back down. And if the scale of fears that have been built into the marketplace because of the new administration aren't ultimately realized, I mean, this is a huge wall of worry right now. A trade war with Canada and Mexico would be horribly destabilizing for the economy. Take over 1% off GDP, add nearly 1% to headline inflation. No good. Heads the U.S. down a stagflationary path, if you will, and that's a mess for bonds, for stocks, for basically everything that isn't gold. But if we're not going there, then this is just the constant boy who cried wolf story. And like in 2017, the market then becomes desensitized to it. Perhaps we're becoming desensitized to it earlier on. And we're focusing more on the data and the earnings because the earnings growth has been very good overall. And you're looking at an economy that still, for the time being, is growing with a 2 or 3% handle, unemployment with a 4 handle, and CPI with a 2 handle. So those are all the macro check boxes for a Goldilocks, low vol, drift higher kind of equity situation.
Yeah.
So S&P 7K, here we go.
what topics you got for us? What other controversial stuff can we comment on? Because we're kind of in agreement on that.
I'm trying to, Victor and I have been going back and forth about what the end of sanctions against Russia could look like and how that could impact asset flows. A working pet theory that I have is that there's $300 billion of Russian central bank reserves trapped in Europe right now. And ultimately, when those sanctions get lifted and those reserves get free, they're probably going to go outside of Europe. I can't imagine Russia wanting to keep that money in an alternative financial system that they have no control over moving forward. And so a lot of these financial intermediaries are looking rather appealing. We've been talking a lot about the UAE ETF here, but it's part of a bigger story and a bigger picture here that the American-led era of globalization is coming to an end. Marco Rubio, the new Secretary of State and acting director of USAID and acting director of something else of last night, he pointed out last week that we're really living in a multipolar world, and there are regions that are governed by great powers. That, to me, speaks to a balkanization of the current global trade environment. And while people line up behind their regional heavyweights, it also means that countries like a UAE or a Singapore, a Vietnam, become that much more viable moving forward. So while a lot of the country ETFs last year underperformed because of their currency hedging or lack thereof basis, one has to think that in a world where U.S. Treasury yields are leaning over and the dollar is weakening, and in a world of increasing balkanization, some of these countries are actually really, really underpriced. So while there's not particularly an options market for an ETF like VNOM here, looking at things like EEM, for example, could be relatively appealing, or EMXC, the Emerging Markets ex-China ETF, because this is now a theme that clearly is being put into place worldwide. Trump talking about taking over Gaza has implications for what Russia may do in Ukraine, or what China may see as their right to do in Taiwan. And that is a world that means the people who stay on the sidelines, the Switzerlands, if you will, become much more valuable as pass-throughs, whether you like it or not.
Yeah, let's be careful to read too much into the Gaza stuff. Trump likes to say things that are outrageous and then walk them back because he doesn't get penalized for saying outrageous things and walking them back. So
why is that?
It's an interesting because he has desensitized his base to that, and it doesn't. He's the first politician in history, so you can give him credit for figuring that out. But
I'm going to say something you're going to hate. He's a disruptor, Tom. You have always said that disruptor companies get the benefit of the doubt for their customers for moving quickly, and they even get permission to sort of break things because the customers give them the benefit of the doubt that they're going to continue to introduce change. You don't see him in that same light?
No, and I'll tell you why.
The benefit of the doubt to create change?
No, unfortunately, I don't, because there is such a thing as a disruptor. And there is such a thing as kind of a corrupt grifter. It's a thin line between the two. And the grifters usually end up in jail, and the disruptors usually end up as doing something special. And I see him closer to the grifter side than I do the disruptor side. But either way, it's not. I want to get back to what you first said about Russia. Russia's dead. They're done. They're not going to come back maybe in your lifetime. Like they cannot turn.
Don't disagree.
China can turn around their situation. Russia cannot. The brain drain has hurt Russia to a point where I don't think they can come back. China, I think, hasn't had that same brain drain, and I don't think Russia's going to be able to compete for that market share with India and with China. And I just don't think they can do it. I think they're too disabled right now. So I think it's going to be a long time, and they're too poor.
Well, I think this is less of a commentary on like wanting to get exposure to Russia and more thinking about what happens after these sanctions end. Vic, you and I have had discussions ongoing about, and this has been a few years now, a lot of monetary papers have been put out about this. It's not Torsten Slok who wrote them, I'm forgetting the guy's name who put this into the ethos, but about moving into the next layer after a US dollar world reserve currency system with hard assets being the baseline for it. And if we're just moving towards that direction where central banks are stockpiling copper, gold, silver, if banks on the commercial level are stockpiling all these metals, then that's probably going to be instructive for how currencies move and how some of these various futures products move. I would point out two things here. One, at the end of last year in December 2024, U.S. precious metals import hit an all-time high. There's a lot of demand right now for gold and silver coming out of this country. And secondly, the amount of gold and silver that's being currently stored in commercial banks' vaults have hit their highest levels since the start of the pandemic. So clearly there's a reach here. Money's moving around. I don't know if it's dollar negative, but it's certainly precious metals positive. So with all due respect, I know that we're talking about gold and silver being dead in the water here. I'm going to stay long gold until 3,000 and perhaps beyond there, because it feels like there's a seismic thematic secular trend happening.
I don't know if I didn't really say I'm bearish on gold, but I just think it's an uninteresting asset at these levels. It's just, I mean, what are you playing for here? You say you want to stay long until it gets to 3,000. Well, it's 2860. So think about that just from a trader standpoint. Just think about that risk reward wise. So if you think it's getting to, if you said you thought it was going to 4,000 or 5,000, then getting long gold makes sense. If you think it's going to 3,000, then, what are you playing for? Like $100 move? It's like, risking 500 to make 100 doesn't make any sense.
I think the miners are a better risk reward. I tend to agree with you, Tom. I would not put an incremental dollar towards gold at 2,800. If I had something on, I'd let it ride. If I had an incremental dollar that I wanted to put towards this space, I'd go towards the miners, because gold's at all-time highs, but the miners got blown off their highs, and they're still, while I think January and March have been terrific for a lot of these miners. Quietly, nobody's talking about them. They're still significantly off the high. So if you like the idea, but you want the most bang for your buck, I think some of the miners are probably where you go.
It's funny, while we're talking, gold just dropped $20. while we're doing this, it went from down 14 to down 34. Like they're listening, but they're not.
It's because look at the dollar. Look how strong the dollar's getting. And then not only that, but the equity indices got weaker. The Dow's negative. Russell flirted negative. A lot of this stuff is going negative.
Yeah, I know. I just brought it up. It's just a fun little thing. I mean, giving a little market recap, S&P's up 8, NASDAQ up 24, Dow's down 28, and Russell's up, 2. It's a complete non-event. Bonds have rallied up a little bit. They're up 3 now after being down earlier. And the only really big story out today, I mean, other than Tesla being down $14 on kind of some bad, sales in Europe and stuff like that. Is there any other stock that's crazy? I mean, PLTR is up a lot. Costco's up a lot. I don't know. I mean, is there much else out there? Today, Microsoft up a lot, but I guess, I don't know. That's all I see. Just looking over my screen
here.
So before we go out here, I figured we could play a fun game of pick the stock. Over the past rolling year, there have been 5 companies that have produced returns in excess of 160%.
Okay.
Can you guys name any of those 5 stocks?
MicroStrategy.
NVIDIA.
No.
No to both?
No to both. I'll give you a second try.
Hold on. So it's not NVIDIA. Are these companies we would know?
Yes.
5 companies in the last year, rolling returns of what? 170% or more?
160% or more.
Okay. I know it's going to be like these crazy companies that I can't, like these Dow companies probably. Let me think about what company do I absolutely despise. Like GE?
GE Vernova is up 183%. That is the 3rd best performing stock over the past year.
Okay. So we got one.
You need to get one too here.
No, the shit-eating grin you have tells me I'm not going to get any of these, likely.
United Airlines up 164%.
Yeah. Oh, United Airlines. Yeah. Yeah.
Yeah, there's some interesting names there. Royal Caribbean's up 122%, not quite meeting that mark. But Vistracor, the energy company, power supplier, up 291%.
Palantir's got to be in there.
Palantir's not on this list. Texas Pacific Land Corp 190%, GE Veranova 183, United Airlines 164, and Axon Enterprises up 160%.
Well, the only one I would have got on there, the only two I trade are, I don't really even trade GE. I just knew that, and then United Airlines.
The worst performing stock over the past year has been Moderna, down 64.9%, followed by Walgreens, down by 55.7%. So if you want to go bargain hunting.
Jr. Thank you, RFK Jr.
I say, Victor, all those vaccines that you love are on sale now.
Palantir's got to be on that list. Something happened in your scan. It's up in the last year. It's up like 380%, something like this.
This is total returns over the past 12 months for individual members of the S&P 500.
Yeah.
All right, Mr. Vecchio, thank you so much. Appreciate it.
See you later.
All right, we'll see you later.
Somebody in the
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, $4,000, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
I started getting into finance when I was like really young because my outlet was through video games, and in the game there was like a little mini stock market that behaves very similarly to like the actual market. You could trade spreads. It was a good time.
If we did know the risk of an instrument perfectly, then we wouldn't have a market for options because people would already know certainty, kind of like what the uncertainty of an underlying is or what the uncertainty of a position is. And it's those kind of like inefficiencies between what we think is going to happen and what winds up happening. That's where options, like especially short premium traders, make money.
We've coined ourselves a brains over bots firm.
I do know that.
Right.
Brains are always going to be over bots because frankly, algorithms are stupid. They're not smart. They're not designed to be smart.
So we are brains over bots, and you know the rule,
Yes.
never go against the family.
We're never going against a family.
How much does it cost you guys to do simultaneous hair flips?
Years of practice.
Everybody wanna be like me, yeah.
first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Tony Bat Batista, the John Jay College of Criminal Justice. Number 69, because it's one standard deviation plus one. And you know, I'm the Bat.
John McLaurin, Wisconsin. Number 2, because I'm Beth's right-hand man.
Vanetta Logan, the Indiana University. Number 3, because that's how many shots of bourbon it takes to make it through the first hour.
I like the looks of that lineup.
Well, Be Mechanical is always better than just trying to run plays to see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
Tom versus Tony. Round 1. Trade. Massive volume. Killer trade. Surplus. Shoot. The fall. Volatility boost. Killer trade. Resistance. Straddle support. Order sold. You win.
In the money. It seems pretty easy to understand. If I'm in the money, I must be profitable, right? Not quite. In the money is in reference to the option's strike price relative to the current price of the stock. An in the money option is an option which has intrinsic value. For a call option, that represents an option with a strike lower than the current stock price. For a put option, that represents an option with a strike higher than the current stock price. Being in the money is a good thing for long options. It's not so good for short options.
Looking for a better broker and a bonus? Sweet. Get up to $4,000 when you open and fund a Tasty Trade account. Plus, smart tech and a broker who's got your back at Tasty Trade. Make your move, genius. Tasty Trade.
We're back. Thomas, we're back.
Yes, we are.
9:18 Central Time, Thursday, February 6th, almost Valentine's. I'm curious, is this Vegas trip, is this like a Valentine's thing?
No. You mean a Valentine's trip?
So you've got something else planned for your significant other for Valentine's Day. Could you, I don't know if she watched it or not, this might be a secret, but could you tell us what have you bought your wife, your beautiful wife, and what do you have planned for Valentine's Day? I'm curious.
It's funny. I don't even know. I know when Valentine's Day is, but I'll tell you a funny story. When I first met Corinne a long time ago, we just started dating, and my dad's birthday was on Valentine's Day. He was born on February 14th. So we had just started dating like a month or two before Valentine's Day, and she's like, what do you are we doing something for Valentine's? I don't remember exactly how it came up, but Valentine's Day came up, and I go, no, I got to go take my dad out to dinner because it's his birthday. And she's like, you're so full of crap.
A sign of things to come. I protest.
She's like, I don't believe
Valentine's
you for one
Day.
second that that's your dad's birthday. I'm like,
I hate it.
All right.
I hate Valentine's Day. I hate a forced show of affection. Some commercial interest is forcing me to buy flowers and candy to show my love and affection for the one I love. And if I don't do it, if I don't do what you've socially pressured me into buying today, these trinkets that are going to die or rot in 3 days, then I somehow am in the doghouse with my lady. How does that work? How does that work? It's a can't lose for guys. Is it not?
No, for guys, it's a can't win.
Yeah, can't win. Sorry. Can't win.
Yeah. No, guys, Valentine's Day is the worst. And then the problem with Valentine's Day is, like, there's a bunch of guys that are gutless, and they give in to the whole concept of Valentine's Day. And what that does is it ruins it for the rest of us. Like, for all the losers out there that, like, I've worked so hard to set the bar so low that the expectations for me, there are no expectations. And that's something that, I've worked a long time on that.
Men of Tasty Trade. We need that's a movement. Men of Tasty Trade band together. Let's talk to our wives. Let's sit down. Let's talk to each other and just say, look, this is a commercial interest. This doesn't benefit us. We can express our love on February 18th, and we can buy each other. We can make each other, rings. You can do anything. Why are we buying flowers and candy?
Well, I mean, yeah. And anyway, I've gotten, I've worked my way past the importance of Valentine's Day. So, like, I've survived. We've had bigger issues over the last couple of decades than Valentine's Day. So when you've been married long enough, Valentine's Day moves to kind of the bottom rung. It doesn't matter anymore.
If there was ever a stream that a newly married young man should not be listening to, should not take advice from, it is this stream right here. It's this me. Advice.
It's me for sure. For any trader, I've always said this, like, traders, I'm surprised any marriage to any floor trader in Chicago ever lasted more than, not that these women were angels themselves. Like, you know what I'm saying? It's like, it's not, guys married women that fit their personalities. And there was like,
Watch it.
I know.
Easy.
You're going to, I don't want to.
Take it back.
I was with you on Valentine's Day. You're going somewhere I do not want to co-sign.
Hold on, what do you mean you were with me on Valentine's Day?
Yeah, I'm down with the whole no Valentine's Day thing, but now you're about to dog people's wives right now. I want no parts of this.
No, I'm just saying they're not altar girls, okay? These are not like, it's not like we were marrying the Amish, It's
Amish? Like Amish? Is that what you're trying to say?
Amish, yes.
By the way, the Chinese have got it figured out. So Chinese New Year is kind of going on or just passed. The year of the snake. Welcome to it, everybody. And so I had to do visiting for Chinese New Year. So every day was a day with the in-laws or the in-laws family somewhere, something like this. But they give each other red packets. And it has always infuriated me for like Christmas or Halloween, whatever. We just buy depreciating assets and give it to somebody. So like the Mattel family, they don't mind it. They got a sweet gig going on in holiday season. So does the Bezos family. But like Chinese just give each other red packets of money. And I'm like, okay, that's not an
What's
appreciating
a red packet
asset.
of money? What is that?
Ang Pao, something like this. What do you mean, what is it? It's a red envelope, and you put money in it, and that's your gift to somebody. Not a depreciating plastic trinket that's been shipped in under the de minimis laws, but actual money, hard, cold cash, and you go do something with this. I like that. So that's the style.
My last Valentine's Day story. So every year they used to have like the money show in New York City around Valentine's Day. And every year I would drag Beth with me. And so Beth would be like, how many years, Beth? Like 5 years in a row. She'd be with me on Valentine's Day in New York City. And it would be like me and Frankie and Beth. And she'd be like, I cannot believe I'm spending another Valentine's Day single with you losers in New York City, going out to dinner on Valentine's Day. She goes, this is so depressing.
I can speak for myself, and I loved every minute of it. So
liar. She'd be like, I can't believe I have to go out to dinner on Valentine's Day with you guys again.
We had some fun Valentine's dinners.
Oh yeah, remember when Frankie Walsh found that trench coat and wore it for the whole weekend?
I don't know if you did, Beth, but we had some fun Valentine's Day dinners.
I did. Frankie has all the stories, so he knows them all.
Yeah. But that was funny.
Well,
we spent so many years. I think I spent like 5 years of Valentine's with Beth. I spent like 3 years of Valentine's Day dinners with Don Kaufman, like I mean, in a Chinese restaurant, looking at each other going, "Oh, this is not good."
That sounds about right, man.
Yeah. Yeah, I definitely spent Valentine's Days. Frankie's in the chat room. I spent Valentine's Days with Frankie for sure. We spent multiple Valentine's Days together on the road.
You know what? You know what's funny though? This chat's full of people that if you gave them the choice, a dinner out for Valentine's Day, you know, and chocolates or whatever, or New York City with the Tasty crew, Frankie, Tom, and the whole gang, they're choosing that every time. 10 out of 10
I wouldn't trade those Valentine's Days in Chinatown with the boys for anything. I mean, those were great. Yeah. No, if I go out for Valentine's Day.
By the way, I was there for one or two of those, and I love how you just don't throw me in any of these stories. Thank you very much.
Well, you're like the bat. You know, you guys would do the little.
That's so true. So true.
You guys are, you know, Tony'd be
Sneak
like,
off.
I'd be like, "Where's Tony? He was here a minute ago," and he'd be gone.
Yes, that's so true.
You're like him. You're like, "Where's Victor?" He'd be like, "He was here a minute ago."
I'm
my job to watch him.
out with Vecchio in the clubs, especially Vegas. Come on, man. I'm smoke bombing for sure. I'm saying I'm going back to the room. I got an early night, and I'm going. Come on.
All right, we got to do this segment. This is the market measure today from the sponsored by SIBO, and we're doing our 0 DT piece. Let's do it. Vic, this one's a little heavy. Just warning you. Okay. We had a lot of requests for how far out. You know, like when you do 0 days. We recently had a rising star on that was doing a lot of 0-day trades, and then he did a bunch of like weekly options and some monthly options against the 0 days. And a lot of people wrote into us, like hundreds of thousands of people watched the videos, and they wrote into us about, you know, different mechanics that he was using. And we decided to do a little piece of research because we got so many emails on the wings. So it's $120,000, Vic, to sell a one-lot strangle in the SPX on a 0 day. Okay, just to give you some context, $120,000 for a 1 day 0 DT that you're holding for trying to make, you know, a few dollars. So it's not really efficient use of capital. So people buy wings, and by buying wings, you take the $120,000 down to a couple $1,000, right? So buying the wings makes sense. It reduces your it's just more capital efficient. There's nothing else to it. It's not a risk thing. It's a capital efficiency thing. So we've looked at a bunch of different things, like how far out should we buy the wings, and should we do the wings in the 0 day where they're going to rip, or should we do the wings longer dated, 7 days? Should we do the wings 30 days out? Should we do the wings at what particular strike? You know, just to how wide should they be? Just to be the most mechanical and optimize the wings as best we can. So that's what this segment is today. Long dated wings for 0 DTs. How far out should we go to lose the least amount of theta and to give ourselves kind of to optimize the trade? So it's not the most capital efficient way, but it's very capital efficient, and yet it optimizes our premium risk. So undefined risk trades have higher probabilities of profit and upside potential than similar defined risk strategies. So placing these trades in 0 DTs, however, is impractical because of the regulatory buying power requirement minimums for the spot price and the strikes, but neglect time until expiration. Because of this, we've been exploring using very cheap 0 DT options to turn our 0 DT strategies into wide iron condors. But instead of purchasing the wings that are likely to lose all their value in the zeros, what if we use longer dated options to form what we call short-term diagonals, or effectively, Vic, we used to call this like a strangle swap, same thing, right? We're selling a front month strangle, we're buying a back month strangle to define our risk, but really for capital efficiency. Selling a front month strangle, buying a back month strangle, you can call it a double diagonal, call it whatever you want. It doesn't matter. It's a strangle swap. Let's go to the next slide. It's all done for capital efficiency. So we did a 2-year study using the 0DT SPX options. At the market open, we sold 20, 30, and 40 delta strangles, and we paired them with the 30 DTE, so going out 1 month. And instead of going to the expected move like we've done in the past, which showed to be very effective, we went to 5, 10, and 15 delta options rather than the expected move. We examined either closing the strangles if they reached 25% of max profit or simply leaving them on through expiration. The wings were sold back just before the close. So we closed everything out. There's no holding the wings here. A lot of people like to hold the wings just because, then they can put the trade on tomorrow. They don't have to get it in and out. We computed the net daily performance, including the wings and the guts, and the resulting buying powers, noting that the averages of the wings occasionally, but they were sold for less than cost. All the trades were assumed to be done at mid-price. Let's go to the next slide and we'll see some of the results. So this is our preferred strangle, Vic. This is the 20 delta short strikes. This is kind of where we live. And if you go, the key thing here is if you go your P&L per day with a 25% profit target, including all the losses that you carry forward and everything else, what's nice about this is that you make money using the 15, the 10, and the 5 delta long strikes. But without management, meaning you don't take your profits 25%, you lose money no matter what you do. The average daily P&L is still a positive number, and the average wing cost per day, we're just putting it up there, about $40 a day. So why is this relevant? It is because it shows you how important it is to manage your trades early. It's all about managing your trades early. That's all it is. 90% of the time your trades work. If you do this, it's all about managing trades early. Let's go next slide. So if you go to the 30 delta, you make more money because you take more risk. You would argue here that your P&L per day losses without management isn't that much worse, and you make over double the money. So this becomes attractive. Your wing cost is the same. So this actually becomes not bad at 30 deltas. So absolutely consideration. And if you go to the next slide, Beth, it's a 40 delta. And if you go to the 40 deltas here, you make even more money and your loss per day isn't that bad either. So the argument here is it doesn't matter so much if you do the 20 delta, which is less risk, the 30 delta, which is kind of in the middle, and the 40 delta, which is a little bit more risk. But the reality of all these, you get paid for taking the additional risk. Your average daily P&L is a positive number. Your wing cost stays the same no matter what, and you can pick your poison. But the whole key here is managing at 25%. That is your entire key. That is, that's the whole game. Anything jump off the screen at you?
No. I mean, I guess the question would be more on like data availability. So it's a 2-year study, and over the last 2 years,
it's a 2-year study using data every 10 minutes in the zeros.
And in the last 2 years, vol has been relatively constrained.
Yep.
So that's it's not even a caveat, just something to note that it informs the study.
It has definitely had an impact on this study, no question about it. The last 2 years have been very good for 0DTs. If you go to the next slide, we'll tie some of it together. So in the takeaways, selling 0DT premium is just what Vic said, especially close to at the money, has been very profitable over the recent years if you've taken profits aggressively. And that's because the market hasn't had a lot of huge moves. Selling the naked 0DT premium is prohibitive for regulatory reasons. However, if you don't buy the wings or you don't diagonalize it, the longer dated wings were significantly more expensive than using the zero wings, but much of that expense was recouped when the position was sold out. It only cost you $40 a day. The zeros are much more expensive than that in total. In total, the costs were similar, but the BPRs were higher for the diagonals than iron condors. And what did they write here? Even if it's so much lower than selling the naked strangles. Yeah, I mean, of course, naked strangles are kind of out of the question. After exploring a variety of ways, to control the buying power for zero DT strangles or zero DT strategies in general, using very cheap zero DT options seems to be the most cost-effective way of doing it, which is a market measure we did in the past. But if you wanted to buy the 7 days or 30 days, it's a little bit more expensive. It might give you a little bit more peace of mind, but you can do that as well. It doesn't change your probability of profit at all.
Let me ask you a question then.
Yeah.
Seeing that the 40 delta is most profitable with the management, would you, knowing that your preferred is the 20 delta short strike, would you change your trading to go to 40 delta, or would you personally stay with the 20 delta with the 25% management?
It's really funny because Tony and I tend to use the 25 delta right between the 20 and 30. It's usually whatever closest. So like it's easy to sit here and go, we'll use the 20 or the 30, but you have to kind of see what the premium is when you get there. Mm-hmm. And if you looked at it today, you'd probably go, well, the 30's got the most juice relative, the 20's too cheap. So it really just depends. We're usually around the 20. When we do it early in the morning, we're around the 25. If we do it the night before, we're at the 20. If we do it a little bit later in the day, we're at the 30. So it really just depends. We don't do 40s in general.
Yeah,
but
I figured.
We're a little behind here, so we've been playing catch up all day. We're gonna take a short break. Victor's sitting in for the Bat, and I'm Tom Sosnoff. He's Victor Jones. And tomorrow you'll have Liz and Jenny. It's been a packed week, and Tony will be back on Monday. Scott's up next, Vic. We'll take a short break.
Cool.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Know someone who needs a better broker? For 1 month only, earn $500 for each qualified person you refer to Tasty Trade. See how it pays to have friends? Terms and conditions apply. Tasty Trade.
If you missed the live show, here's our cherry on top weekly recap.
You think I'm not listening over here? I know you call me silly a couple times and stuff like that, but we're idiotic and stuff like that. But I got 2 ears and I can't close them, although I'd like to sometimes. Like my eyes, I can close those, and I do that often while we're on the show.
Let's go to the next slide, Beth.
I don't close my ears. Take a quick 90 seconds, because your throat's hurting. You're not feeling good today.
No, I feel fine.
Yeah, you look great.
Thank you.
You look great. This is where my ears stay open, but my eyes get closed.
Hey, I want to say gung hei fak choi.
Yeah.
It is Happy Chinese New Year.
It is.
For you today. Yes, that's pretty good, right? My Chinese is pretty good.
That would be pretty good.
Yeah, it's the year of the snake. So I looked this up before the show. You are a tiger.
You bet your sweet boopy I am.
No, it says here the tiger has a mixture of traits and can be aggressive, courageous, candid, and sensitive. Ding, ding, ding. I am a goat, and goats are elegant and creative, oh my God, compassionate and amicable, and will avoid confrontation when possible. The chicken or rooster is a pioneer in spirit, devoted to work. This focus on work and knowledge can mean that the character is often seen as selfish and eccentric. Damn, China, you didn't have to go this hard.
Welcome, Typhoid Mary. How are you?
I'm back, and I plan to get everybody here infected.
I could see that.
Yes.
You still don't know what's wrong with you medically.
I'm perfect.
Uh-huh.
No, I feel fine. I just have a cough.
But working your way back by not going to a doctor, not taking any medication, not getting rest and fluids.
Over-the-counter medication. You never went to the doctor, never got any.
But you don't know what's wrong with you. What are you treating? Like, is it a cold? Is it COVID? Is it allergies?
No, it's all.
Is it karma?
Karma. Yes. I hate when being an emergency contact.
Yeah, that's.
I don't want to be that.
Yeah.
I don't lie.
I used to have this guy that would be like, "Can you be my emergency contact?" And I'm like, "Why?" He's like, "Go well, if my alarm."
Because I'm your son.
Come on, Dad.
Our new store is about to open. We partnered with Threadless and we did. We partnered with Threadless and
this is a collab. It's just
hats, socks, shirts, pants, sweats.
You should model all the clothes and show as a
Nicky,
lookbook.
he doesn't.
What are you talking about? I already am.
No, I know, but on the site.
Yeah, what do you think's in there?
Oh, it's all you? Okay,
Yeah, it's just pictures of me.
Oh, beautiful.
Yeah, it's just me in different outfits.
Yeah, we want to put our the foot one.
The socks, the pants.
How about the thong?
The shirt.
Get the full scoop by checking out the archives at tastylive.com.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
We're back. Thomas, we're back, my friend. That's my best Tony impression, Scott. That's really all I got. That's all I can do.
It's not very good, but if you're going to bring me in, just bring me in. First of all, good afternoon.
Oh, my bad. I didn't know. See, I don't know all the intricate. I thought you were on the screen.
Yeah, no problem.
Apologies.
So
No,
Vic. He needs his own this whole he needs to be introduced every day.
A marching band would be nice, but I'll take I'll take what I got.
The stuff we have to go through for him.
Yeah, we're down. What have you guys been discussing that's been so important? You cut into
Day.
my time. I mean, I'm down.
Valentine's Day.
We've covered everything. We just finished up on Valentine's Day, though.
Where do you stand? Where do you stand on Valentine's Day, Scott Sheridan? Are you pro Valentine's Day, or do you want it abolished?
Okay. First of all, Valentine's Day as a little kid is the greatest because you get to go with the little Beth. Yes or no? Does your daughter still do this? You get to will you be my Valentine? You got the little Brock's hearts and the little messages. Does she still get to do that, or do they take all the fun away from kids?
Oh no, I just ordered all of the crappy Valentines from Amazon, and that's an activity for this weekend. Yes.
And it's great because then she's 5. Right?
She's 6, in kindergarten.
6.
Yeah.
Sorry. So 6. So at that age, boys, girls are still friendly. It's not.
Oh yeah.
Your son is probably, Mom, that's awkward. I'm not giving that to a girl.
No, they do. They give them to the whole class.
Oh, they still do.
Oh yeah.
In the shoe box. In the shoe boxes.
Yep, they make a little bag, but just no food.
I'm totally pro Valentine's Day at that age. If you're asking me for me now with my wife, am I getting her anything? Absolutely not. Okay. But
I don't want anything either. For the record, I don't want anything either.
But if and when I ever have the pleasure of having grandkids, all over it. Love it.
Yeah.
Yeah.
That's a good take. Nuanced. Yeah. I like that take.
No, I can tell you what Tom said. Okay.
What did he say?
It's the dumbest holiday ever. It's just completely made up. It's just a step better than Mother's Day, but we have to celebrate Mother's Day. Go ahead. How am I doing? Your anniversary, right there. Birthdays, right there. We don't celebrate anything in the Sosnoff household. Okay, you're just lucky. You wake up. You just wake up in the morning. That's your celebration. Get to work.
You're very close. Some of that I said, in fairness, but yes, you nailed it.
Okay.
That's what we say. That's what we say at Sosnoff. We say, get to work.
Get to work. So in that you don't work with the missus, what do you get to say to her? I know you're not. When is Valentine's Day, by the way? What's today? 6, 7. So today's Friday. So it's a week from tomorrow.
Yeah,
a week
something
from
like
tomorrow.
that.
Something like that.
Yeah. Oh, it's time because you got all the plans already. So roses,
oh my gosh,
candy.
you guys! Yes, next Friday.
February 14th, right?
Wait a minute. Is this a United States holiday or is this worldwide?
Oh, that's a good question. That's a good question.
That is a good
technically,
question.
It's technically worldwide because it's not even a real holiday in the U.S. It's not like it's not like a bank holiday or anything.
No, of course it's not. It's like,
So it's a worldwide.
Whatever. There's like every day there's a holiday. It's like whatever. There's something. But February 14th, I think I saw it's like 15 billion or something. 15 billion is spent on this.
See, you think the same way. I think. Why are you forcing me to show my love and affection for my wife through I have to buy flowers and chocolates, and if I don't do that on this particular day for 24 hours, And by the way, she bites. She bites. If I don't do this,
she bites. She bites on the candy.
She's all in. Yeah, she's all in. If I don't show up with the goods, she's not.
Wait a minute. Where are you in the relationship? Are you at the point where she's like, I don't really care?
Where is he in the relationship? How much trouble can you be in? That's where he's at. Okay.
Wait a minute. Where are you? Because
he lives in that danger zone, which is he lives in that little bubble at the end where
I'll know that it's bad if you tell me she gives you you don't need to get me anything, because when they say you don't need to get me anything, you better get her something.
I love that question. Where is he in the relationship? Well, there's 2 bags that are packed living in the front closet, okay, that at any point can be pushed out the front door. That's where he's at.
Right,
and he's got a one-way plane ticket back to America. Sure. Yeah. That's where he's at.
So I guess you're still getting the flowers and the chocolate. Average expenditure, I think, is like $138.
Vic,
Tom, where are you in that list?
Scott is not the right person to ask, okay? He doesn't understand any of this stuff. You're going to go to me because I'm closer to you than I'm closer to where you are than where Scott is. He doesn't know.
No. You gave me an over-under on my marriage of 18 months. I went up to you. I gave you a shot. You were one of the first people I told. I said, Tom, I got married. Do you have any advice for me? He goes, I give it 18 months. And he walked away from me, Scott. That's the only thing he said.
I was being generous.
You're wrong. I'm 5 years in, I think. Maybe close to 6.
Well, your son's 5, so you're at least 5.
Right. You need to know those things. So when she asks, you just rolls off your tongue. Of course I know what that is.
Of course,
right?
Of course I am.
All right.
I'm in trouble.
Oh yeah.
Hopefully, she doesn't.
She's not watching.
Hopefully she doesn't. Yeah, hopefully she doesn't watch. Right.
Markets are heavy. They're going negative.
Markets are heavy, Vic. Markets are heavy. NASDAQ's negative. Dow's negative. Russell's negative. S&P's up $1. They're about to go negative.
Okay, could you guys please stop? S&Ps are up $1 just off all-time highs. This is heavy.
I'm saying they've been trading heavy all day.
S&Ps are down. S&Ps are down in the day. Yes, this is heavy.
Okay.
Yeah, it's ugly. It's crashing.
Speaking of heavy. Okay, speaking of heavy.
Yeah.
Have you ever used, Beth, this is probably going to be more up your alley. To me, this is my vision of hell. But do you know these blankets like these weighted blankets that are supposed to...
I've heard of them.
Oh, yeah.
Yeah. Like compression. Yeah.
Oh, please tell me that you're not one of those people.
I'm not. My son likes one, but I know people love them.
Oh my God. The six got one.
Yeah.
And I want just a down blanket, nice and light, just cover me, and I'm nice. Yeah. I'm like, how do you breathe? It's like, it's okay, Tom, Victor, do you know what I'm talking about? It's like a 25-pound blanket.
I'm the wrong guy. I'm the wrong guy. I need affection.
Like the idea of a 25-pound
I need affection,
blanket.
and I don't get any, Scott. So a big, heavy blanket for me is going to be like somebody give me a nice bear hug. You know what I mean?
Oh, wait a minute. It's therapy hour. Hold on. Let's talk.
Just kidding.
Go ahead. Let's talk. If you need a hug, I'm giving you a virtual hug.
No. Things are going terrific, Scott. Things are
You're
going.
You're probably a close sleeper too.
No, isn't that supposed to be good for like autism? Isn't that sort of the thing?
I thought it was good. I thought it was good for dogs when it's thundering out. Like that's a thunder blanket. You know, like.
There we go. Of course.
There we go. Of course. It's the dog. I actually think, Tom, you're correct. They do make something like that for dogs to make them feel like they're protected.
Comforted.
Anyway, you were just saying heavy, and I don't know what made me think about it. Oh, spoos, heavy off the spoos. Now they're up 250. Okay. Heavy off, heavy on. Okay.
Not a fan.
Not a fan. Heavy off. Okay. Let's get to some business. Should we get to some business?
I guess.
Sure, because 9:50.
Oh, well, excuse me. If you would have brought me on at my normal time as opposed to 20 minutes in.
Hey, we've been going strong all week with guest host Scott. I mean, that's
totally my fault, Scott.
No, it's
First
not.
of all, we went long in an opening segment, and he's been like passively aggressively making it my fault the whole show. The whole show has been like, we're running a little bit behind this guy.
And what Tom doesn't want to say, but he's going to say it, I'll say it for him. People are so happy if my time gets cut short because nobody wants to listen to me anyway. So you actually had quality conversations as opposed to when I'm on. Go ahead. How'd I do?
I can read you the emails from yesterday. They were really funny. They were like, the show was so good until you brought Scott on.
See? This is exactly my point. I appreciate that. Somebody wrote to me and they said, Scott is the fun vacuum. And I'm like, I know. What can I do? What can I do? I apologize. I will work on my anti-fun vacuumism and see what I can do. Should we get to some business?
Sure.
Let's get to it.
All right. Top 15 symbols going to the system. First 40 minutes a day. No broad-based indices or futures. Time for you. Number 15, Uber at a 26. For everybody else, Tesla at a 35. NVIDIA at a 53. PLTR at a 48. Qualcomm at a 25, ARM at an 8, AMD at an 18, MSTR at a 29, Goog with an L at a 21, Microsoft at a 19, Meta at a 13, Ford at a 37, Amazon at a 67, Apple at a 31, Lilly at a 15, and number 15 for Tom, Uber at a 26. Rounding out the next 10 is not a big list. Is Costco at a 66, SMCI at a 55, and GLD at a 64.
A lot of those things are trading a little heavy today, Scott.
Oh, heavy off. Heavy on, heavy off.
What's not trading heavy today is Uber.
Yeah, up 4.25%.
Uber's up a lot, and your two earnings plays from this week that were down are both up a lot. Uber's up a lot, and PLTR is up huge. That's your stock, Vic.
It is. What do you think about? Do you have strong thoughts about Palantir at all, Scott?
I don't. Don't trade it. No position. I don't.
You know what? I forgot why I hated Palantir so much, and then somebody sent me an email and reminded me. It's a Peter Thiel stock. It's like his baby.
Is.
That's right. I hate that guy. I despise him. He's such a dick. Of all, he's a bigger dick than Elon. So yeah.
Oh wow, that's big. Those are big words coming from you.
I know. Like if you go in the order of just who's the biggest kind of douche out there, I would say Peter Thiel, then Elon, and then Bill Ackman. 1, 2, 3.
Oh wow.
Those would be like my 1, 2, 3 in finance. Who is your finance?
Oh, Scott? I'm not going there. I don't publicly flame. Sorry.
Oh, come on.
Listening.
You're in this business. You can't go after Gary. Your old number one would have been Gensler, but he's gone.
No, correct. I'm sorry. I put Elon at the top of the list.
Really? You too, Scott?
Yeah. Oh my God. One of the great. You know how sometimes you can say a great trade is a trade you never made. My greatest trade for sure was not putting money into SpaceX when I had the chance. And I could care less. I'm not talking about it from the standpoint of whether the company is going to do well and it's going to make money. I don't want to be involved with anything like that. The 6 is getting rid of the Tesla as soon as we're back in Chicago.
Hey, Scott, I told Victor I saw the greatest license plate the other day. It was on a Tesla. It said before. All it said was before.
Right? I mean, you guys alienated half of his buyers. I mean, she's getting rid of her car as soon as we get back to Chicago. Gone. I don't care what she gets for it. It's gone.
So what are you going to do? Lucid? Something like this?
I mean, I don't care. She can go whatever she wants to get. That's on her. She wants Lucid doesn't have an SUV, so she's got the X, which I can't stand the car. I've never liked the car.
You can get a Rivian. You can get a Rivian. It's nice.
Tell her that. I would go for the Rivian pickup. I'll see how all that goes.
So Scott, you trade your politics. So if you don't like somebody or you don't like their politics, you won't. You trade your politics.
Correct. Will not support their business.
And you too, Tom.
Yeah. Because it can't. There have to be. Listen, it's. I love America for the simple reason you can be whatever you want to be and do whatever you want to do. I don't have to support it. So if, to me, Elon Musk has gone so far off the deep end, I have no interest in supporting him in any way, shape, or form. And history will prove that he's going to be wrong. History is going to prove that.
I'm really going to miss my nice warm Tesla in the winter.
No, you're not. No, you're not.
I'm really going to miss the nice warm Tesla.
I'm sure that whatever electric car you get, I'm sure will do the same thing.
Heat it up, nice and cozy. Really,
here comes Tom. Tom's fading already. You know what? Maybe I'll keep the Tesla. You could get by with a couple.
I think he's going to keep it.
You think so?
I think so.
I mean, there's certain businesses. I'm not going to start naming them, calling them out, but I won't support. Just because, listen, again, they can do whatever they want to do, and that's the great thing about the country. I can take my money, do what I want to do. They can take their money and do what they want to do. You same thing. I don't have to support their businesses. That's it.
We make exceptions, Vic. We support you.
Yeah. And Tom, one of Tom's big exceptions is a nice Chick-fil-A sandwich. Yeah, he can get by with.
Oh no. I'll do. I will not draw the line at born again chicken. I love born again chicken.
Oh, you guys better get ready. Better get ready.
For what?
RFK gets confirmed. That whole Chick-fil-A, no more 50 ingredients in a Chick-fil-A hamburger bun.
Let me explain something to you.
It's going to taste completely different.
Let me explain something to you. There's certain things you don't mess with.
Don't mess with the chicken formula.
Social Security, Medicare, Medicaid, and Chick-fil-A. Okay? Okay, you start going in that direction, you're not going to be in office very long. Nope. Do not mess with fried chicken.
It's going to be a whole new America. We're going to be eating broccoli. We're going to be single ingredients in fast food restaurants.
Do you want to know something?
He is right about that. I mean, fast food is not good.
He's absolutely 100% right. America is unhealthy. 100% right.
Yes, totally.
Nobody's arguing that. But I'm going to tell you something about growing up. I grew up in an area where it was all Jews and Italians. All Jews, all Italians. That's all that we had. Nobody made fried chicken. So I wasn't introduced to fried chicken. We just didn't have fried chicken. It didn't exist. There's no fried chicken sandwiches. There's none of that stuff growing up. Now that I've been introduced to fried chicken, I will fight to my last breath to keep fried chicken sandwiches alive under all circumstances.
Oh, the chicken will be there. It'll just be, we won't do factory farming anymore.
Yeah, it'll be tasteless.
And yeah, and you won't want it. You won't be instantly addicted because they're playing tricks with your brain, Tom.
Well, my Super Bowl party is having Dave's hot chicken as one of the dishes on the side.
That's nice. It would have been nice to have an invite. Vic, do you get your invite to Tom's Super Bowl party? I didn't.
I'm in Singapore, man. I'm watching a Super Bowl at 7 a.m, Scott. Have you ever done that?
No.
It loses a lot of the appeal. I don't care.
Okay. 7 a.m.
I'm Midwest. So.
Kansas City.
Yeah, Mahomes. So.
Okay. Yes, Tom. You have $200. Kansas City minus 1.5. Is that what you're asking?
I'm just confirming.
Yes.
Check.
You know what? Now I realize the value of jewels too. There's no square pools this year.
Yeah. Oh, at my house. Do you want in?
I trust you. No. Kidding me?
Explain to me why you guys have been doing price discovery your whole lives. You have intimate knowledge of gambling and making lines, and you mean to tell me you guys are doing squares? You don't do anything like cool, no parlays, nobody's making a line, and you guys, the market makers, you guys are doing squares.
No. I have a bunch of people coming over.
Singapore?
It's fun.
Do you get DraftKings in Singapore?
In Singapore, I don't know. I don't know.
Probably not. I don't think Singapore allows you to gamble. That's not good for you. Anyway, I'll be making parlays. That's great.
I just tried. Access denied.
Sport would you bet on?
DraftKings.com. Access denied.
What sport? What's the Singapore play? I mean, what sport do they have there?
Cricket?
Cricket's kind of popular here. Yeah. Rugby's really popular, and soccer, football, whatever you say.
Yeah. All right.
Yeah, I was going to say gambling. Anyway, right. So DraftKings is dangerous because you can just sit there and fire, and the lines are constantly changing. So it's awesome. It's as opposed to like, here's the bet, like said Tom, 1.5. That line will change, 500 times during the game. Great.
So Scott, if you want to be in the square pool, just let me know. We'll have some extra squares.
Okay. Like if your daughter's going, I trust her. I don't trust you. You go, yeah, you're in for 100. Just send 100, you're in. Oh, you were close, but you didn't quite hit it. All right, I know how that works.
Scott, right. OpenAI's running an $8 million commercial. What do you think the odds are that the viewing public is going to have a favorable impression of OpenAI's Super Bowl commercial?
Oh, I think it'll be good. I think it'll be good commercial.
I have no idea what it is. All I know is that the NFL eliminated stop racism from the end zones. They got rid of that one. Okay, that was going to be there. They're like, yeah, we can have a little racism now. Don't worry about it. So that's the world we live in now. Yeah, don't worry about it. We were going to have that out there, but no, it's probably not what people want to see anymore. So let's get back to racism. Okay, on that note, Victor, pleasure seeing you. Enjoy Singapore.
Good to see you, Scott.
All right.
Thanks, Vic. Thank you so much for sitting in today. That was awesome. Thank you for the 3 hours, and we'll see you. There is no show Sunday night. It's Super Bowl.
Oh, look at you!
You know what?
Feeling charitable really as the overlord.
That's very selfish of you.
Yeah.
Because you want to watch the Super Bowl.
Mm-hmm.
Yeah.
You don't think you could draw?
I think. 100%.
That you couldn't draw.
100% we draw. I guarantee you, it would probably be one of our most viewed Sundays.
We had our biggest audience. We had our biggest audience ever last weekend, but we're not going to be live this weekend.
Were you on the show last weekend?
No, but the people thought I was going to be. They thought I was going to be.
That's probably true.
Oh my God, there's always an answer. All right, let Liz and Jenny in.
Liz and Jenny are in the wings. They're waiting to get in here. And don't forget, Liz and Jenny are hosting the show tomorrow. This afternoon, it'll be Ilya and...
thank God I get Liz and Jenny tomorrow. Oh
Ilya and Chris Vecchio doing Last Call today. And Scott will be on with Liz and Jenny tomorrow.
And it's going to be amazing. I have no idea. It's always a great show when I get Liz and Jenny. Always.
Ciao, everybody. Ciao for now.
Goodbye.
Dear Cheapo Airlines, thank you so much for sending my luggage on a magical side quest instead of my planned destination. I am glad that I had the sustenance of the single pretzel I was served on board while I was waiting for my bag to arrive. Looking forward to your reply, because surely the response can't be as delayed as long as my flight was. Warm regards, Bettina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
Every day I do God's work here.
From the smart mouths at tastylive.
Woof! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Liz Deerking, Eastern Illinois University. #1, because dedication and motivation equals success. Being able to make that one trade that builds on the next is the very first step.
Matt Helmuth, Illinois State University. #30, because that's how many of Tom's credit card purchases I have to decline a week. Stop trying to buy a suckling pig online, Tom.
Bobby Shepard, School of the Art Institute of Chicago. #6, because that's how many revisions every piece of copy goes through.
Jenny Andrews, University of Illinois Urbana-Champaign. #18, because that's the average of the VIX over the last 10 years, and I cannot wait for it to get back there.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
This is Chicago.
We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on tastylive.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Hello, everybody, and welcome to the Liz and Jenny Show. My name is Jenny. That beautiful blonde in red is Liz. It's not Valentine's Day yet. It is just Red Shirt Thursday.
Red Shirt Thursday. I'm in my absolute uniform, as my husband likes to call it. Anytime I am not out of this house, I'm always in head-to-toe athleisure wear. So this is my uniform. I've decided that I'm just going to lean in, and you will see this every Thursday into perpetuity.
You know what, Liz? If you will send me the link for that, I will get that too, and that could be our Thursday uniform. I would like nothing more than a Thursday uniform.
Wait, could you do me a favor? I know you have an embroidery shop. If I give you mine, will you embroider a cursive L right here?
Or I could embroider like Tasty Live or Liz and Jenny Show or something. I'll order some for myself and I'll take yours and I'll get them all embroidered.
Well, I would like mine to say an L and yours to say a J. I think that'd be fun. Just like Laverne and Shirley.
Sure. I just don't know. Somebody said, and I'm not 100% sure, if we're seeing like opposite, like would the L or the J look backwards?
I don't know. Well, if that's the case, our logo will be backwards too. I don't know. Right? It would be.
Well, okay, but we'll figure it out. Anyway, send me the link for that top. I'll order a couple for myself. I'll take them all. I'll have to get them all embroidered with something for us.
We only need one each because I do my laundry more than once a week. So you're like a couple. You're going to have like 6.
I'll take 2, please. I was just trying to see what this was going to, I forgot.
Oh, yeah.
The balloons.
Yay. All right, Jenny Andrews, would you like to pop into the platform and see the debacle of earnings? And I'm kind of teasing about this. It's fine. Everything's fine. But we've got 2 that are a little bit of a trouble that we got to look at.
I know. Okay, so ARM's kind of been all over the place. It's not as bad as it could have been. It was not a full loss. This morning, you reestablished yours for a credit. We can reestablish this for a credit. So then we paid $670. We still have money into the trade, but then it just kind of keeps it going a little bit longer. If we want to keep it going like that, I think choices with these are reestablish or turn it into a short put or take your $350 and call it a day.
Yeah, I mean, I just kind of mechanically did this. We're going to talk through all those scenarios. You can take this, close it. You can still see it's worth $356, so not bad. Now, what I did with mine, I closed mine, but I reestablished with 8-day, 15-day. So I don't know what you want to do. This is what I did, and I did it for a credit.
Oh, I was looking. Sorry, I think when I pulled it up, I was looking at the 167, and then that was a credit. But it doesn't. It doesn't.
So,
yeah, it doesn't.
So you can reestablish for even, meaning we're giving ourselves a little bit more duration. We still have this theta decay in this. We'll go with that one. We'll make it cheaper, and we'll do it for even. So we're selling. We are getting rid of our 1 day. We're selling at the expected move. We're getting rid of our long here. We're selling at the expected move, the 175 level and the 8-day. And I do this as one click. When I put them in, I'll close them all and I put it in together. So you can kind of see what price you're doing it for. And this morning, I did it for a little bit more of a credit than this, but it was still pretty good.
So yeah, here we're not putting any more buying power in, but we've got the Yes, the one is worth 3 something now. So basically we're, putting that 3 something to keep this going. If you wanted to keep a bullish trade going, it didn't go up on earnings, but this would keep a bullish trade going. If we weren't so bullish, we can turn it into just a short put spread that gives us more room to the downside. A naked put in ARM uses too much buying power, and the margin is high in ARM.
I'm cool with just reestablishing for even. Aren't you?
Yeah, this is what you did. That's fine. This morning, I was able to close mine for about $5. I just closed it and said, ARM, sayonara.
So you took a $200 loss-ish. Yeah, that's fine. There's nothing wrong with that. We have a $300 loss here. I could go either way with this. Like I said, I just did it because I don't mind keeping the ARM position. So let's give it a shot. Let's give it a shot here. Is that okay?
Yeah.
I'm going to go 175. I'm going to keep it cheap so we're not paying too much money for it and pay the 167. So we've got the 175.
Hang on. It's something looked like.
We've got the 175 in the 8-day that we're selling, and we are long the 167 in the 15-day, and it's a 7-cent credit.
Okay.
Ship
it.
Actually, I take it down to 3-cent credit just so
in order to get filled. Otherwise, you'll be adjusting.
Filled, 2-cent credit. Okay, so we're in for a credit. It's extending our duration. Don't let that disillusion you. That is not a win. We are adjusting. Okay, RBLX. I don't know if it's Roblox or Roadblocks, however they say it.
It's like, this is one that there's not really, it's not worth much at all. I really wouldn't do anything to it.
And what we're looking at here, and it's funny because they were both the same thing. Both of these were 1-day, 8-day, and this is worth 18 cents. We're just going to close this up and walk away. That's a loss.
I looked at selling naked puts in Roblox, but the margin in Roblox is high too.
I know. Isn't that crazy?
Yes. So I would just leave that. Luckily, we didn't do Qualcomm because that was down too. So is there a sea change in these earnings? Like, some of these earnings weren't bad, but the stocks were still down. So is there a sea change? Like, would you say, I know we've been doing bullish. Would you ever think of flipping the cards over and doing bearish?
No, I don't. Because I think that if you think you know what the market is doing, I picked a direction, and I think you got to stick with it. In my opinion, I think I got to stick with it because I don't know what the market's doing. You know what I'm saying? I don't know what direction things are going. So by me thinking that I think I know which direction it's going is saying that I'm smarter than the market, and I am not. That's the only reason I like to stick with the same direction. I have no problem if we started with all bearish. Do you know what I mean? But because we started with bullish, I have no direction the market's, no idea which direction the market's going.
So we've got a handful. We have a handful today. Amazon is one of them, probably the biggest one on our list. But it wasn't that expensive. It was about $6.
Oh, was it? I'll take a look at it. I just want to look at Qualcomm too, kind of to your point.
Now, we didn't do Qualcomm, but it's down too.
No, but I was listening this morning, and when the earnings came out, and they were great. They were great earnings for Qualcomm.
Well, that's what I was saying. Like, you know how sometimes, like, it doesn't matter what the earnings are, everything's up. But now we're in a situation where we've had some good earnings and the stocks are down. And yesterday we saw quite a few down. So that.
But you also could have okay earnings and the stock skyrockets.
Yeah.
BLTR is one example of that. And the other one was, what else did that? Netflix did that, where it was like, hey, we're okay, but it went through the roof. So you are getting both action in both directions. Just make sure that you are well aware of your risk. And in that point, Jenny, I'm still happier than a clam. I don't even know why that's an expression. Our clam's very happy that we did the diagonal versus the short puts in all of these.
No, I think the short puts would have been okay. Nothing was beyond its expected move.
No, but you would have had to hold it, and these had high buying power.
Well, but we would have been in it till tomorrow. Like, I think in these scenarios, the short puts would have all been fine. Nothing was beyond its expected move.
I'm still happy I didn't do the short puts because this
morning I thought, I wish I would have just sold puts because they would have been winners instead of the diagonals being losers.
Yeah, I mean, I see what you're saying, but the undefined risk for me, if it does blow itself out of the water, is kind of, it's been, that's the bane of my existence, and that's where I lost everything that I lost last year. And I had a great job. I had a great last year, but every loss that I had was a short put that got killed on earnings.
We've had too many. We have had too many big losses from naked options on earnings. This is why we do defined risk on earnings. Now, I don't regret that decision because nothing's going to take us down. And that's just it. We know nothing's going to take us down in earnings if we're doing defined risk and we aren't doing naked options.
That's right. Nobody's going to break our stride.
But
Nobody's
yesterday,
gonna slow us down.
all the naked options would have been okay. But hindsight's 2020.
Hindsight is 2020. You didn't catch my lyrics I just sang to you, did you? Or spoke to you?
Yes. Nobody's gonna break my stride.
Nobody's gonna slow me down. Oh no.
I've got to keep on. I don't know. Does he keep on moving or keep on rolling?
Moving. Okay. Let's okay, so we did those two. Roblox we're gonna leave. ARM we readjusted. Anything else? All the rest of them are little bits that add up, right? So those were the big losses in our account. Everything else is little bits that's adding up. Let's kind of take a look at the positives. Anything that needs to be adjusted. Let's take a look at Uber. We wound up selling a put. We made back a little bit of our money, but it's almost 50%.
Yeah, I know, right? So I'm curious. Can you see the chart? How much did Uber bounce back?
Right back.
Yeah.
Right back.
Right back.
So kind of keeping an eye on that. We might as well just close this. New trade, new fresh set of eyes. I'm going to take this off in Uber.
Yeah, again, we made some of our money back in Uber. We made 50% on that put. What can you do? I'm just going to look at my account because I did an Uber trade, but I don't know if I noticed that coming back with a vengeance, honestly.
Did you see Chris Vecchio this morning when he was talking about stocks that have had an over, you were driving, I know it was icy, you drove your daughter to school this morning, but Chris Vecchio came on and he was talking to Victor and Tom. They did a great job. Those have been some kind of fun shows. I mean, we missed the bat, but those have been fun shows. And he was saying, name 5 stocks that have gone up over 160% last year. And 2 of them were UAll and Royal Caribbean. The rest were names I was like, I was like, oh my goodness. Look at this.
I know.
Look at UAll.
I know. It's crazy. Okay, so I did look up Uber because I did the same diagonal that we did on earnings. So even though it looks like UL's right back, that diagonal that we did last week because I put in the same one is still down $165.
So you just left it?
I just left it. Left it. So I just looked it up. That's still down $165. So it's made some of its losses back, but it's not back to a scratch.
Okay. Well, so then we did the same thing. We made some of our losses back.
Yeah, we made some of our We made some of our losses back.
Coming through here.
No,
nothing
I was
else.
honestly, if you're in the area, if anywhere that was hit with the ice storm, it was crazy outside this morning. The dogs. I saw 2 kids fall at the bus stop because at 7 some kids meet in the corner in front of my house. I saw 2 kids fall. I saw a lady wipe out on the sidewalk, and my dog did a somersault in the air when she went running outside.
You should have seen me this morning. So and because the dog went out before me and he was like sliding all over the place. So I went like hugged the side of the house and went through my landscaping into my lawn.
You did?
Yes. Because I did not want to set one foot on that. It was a sheet of ice.
Everything was a sheet of ice. This is the message our school sent. Here's the message we got from our principal. Because of the ice, our bus company canceled. There will be no buses. If you take a bus,
you guys didn't have buses.
Oh, we do have buses, but if at a private school, if you want to take a bus, you pay for it. So it's like $2,000 a year, and you pay for it, and then a bus comes to get you. But not many kids. If I have 1,000 kids, maybe 100 kids take a bus. Okay,
for 10%. That's pretty much. That's not bad.
So the message said our bus company is not coming today. If you take a bus and you can't get a ride, you don't have to come to school. Everyone else, there's school.
Yeah.
So
I mean, my kids went, and the driveway and the sidewalks are icy, but the roads were fine.
I think their school is going to have a 50% attendance today. With a message like that, like if you can't get to school, if you feel it's too dangerous and you can't get to school, half the school is not going to be there today.
Yeah, that's true. You might get a 50% attendance rate. That is very, very true. I want to take a look at this. Apple. I know we just put this in 3 days ago. This is our downside put butterfly.
We talked about we would take the risk off and turn it into a butterfly, or we just take the $82. I'm fine with either scenario.
Let's take a look. So what we would do here is we've got $82. This is $250 wide, so we'd have to buy this. No, I'm going to leave it.
Why don't we just take our $82?
Yeah, 70%. Let's do it.
Right. We took in enough of a credit.
I agree with you. Keep it clean. Keep it clean. Get our $1,000 back.
Hey, $82. It's not terrible.
It's not. That's why I was opening it up. I just wanted to take a look at it. Okay, we are taking tweets. I'm going to go to Twitter first. We are going to take a look at gold. So that was our last what's your assumption yesterday, and somebody wanted to be neutral in GC. We're going to take a look at all gold products, right? Kind of going from that perspective. But I'm going to pop into Twitter first, if that's okay. Sure. Frank the Great, love this guy. He comes in with all of our economic indicators. So thank you very much, Frank the Great. And then Bob, this was yesterday, sorry. This is Bob today. Oh my God, wait, hold on.
This is for Liz and Jenny forever. Also looking at rolling 610 call at 400 from Feb 21st to March 21st. Oh, maybe there's a question before this.
Hi, Noelle. She's so cute. I love it. You know, I love
so
babies.
Cute. He was right before it with the question.
Okay.
Happy Richard Thursday. I own 100 shares of SPY at 600 in my Roth IRA. Collar is 610 call, $4 and 602 put. Okay, I rolled the 595. I rolled the 595 put. My choices were 600 for 130. If you're doing a collar, if you're collaring 100 shares of SPY and he's rolling from Feb to March, what one would you roll to?
Hold on. Let's just honestly
like if I have SPY and I'm collaring it and I'm going to March, let's just pick what we would do.
That's what I'm saying. If I had a collar and I'm rolling to March, I'm not worrying about debits or credits. If you're
but he's lower. March, he's in the money. He's rolling his calls in the money. You can see.
Here's the 505 call. 605 call, sorry. I would change it. I mean, honestly, let's go with like a 40 delta. I would go.
He's going to pay so much. He's going to pay so much to change it. No, I see where he's going. He's still getting credit. I would do what he's still getting credit. I would go back to, let's look at his again. Let's see some of these. He's rolling in the money because you can see this.
He's got the 610 call.
It's 600.
He's out of the money.
610 call, 602 put. If I rolled the 595 put, my choices were 600, 130 cost, 601, 60. Oh, so those are the puts he's looking at.
Yeah, he's out of the money.
What am I missing? My choices were 600, 130 cost, 601, 165.
And 602. The more you bring it up, the more you get is less risk on your put. The closer you get to the at the money's on your put, it's less risk. You're not missing anything, listen, Jenny, forever. You got this. I mean, then let's go back up here.
Yeah, what was the second? Also looking at rolling the 610 call at 400 from Feb to March.
To the 620.
Yeah, sure. Yeah.
That's what I was saying up and out, but you thought he was in the money.
When I was looking at those 602, 60 whatever, I thought those were his calls that he was rolling. But no, that's his puts. Sure.
I like this Elton John watch out. I love this. She's adorable.
I just don't like to pay but he's already, it's fine. His situation is not a bad situation at all.
No, it's great. I love roll. I mean, it's great to roll. These are high class problems. Roll to any of these that you feel and you aren't missing anything. When I'm putting them on, I like to do the zero cost, meaning whatever call I sell, I'm trying to get zero cost in the put. Because
I guess you can go back and pull that up just to show.
Yeah, so I mean, if you're in March, I'm just going to go with the 40 delta. You get $7 there. Then I would go down and try to find one for about $7. I mean, this is going to be you've got I'm buying one, selling the other, right? Yeah, selling the call, buying the put for around the same price, taking in a slight credit. That's what I would do if I was long stock. I'm trying to, and then your only decision is how much room do you want to be for this to run, and how much do you want to the downside. Like if you're super nervous and you don't want to sell your stock, bring it all the way up, and then bring this down.
But
so that's
if he's nervous about, but if you don't want to sell your stock, you don't want it running through the call, then you move the call higher and pay a little bit.
The collars are, in my opinion, very much like, where do you want to take off the stock? It's a personal opinion, right? Don't you think? Because somebody's like, well, what's your price target for if I buy the stock? Well, I don't know. What's your price target if you buy the stock? Because that's how I kind of look at collars.
Can you put in the stock too. Can you put in the stock and then put this collar in and go to the analysis page?
So I'm going to do the 40 Delta one again, just because. Okay. Sure. There we go. So
you gotta buy that. You gotta buy the put. And so, okay. And now go to the analysis page. So people can see we've talked about this before. It's like you're buying that call spread. You could buy a call spread instead.
Or you could sell 2 puts.
I mean, you can go out and buy the 600 to 613 call spread. It's the same trade.
Okay, well, there's lots of things that are the same trade too, right? So like if you have the stock, yes, it's the same thing. And this is what our friend Cutter, he's like, I could write this on the wall. People are like, where's my stock? Where's my stock? But it is, if you understand your synthetics, you can kind of see this. So let's go back to table. So there's 2 ways you could do it. If you don't have the stock, you have the 40 Delta, you can come over here, sell one of these and where's your 40 Delta? Sell one of these. That's exactly the same trade.
You buy that put.
You buy that. So you're selling you don't need the stock. You're just going to sell the in the money put, and you're going to buy the in the money put. So there you go. That is the
you're selling the in the money put and buying the out of the money put. Like if you sell that put spread or drag it over and buy that call spread, whatever your strikes are of your collar, you could just do that spread and you have the same position on.
Yeah, but a lot of people do have the stocks, but I do. It isn't. Come on, it won't go. But if you do this call spread, to your point, you can do the call spread or the put spread. They're all versions of the same trade. And that's what I find fascinating is everybody's like, well, this is so much better. Well, is it? Because they're all the same thing. Now,
isn't it interesting though that you could put on this call spread, it's using $761 and it's the same exact trade as being long the stock and having the collar around it.
It is.
But to people who've had the stock for a long time and they don't want to give it up, then they collar it.
Well, if it's in a Roth IRA, it doesn't matter.
I guess if it's in an IRA.
I mean, honestly, we are not tax professionals, nor do we give any trade recommendations. But if it's in an IRA, I would be using much less capital than owning that stock.
Like here's the spread for $760. And if you're wondering, like, what's the risk in my trade? What should I do? You can tweak the strikes looking at the spread and just realize you're just replicating a spread like this.
It's so funny because it's so funny. You would look at the call spread. I would look at the put spread.
Well, I just know when you collar something, it's the same thing as just buying a call spread using those strikes.
Or the put spread.
Selling the put spread. And it doesn't even matter. Normally when we do spreads, we try to keep it out of money for the market, the markets are tighter. But either scenario here, you're going with one that's pretty deep in the money.
Yeah, I mean, you're right. The only thing that is clear to us is if you can use the out of the monies, use the out of the monies. But here they're both pretty deep in the money. This one only has a 4-cent differential, which is good. I guess this one does too. There's penny line.
You know what? In style, the markets are tight.
Yeah. So very cool. Thank you very much, Liz and Jenny forever. Let's go back to Twitter. Now we have some earnings, but I think we should go to gold first. So I'm going to let you percolate on these, Jenny Andrews. Percolate on what you want to do. What is net?
I looked it up, but I didn't know what it was. I forgot. I already forgot. I looked it up right before the show and I've already forgotten.
That sounds about right. I mean, it's so funny because we ran into somebody, and I'm pretty sure she's not watching, so it's good. We ran into somebody that from high school, and she introduced herself to me, which was great. You're like, this is my friend Liz, and I know what to do. I was like, hi, nice to meet you. And then you're like, what was her name? I was like, no idea. You're like, darn it. I was like, what's her name?
I can't remember names to save my life. Like, someone tells me their name, it goes in one ear, out the other. Even if I do, in my mind, say it 3 times, can't remember names.
I know, it's terrible.
But that's how traders are. I feel like all traders are like that. I mean, Tom and Tony still call me Liz, and they still call you Jenny.
Well, we've got our super producer, John, doing some super sleuthing for us on some names that we couldn't come up with. I was like, John, we need just a solid. Give us these names.
I should just never leave my house.
I know. Okay, so we're going to percolate on these. We're going to go to gold first, okay? Amazon, Net, Affirm, and Pins. And Pins will always remind me of you, and I have no idea why, because I feel like you are
don't like Pinterest. I don't like Pinterest at all anymore. Not at all anymore.
It's because you're becoming less of a Susie Homemaker. You quit the trading floor and went full pendulum swing the other side, Susie Homemaker. And then your pendulum swing has swung so much farther to the other side that you're out of Pinterest.
That's 100% not true, because I still do a lot of Susie Homemaking things. I'm in the middle of remodeling a bathroom right now while my parents are on their cruise. I am remodeling their whole bathroom, and Pinterest, I don't go to for ideas anymore, because now it's just all ads. Everything you see, they're trying to sell you something. It used to just be an idea board. It used to be, I'm going there for ideas. Now you say, oh, I'd like to see more details about what is this paint color, and you click on it and it takes you to Amazon. Like you can't even get a paint color without having to pay for the swatch. I don't like it at all anymore. It's really gone downhill.
I've never liked it, so let's short the hell out of that thing. So we're letting it percolate, and clearly it's percolating with you. Okay, so let's go back. We're going to take a look at gold. Now, yesterday, wait, what time is it? Do you want Jajun? It's already 10:30.
Oh, darn. It's already 10:30.
Let's take a look.
I think it's already 10:30. I think it's too late. I think it's too late for today.
It might be too late for today.
Yeah.
All right. So we'll go to GC. So this is what they had yesterday.
With the 55 rank, we had a viewer who was interested in just putting on a neutral play in GC.
Yeah. Now we're going to look at all the gold products, right? So we're going to take a look at all these things. It doesn't have to be in GC, but I do like when they bring it to our attention. So gold is down a little bit today, but it has been parabolic. So they were saying gold is outperforming almost anything right now. Well, not almost anything, because, you've got your Palantirs and your things of that nature. But as far as the S&Ps or all the general market stuff, the gold has been outperforming. We've got a little bit of a pullback today, but you still have a 55 rank. The one thing I was going to say about gold is usually if I were to cover this up, Jenny Andrews, if I were to take this and blindfold you and only let you look at the chart, wouldn't you think the rank would be lower? Because typically in stocks, as they go up, the rank comes down.
The rank comes down.
That is not true in gold.
So when you've got a high rank in gold and it's at the top, it's at all-time highs.
I just want to look at a skew real quick. I'm going to go to, I just went to GLD so we can see it all.
Usually a Jade Lizard or Big Lizard, usually those are not a choice in gold because of the skew. Usually the skew is to the upside, not to the downside.
So it's trading 63. So let's just do $3 and $3.
53, right? or you can go 53 and 73, like $10 and $10. $3 and $3 is still so close.
Sure. Let's delete this. So 53, 162, and you don't have 73.
75.
I'm telling you, it's not that much skewed to the upside right now. You have a pretty symmetrical skew here in gold.
Right, I guess. So if someone just wants to sell premium in gold.
So now, only because we're in GLD, I went to March with 43 days till expiration, and I'm just going to grab a $5 wide iron condor, which we're not huge fans of, but we have to define our risk here.
I think you got to do 270, 275 or something like that.
That's why I went to the $5 to the top.
Yeah.
So $2, which isn't $2.
That's not bad.
It's not bad. It's not bad. Now, they were looking at GC, so let's take a look at that too. I just used gold GLD for the I'm going to go to the 48 days because we're going to be selling premium. I just used GLD because it's so much easier to look for the skew with less options. Here, now you can do a $10 is a $10. I just wanted to show this.
So basically, we're getting $2 on a $5 here. We'd get $4 on a $10. It's very similar. Honestly, it's very similar, and I feel like the markets are tighter in GLD.
I think the markets are tighter in GLD too. It's very similar. So here, it's almost identical. $2 on a $5 wide.
Right. Yeah. It's the same. You're at the expected move. It's $2 on a $5 wide. I'd rather use GLD that has a little bit tighter markets. Do you want to look at a Big Lizard or a wide iron condor or something? Not necessarily a Big Lizard, but like wide iron fly, just to see how much more we could collect in gold.
Yeah, I would love to. That's a
Because
good
I hate
idea.
waiting for 50 days for $2.
I just wanted to show you something too. The only difference is the span margining for futures products, because here you're making two, relatively same. The max profit is going to be pretty much the same for both, but you'll notice it does not hold up the full max loss for the futures products.
If you're going to do a really wide spread, you're better off going GC, because then it's not going to.
Because I just wanted to show this. If you did a $10 wide, if you do it in GLD, it's going to hold up 1 for 1. But here, if you did, this is a $10 wide, your max profit is 4. It's only holding up 3 instead of the 6 that it would in GLD. I'm just putting that out there.
Let's take a page from our research team saying when rank is high, go in more, like not to the expected move, but bring it in. So bring it into like a 30, 35 delta. And let's see about maybe a wider spread, $15 wide, $20 wide.
Well, I'm going to try 10 because that'll be wide too. So I'll go 30 delta because it's pretty symmetrical, right? Okay. And let's start with 10. So this isn't bad. $6.
That's not bad.
No. This is not bad. This is almost a chicken.
That's not bad.
It's over a chicken.
Yeah. And you're at the 30 delta. Sure. I kind of like that better. I'd rather get $6.
Now take a look at this though. I just want to be very, very clear about something too. You'll find very tight markets in GLD versus here where you're looking at 510 at 710. So keep in mind that it is wider markets and it's not as actively traded as GLD.
Well, go over to GLD and do 30 delta, see what you get.
Okay. So I just wanted to keep that in mind. Now it's going to hold up more capital if we do the $10 wide. That's fine. I'm just
not really though. If we're really going to get that much.
No, it will hold up more. No, it does hold up more capital.
I know, but there we're getting $6 on a $10. It's not like we're using that. It's not like we're talking about thousands and thousands of dollars.
But you won't get $6 on a $10.
Yeah, we're not.
You can't. That's what I'm saying. You can't because this is a smaller product.
Yeah, then let's go over to GC.
And so it kind of flips over. So you're only getting $4 here and you're putting up 6. The other one, GC, like I said, it's interesting because the nature of giving you so much leverage, but it also is a lot more illiquid. So I'm going to go 30 delta, $10 wide. Where are we? 30 delta, $10 wide. And then I'm going to go down here just for our what's your assumption from yesterday. 30 delta, $10 wide. 550.
Yeah. That's not bad.
I'm going to put it in there. Let's see if we can work it. But I'm not going to chase this.
Okay. Let that work. That's not bad. Because that's a long time to wait for just like $1, 50% of it, $2.
Yeah.
I kind of like getting I'd rather get the higher credit and not necessarily wait for 50%, wait for 20%.
Oh yeah. I would rather get the higher credit than sit there and wait too. Because that's when I think you can get yourself in trouble. Well, let's let this work because like I said, we might have to switch to GLD because of the liquidity of GLD. This is not like, take a look at this, 135K versus.
And what's the open interest on those options?
4.4 or 4.04 million. Oh wait, hold on a minute, you see. No, they were low. It was low. I have open interest in there. Where are we? 30 delta. 37.
Yeah. Okay. I mean, you can see the strikes that have been around that have like a little more volume, but all right, it's fine. We'll work that. See if we get filled.
Okay, that is in. That is in. Now, should we start with Pinterest? Dun dun dun.
And I don't know how their earnings are going to be. Maybe that because they're all ads. Maybe they're killing it, and because people are getting taken right to Amazon.
Look at this earnings. I can't. Never mind. I should be nice. This segment's sponsored by Pinterest. I think this is the dumbest site ever.
I know we can't say that. I don't think, but I just
did. I'm not a fan.
I'm telling you, like, it's just not what it used to be. It's not what it used to be. I used to really use it, and now it's more of a hassle. I don't use it anymore. And all my friends that used to use Pinterest, they just search Google. If I'm looking for a paint color, I'll search it on Google. I don't need to go through Pinterest anymore.
Yeah, I mean, I don't think we ever needed to, but that's neither here nor there. So what should we do here? It's got a 74 rank.
I don't think we need to trade Pinterest.
Okay.
Because To your point, if we're doing diagonals, we put them all in the same direction because we don't know. So you either put in a bullish one or you don't do it.
Listening to me talk, you should do the exact opposite of what I do when I have strong feelings about something. Do you know what I mean?
I say if you don't want to put on the bullish diagonal, if you're like dead set on all bullish diagonals and you don't want to put it in the product, then just don't do it.
It would really make me mad if we put in the bullish diagonal and Pinterest went down because I was like, I know it. I know it. Okay. Yeah. So, but Amazon, I do want to look at. Amazon's $237. Now I'm going to start with diagonal. We could do something else, but we have done bullish diagonals. Let's see how expensive it is.
It was about $6 when I priced it out earlier.
It's $6 for the 8-day.
And it's $15 wide.
Okay, so here, if you go to the 15-day, it's a little bit more than $6, but it's not that bad.
No, you're not paying too much more for the extra week.
So I'm going to show we're paying $6.96 for the 15-day, and we are paying $6.42.
It's not much more.
I like the 15-day, especially because it's Amazon.
We're a little bit gun shy after yesterday's hits on our earnings trades. But
now, to your defense, let's take a look at something because you were saying you wish you would have done the short puts. Now, I don't want to sell a short put because I don't want to take that risk, but I'll do a put spread. If you want to go to the expected move, you can go. We were putting up $600 to do it, so let's say we'll go down to here. That's MAC loss of $616.
It'd be the same loss.
That's what I was trying to get to is an identical loss. You're at the expected move for the cycle. And here's the difference in my mind with these. And this is just me personally for this earnings cycle. Your risk reward scenario is easier for me when it's flipped. So now don't get me wrong. I know we took losses today, but we only need a couple wins back to make up those losses versus if we were doing all put spreads and everything and you get one max loss, you need 6 wins in order to make that back.
That's a really good point, Liz. That's a very good point. If you are making $1, and you lose 600, you need way too many to get your money back. Whereas if you have that greater profit potential, you can afford to take some of those hits.
Yeah.
You
can't afford to take some of those hits.
Let's go with the diagonal.
But it doesn't. But every
you can make it cheaper though. You can make it a little cheaper. I mean, you remember when you put in that one Tesla trade with Baby Bat, and you can make it cheaper by maybe going a little bit out of the money or making the spread a little narrower. Like if someone wants to take less risk.
Yeah, instead of the 52, I'm going to bring it to the 50. So you're going to make a little bit less, but you can make it cheaper.
And then in the day, you could bring it up a strike to the 240 or something like that. So that's only 460. Then we've got 460 at risk instead of 690.
I want to see if it's cheaper to go out this way too. Yeah.
Then it's 515 instead of 690. So it's you can make it a little cheaper, and then what you're giving up is some profit potential.
You are giving up some profit potential. Now these have worked out well and worked out poorly. I think it's interesting that Uber hasn't come right back. That you left it in there and it didn't come right back.
Well, I'm still down $160 on the Uber diagonal, but we were down. Hey, pop out the side and look at our Uber. You could see. I think we were down a lot more, maybe 300, 200. I don't know.
Activity Uber. I just want
to go to Uber.
I just want to see Uber
and go 7 days out.
We're down $158.
Yeah, so about the same. We made a little money back with the put spread, and the diagonal came back a little bit.
Yeah.
Mm-hmm.
Yeah, about the same.
So, there's not, I guess, honestly, not that much if it was Amazon, and we're not going to do Pinterest. And there was one other one from Bob's list.
So let's do this. I'm going to go 250, bring it in a tiny bit. So it's probably not going to be as good as it was. 250, 237. We're going to pay 626. So we've got the 15-day. I like this. Our profit potential here, I paid a little bit more to go to the 15-day.
It's in 1250 wide.
1250 wide.
So we're paying half. We're paying $6 and it's 1250 wide.
We like to pay less, and I can make it that way if we wanted to by moving this.
Right.
So I can make it that way easily.
And then $6.91, and that's $15 wide.
Mm-hmm.
Well, it's still almost the same. I mean, we're paying $7. $7.50 is half of $15. It's not that much.
But when you look at this, I want that profit potential. I'd rather the $2.50 profit potential than that 60 cents.
Yeah. But there is a big difference between $6.90 and that $4.60. Like if someone is just saying, oh, I want to do these, but I don't want to risk $700 on one earnings trade, that you can make them less, but what you're giving up is some profit potential.
You are giving up some profit potential. I'm gonna stick with this one today, just because we don't need that 60 cents. I'd like the profit potential. Shipping it. Good luck, Amazon.
Amazon, good luck.
Good luck, Amazon. We need a winner. We need a winner in Amazon. Okay, what else was there in Bob's list? Affirm. Net.
Yeah, Affirm.
I want to see what net is.
And I'm pushing everything out. So as you're going along here, I'm getting everything pushed out to the.
Oh, that's that Cloudflare. That's why it's going to go in one ear and out the other. Net is Cloudfare.
What is that? What is Cloudfare?
I have no idea. That's what I'm saying. Like you read it. You're like, I just looked at it. I don't know what it is. I don't know what Cloudfare is, but it is a $141 product that has gone up from it has not stopped from 65 straight up to 141.
What else was in Chris's list this morning? What else was in Chris's list?
The only names that I knew, I mean, he said other names, like you said, we don't remember. The only names I knew were you all in Royal Caribbean. But I mean, I thought Victor brought up a good point. He's like, what about PLTR on your list? And I was like, well, that for sure is, but it wasn't on his list.
And what about OKLO on his list?
But I find that hard to believe that something that went from 20 to 107 isn't on the list.
Right. So and I think OKLO went from like 7 to 4. Where is it now? 40 or something like that.
It's not. Yeah, but that's not nearly as high as like your PLTR. But yes.
Well, I mean, 20. 20 times 5 is 100.
So I don't know where he got his list.
7 times 5 is 40. It's this. It's they're percentage wise not much different.
I don't know where he got his list.
He's missing some. Tell him he's missing some.
Yeah, gosh. I don't know where he got his list. Okay, so let's go to Affirm. I haven't looked at this in a while. $60 product. Okay.
Yeah, Affirm's not bad.
Okay.
I don't think the diagonal is going to be that expensive in Affirm. No.
And I do like these dollar-wide strikes. That is actually pretty helpful. I'm just going to start at the 15-day, so it'll look so cheap when I go to the other one. $4 on a $9 wide in the 15-day. Or, Johnny, you get to choose your poison. This is choose your own adventure. I'm going to make it cheaper for you. $3.31 on an $8 wide.
Oh, I kind of like $3.30.
I do too.
Yeah. I'll take $3.30, Chuck.
It's so funny. Okay, so yeah, we have Affirm. Now I want to take a look at our gold because we are not getting filled, and this is what we thought might happen. I think we should switch it to GLD.
That's fine.
What do you want? Okay, here, but like hopefully we won't get filled at the same time, and if we do, we can.
Lower it to $5.50. Let's see if you can give up a dime. Lower it to $5.50.
Let's do something fun. Okay, hold on. Just because we're there, I will lower that. I will 100% lower that.
I said check out very wide butterfly. Try a very wide butterfly.
That's what I was going to say, or like literally like a big lizard. Or not even a big lizard. What if we went, so we're collecting $10. What if I went up to, okay, so that is, $11 just because. And then I'll do $11 to the downside too, just because. So look at this. We're collecting $7.31.
Mm-hmm.
Our max loss is $4.96. And our, I want to take like 20% out of this.
Yeah, I'm fine with this. I like collecting more, especially with such a long-term trade. Put it in and put in a 20% GTC and just leave it.
Yeah, so then this is liquid. Our max loss is 467, but we've got quite a bit to play with if we need to roll it in either direction.
And I don't care if you make it even wider.
Well, I kind of like. No, because then it goes to $5 wide here.
Oh, yeah. Okay, sure.
So I'm going to ship this, and then I'll cancel the other one. This I don't mind pennying down. This is a very liquid product.
Well, because you're going to take it down by a penny, maybe 2, 3. Where in GC, I said, take it down by a dime.
Yeah, you got to take it down by quite a bit. Here's 3 cents. Come on. $7.28. Big money, no whammies.
And then cancel GC.
Okay, we're filled in that one, and then I'll go ahead and cancel GC.
Okay.
Sweet. So now this is our GLD trade. I'm going to put a GTC in for it. We've got quite a bit of time. We've got $700 in collection. So I'm going to put it in for, I'm going to say 15%. That'd be $100.
Sure. Yeah. Great. And we would get that much quicker than that $2 iron condor waiting for $100 out of that.
Okay. So that GTC is in. I want to make sure it's a GTC. Yes. Okay. That GTC is in, and that puts gold to bed. A firm we're not going to chase. It's getting a little bit away from us. I want to take a look at our triple Qs. Remember how we were talking about this the other day? This is great. It's going right into our sweet spot of this 536.
Well, and honestly, we paid $250 for it, and we've made $100. So if you paid $250 and made $100, I don't even mind taking $100 out of that trade.
I don't either. I just wanted to take a look because we said the one thing that we might think of doing, is this broken at all? No, right?
No, it's $1. But we paid for this. So
yeah, let's take it off.
Yeah, let's take $100 for it. Right? You paid for something, make $100.
Yeah,
sure.
I'm in. I like the style of that trade. It was kind of fun, but we don't.
And it was positive. Let's go to the follow page and see if she's posted anything lately.
Hold on, let me get out of this, and then I will. 2 seconds, Jenny Andrews. I'll take it down by 357. That'll give us just over $100 in credit. Okay, there we go. Okay, triple Q's out of there. And how you get to the follow page, you ask? I'm glad you did, Jenny. You hit this little button right here when you're in your platform. See where these people are standing. Hit those people. Go to the follow page. You can click on anybody you want. So here is us. Here's all us if you want to.
Well, you can see what's coming in. So, like, what came in this morning? What did Katie put in?
This is Spot. She put in Spot. Okay. Jamal's trading Pinterest. Jamal's doing a bunch of cleanup today. Who is this? Oh, the Johnny Trader. And then Fauzia is clearly she's rolling her arm. Tesla.
And you know what's good about Fauzia? She puts in nice notes.
Well, let's take a look at this. I love this guy. So today he sold a butterfly in. Oh, that means he's probably closing.
He's closing it. That's to close. What's Jamal doing in Mondelez? Is there something going on in Mondelez? Did they have earnings?
I think they did. I think they had earnings.
Let's say MDLZ. I have Mondelez only because like these were your favorite snacks. When we would fly Southwest, these were your favorite snacks.
They were Mondelez snacks. But look at this.
Your favorite Southwest Airlines snacks, the Mondelez.
They were delicious. So I still can't believe that they must have had earnings yesterday.
Okay.
With that bar. So he's probably just adjusting.
Was like a blink because I'm pretty sure I have a Mondelez position and I didn't even notice it.
It went from 54 to 57.
I think it dropped down and came right back, which if you're not in your account at the right time, you don't even notice it.
You don't even see it. That is true.
Yeah. I have a Mondelez position. Didn't even notice it yesterday.
I wanted to show something that is very exciting. We're not going to trade this, but this is exciting news for you, Jenny Andrews. Take a look at what we have now.
Now we have, so we bought some and it's down today, but XRP, now we have Solana, we have, so that's nice additions to our crypto program here. Yeah, click on XRP. Let's see, what is it down to? It is down today, down 5%.
I bought mine right here yesterday. 251 for 30.
Wherever you bought it, I bought it 10 seconds later. We were sitting on the train.
Yeah, I bought mine at $2.51.
And I've had XRP. You've had XRP. You probably started buying it at like 180, maybe.
Oh no, I think I'm at like 60 cents.
Whoa.
Yeah. Now, and it's in a different account. Please keep in mind, this is my brother's foil hat friends who tell me to keep buying XRP.
I don't know if you remember this. It was like a year ago when I went for a facial and I was in Michigan City, went for a facial. My facial girl was like, you've got to buy XRP. And I wrote it down. And that was a facial in Michigan City a year ago. But I didn't buy it back then.
So I just want to show this isn't the blip. XRP did not go from 60 cents to $3 in one day. That's the day we got it.
Yeah.
We used to have it. and then it went up, I think, and then yeah. And then we also got Solano. I want to see Solano too. So, and that's that same thing here. Solano, was a 180, and then this is the day we got it. 240. So clearly we're the kiss of death. Right?
Funny. Yeah. Hey, what are the currencies doing today? It's 10:54. We're almost out of time. What are all the currencies doing today? And I see
the euro was because there was a big something in the Bank of England this morning. And you know how I know that? I don't exactly know what it was, but I was watching Frank. I was watching Frank and Pete this morning.
I figured as much.
Yes.
Yeah, they're great. They're great.
They're amazing. It's so funny because you can tell Frank is young. He's like, it's early. So
Pete probably has been waking up. Pete's been waking up early his whole life. He was down on the floor at the Merc.
Yeah, so he probably has. But for Frank, it's real early. But he does a good job. They're pretty funny together too.
Yeah, they're great.
Okay. So shout out to that dynamic duo. But they were talking about this morning.
One of our favorite tweeters. I think Bob posted something. I think Bob, one of our favorite tweeters, posted something.
Okay, then I will look at the currencies.
Or is it Jim? I don't know. Don't remember.
It's Mikey.
Oh.
Okay. Polish. I'm sorry. Oh, this was me. Can't remember. So Mikey. I did that. I did it. I definitely called him. And I love Mikey. I love him with all of my heart. Do you know, if it makes you feel any better, Mikey, I call Jenny Annabelle all the time, which is my daughter's name. I'll run through everyone's names before I get to the right name.
You do call me Annabelle.
I call you Annabelle all the time. I call Kathleen and you both Annabelle whenever I'm like animated about something that was like Annabelle. I mean Jenny, because it's not even that close. But your daughter's name is Lil, so sometimes you'll call me Lil and I don't even correct you.
Yeah, all right. That's easy. Lil, Liz is the same thing. Interchangeable.
Yes, I'm sorry. I'm sorry. Yes, but that just means that I love you. You know that. So, and now we'll go back and look at the currencies. This was something that came out. I just want to see where it opened. I don't know when. So this is what I'm going to start watching Forex futures a lot more because I want to understand when it opens. So is this like Bitcoin where you don't know what time it opens? You know what I mean? Because they were trading all through the night.
I'm pretty sure we could Google when does Forex open, or does it never close?
I don't know. Well, no, so my question to you, Jenny, is not when does it open, but look at this where it says open 104. What time was that open print? And it does trade throughout the night. You know,
the Forex market is open 24 hours.
Yeah. So then when do they do the opening print? It's just like Bitcoin.
So when is the Forex opening print? When is Forex opening print?
And then also just interchange that with Bitcoin so I can know that too.
Opening print is considered to be Sunday at 5 p.m.
Yesterday.
Open 24/7 during the trading week, closes Friday 5 p.m. So closes Friday 5 p.m., open Sunday at 5 p.m.
Yeah, we know that. How do they get the day's prints?
That's all I'm finding. I'm sure our viewers will let us know.
But that's that same thing with Bitcoin. Take a look at that. How do I know when it's open and when it's closed?
What time did they do the print in Bitcoin? I don't know.
Yeah, see here, it's like crypto never sleeps. But when do they do the print? Like when does it say it opened at 96,990? What time was that?
Well, you know what? Go to the minute by minute chart and you'll see. Change your chart from day to minute. Go to like a daily minute by minute chart and you'll see.
Hold on, I gotta see something real quick. Sorry to distract. Bonds. I just saw in the chat. I just glanced up and bonds are sliding. I wanted to see if they get back down. I want to get back in, but they're not down.
Well, you look at TLT. I mean, don't you remember when I was like, I'm not gonna sell my TLT till it gets a 90?
Oh, it's nowhere near 90. Well, I guess you said 92.
No, but look at that. Nobody thought it would get back up here. Nobody.
You said 92.
Oh, originally it was 92. Lowered it down, but nobody thought it would get back up here.
Everybody thought it was going to get back up there.
When did you sell out of your TLT? And when did we sell out of our TLT?
The world was long bonds.
But no one held on this long. No one held on. Everyone's out already. Everyone's out already.
The world was long bonds for a long time.
But I don't think many people still had their long bond position yesterday. Most people were out last week, Monday. I don't know many people that still held on.
Well, Tom got out of his yesterday, so he held on for dear life.
I mean, he got out of most of his before. It would have been tough to hold on when it ran from. It's had such a run. It would have been hard to still have that.
Yeah, I mean, it's pretty interesting here. If it does fall back a little bit, I'm interested in anything under 114.
And you know what else? We always talk about how the news sways you. Like, you would hear so many people on media in certain different places who were bearish. So as we're holding our longs and holding on for dear life, there were lots of people out there saying they were bearish bonds. So it made it even more difficult to hold on when you were making your money back because they were coming back up.
Yeah, it is interesting. You have to block out all the noise. But what's good about it is you hear both sides. You hear super bulls and super bears for everything. Right. There's always a case for both sides. And the only ones that I like are the ones that are trying to give their prediction before it happens instead of why it happened after the fact and why they were right. That's what drives me crazy. Because you and I are willing to say, I'm going to put my money where my mouth is. I think it's doing this.
I know.
The people that do it after the fact drive me crazy. Be like, oh, yeah, because of this is what happened. Well, what's going to happen now?
Watch out, neighbor. Liz is coming after you. Don't you have a neighbor who always talks about things after the fact? One of those traders? Who's the trader? Who's that trader neighbor?
The foil hat guy, my brother's? Oh, Bob's good. No, my neighbor Bob is a good trader. Like, he doesn't talk about after the fact. He'll always be like, he's been buying silver for years and years and years, and he's doing great. Like, he's been buying gold for years and years and years, and he does. He looks future, not behind. Bob's good.
Okay.
Yeah, Bob's pretty good.
I knew you just went toe to toe with someone, but maybe that was someone. Maybe that was.
It's this XRP guy who is nuts to the point where I want XRP to crash and burn because he's.
I hope he's not watching. All right, we're out of time. We are out of time. Happy Red Shirt Thursday. Have a wonderful day. Where are you going now, Liz?
I have a play tonight. I am going to go walk the dog, hopefully not fall. And then my daughter is going to play tonight, tomorrow, and Saturday. And I've got senior night for basketball. So we got a jam-packed teenage weekend over here. Yeah.
Senior night's tonight?
Tomorrow.
Tomorrow. Okay. So fun.
Yep. What about you?
I'm going to paint cabinets right now. Heading over to paint cabinets.
All right, don't get paint on.
Bathroom transformation underway.
Give us the before and after.
The before will scare you.
I have the before picture. You sent it to me. All right, everybody, good luck with your earnings trades. And remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. We'll see you tomorrow.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Crypto is better when it's tasty. The Tasty Crypto Show, hosted by me, Ryan Grace, and Frank Caberna, will help traders of all levels learn DeFi trading. We'll provide our insights on altcoins, crypto industry news, and blockchain education. And we'll have you swapping, staking, and trading using derivatives in no time, all using the Tasty Crypto Wallet app. So don't fork up your chance to become a crypto master. Watch Tasty Crypto only on Tasty Live.
Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Know someone who needs a better broker? For 1 month only, earn $500 for each qualified person you refer to Tasty Trade. See how it pays to have friends? Terms and conditions apply. Tasty Trade.
Good morning, everyone, and welcome back to the show. This is Option Trading Concepts Live. My name is Nick Batista. I've got my man, Mikey Butler, and of course, Miss Katie McGarrigle in the house with me today. And if you want to come join us, hop over to YouTube, type in Tasty Live, come to our channel, give us a like, and subscribe to our videos because that helps us immensely. But more importantly, just come chat with us live because we'll be taking questions throughout the show. Whatever you got questions on, from strategies, concepts, trade ideas, trade management, whatever. Come hang with us for the next hour of the day, my favorite hour of the day. I get to spend it with my two buddies, Mike and Katie. Katie, how are you?
Doing all right. How are you? Did you guys hear the big news?
I don't think so.
Started a new video game.
Ah,
ooh,
nice.
Not that big a news.
She's back in the ether.
I am. Yeah.
What video game?
I'm playing Jedi Fallen Order. So
Oh, yeah.
I am no longer a wizard.
Yeah.
I am now a Jedi.
What are your thoughts?
Fun. I think I'm struggling because this game doesn't spell out like exactly what I'm supposed to be doing on all these little quests. So I just feel like I'm like
Open
looking at
world.
the map like a lot. Yeah, that kind of thing.
Yeah.
But we're having fun so far.
Yeah.
Learning how to use the Force.
There you go.
It's a BFD.
Yeah.
Love that.
Yeah.
Love that.
How are you both? You're gonna have football back on Sunday. How are you feeling? Well, I know your feelings about who's there, but like, are you still stoked? What are you doing?
Mike's ready.
I'm dialed in. Yeah.
Mike's ready to be
Got it all on the line?
a non-mid curver.
Yeah.
Be a
Going
Black Swan.
going for the Black Swans.
Okay.
You know, you'll know.
There will be signs.
There will be signs.
Okay.
If he is successful, there will certainly be signs.
Okay. If we get like the Sunday, like 11 p.m., like drunk dial from Mikey, that's when we'll know. And he'll be like, I'm going to the casino.
Yeah.
Yes.
Okay.
Yes.
Or I'll say, I am now Neo.
Yes.
Something like that.
Yes.
Okay.
I'm trying to give you that.
Yeah, please.
Nice.
Yes.
But yeah, I think I'm just hoping for a fun game. None of this, flags on every play. Like, no. But I think Philly will destroy them. I don't see Kansas City winning.
Really?
Philly has if Philly loses, it's because of Philly. It's not because of Kansas City. Like, if you look at the roster difference, it's night and day. But again, Mahomes does Mahomes stuff. James, are you listening? Mahomes is a legend.
The smart bet is Chiefs and the under.
Okay.
But that is.
Oh, look at who
There he
that-
goes. James, we got you, buddy. We got you. That's the smart bet. The smart bet is, I think, is Chiefs and the under, but nobody wants that.
Yeah.
Either of those.
Yeah.
There are some interesting props though, like Hollywood Brown. You're big on Hollywood Brown for Kansas City. There's some props like Hollywood Brown to have more receiving yards than Dallas Goedert, where taking Hollywood Brown is actually positive values, like plus 150.
Okay.
That I think is a smash because Goddard is a tight end, not really a big play guy. He has the ability to, but Kansas City, if they're going to be losing this game, they're going to be throwing the ball more. They're in a dome too, which is going to increase the throw rate. So there's a lot of little things, but there's some interesting stuff out there. But I'm just hoping for a high scoring game,
fun game,
and I honestly don't really care who wins. But because it's, if Philly wins, then good for them. But if Kansas City wins, it's a three-peats. That's cool too. And then you'll probably see Travis Kelce retire and sail off into the sunset.
You would think so.
We'll see.
Story.
How's your basketball team doing? Because I just got wind of it for the first time yesterday after a long hiatus of not hearing my significant other talk about it. But he's up against he's number 2. I think he's up against the number 1 this week, who is our other mutual friend who's also named Mike.
Yeah.
So
they're doing well. I'm terrible. My team's like in dead last. I have like multiple guys with triple doubles, and then I look at the matchup and I'm losing like 3-5 or something. I'm just like, how is this possible?
Yeah.
However, I have been very active and good on the waiver wires, so I do have some key players that just got traded. So I picked up some guys that are fringe guys that could get some more value with their new trade destinations, but I have no expectations for this year. Okay. I also had like the 11th pick, which is, in basketball, that's really hard to overcome because you need like the Giannis and Doncic guys.
Yeah. All right. What's going on in bowling world before we get into some actual market talk? Are you officially a pickle boy?
Both. Yeah.
Okay.
Pickleball is my other new sport. Yeah.
Love it. He's a pickle boy.
Yeah. Yeah. So bowling's good. I mean, we're one of the last place teams, but we drink high lifes and
what could go
hang
wrong?
with the boys.
Yeah.
It's
nice.
It's a pleasure. Yeah. So
funsies.
Good. Yeah, we'll see how we do tonight.
How's the food at the bowling alley?
No food.
No food.
Yeah, no food. But you can order stuff in there.
Just you can inhale the old waft of old smoked cigarettes in the walls.
It is very old school. I think it's been there for like 50, 60,
like there's still like ashtrays in like the scoreboard thing.
Oh yeah. We do get the tamale guy that comes around.
Nice.
Oh, amazing.
So he comes
the actual tamale guy.
Yeah, the guy that comes in with like the cooler.
Yeah.
That like randomly you'll be at a bar and he'll just like pop in. And so he comes by. They also have a like taco food truck that comes every once in a while that comes outside. So there is food, and I have had both. They're quite delicious.
Nice.
Yes.
Very good. Well, lovely. I'm happy to be back with you both. Let's see. What else has happened? We rolled out Ripple. Tasty rolled out Ripple.
Mm-hmm. Very call.
XRP, SOL, Doge, all in the last couple of weeks. Continuing to add more. Have you all been dabbling in any of the earnings going on?
We have.
We missed on Google, but today it's Amazon Day.
It is.
It is Amazon Day. I am
long. You got the mobile app on the right side. Nice.
Yes.
Nice.
Yeah, it is Amazon Day, and it's trading around $235. Expected move $15. Pretty decent.
Mm-hmm.
But yeah, what say you? Are you just uber long or what?
Yeah, I think Amazon's the play.
Yeah.
I think Amazon's the play. They're taking, AWS is massive.
Yeah.
I just think it's the next one. I don't know how. But I thought that with Google. Google has a little bit more headwinds because the whole, AI thing is obviously a detriment to Google search, which is their biggest business. But I thought YouTube's so big.
Yeah.
I don't know. Amazon to the moon. Send it.
Yep.
So take that as you may.
Yeah, if you have any Amazon earnings trades, pop them in the YouTube chat.
Yes.
Join us on Tasty Live's YouTube channel. We're streaming live. Throw in that trade idea in the right-hand side chat. I've got the newsletters pinned to the top of the chat. You can sign up for cherry picks for free as well. But yeah, Amazon after the close, it'll be wild. We'll see what they say.
Love it.
Quick little market update.
Sure.
E-minis up 6. We are kind of at the lower end of where we've been trading. We got as high as 61.06, so we're back to just about 1% off the all-time highs here. So it's been a swift rally back. Pretty tight range today, 21 points intraday range. I think maybe some of that is Amazon earnings. Maybe some of it's the swiftness of this rally back. Maybe some of it is the weekend fears, which have been kind of the play of downside moves over the weekend because of all the things that can be said or done on such short notice while the markets are closed. Maybe that's some of it, but who knows? NASDAQ up 7. You got the Dow down 181 and the Russell down 3. The Russell was actually the strongest of the group in the morning because you had a little bit of a bid in the bonds, but the bonds have since sold off. bonds are down 11 ticks right now. Rates going back up a little bit here. Oil giving it up a little bit. It was also up on the open today. It's down 22 cents. You got volatility futures actually upticking here, up a nickel, but still very, very low. You got the VIX itself and the 15 handle. Gold and silver, woo! A little bit of a down move. They were much lower. Gold was actually down about $20 from where we're sitting right now. It's down 19 right now, but it was down almost 40 points at one point today, as well as silver, which is down 35 cents right now. It was down about another 50 cents, about 80, 90 cents at the lows today. So a little bit of weakness in the metals. You probably correlate that to the bond move as well, just like we were talking about with the Russell. And then Bitcoin down $700 on the futures. Spot is down 1,000. We are sitting at 96,700. It's been a chop fest.
For sure. Yeah.
It's nice to see gold selling off a little bit.
Yeah.
That
keep it going.
broken wing butterfly came in a lot today after the sell-off, and this was not really too big of a sell-off, so we'll take it.
Yep.
We take it.
Yep. Also, a little bit of a pullback in IBM, which is helping my position from last week.
Very nice. I followed you in that too.
Yeah, still red, but this, 3% correction helping that.
Yes.
Very nice.
A couple of the earnings after that came out yesterday. ARM down $6 and change. It was higher in the after hours session yesterday. You had Qualcomm as well, down 8 and change. Ford was another one that reported earnings. It's down 66 cents. That's a big old move. This morning you had Eli Lilly, which was up $38 and change. It was actually down in the morning session. You had Roblox as well, which I haven't looked at or traded. It might be an interesting one. I was looking at like short puts. Volatility isn't that high here, but it's down 10 and change. So definitely seeing a little bit of volatility. And one that I didn't want to mention, I don't know if this is like
taboo subject?
A taboo, but Peloton, what do you think it's trading at right now?
Oh, God.
What do you think it's trading at? Give me a guess.
Okay.
$1.50.
I was going to say like $2.75.
It's up $1 today, $8.66 after earnings.
Whoa.
Yeah, so Peloton is back.
Climbing its way back.
Yes. That is that.
Still
that's
wouldn't
a
touch
stock.
it with a 10-foot pole.
That's a stock that's on the do-do list.
Yeah.
It was trading at $2.50 back in August.
Yeah.
Yeah. I remember talking about it.
Yeah.
Yeah, it's dead to me.
Yeah. What was the high?
Like 90, 100 something?
Oh, it got
The high was
170.
about 2 weeks before we got into it.
170? Eesh.
The height of the pandemic.
That was probably the
Maybe.
easiest short I've ever seen.
In hindsight.
In hindsight.
Of course.
Yeah. Just like,
So naturally, we all stepped in and sold puts.
yeah.
Yes.
Just like getting long the airlines was the easiest bull.
Uh-huh.
Yeah.
Yeah.
We talked about that. Bullish airlines, bullish casinos.
Yeah, we did.
Talked about it
We
back
definitely
then.
talked about that quite a bit
Yeah.
at the time, for sure.
Glorious. Well, we've got some trade ideas for you.
Yeah. Real shameless plug, really, really quick, though. We're in February.
Mm-hmm.
I love trading with my buddies.
Mm-hmm.
Oh.
And Tasty Trade will also reward you
Oh, yes.
if you refer a friend.
Double the reward.
Double the reward for February only.
Yeah.
Ooh.
tastytrade.com/referral. There you go.
Yeah.
Earn a $500 bonus in February. So you can go to my.tastytrade.com to find your share link. There should have also been an email sent about it with your individual share link. But if you head to the Manage tab on my.tastytrade.com, you can find it, share with your friends. They open and fund. You get 500 bones.
Yeah, I pinned it to the top of the YouTube chat. Yeah, $500. It's normally $250.
Yeah.
$500. You could put that on a Super Bowl square and turn
And
it
some.
into zero real quick, or multiples of that.
Yeah. I put a couple dollars in some squares.
There you go.
Nice. Me too.
Yeah.
It's funny. Tom was talking about. Tom and Scott were like, "Oh yeah, there's no Super Bowl squares in the office." And I was chatting with Victor. I was like, "No, we have banned the 2.0001 percenters
Yeah.
from participating in the pool because they just win it every year.
Yeah.
Money goes to money. I can't see Tom hitting, getting 7-7.
Yeah, winning the half and the game.
Yeah, with
again.
the half and the game again. So we have banned them from our pool. No more.
Yeah, love it. But yeah, also other shameless plugs, as I think was pulled up really, really quickly. We're doing some digital events. Yes. So tastylive.com/events, you can learn more about what is coming up. There was a crypto one early in January. Dr. Jim's is coming out on February 22nd. And then ours will be out in late March.
Yeah. It's going to be great.
Yeah, it's going to be great. And then eventually we will start to share more details about in-person 2025 roadshow type of things.
Yes, I've heard rumblings. Brittany has.
She has.
I've been overhearing, so should be fun.
Should be.
I'm ready.
Should
We're
be,
ready.
yes.
Glorious. Well, go sign up for those digital collectibles, tastylive.com/events, and refer your friends. Get 500 bones.
Yeah.
Okay. Shall we pop over to the slides and talk through some trade ideas?
Of course.
Cool. So normally we have 3 trade ideas. Today we have 4 trade ideas.
Oh la la.
Mikey feeling frisky.
Yeah. It was actually Lucas, my brother. So,
very nice.
So he's been shadowing me for the last couple of days.
He's so big now.
Yeah, he's tall. He's like he's taller than me, I think.
I
14
remember
years old.
seeing him when he was like a wee lad.
It's crazy. We got to get him into the basketball circuit. But yeah, we talked about a lot of different things this week, but the task today was to help me pick stocks for the trades that we are placing today. So we were talking about some tech stocks. We landed on NVIDIA. We looked at reasons why we might like NVIDIA here with the recent sell-off with the DeepSeek AI news that's kind of fallen to the wayside. But also, NVIDIA has earnings at the end of February. So I looked at this market here. NVIDIA is about 25 points off of its high. It's recovering from the recent lows. And the options aren't that expensive, all things considered. So I went out to April and I bought the 130 strike call, 70 days to go. And the nice thing about NVIDIA is it kind of sets up where you can sell the Feb monthly option against it to reduce cost basis. So I sold the 140, 15 days to go for $1 and created this 10-point wide diagonal spread for 10.20. So the nice thing about this trade is the short option is in the pre-earnings cycle. So I will be able to roll that 15-day into the Feb 28th, collect a lot more premium, turn this into an earnings trade if we don't get that, pre-earnings pump that we talk about so dearly. And then even after that, I will roll to the Feb 28th cycle, assuming we don't get a massive rally here. But if earnings go wrong and NVIDIA sells off, I can then roll to the March cycle. So that's the power of going to April with the long option is you can roll this not once but twice and still have a diagonal spread. So really like the way this sets up. I like the fact that NVIDIA is rallying off the lows. So that is trade number 1, call diagonal spread in NVIDIA. Trade number 2, Lucas loves the airline industry. So he will more than likely work in the airline industry, be a pilot, something like that.
Sweet.
When he was a kid, he used to be able to look into the sky, and obviously our eyes are much worse than his, but he could look at a plane in the sky and be like, oh, that's Lufthansa. And then you get like binoculars, you're like, oh my God, that actually is the Lufthansa plane. Like you can pinpoint the colors and logos of all these airlines. So we talked about Southwest, and reasons why we might love.
Okay.
Southwest is one of the only airlines that's not participating in the recent rally. So like you look at United, straight to the moon.
Absolutely parabolic, all those, yeah.
Yeah. You look at Delta Airlines, straight to the moon.
Yeah.
Yeah. So we were researching Love and we were finding a lot of people talking about positive things they're doing and the fact that it's not really participating. It's a $30 stock, so we can do whatever we want in there. So I just went and I sold a put at the 32.5 strike. Collected $2 in change. So $600 buying power, $200 in premium if Love gets above 32.5, which is really not that much at all, considering it's at 31. And that's it.
Very nice.
Yeah.
Glad you put NVIDIA back on my radar because I've been trading in and out of positions.
Yeah.
Volatility is relatively high, 50 IV or 49.7 IV rank. It does have earnings coming up, but I put on a wide iron condor in March. I just figure, we've had the bounce, a little bit of a bounce, volatility kind of high.
Yeah, for sure.
Put on like a core sort of position.
Yep. Yeah, and really I do like the NVIDIA ability to roll from Feb to the earnings to March. Like, you got a lot of defensive mechanics.
A lot of flexibility.
Yeah.
I like it.
Sweet.
Cool. Good stuff. All right. I might have to dabble in either one of those. Let me poke around after we get to the next ones.
There you go. For me, this is kind of like I don't know. I was struggling to find something really spicy, but I think this goes back to a couple weeks back when we got long Apple. We were actually looking at Apple when it got to like 236, 237, I think was the last trade price there. It's come back down. I mean, it's not at the lows, but it's kind of in the middle of where it's been trading for the last 6 to 8 months. We obviously had the big move higher. The pre-earnings FUD that got pushed out about declining sales and all this stuff sold it off 10, 15%. We played that bounce, which worked out nicely. I think all three of us got into that. And we're basically back to where that price was. So I'm looking at, and volatility now is very, very low. When you look at Apple implied volatility, 24% in February, 25, 24, 25% implied volatility across the board. Very, very, very low.
Yeah.
So I'm looking at getting some delta here and some positive gamma, getting long delta here. In Apple, I'm buying the 235 April call. So you got 70 days on this option. That's, one strike out of the money, one option strike out of the money, but just a couple dollars out of the money here from where it's trading. Selling the March 245 against it. I did this at $6 and a penny. So it's out about 10 cents ish at the moment as 18 cents. Is what I'm down right now. So you can get in at a better price than what I did it at. 583-ish is the mark right now. If you get a $5 or $6 up move, I'd expect it to be a $20 or $30 win, $200 or $300 winner per contract on this, with a nice little move higher. And $4 or $5 up move is going back to where we were a week ago.
Right.
Not a huge thing. Volatility super low. I don't think the downside is that pronounced here. 220, the 200-day moving average.
Yeah.
My friend Gus, who sits next to me, is a big moving average guy. So he's put me on to that.
Okay.
So just to add that little flair in there, he's going to be a special guest next Tuesday.
Ooh, okay.
Me and the young gun. I'm excited.
That'll be fun.
Yes.
That'll be great.
Mm-hmm.
You'll love to see it. Some fresh blood.
Yeah.
We're no longer we haven't been, but we're no longer like the young go-hards.
No. We're the elders.
Tom considers us
Yeah, washed
on the way
up.
out.
Like Walking Dead.
Yeah.
Yeah.
Washed
Sad.
up. Has-beens.
Yes.
Yeah.
Yeah. That's all right.
I joined you immediately. I was filled at 585.
I joined immediately at 585.
Oh, thanks, guys.
So
All I know is $10 wide diagonal spread in a tech stock like Apple for $5.
Yeah.
I mean, I'm just signing up for that hand over fist every day.
all right. Fair enough.
One more quick PSA. I know everybody has missed him this week, but my dad, Pop, Big Bat, will be on the show with me tomorrow.
Nice.
A little bat versus bat reunion.
Okay.
We like to have those every once in a while, so he's going to be on for this segment.
Nice.
Tomorrow.
Where are you going, Mikey?
Colorado.
Oh, you're going to
Snowboarding.
shred the gnar?
Shredding the gnar. I'm
Fresh
actually
Powell
shredding the gnar.
That's great.
Yeah, it's going to be fun. Just a little steamboat action, a little Super Bowl action, back Tuesday afternoon.
Good
Well,
stuff.
Yeah.
Do not injure your ankle or whatever you did last time.
I mean, I was like petrified today walking to work because I was like, if I fall and break
Right before
myself.
this trip.
Yeah. So I was shuffling slowly.
How much
And I
is like a
still
lift
almost fell.
ticket these days?
It's impossible to buy a lift ticket these days because they're like $250 for a day. So what you have to do to get around that is you have to buy an Icon Pass or an Epic Pass. So if you go more than 2 or 3 days, it pays for itself. Like I spent $600 on the icon pass.
Okay.
But I'll be able to. I'm going for 4 days, and it gives you access to other mountains too if I decide to do more. But yeah, it's crazy that you basically have to buy these passes now because the single day passes are just absolutely insane.
Yeah, for real. Well, best of luck.
Thank
Do
you.
not injure yourself, like I said.
Thank you.
That'll be fun.
Mm-hmm.
All right, shifting gears, I am going short on something that I use 24/7. You guys see me, I live in my headphones. But I think it's a little overdone. So we are buying a put spread in Spotify.
Ooh.
It had a couple days ago, like its first ever profit, basically, since its launch, which is why, they had like a little bit of a gap up a few days back. But I'm just trying to participate in a little bit of a pullback in a defined risk way. I'm going pretty small here. They have 10-point wide strikes in the monthly expiration. So I would have loved to have maybe done like a 15-point wide, but just not doable. Furthermore, I am fully aware that the liquidity in this product is not the best, but I was happy with my entry price. And I also ended up actually doing this a little bit out of the money, just for a little bit better risk reward ratio. So kind of going against the traditional tastylive mechanics, but girls got to have fun sometimes.
Yeah, true.
So I'm buying the 610 put, selling the 600 put. I got filled at 397 for this. So that's where you see that risk reward ratio not being quite that 50-50 that we like, and therefore the probability of profit is also not 50-50. I'd be happy to make $100-$200 on this thing if we do see a little bit of a pullback in Spotify. But like I said, just be thoughtful about your entry here. The mid price versus the natural price is 60 cents wide or so right now. So keep that in mind if you are looking to participate in something like this. Just adding a little bit of short delta. I'm basically like direct or like delta neutral right now, based on adding in the Apple trade we just did, but also coupled with like my short IBM trade from last week. I've got that short gold, long Microsoft. So yeah, just a teeny little play in another tech name.
Stock's a double since this time last year. So
yeah,
I like the idea.
Crazy.
Yes. Very nice.
Yep.
Look at that.
4 trades.
Quattro trade ideas. And it's 11:30 on the dot. Just so magical.
I'm in my drop top, cruising the streets.
Yeah. Were you looking at any of the currencies today?
Here and there, not super closely. Obviously, with everything going on with the tariffs, there has been some movement in some of the currencies, versus the US dollar. Like if you look at Canada, definitely some movement going on there. I'm definitely receptive to ideas in some of the micros or something along those lines. If you have anything.
Yeah, I've been dabbling in those.
Okay. You nibbling on a long euro?
I was thinking about getting long here. I've traded it. I got long it, rode it a little bit up, and closed it, and now we're kind of back to where I was trading it at. When I was trading it, the last one was was about 40 ticks lower was where I got out. I was wondering if you had heard any rumblings with the peeps, the FX peeps.
I have not. It was a very busy morning over in FX and in my seat land, so I have not even gotten to say hello, but I will keep an ear to the ground. Okay. But like you're saying, if you participate using the micros, they're 1/10 the size. A lot of them are like $160, $250 in terms of buying power on a per contract basis in a margin account. So if you're used to something that's more rich than that in terms of like your option spreads, it aligns with the risk tolerance that like you or I have.
And they move.
Yeah.
Like the move today in the micro euro is about a $50 or $60. It's $1.25 per tick. So
yeah,
a quick math of 55 or 60 cents here.
Yeah. They move, but it's not like you have to stay up all night. Yeah. Other than, of course, again, what we saw this past weekend with like all of the tariff discussions kind of just shaking markets as a whole, you can like swing trade them or hold them for like multiple weeks in a lot of instances because historically the volatility has been single digit.
Yeah.
Speaking of volatility, SPX still has a 50-point expected move for tomorrow, which kind of caught my eye. So naturally, I looked at the economic calendar. We have an unemployment report coming out at 7:30.
Non-farm payrolls.
You think the market's thinking there may be a little something in there?
Something? I don't know. I feel like, yeah, probably.
I mean, 50 points in it. Like this week hasn't been like. I mean, it was a little crazy to start the week, but
Yeah,
now
it was a
we've
pretty
kinda
crazy week.
Dwindled down, but 50 points for one day is still a pretty big number.
For sure.
I still think the weekend in both directions is mispriced.
Yeah, the weekend risk is real.
Is real
for the rest of the year going forward.
For the next couple years.
Yeah.
If I was YOLOing, I'd be looking at straddles or out of the money strangles, buying them XSP, something like that. Straddle swaps if you want to sell some premium against it.
Mm-hmm.
But yeah, I think that is it's an interesting take.
Yeah.
Yep.
All right, should we get to some questions?
Of course.
Let us do it. Couple of Iron Condor questions here. David, do I set alerts or take profit or loss or something else on my Iron Condor? We usually just set alerts to take profit, or you can create a good till canceled order to take profits.
Yeah.
Iron Condors, we don't like to create stop losses in there because there's already an embedded stop loss with your defined risk spread. So I would say we would just size it appropriately to where you can hold it, and then just create a take profit order in the form of a GTC as shown here.
Yes.
So yeah, you can use the bracket order to take profits or set a stop loss, or you can use a GTC take profit percentage order. So yeah, definitely something there if you want to do so.
You're not as active in markets as we are, looking at markets every day. Maybe use those bracket orders and, it'll route everything for you. You won't have any issue there. So,
yep.
For us, we're always, I don't know, I'm always looking at my phone, or I always have access.
Yeah.
It's an addiction.
It's better than like some other more volatile ones.
Yeah.
Yeah.
I got distracted because Vecchio is putting in the chat why America wants the Chiefs to win.
Ugh.
And based on when the Phillies have won like a specific type of championship, there's been like a recession or a financial crisis.
That's
or
not good.
like a worst year since X, Y, and Z. So
it's kind of like Groundhog's Day, where like we need something to happen so that the rest of the
timeline is
the
steady.
timeline stays good.
That's wild.
That's funny.
Yeah, sorry.
We'll have to review
Distracted.
that, and we'll have to review our allegiance after that.
Well, that might be a reason to, get some protection for this weekend. Maybe that's our weekend risk.
Maybe. Oh, yeah,
the Super Bowl.
The Super Bowl.
Yeah.
Is the Eagles win, and then
Yeah.
we're all the
And then we're
meteor
limit
hits.
down on Monday.
Yeah, we're limit down.
We'll find out. Like you said, I'm just ready for like the food and the ads.
There you
go.
That's what I'm in for.
Yeah.
I think we have some fun little marketing chats when the ads pop off.
Yeah.
In between the plays and the
For sure.
quarters and the games. But anywho, all right, who's next?
ZN, Wide Iron Condor or Strangle?
I have not touched like the Treasury futures options. I did do TLT Zebra the other day. I covered that.
Nice.
Yeah, I still have mine. The 88.90 from like 55 days ago. Literally.
Yeah. I did the 85.88.
So you probably were
And-
good. You probably were looking good yesterday.
Yeah, I covered it. What's today? The 6th or the 5th? What's today? 7th? I don't know.
Six.
I covered it yesterday. It's trading right around where I covered it, but yeah, that was a nice little pop. But ZN 10-year futures options. You could go to the March. I don't know if there's enough premium in here to be had. It was an Iron Condor. Is that what we said?
Yep.
You
Or a
can-
Strangle. But yeah, I mean, something with 6% implied volatility, I would still prefer to just define risk. I don't see a reason to go undefined risk in such a low vol product. But that's just me.
Yeah. Can't do the ticks. I just did the 30 seconds, 64.
Anything with the
It's
visual,
just, I
like
can't.
6J is my favorite.
Yeah, the 6J.
That's my favorite.
Japanese yen.
Oh yeah, I can't even like say it.
No.
Yeah, you could do like the 108, 107, 111, 112 and pick up 1/3 the width in the 43 day.
Mm-hmm.
A little more than 1/3 the width. Probably not something I'm going to dabble in at the moment. But you can make the math like work in terms of like the tasty mechanics.
Sure.
Leroy Jenkins. Smaller accounts under 25K typically have a higher buying power per position. That's not ideal long term, right? But assuming trades go well, an account would grow faster that way, wouldn't it? Yeah, it goes both ways for sure.
Yeah.
The problem comes into play if you just think about like volatility steps or like volatility walks. So if you have a 10K account and you're risking $1,000 per position, what happens if you have 10 losers in a row? You now have $0.
Yeah.
Like that's how it is. That's why the math is important to keep in mind. Where if you have a $100,000 account and you have $1,000 per position, you are now significantly smaller per position. You could absorb the same 10 losers in a row and you're down 10% instead of 100%. So that's the importance of trading small. It's more about, it's not about how quickly can we grow this account. It's about how much variance can I absorb against me and still live to fight another day. So smaller accounts are harder to do defined risk trades in while still staying small, but you can still do spreads in a lot of these different products and keep your risk really small and protect yourself from big moves against you when you're wrong.
Well said.
Ooh, Amazon trade. Okay. Buy a 242.5 call and sell 2 of the 255s and buy 1 of the 260s. Unbalanced butterfly.
What
Okay,
expiration?
wait. Give me that again.
242.5.
Yep.
255, 260. I assume in the weekly, because it's the 242.5. I don't see a 242.5. I guess there is one in Fab 2. What do you think here?
I mean, I would just say I think they're going into the weekly.
Yeah.
Just based on the 42.5 strike, but I would just remove the short call spread there. I mean, you're selling the 255, 260 call spread for 70 cents. I know it's, past a 1 standard deviation, but I just don't think it's enough juice. I would just buy the, really what you're doing here is you're buying this call spread, the 242.5, 255, and you're doing that, for $3.80, and then you're selling the 70-cent call spread against that. I think I would just do the long call spread.
Mm-hmm.
Agreed. Especially because Amazon can whip around here.
Yeah.
But yeah, I don't mind it. No upside risk on that one.
Yeah.
How would you guys manage a short?
It's like a ratio spread.
Yeah.
A 110, 105 AMD.
Looks
what
like
ratio?
Yeah, it looks like it's backwards.
It's a zebra.
Yeah.
So it's short 2 of the 110s, long 1 of the 105s.
Yeah.
Oh wait, so that's not a zebra.
It's an inverted. It's just like a backwards ratio spread. So you're selling 2 and you're defining your risk on 1. You still have undefined risk to the downside here. So yeah, there's nothing to do. You're right at the money. This is where you kind of want to be. Obviously, you want to be higher, but there's nothing to do here with all that extrinsic value in the short options. You're still defined risk on the 1. If you're fearful of downside movement, maybe you just buy another one for 80 cents. Give up some of that profit potential to define your risk to the downside.
Yeah.
But
the naked put is the meat of your position.
Right.
Yeah.
That's your risk, really. The $5 wide put spread is.
Yep.
You could sell a call against it.
Mm.
Won't use any additional buying power because you're already naked this extra put. So if you, and I don't know what expiration we're looking at, but you have the buying power to sell one call against it without using any additional capital. So that's something you could also consider.
Mm-hmm.
What were you guys laughing about yesterday or giggling about?
I don't know.
George said caught the replay of the conversation yesterday.
Maybe the Stonk Messiah coin that he was pumping.
Oh, yeah.
Yeah.
We were talking about like launching our own coin. Stonk Messiah got into it.
Okay.
So
the whole thing.
Mike gets all the giggles because I
You can't see it?
I'm all over this. So Mike sees all the,
Banter.
Yeah.
Yeah. For better or for worse.
Yes.
I might add.
Yeah. Amazon drone-in special. Quantities limited. Get them today. Double calendar, $225, $250. So this is a short-term calendar where you're...
February the 14?
The 8-day.
Yeah. Okay.
Yeah, long the 8-day. Or no, sorry. Yeah, long the 8-day, short the 1-day. The 225, 250 double calendar. Yeah, I mean, you just got to avoid a gigantic move against you. And ideally, you get a move towards one of your strikes. Probably the 250 strike is where you get the most profitability on this trade. But ultimately, you just need your long options after expiration tomorrow or at expiration tomorrow. You need your long options to exceed $1.80 in premium. So where does that happen? It happens if it's pinning one of those strikes and if you don't have a crazy vol collapse in the 8-day cycle. You're going to get a pretty big vol collapse in the 8-day cycle. So it looks like free money right now, but that's because you're not accounting for that massive drop in IV that will take place tomorrow. Yeah. So it's still a cheap way to try and play this IV move, but you need to move towards one of those strikes. I will be interested to see what that's trading for tomorrow, though.
We can look. Or you won't be here.
I won't be here. Yeah.
I'll be here, in
In the heart. My spirit will be at this desk.
Well, you know what's going to happen tomorrow.
Oh, because I'm traveling?
Yes. Ooh.
Stuff's going to go banana land?
Yeah. Non-farm payrolls and you out. It's the perfect storm.
Mm-hmm.
Scary.
I know.
Tom's out too.
Uh-oh.
Where's Tom going? Somewhere fun?
I think maybe Vegas or something.
Vegas?
Yeah. Liz and Jenny hosting the morning session.
Fun.
So Tom and Mikey out.
Yeah. And your dad?
Yeah.
Well, kind of your dad.
Yeah, well, he could come join me.
So what's going on? What's happening now? This sounds crazy. What are you doing in Amazon here?
I'm long. I had a crab trade. I closed out of it. I just have now a diagonal spread. I'm long the 250 in March. I am short the 260 against it in the front weekly. I might actually roll this down. 70 cents. I don't know. It's tough. I'm just gonna leave it. I got $1 there. I did this at $6.89. The stock opens lower or unchanged or slightly higher, I'll have the opportunity to roll this to the February monthly, like 2 weeks out in time. Volatility still there. If I wanted to, I could do that. $1.
Lovely.
Yeah. I'd rather wait till tomorrow.
Yeah.
See what happens. I think it's an up move. Maybe inside up. That would be good. We'll see.
Shall see.
Fair.
I need to order some mouth tape from Amazon. I just
scares me.
started dabbling in that this week. Sleeping like a rock.
Really?
Yeah.
Scary.
I thought I was gonna have dreams that I was dying.
Yeah.
So far.
You're having
We're
dreams
doing okay.
of running through fields.
Nah.
I really do like the nose tape that pulls your nose open.
Yeah.
That I think really works well.
Yeah.
I don't know. The mouth tape freaks me out because what happens if you're just congested?
Oh yeah, you can't. But I've been doing it the bootleg way with just some regular medical tape.
Some duct tape.
Duct tape. Yeah. But I think it's time to upgrade.
I like it.
Yeah. I'll keep you posted though, because the first night that I dream that I'm dying or suffocating, it's over.
Yeah. Can't do it.
I feel like I wake up and be like,
Yeah.
oh, you get they'll freak out.
Yeah. 1,000%.
FTNT earnings play to the upside with a diagonal spread.
FTNT. Why does that make me think of Teenage Mutant Ninja Turtles? TMNT.
Yeah.
Yeah.
TMNT. What a great series.
Which turtle were you guys? Maybe that'll be like our fun thing we do after the break. Like we'll take a BuzzFeed quiz.
Yeah.
What Ninja Turtle are you?
I think I leaned Michelangelo just because my name is Michael. That was like my kid. You know, I was a child. That was like my.
You had the stick, right?
Yeah, my linear set. But Raphael was probably the sickest one.
Yeah.
He was tight.
I think I've got big Master Splinter energy.
Ooh.
I don't.
Yeah, when we go on trips, you are Master Splinter and we are the little little mutants
Turtles.
running around.
Getting diverted by pizza and whatever else.
Literally. FTNT Fortinet. After the close today, $100 stock, $10 expected move, big expected move there. This is a gigantic expected move relative to like April. 13-point expected move in April, $10 expected move for today. What's going on here?
Yeah, they're okay. They have security. Yeah. Okay. That's a big move. What are we doing? Long?
I mean, I guess.
Are they asking?
It's at all-time highs. Upside, yeah. Upside diagonal. So yeah, I would go to April. I wouldn't buy March. I don't think there's no reason to buy March for $9.50 when you can buy April for $10.50 and get 70 days instead of 30 or 40. So I like going to April here, and then you just sell the weekly. And I would you could go to the 110. If you're more bullish, you could go to the 115. That's probably where I'd draw the line. If you're less bullish, you could go to like the 107, 108, 109. But that's pretty much the cookie cutter setup, is just buying April, the 100 strike, and then selling something against it in the one day.
I did the 105. I did a crab trade. Long the 105 in April. I like the going to April idea. I think that fits here. And then selling 2 of the 115s in the weekly. So you're selling about, $3.50, 60 cents in premium there and buying 50 cents here. So net, you're short about $3 of extrinsic value into earnings. Not a stock that I know all that much about. So I wanted to hedge some of that risk to the downside. And it's at all-time highs.
Feel that?
Fair.
John told me that Tom is going to Las Vegas to see Blake Shelton. Is this confirmed?
Oh, yeah. I remember him talking about this. Yes.
What?
Yeah.
Did not take him for a Blake Shelton fan.
It's not him, though.
Right.
Wow. This is a new side of Tom we've never seen before.
Yeah. Tom's blasting Hillbilly Bone in his car on the way to work every morning.
Yeah.
That's amazing.
Anyhow.
I guess old dogs can learn new tricks.
I guess so.
Yeah.
We need to get Tom to build a Spotify playlist.
That'd be amazing.
Songs.
No, he doesn't have Spotify and he doesn't have Netflix and he doesn't do joy.
Yeah.
Work.
Yeah.
No joy.
No joy.
Food and work.
True.
That's where his true
Food is
passions
joy.
lie.
Super bullish on Amazon, thinking a crab trade without buying calls. Without buying straight up calls, is that what you guys would do, or is there another way you would play it? Yeah, I think without straight up buying calls, we would do the diagonal spread if you're looking for no risk to the upside. If you're looking for a little bit more protection and more of a neutral trade, then yeah, crab trade I think makes a lot of sense. But yeah, diagonal spread, just selling something in the one day will reduce your cost basis dramatically as long as you're okay with giving up that upside profit potential. So yeah, crab trade or diagonal. Definitely fit. Stonk Messiah, buy all the calls at 200 in April, hodl to 300 profit. That would be nice.
For Amazon?
For Google.
Google whacked me. Got me good.
Did it?
I mean,
Oh yeah.
I had a crab trade, so I did this at $5.05. It's now at $1.39, so I'm out $400. I got this one standard deviation call in March at 210. So it was pain, but not, debilitating fetal position pain. It's just, a little.
Just a little slap.
A little punch to the gut.
Yeah.
Flesh wound?
Flesh wound, yes.
Merely a flesh wound.
It's okay. We can't win them all.
Do you think that, I guess not. I already know the answer to this. Errol and Gus don't know that, right?
No
It's
what?
about a flesh wound. Monty
yeah.
Python?
Yeah,
Probably
definitely not. Definitely not. No.
That was before their time. Maybe they do though.
Way
Maybe.
before. I was asking him about, or we were talking about Braveheart.
Oh.
And Gus, I think
a little.
Yeah, it was it wasn't as, I know every scene from Braveheart kind of thing.
It was like an empty agreement. It's cool.
Yeah,
like,
he
nice.
was. Yeah, he was yeah, I've seen it, and I was like, wow.
That's all you have to say?
That's all you have to say.
Are you sure you've seen it? Any ideas for MCHP earnings, microchip technology?
MCHP. I've never.
MCHP.
And they have earnings after the close today.
Just sell a put?
Yeah, it's $50 stock.
Sell the 50 put.
Yeah, you could sell the 50 put. You could do a diagonal spread.
Yeah.
That's pretty much it. I mean, yeah. There's not a lot of premium to sell to the upside here, which makes it tougher. But yeah, I would lean towards a short put for that reason. If you are bullish here, it's a little scary trying to buy this dip, this falling knife.
Yeah, all these stocks have gotten whacked NVIDIA too, but AVGO is really the only one of the chip stocks that has participated in this upside move.
Yeah.
AMD, got killed. You had Qualcomm and ARM earnings after the close yesterday. Those are all down. So, and they're down from not the highs.
Yeah.
They're down from low prices. You look at AMD, it's the death trade.
SMCI's on the 11th.
Ooh, spooky.
That is a spooky trade. Yeah, that's a spooky trade.
But markets are more liquid in here than I thought they would be, honestly.
SMCI?
No, in MCHP. It's not out of the realm of doability.
Mm-hmm.
True.
Sell a put in solidarity.
True.
What about just going out to March and doing the 47.5 or even the 50 in March?
Yeah.
I'd do that. I'd do a 30 delta put for the peeps. Out in March. You get some exposure to the earnings, but
Yeah. Got a little more time to
be right. Yeah. I'll do that. $700 in buying power.
Fair.
Oh, got in. Beautiful.
What's a better way to leg into an upside call crab trade? Buy a diagonal spread and then sell an upper credit spread into a rally? Yes. It's always selling premium into the directional move that increases the value of that spread. So if you're buying a diagonal spread and then you get an upside move, you can convert it to a crab trade or a condor or something like that into that move. So that would be the ideal way if you end up timing it right.
Yeah. If you knew the future, you could just do each one of them.
Yeah.
It's true.
If you had the crystal ball and you knew the future, you just buy the call, wait for it to go up, then you sell another call and then wait for it to go up, and then you could sell the call spread. But that's...
Yeah. It's a little tough.
Yeah, it's a little tough.
A couple more here.
A little tough.
Based on the numerous emails you've received, thousands and thousands over the years, what are the top 3 challenges you've identified that retail options traders face?
Ooh.
What advice would help them overcome these issues?
Great question.
Definitely trading.
You give one, I give one, you give one, because once upon a time, Katie was on the support desk.
Yeah. Doesn't my white hair show that? That was on the desk at one point?
No.
What do you think, Mikey?
I would say trading too big, which is obvious.
Yep.
But I really think a lot of people get into trouble with undefined risk trades that they end up closing, which is related to trading too big or not making moves fast enough to if we get emails all the time where it's like, I have XYZ strangle or short put, and then we look at it and it's like a 90 delta short put where nothing has been done to mitigate that position. It's like you can't do anything now. But also, if you are trading a short put or a strangle or a straddle, and then you end up closing the trade, over time, and I think another thing is just thinking 1,000 occurrences out. If you're selling a strangle, a straddle, or a short put or whatever, and you end up closing the position because the move is too big, almost always you're going to be in a better spot if you just start with a defined risk trade. If you're selling undefined risk, I think you have to have the ability to have that long-term time frame where you can move the premium, you can move your strikes, and put yourself in a better position to get out eventually. Because you can't control the magnitude of moves, and there is going to be a scenario where you're in an undefined risk trade and there's a huge move against you, and if you're forced to close it because it's too large now, that's a really tough spot to be in, especially downside moves in stock. My biggest example is Facebook. I sold Strangle on Facebook. It was at 210. It went to 130. I had to close it, and then I watched it go from 130 back to 210, which is it's just extremely detrimental if you can't absorb that volatility. So having too short of a time frame and trading too big.
1 minute left. Give it to us.
Mine's going to be a little bit different than what I was going to first respond with, but it's based off of some recent conversations that we have had on the road, and that is just straight up paralysis. So you get a lot of people that come up to you at events, and they're like, I'm really interested in doing XYZ or this or that, but I haven't done it yet, and I don't know how to just you just have to get a little bit of skin in the game.
Yes.
So I know that that's terrifying, but just think of something defined risk, whether it's a new product or a new type of strategy, find some way to make it fit so that you don't have a size problem and just push the button. That one, I was on the same side of that. My first trade was 27 cents in credit. I get it, but you're not going to actually move forward unless you get filled on something so you can actually learn what happens in a real market.
Assignment risk.
Oh, yeah.
Ooh, that's a good one.
It just doesn't matter. It doesn't change your position. It's no big deal. It's a rare occurrence anyway. Everybody getting all caught up in that.
Yeah. If you have a short put, you're already assuming 100 shares of risk.
That's your risk.
Or with your short put or short call, 100 short shares.
Just chill. Take a chill.
Yeah.
Good stuff.
Get us out of here.
Lots of really good questions.
Yeah.
Okay. Thanks again. If you guys did not get to your questions answered today, please come back tomorrow. It'll be Bat and Bat on the show. But if you want to see anything in future episodes, just tweet at us. I'm at Trader Katie, Mike at Trader Mikey B, Nick at Trader Nicky Bat. Good luck, good trading. Let's get some pizza. Go football.
Go waste management.
Go waste management.
Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade.
like we do it.
Know someone who needs a better broker? For 1 month only, earn $500 for each qualified person you refer to Tasty Trade. See how it pays to have friends? Terms and conditions apply. Tasty Trade.
I got Joe. Joe in Houston, what's up?
Just want to call in and say I really appreciate everything. I started trading and learning from you guys about 6 years ago. You know, it was you guys' work and the platform that got someone like me that didn't really know anything about the market capable of really outperforming the market now for, 5 out of the last 6 years. And so I really appreciate you guys. And I can't think of another company where I can pick up the phone and call the CEO, the trade desk, and reach somebody as quickly as I can there. So just really appreciate everything and what you're doing for guys like me out here. What you're doing is really spectacular. So really appreciate it.
Thank you, my friend.
I really appreciate it.
You made my weekend, man.
We are back. It is Thursday, February 6th, 2025. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Jamal Chandler. Jamal, it's a good day.
It's a great day, Chris. Who are we kidding here? Did the groundhog come up the other day? I don't even remember what the real deal is, but
which one?
There's only one, right?
Oh gosh, Jamal. Oh, Jamal. I'm a New Yorker. We have Staten Island Chuck.
Oh, come on.
And actually, Staten Island Chuck's been reporting on the weather since 1987. Since 1987, he has an 83% correct rate. Meanwhile, Puxatawny Phil, that fraud, only correct 36% of the time since 1895. I'd also question whether or not Puxatawny Phil's been alive since 1895. Seems like a scam.
No, first of all, see, this is the problem with you New Yorkers. It only matters what's going on in New York and nowhere else. Second of all, Punxsutawney Phil is certified, okay? He was in the movie. Nobody talks about Staten Island Sam or whatever his name is in the movie, and this is what matters.
Yeah, Bill Murray has not done a Groundhog 2 sequel with Staten Island Chuck. But put respect on that name, Jamal. It's also a good day because the Mets have signed Pete Alonso. Thank you, Steve Cohen, for making this Mets
you're pretty
fans.
happy about that, huh?
Mets are the most improved team this offseason, according to WAR, which is all that matters because I'm a stat geek. We pay attention to quant numbers here, even in baseball, Jamal. Unfortunately, I still haven't been able to crack the fantasy football code yet because I keep losing to you and the rest of the guys in the office. But
you don't even set your lineup. You're one of those. You're like, whatever, let the chips fall where they may.
I gave up this year. You know what? I stopped watching games once Aaron Rodgers was doing his thing, and the Jets, I just couldn't put myself through it. I've been through enough.
2 years in a row. It's stymied your football watching. You know what I mean?
We haven't made the playoffs in over a decade. It's just not worth the time.
Wait, by the
Jamal,
way, before we move on this, I do have to. I haven't asked you. Who do you got for Sunday?
That is a great question. I do love my country, and I love being long stocks. And given the fact that every time the Philadelphia Eagles have won a Super Bowl, or quite frankly, really any time the city of Philadelphia has won a Super Bowl or World Series, something terrible has happened in the country. I guess that makes me a Chiefs fan this week. And I do have some fun research to back that up coming from Ryan Detrick over at Carson Research. He sent over a fun chart yesterday, and we're going to share it tomorrow as we think about should we be going max long as your DTE puts on Monday morning if the Eagles win. But the odds will go up, Jamal. Let's talk about why today matters, though. It is a quiet day in the market, at least for stocks, which is what we care about most here on Futures Power Hour. But there is a non-farm payrolls report tomorrow. And the rest of the market, from metals to currencies, even bonds, they're kind of unwinding a little bit of the action that we saw earlier this week. Mm-hmm. John, we can go to the slides here and talk about this non-farm payrolls report for this coming Friday. There are data still due out that I think matter. The Federal Reserve isn't just a building in Washington, D.C. We don't just pay attention to what's coming out of 1600 Pennsylvania Avenue. Tomorrow we'll be looking at what comes out of 2 Massachusetts Avenue, the Bureau of Labor Statistics. The BLS is expected to release that at 8:30 a.m., as they typically do. But why do we care? Well, jobs expected to come in at 170K, down from 256. The unemployment rate unchanged at 4.1. Wages a touch softer at 3.8 from 3.9. For context, is that good enough? Probably. If we want to maintain a 4.5% unemployment rate or lower through the end of this year, we only need to add about 57.1 thousand jobs per month, according to the Atlanta Fed jobs calculator. So, yeah, is this a deceleration from what we saw previously? Perhaps. Are we looking at a market that's still looking at very solid, stable jobs growth in the start of this year? Yes. And net between those two things, ultimately the takeaway from the market the past few weeks, when you have good data, we're okay with it. When it's been great data, we're worried about overheating and reflation. Mm-hmm. This would be good data. This would not be the economy's on fire and the Fed isn't going to be able to cut again and do we need to entertain hikes kind of data. This is, okay, 2 cuts seems reasonable this year kind of data. Jamal, are you looking at the options pricing in the S&P, the NASDAQ, any of the bonds, seeing that maybe the market is not paying enough attention to non-farm payrolls tomorrow?
I think, I think it's still important until proven otherwise. I just looked at the expected move. It's 47 points. You can do the math. It's less than 1%. I think that's what you really need to know. And you're right. I think when it's been great, sometimes we get some mixed reactions. I think great in this case would be if the number's over 200K like they have been, I think, for the previous 2. I don't know. I feel like that would freak the market out in a way. But look, we got to think about the week so far. I know they're up today, but yields have been dropping for the most part in the near tenors. And you're starting to wonder if they are analyzing I don't know. I mean, usually when we see yields fall as much as they have like in the past week, you're like, oh, okay, they're starting to price in a potential cut at some point, right? But I think this is definitely one of the ones, what we saw in the last several months is if we get a really hot number, market doesn't like it, draw whatever conclusions you want on potential rate cuts. Now, I think this is, I don't think the market, I wouldn't say the market is not, I wouldn't say the market is discounting what might happen on this jobs report. I would say there's a lot to come, right? I mean, there's a lot we have to think about. What's the tariff situation going to do eventually to businesses? Is that going to create more unemployment down the line? I think we have to start looking at things like that with this jobs report. So I'm curious to see what kind of move we're expecting, honestly. Like, I am really curious to see if this is a hot number, will the market not like it? Or is it like, well, this is fine because we're going to have to maintain rates at these levels anyway for some time, given what's potentially coming down the pipe. So I think this is an important one. But I'm curious as to how much the market is really going to react to it because, again, everything is there's a lot of moving parts now, right? There's a lot of moving parts. It's not, it's not just static like it was before. Like rates are here and we're expected to cut and we need this jobs number to give us a reason to cut. I think now it's just, it's totally different than that landscape.
Jamal, before we move on, I do need to issue a quick addendum here or correction. I was wrong on the Staten Island Chuck versus Puxatawny Phil stats. This comes from the National Weather Service and the National Centers for Environmental Information over at NOAA. Staten Island Chuck has been doing this since 1981, not 1987, and he's been only accurate 85% of the time, whereas Puxatawny Phil doing it since 1887, not 1895, and accurate 35% of the time. So all I'm saying is, pay some respect to Staten Island Chuck.
That's a forward. Bigger data set. Are you serious? Come on. He's got bigger. He's going to be much longer.
I also don't think that's the real Puxatawny Phil. Just color me skeptical. Okay. All right. Let's go to these markets here today. Stocks are more or less churning near the opening levels that we saw. The S&P is up by 0.21%. The NASDAQ up by 0.23%. The Dow and the Russell down a little bit, 0.31% and 0.02% respectively. Volatility continues to come in, though. The IVRs are dipping into the lower teens now, 13.6 here on ES. When we take a look at the VIX, at least the spot VIX for now, we see a 15.43 level. Jamal, again, this theme this whole week has been, are we leading ourselves into a day's kind of stupor of complacency right now? Given all the news and information, the binary risk that exists out there, are we underpricing fall heading into Super Bowl weekend, into non-farm payrolls weekend, into a weekend where we could be getting more tweets and tariffs?
I think it's possible, yeah. I do think there is big weekend risk now. Again, 2 weekends in a row, we've had some type of news come out, very different type of news actually, and as in like they weren't the same each weekend, and in both times, markets move big. So again, I think I said this earlier in the week. I do feel like there is some weekend risk now, and I do feel like another one of these big down days in vol pops, we could see actually vol go higher this time around. So. I don't necessarily always talk about buying puts. Matter of fact, I hardly ever talk about it. But for those who like to buy puts, maybe you wait till towards the end of the day on Friday. Honestly, that's something that I've been trying to pay attention to at times. If and when I do trade some weeklies, I'll try to wait for these certain opportune moments, right? Maybe you look at either puts, or I wouldn't necessarily say puts are not exactly, they're cheapish, I guess. But, you could even do a put butterfly in the SPX on a Friday. To maybe get ahead of some potential volatility. Maybe there's something else that pushes us back down to 6K. I might actually do this trade myself as I'm talking about it, because you're right. There's been different things that have popped up each weekend, and there is weekend risk now. I can't hear Chris.
Sorry about that. My mistake. In the past 2 weeks, when we have, got a cough, I don't want to interrupt you. We see here that this seems like a bit of a flag, perhaps, contextually. We break out of the downtrend from the December and early January swing highs, and then start this next leg of consolidation. But in the upper half of this multi-month channel, going back to the start of October, roughly 57.75 up to 61.75. If this starts to break out here, and given the technical drift, right, momentum is starting to increase. We're looking at a potential crossover in stochastics today in the upper half of their indicator breadth. We see here MACD's already giving us a buy signal today. And then the volatility, 15 handle on the VIX or lower. That is the textbook. What do we do? What tool do we take out of the toolbox? Low vol, positive momentum. That is simply just being long the market. That could be at the money call spreads. If you think it's worth it, short put spreads. I personally don't. It could be long out of the money calls if you're feeling frisky. But you look at the setups here, and where are we catching ourselves? Up in this EMA envelope, we're putting closes back through there, reasserting, an increasing slope here, first derivative of price change on that 1 week moving average. Breadth is up as well. So while there's a lot of churn in the headline indexes still, a thesis we've been working on since DeepSeek came out, Jamal, right? If NVIDIA's gets taken down a peg and capital gets redistributed, you could see some just churn for a little while. But the churn's happening, and the names that are doing well as the churn occurs are holding up. So it's difficult to just, for me to say, from my perspective, that this is a top or worth getting out of any long exposure that one might have. So I'm heading into non-farm payrolls tomorrow still with that 6150, 6300 call spread here in ES. I'm very comfortable holding it. I don't think there's a reason to change. And if I didn't have it on now, I would look at this chart setup and say it is still very viable to entertain. That's it. Low vol, high momentum. What do we do? That's the question we ask ourselves today.
Yeah, like I said, I mean, aside from any potential weekend risk, right, which, again, we have no idea how that plays out, but it's always a possibility. But aside from that, I do think we're consolidating. I think that's, kind of what we're seeing here. It'll be interesting if this meeting tomorrow, this jobs report tomorrow, if it actually causes a big reaction one way or the other. But like I said, I don't know. I feel I could also see this being a situation where, again, the market is still trying to figure out, what do we have to worry about here going forward in jobs reports? How much are these going to change given some of the things that are coming down the pipeline?
Interestingly enough, because vol is so low, you were talking about potentially looking at some downside hedge exposure. Tom thinks with Trump at the Super Bowl this weekend, he's not going to be tweeting or doing any tariff stuff. Granted, that's probably where I'm leaning as well. But let's say there is the individual out there. I want to structure a trade so that in the event something happens with the Sunday open, I'm protected going into Monday. I want to hold on to my longs. I'm not a zero DTE guy, so let me just put that up front here. But if we were thinking about structuring a trade in such a manner where could the market see a significant 1-2% pullback from these levels, entertaining something that's just bracketed around the one standard deviation move in the 4 DTE, maybe long the 60-50 put, short the 60-25, it's risking, 1 to make 5, 4.5, 5. It could be the way to express this point of view. I've been comfortable just holding the longs and riding it out as a macro guy, right? I can't, knowing that I'm not a good scalper and I overreact to things. I'm not going to base any trades on short-term charts. I'm going to wait for those daily closes. But there are ways to structure this right now that are cost efficient, capped risk, and quite frankly may give you a little bit of time to get out of a position if it doesn't work for you.
Absolutely. Like you said, you got it wrapped around 26, 25. You could wrap it around however, wherever you feel like markets could go. Again, a solid, I guess you would say 1.5%, right? So almost 100 points. I mean, that's why it gets me to like 6K, right? I mean, you could wrap it around there, however you want to do it. And again, these are always fairly cheap when you look at these put butterflies. Again, I'm looking at one right now, 25 points wide, but mine is wrapped around 6K. So that's $140, $130, $140. I mean, that's pretty darn cheap. And again, I wouldn't necessarily look at it as a hedge, by the way. It's just a cheap shot, I would say. And it just really depends on how much, I think it really depends on how much exposure you have in any given area. Like if you got, most of your stuff is in 45 to 60 days. I mean, this is just, your positions are only affected in the short term, right, by a big down move. If you got more zero DTE stuff, well, then, yeah, this is probably more of a hedge for you. So it just really depends.
Right. And that's kind of where I was going with, am I going to sit tight or not? Like, if I have enough time on my horizon, do I really need to be bothered what's happening over the weekend? If Tuesday was like 21 days to expiration on any of these positions, it's a very different conversation than if you have 45 or 50 days left, right? The position will retain enough intrinsic value at that, longer duration level so that if you do need to make an adjustment, it's not as costly, right? Than if we were looking at, okay, we're about to roll over the decay curve. This is now going to work not in my favor. But there's really not much to say otherwise. Yesterday we close in right near 60.86. We kind of just floated higher during the session. Today, meandering here near 6,100. The NASDAQ itself, very similar setup. We're making our way back towards the declining trend line from the December and January swing highs. We hit that swing high on the 22nd. We failed to get through it on the 24th. We failed to get through it on January 31st. So if we can slice through this 22K level, which incidentally highs right after Christmas as well. If we slice through 22K, there's really nothing stopping this from going back to the highs. The multi-month consolidation could be ending. Maybe this is an inverse head and shoulders pattern here. Left shoulder, head, right shoulder. That would be a neckline breakout for new highs. We've previously looked at chart setups like this in the NASDAQ Jamal, looking for new highs coming out of inverse head and shoulders patterns after consolidating near a new all-time high. So it's a play that's worked. It's a tried and true play out of the playbook during the last 2 years and 4 months of this bull market rally from the November 22 lows. And I'm not going to fix anything that's not broken right now. So I got my eyes on this next through 22K in the NASDAQ, starting to look at the out of the money calls near 23K, 24K.
That's actually the perfect phrase. Not going to fix anything that's not broken, because I got to tell you, I mean, this is a little bit of surprising resilience given the fact that the last couple of major tech names have not really hit the mark, if you will. They've kind of missed the mark actually on earnings. Google, Microsoft, you might as well add Apple in there as well. But we got another one tonight, right? We got Amazon. We'll see what they do. I actually got a somewhat of a bearish position in Amazon, but again, it's not major. It's the main way I play earnings through these calendars. They're pretty cheap, and I like to play earnings for moves. And because the vol crush is going to happen, it's just a question of what kind of move you're going to get. And the only reason I'm playing to the downside is because, again, you look at recently with with Google and Microsoft, not so great on the cloud front. We know that's huge for Amazon. So I'm curious to see, they're the cloud leader. I'm curious to see what they end up doing on earnings. I figured it was worth a shot. I'm rooting for it to go down for my position. I'm not really rooting for it to go down overall because, again, I would like to see this type of resiliency stay intact for the NASDAQ. So we'll see what happens.
We got news that Amazon's officially passed Walmart in terms of sales, which is a really interesting comeuppance, having seen the company evolve basically over the course of my entire lifetime. Walmart was always the behemoth. Amazon was always that scrappy bookstore. And then it was that scrappy bookstore with an 1,800 PE, forward PE ratio for a number of years. And now it has the earnings to justify it. So look, Amazon, like some of these other companies tend to do well when you see quarters where there's high personal consumption expenditures. And so when we had the GDP report a few weeks ago, last week actually, was it last week or the week before? I don't know. But you had Visa earnings immediately afterwards, right? And Visa and MasterCard both did exceptionally well. And it's kind of like, well, you look at the consumption figures in Q4 in the GDP report, and consumers were clearly spending a lot of money. So what do we think credit card processors do? And to that end, what do we think a retailer like Amazon did? I think the AWS component that you mentioned is obviously far more important here because the market's object of speculation right now is the AI theme. And so no meat on that bone. It's been a penalizing factor for, as you mentioned, names like Google and Apple here in recent sessions. But the Russell is where you and I have been talking and eyeing and watch listing this bad boy for the past 2 weeks. There's something about 2330 here, Jamal. Today we bump up to 2336 and immediately get rejected again. The high from the 22nd was 2337. So we're not quite breaking out here yet. I haven't established a position because my criteria haven't been met. I'd like to see it close up through this swing area. Are you still waiting and watching this like I am? Have you jumped in yet? What's your plan here?
100% waiting and watching. And yeah, I would like to see it eclipse that. Again, I think we talked about this the other day, that the top of that big down move that we saw on the December Fed day. I would like it to see it eclipse that. Once it does that, I think it's very fascinating and could be a nice trade, honestly. So I'm going to be a little bit more patient here, just to, because a lot of times we see, like you said, this little candle we're seeing today, a lot of times we'll see the bounce, we'll see it starting to clear, but then it gets rejected. And then that's the next day is the big fade, especially with the jobs report coming tomorrow. So I'm going to hold off for a little bit longer, but it's starting to form something here. And I think it bears watching.
Russell 14.4 VR, certainly a different set of circumstances for trading the Russell than it was this time last year. A year ago, Jamal, you could play long deltas in equities in kind of a mixed bag. I could be long calls in the S&P. I could be short puts in the Russell, expressing that same view. You're getting paid for the short puts in the Russell. The IVRs were 40s, 50s, 60s, while you look at the S&P and the NASDAQ, high teens, low 20s. Right now, there's not much difference, right? The volatilities have kind of converged. And so if you are already trading the NASDAQ and the S&P on the long call side, thinking about how you structure a trade in the Russell, you're putting another similar basket. You can't diversify the articulation of that view because the volatility simply isn't there. But the companies that make up the Russell are very different than those that make up the S&P and the NASDAQ, of course. Will lower rates help the Russell companies? Sure. If we see a big wave of people removed from the country, we stop immigration, or we do deportations. What does that do for the labor force? It's going to shrink the labor force. Does that put more bargaining power in workers' hands? Yes. What does that mean for wages? Wages could be higher. If wages are higher, which companies are most sensitive to that kind of increase in overhead costs? Small and mid-cap enterprises, which make up the Russell. So this is not a straight shot, it feels like, back to 2,500. There's some wood to chop, both technically and then narratively speaking. But it's as good of a setup as I've seen, and we're not going to pay attention to the news. If there's a good technical setup plus a cost-effective way to express an opinion in line with that, we got to take it. So yesterday, we see this bounce again at this EMA envelope. Monday freaked us out, but we recover back there by Tuesday. Yesterday, we bounce off of it. This is just slowly building momentum. It's looking more like accumulation up here than distribution. So I will continue to have my eyes on that long side of the trade.
I think you're right. You can't really focus on the news too much. It's more about the technical setup. Of course, it helps the technical setup once the news ends up bending the right way. So again, I think it's just best to kind of watch this formation as it's happening. Of course, it's always going to be a little bit of a bumpier road for all those reasons you laid out, right? And it's always going to be a little bit of a bumpier road in the Russell than it is for NASDAQ or S&P. But if this plays out right, and I need it to be on the top side of that big down move from December 18th. If it gets on the top side, it gets a lot more interesting to me.
Jamal, we're talking about rates here a little bit, so I suppose it's a good time to go over to the bond market, which the curve's been twisting-ish kind of today. Short end rates were a little bit higher. Long end rates were a little bit lower. There was an interesting comment put out by Besant yesterday, or at least there was an article put forth by Bloomberg yesterday. And this Bloomberg article says that the Trump administration's focus is on 10-year Treasury yields, not the Federal Reserve's benchmark short-term interest rate. Treasury Secretary Bessent believes that expanding energy supply will bring down inflation and that lower energy prices will help working-class Americans and rebuild their optimism for the future. Bessent supports making the 2017 Tax Cuts and Jobs Act permanent, which is set to expire at the end of the year. What's interesting about this is that you had a Federal Reserve meeting last week where going into it, Trump had been saying he wants lower rates. And now on the other side of it, he hasn't been pounding the Fed for making the wrong decision. And now you get this comment or the set of commentary from the Treasury Secretary that the focus isn't necessarily on pushing down short-end rates, but it's doing the things that reduce the inflation premium at the long end of the curve. That might be something like deficit spending reduction. And certainly we've seen from this, Doge team infiltration throughout the executive branch, they're clearly trying to find the pennies and nickels in between the couch cushions. And I frame it like that because the places where they've targeted spending cuts so far amount to 0.02% of federal spending in any single year. So it hasn't been a significant spending cut lift thus far. But to get that kind of inflation reduction at the long end of the curve, such an inflation reduction that it offsets whatever growth boost you get, you're probably looking at a substantial reduction in deficits or the national debt. So whether or not this is an actionable set of comments is one thing. We did have the quarterly refinancing statement yesterday. The Treasury told us that they have no intention of changing the run rate for auctions or auction sizes for the next several quarters. So a lot of continuity with the Biden admin. And again, evidence that this Treasury Department's not necessarily going to change issuance to impact where yields are because the Treasury is not going to try yield curve control, as it were. Today's pullback is shallow. We are already bouncing back. It feels like bonds and notes have been following oil a lot here today, given the price action. And so I suppose if we're going to be having a conversation about bonds, we should be having a conversation about energy. I'm going to stay long here, Jamal. I like this setup. It's an inverse head and shoulders pattern. It's breaking out as of yesterday. If we have a pullback to the neckline near 109.08, I'm going to actually add in more to the position.
I certainly like it because, again, I'm long just a single call in the May expiration. And, again, that's been working. So bonds have been fascinating here for sure. And it's really not that much of a surprise for us, right, when you talk about the administration being more keyed in on what's going on with the 10-year because we know Trump's always been a real estate guy. We know how 30-year mortgages are often set off the 10-year Treasury. So it all kind of really makes sense. And I think we knew that was the one that we should really be watching more than anything. But I will say, ZB, this is the first day I feel where, again, and I know we're going to get to gold, that ZB and gold aren't moving in the same direction. That's a little bit strange to me today. But I think you're also looking at a bond complex that is trying to find direction ahead of the jobs report as well. So I think there's a lot going on within it today. I don't think you should take everything for face value, what you're seeing. But what we have seen overall, again, seeing these bonds rise higher more recently, seeing these yields pull back, you start to wonder, what are they starting to think about the idea of our bond traders playing for a rate cut? Right. Despite, we don't think there's going to be too many, two at most, I think is kind of the consensus. But these have been strong more recently. And we've been trying to play it that way for a while. It looks like, the actual treasuries are finally working. But yeah, we've been seeing this, move throughout the week with 10-year yields. I mean, it's been kind of weak and it's starting to break down.
The vertical lines in the 10-year yield chart are the various Fed meetings we've had since September. I think the price action here as we break the uptrend, and note the touch points here, which makes this trend line so fascinating. If we were to just go from the September swing low and the October swing low, this lines up like just about perfectly here with that swing low we have in December and the one that we just have here at the start of February. So I'm going to re-anchor this drawing to the most recent touch point, and you can see how this has been a fairly clean uptrend over the last few months. So when I look at uptrends or downtrends, right, if it's just only 2 points touching, I can connect any two dots and make a line, Jamal. But when you see 1, 2, 3, a fourth bounce, okay, this is clearly some sort of trending move. The fact that we have this action here, where we try to rally back up in yields, we try to get back to a neckline, the former swing highs on November 15th, we can't. We fail. We fail below that 1 week moving average. The momentum breakdown looks very legitimate right now in 10-year yields. And if we're talking about a swing back down towards previous swing levels, the market has been respecting that type of cadence pretty cleanly. You could see the high that we have here in October, on October 14th, becomes the swing low for December 6th. And that's more or less what we've been doing. The high on the 15th become the swing lows here at the start of the year. So a drop down to 4.1315, what would that mean then for what's happening with the Fed's rate cut odds? I would posit, given how long into the curve is still tied to short-term borrowing costs, that would probably mean that Fed rate cut odds are going up. And if Fed rate cut odds are going up, what does that mean for incoming data? It's probably not showing overheating. Do we have data coming out around the corner that could help clarify that narrative or point of view with a good deal of gusto? Absolutely. The non-farm payrolls report, right? Non-farm payrolls and CPI, if those don't come in hot, the notes right now are telling you that lower yields could be around the corner, at least for the next few weeks. Not like we have topped permanently, but we could be looking for a swing here. And if we do the measured move on this neckline, we'll call it 4.5. We'll call it up to 4.8. We'll call it 3 or 0.3, 30 basis points. 30 basis points from 4.5 gives you down to 4.2. 4.2 would bring you right into the closing levels that you have from the start of December. Not quite 4.15, but close enough. So there's a cadence here that seems to make sense. I always say if it's too good to be true, it's probably not. There's no such thing as a free lunch or $20 bill you find on the ground. The market would efficiently solve that problem already. But this looks as clean as it gets. So I'm staying along my ZN calls. I'm staying along my ZB short put spread. If there's an opportunity to re-add or put on another leg of a ZN call spread, I'm absolutely there if we can see a rebound back to 4.5%.
I know I should have totally adjusted my ZB position the other day. Again, I mentioned how I'm short the iron condor, and I said I wanted to take off the upside and just kind of keep it directional, having long deltas just because of what we're seeing here. And I think that chart which you had up really illustrates it perfectly because again we've seen how the regimes have changed in period. You know, last time around we started the previous meeting, not this last one, but the previous meeting before that. We started to see them move up into the channel. They were surging higher, right? Yields at the end of the last year, beginning of this year. Now we're starting to see a bit of a change, and I'm with you. You could totally see 10-year yield starting to drop off over this next couple of weeks or so as we head into the next meeting in March. Is it? I think it is. So
yes,
there's a lot. Again, there's a lot that we're going to hear about over that time period. What's going on with the job market, how things are changing overall, what's going on with tariffs. And I think you have to take that into account with the way the 10-year yields are moving.
Yeah, I mean, I think that's a really important point. You talk about the distance between the meetings here. When you get into the summer months, it feels like every single meeting is important because of how the calendar falls. The Fed meets every 6 weeks, effectively. But when you get the meeting calendar, you have a meeting in May, June, July. That's not necessarily the case here as you make your way into the spring, right? You get November, December, January, but then you go March and then you go May. So there's nothing in March, right? There's nothing in February. There's nothing in April. And that means when you think about that March meeting, do we really put all of our eggs in the NFP basket for tomorrow? No, because it's one of two jobs reports that they're going to see. You would argue then the next month's report probably carries a bit more weight because it's the most recent set of data they have before the March 19th event. So yes, non-farm payrolls matters tomorrow, but you bring up the point that, hey, there's a long time into this next meeting, and there have been, I think 50 or 60 years have passed in the past 2 weeks, Jamal. So who the heck knows what trade war we're going to be in or where inflation's going or, I mean, realistically, are we going to have a government shutdown by then? Are we going to see big deportation? I mean, we don't know. There's a lot in play right now. So a lot can change here. If it's a soft report tomorrow, you probably get the continued push lower in yields. If it's a hotter report tomorrow, I would see it as a temporary setback, given the broader scope of U.S. economic data moderating here into that 2% growth range. Other than that, though, I think we can probably move over into metals, which Westwater told me he shorted silver yesterday, and so I blame him entirely for my losses here today.
One last thing before we move to that, I did update my position. I got long a 120 call in May, which was actually pretty cheap for me to do because I'm keeping on that iron condor, but just adding that to my upside exposure in case we do get this break in yield, bonds, I should say, in ZB like we've been anticipating.
There's another way to play that. We're going to get there in the currency world in a second. Yeah, metals are taking a pit stop today. It was bigger setback earlier, right? Gold was hitting a low of 28.55. Incidentally, on Let Me Explain this morning when we were talking about gold and how I think it could still go to 3K, it immediately dropped by $20, and Tom had a nice smirk while he was discussing it with me. So I'm very grateful that we've since rebounded here. But Jamal, I mean, are we thinking about this uptrend right now? Are the cornerstones of this uptrend in place on a momentum basis? Modest proposal. We've seen that this 5.8 or 5.13 EMA envelope has been fairly significant support since we started moving higher here after that first week of January. Dips into this little area between these two moving averages have been purchased up every time. Maybe not by the end of the day, but we haven't lasted down there for more than 24 hours. Today we find another dip down below the 1 week moving average, and we're about to close back above it again. So while there is a temptation here, volatility has come off. We were no longer looking at a 70 IVR. We hit a low of 55.6 today. So volatility is coming off. That does potentially speak to some fading momentum. But the actual technical structure itself suggests that we are holding above former highs. There's still good demand here. I can't forget the fact that we just rolled this position up on Tuesday, Jamal, so I don't hear no bell. We're not getting out of it just yet. There's still time to go. But it's a momentum trade, right? And the way these momentum trades work, as long as the technical structure for the momentum trade exists and those characteristics remain, you stay with it, you ignore the noise. And today's action, despite being a little bit lower, it doesn't change the broad characteristics that have carried us higher thus far.
I think as long as the uncertainty exists out there with what's going on with tariffs, and as long as you're seeing somewhat of it's kind of weird. I would expect this to be a little bit higher today, given that China's trading is back again. I mean, again, they were off for the new year, but nevertheless, this is still in play. Again, like you said, bounce down to the 1 week moving average and then bounce off of that. And again, it can't go up every single day, Chris. I mean, it's got to take a breather every now and again. Today's that breather. And you need breathers like this if you really want something to explode higher and really continue to break new highs. So I think this is a good thing. Again, like you said, we have the call spread. I got the 29.50, right? 29.5, 3K call spread, and we're holding, baby. We ain't going nowhere.
Silver, very similar type of setup. By the way, generally speaking, if I'm long something, I expect it to go up every day. And if I'm short something, I want it to go down every single day.
You do.
Like for a macro guy, I'm pretty impatient. Let's be real. So for silver, again, that action, we have our breakout here. And as we're breaking out, what occurs? We're treating this moving average envelope as support, dips into it or quickly bought up. Today, as we move back over the course of the session, where do we find ourselves? Back above that 1 week moving average. Another long lower wick. A lot of buying interest in here still. So we returned to the December 12th high. We got up there. Thomas said, Chris, this looks ridiculous. You're long. I want to get short and take your lunch money. And he did today.
Oof.
But this feels like we're chewing through supply right now, right? You see this action up here. We run into resistance. We're chewing. You see these long lower wicks as the market sells off. People are still they're absorbing the supply. So I see good reason reading the tape here to hold on to this. It's obviously not a comfortable day being down, but there's still 48 days to expiration in the SIK 5 contract. And that is sitting basically right at 33, and we're long the 33 call short 33.5. There's no reason to panic today. It's a bad day for silver, but it does nothing to change the position or the efficacy of the view.
It's not as clean as gold as far as the way that it's moving up, right? But at the same time, I'm just really looking at this kind of for the first time, and it's seeming to me almost like kind of a double bottom in a way, right? And so if it can break out through that line that you have laid out there in a powerful way, that could really be something there. I think that could really kind of be the next level on the way to the 35 and eventually 40. So I think that's something to keep an eye on.
The last metal that we've been taking a look at in recent days has been copper. Jamal, we rolled up on Tuesday. We were in the short put spread from the start of the year, the 405, 410. When volatility dropped and the market moved up, if we wanted to stay long deltas, does it make sense to do it through the short put spread side? It really didn't feel like it for the bang for the buck. So going out to HK, HGK5, that high-grade copper, Jamal, we will see here that this is a market that's now pushing through that 450 level. So being long the 450, 455 call spread, 48 days to expiration, the only quip that I have here is that we ran into that November 5th high and began to sell off. That was 5 cents ago. That's not a small move lower in copper since getting there. This feels like there is more to go, just like gold and silver do, but it has to be a particular way that you structure this trade. So if I wasn't in already, I wouldn't be getting in today. I'd be waiting on a deeper setback, but I'd love to be long deltas, perhaps at a lower level, and maybe I make a position adjustment ultimately to articulate that point of view. But right now, again, market moving up, clearing a former swing high, running into another one. It's the stair stepping up that persists. Patience, time. It's working for now. There's no reason to change anything.
Yeah, this is exactly what I am looking to see if silver does, honestly, because again, you see the similar pattern. You see kind of like this little double bottom. It also has an appropriate handle along with it, and now you see it breaking higher. So I think that's exactly what I would look to see what silver's doing, because this is already doing it, and this portends to potential higher prices.
If copper's breaking it, I wonder what that means for China and the Australian dollar, both, right? Given the importance of that trade. Energy this week has been, Jamal, I don't want to say anything bad about crude oil. I've called myself an oil man in the past. What do you make of energy this week?
It's been, look, you called it out about selling it when it was at 73, 74 and change, and selling this in the hole because it looked very weak, and it's doing exactly that. I'm getting kind of interested. I don't really want to buy. Like, I would have definitely bought here last year at this point, but right now I just don't know. I don't. It looks like a dead duck, and it's continuing to fall. So I think I'm just going to let it do that. Maybe I get interested in buying if it gets around 68 and change, but it's fairly lackluster, and it's just been falling with no additional vol. Right? I mean, that's a tough trade. You're not exactly sure what to do there.
Falling with no additional vol, right? You can't really be. I don't like being short calls in oil, given the geopolitical tendency for vol to spike when oil goes up around those events. So we've talked if you want to do it through CL or MCL as your preferred trading vehicle, depending upon your account size. We see here that once we start to break below, we'll call it 72. We pop up through there right at the first day of the trading year, and then by January 3rd, it becomes support. You could see here in recent weeks at the end of January, 72 is support. We're finally breaking down on this 4-hour time frame as we try to rally back into 72. We actually fail and set a new relative low to this entire trend. Oil has erased its year-to-date gains, up over 10% at one point, Jamal. It is now flat for the entirety of the year. What may be spurring this today of all days? Two sets of comments. One, again, Besant talking about how the Trump administration's energy policy is going to be bringing down energy costs. Trump says drill, baby, drill. I would posit that we're already the world's largest producer of gas. We're already the world's largest producer of crude oil. We've never produced more in our country's history. So to say drill, baby, drill on top of this means flooding an already oversupplied market. That's probably not going to be good for oil prices, Jamal. And the other is, remember what OPEC did a few months ago when they announced that they'd be resuming production? Instead of resuming production over the course of 12 months, they were extending it over 18. The ramp up would be slower. Look, if demand was there for oil, OPEC wouldn't be slow rolling a production increase. They'd be saying, we'll produce as much of it as you can. You guys can't get enough of it. We'll eat these margins. We'll happily take your money. But they're not. So two of the world's biggest oil producers, OPEC and the United States, are saying supply is probably going to be higher than we like, and demand is just not there yet so far. Is that going to be enough to bring crude lower? Seems like it today. But it's good news for our bond position, Jamal, because we've been looking at the relationship between notes and bonds and oil over the past several weeks. And there have been several occasions where you look at a rolling 5-day correlation and it's like 0.95, 0.96, the rolling 1-month correlation, like 0.75, 0.8. So if oil prices are breaking down and you're looking for rationale why bond yields could keep going lower, lower inflation expectations come alongside lower oil prices. There's a story to tell, but they seem to be the same chart, right? Oil topping out here like this as the 10-year yield tops out in a very similar set of fashion. It seems like it's the same trade.
It seems like it's the same trade, and that's definitely another part of it. So I don't know. I don't really want to get in front of the freight train as it's heading lower. I'm just going to sit and watch on the sidelines right now. There's really not much to do in oil.
This is what gives me the confidence to hold the ZN and ZB position, right? Maybe this is one of the reasons why gold's out today. Gold is an inflation hedge, as people tell me. So if inflation expectations vis-a-vis oil prices are moving lower, why do we need to hold inflation hedges? Jamal, is the 23.2 IVR is what bothers me the most. If this was a world with a 50 IVR at these levels, again, happily putting on an iron condor.
For sure.
Is the juice worth the squeeze here right now? Is it worth setting aside that buying power and capital to maybe make one while risking 4 or 5, and the one that you're making is like a third of the size of the buying power required to put on the position? That's not my trading style. So I'm going to stick away from this for a little while. Natural gas is bouncing here. This is a trade that was taken off on Monday. We were talking about putting it back on Tuesday, Wednesday. Obviously regretting that here today, now up by 1.07%. The volatility is here. It's a 40.1 IVR still. The spread between European natural gas prices and American natural gas prices has widened out to a level that typically sees an increase in U.S. exports, as we shared on yesterday's Futures Power Hour, that chart produced by Westwater. And we're pivoting off of an important zone, a zone that's been clearly a high before, near 3.2. Natural gas demand is up, and I have to say, if natural gas is going up, I have some AI power plays on right now that are doing well here, so it feels like that story is still alive. If I'm playing one or the other, I'd much rather do a short put spread in natural gas than anything in crude at this point in time.
You know, to that point, you mentioned AI power plays, and you could, for those who feel like they have a lot of exposure in AI to the upside, you could sell upside in natural gas as a result. And again, you want to cap it. I mean, I'm not suggesting selling anything just outright, but you could certainly, sell some upside. And it's a little bit bid actually when I just looked at it, looking at the March 26th expiration. If you just do $2 wide, $390 to $410, you max profit a potential of $320. Like, that's fairly bid when you think about it. So for those who have some AI exposure, again, the idea of natural gas being a huge energy source for AI stuff among other energy sources, that's one way you could sort of offset some risk if you feel like it. And again, we often talk about how natural gas is not that correlated to the equity market at all, but that has been one of the narratives that have been discussed a lot, the use of natural gas as an energy source for AI.
I was thinking if we look at the March 26 expiry as well, as you were pointing out here, if this was any other ticker, I would look at yesterday's candle and go new low relative to the prior day, new high relative to the prior day, bullish engulfing bar that cuts us back above the 1 month and the 1 week. That's a great place to operate from, but it's natural gas, so you can't trust it. That said, it's a honey badger, and we do honey badger things around here, Jamal. Forget the low that we had yesterday. Let's go back to the low that we had at the end of last week, near 3. If we look at that short put spread near 3, and we'll pull this up, we'll go say 315, 67% probability of profit, risking just under 2 to make 1, and you're looking to make more than your buying power. That actually checks all the boxes. The put spread's between 65 and 70%. That's nice. Forget about talking about it, Jamal. Sometimes you just got to do things.
Sometimes you got to do things.
We had to do it yesterday. I didn't have the confidence to do it. Confidence is a learned skill. It's not a character trait. I should have done it with Westwater. I should have shorted silver with Westwater. But now we're back long deltas in natural gas thanks to Mr. Westwater, so I forgive him for that silver trade.
I just did. I'm trying to do things myself. Same deal. I talked myself into a trade for the exact same reason, right? Like, I got some plays, some long delta plays in AI names. I'm going to sell some upside in that trade that I mentioned, selling the 390, 410 call spread. I mean, that's a 80% pop. So let's see what happens. I'm trying to get it on for 33 cents. I'm not sure it's going to get filled though. Might have to step it down, which I hate. Hate doing that. It's like you're caving into the machines when you do that. You know what I mean?
It's like, yeah, I'm the captain here. Okay, what are you talking about? Like, yeah. I set the price.
Yeah.
Let's go over to the currency world where the Japanese yen is outperforming, Jamal. Up by 0.73%, highest that we've seen going back to the middle of December. Japanese yen, those James Bond calls, 007 calls, starting to look a little bit better. That's exactly what I think when I talk about the yen. there's a few things going on here. Not only are U.S. rates falling back, why would the yen be rising so much if U.S. rates were going higher? That's a clue for the next directional move. The broader global market thinks that it's safe to hold the yen. We have shunto wage negotiations coming up. Policymakers have been talking about how wages are too high. We heard another round of comments last night from Governor Ueda, at least hinting as much that there could be more rate hikes coming. It's a change of pace for what the market was expecting at the start of this year, Jamal. On January 1st, if you looked at markets when they were closed, the BOJ was projected to hike rates for the first time in October of this year. And they've already given us one hike. So the fact that there is another hike potentially being discussed over the next few months is a wild divergence from expectations at the start of this year. We're also seeing 6J break its downtrend from the September high. It kind of looks like notes or bonds, which again, yen is the most interest rate sensitive major currency versus the US dollar. I really like this also as something that's outside the box. If I want to be long equities, what if we get another July type of environment, Jamal, where the unwind of the yen carry trade spooks US tech investors? Well, this may help offset that. So there could be reasons why the yen and stocks do well together, but in a stuff hits the fan scenario, the yen probably outperforms. And I would also add one more layer to this. 2 nights ago, we learned something important, and it was discussed yesterday. The PBOC did not fix the yuan at a weaker level in response to the China tariffs. If they weaken their currency to offset the tariff impact, every other Asian manufacturer needs to let their currency weaken as well. Otherwise, they lose market share. And if they lose market share, then unemployment in those countries goes up. So the politicians there are very sensitive to the exchange rates. So if you're seeing a stronger yen, it's almost like the market suggesting the PBOC is not going to competitively devalue their currency to the bottom, and the yen could have some breathing room. A stronger yen usually goes alongside stronger gold prices. So a few puzzle pieces there together, Jamal, that all give you a consistent narrative theme to work around.
I mean, it's a lot. There's a bunch of narratives there in what you just mentioned, right? I mean, if that goes on with China, that's obviously going to affect with everything that's going on with the China-U.S. Are we calling it a trade war? Is it actually a trade war yet? I mean, I know it was easy to call it one in 2018. We're on the precipice, I would say, still, right? I mean, they've talked a lot, but no, I don't know, man. I don't know. But you're right. It'll create. I think it'll send shockwaves across a lot of different asset classes, and obviously with currencies too, which have been some of the most bid things around when you look at some of the IVRs and some of these currencies. So. I have nothing on in the space, but I keep paying attention to it. I think it's kind of your guide overall to volatility. If these really get high in volatility, I think overall you're going to get the market get a little spooked out at some point too.
The most vol right now in the market, you have to look to your Canadian dollar, 89.8 IVR here. Yeah. Yes, this is the subject of the trade war, but do we see this? Highs in September, high here on January 21st. What are we doing now? We break out on Tuesday. We hold yesterday. Today, we pull back to that 1-week moving average, the backside of this downtrend, and we bounce. This may have been a bear flag. When you see a return into a consolidation, my rule of thumb is you go to the other side, which we accomplished yesterday. Now we're back into neutral mode. So this is just simply flagging again. But if we start to break through 70.25 here, that's a lot of vol pumped into a market that looks like it could be bottoming. And that gives us some opportunity to look at selling some put spreads, at least for the foreseeable future. There is this U.S.-Canada summit tomorrow, which is noteworthy. U.S. jobs report, obviously. Tariffs may go into effect on March 1st. So maybe we have a negotiating window where tensions cool, volatility comes in, U.S. yields drop down, the Canadian dollar can rebound. This is quickly becoming my favorite currency setup right now outside of the James Bond yen trade.
Yeah, it really is. I was again. This is one I looked at potentially of a strangle, because usually when you see IVRs this high, that's the time I'm interested in strangle. But like you said, I don't know the upside. Like I would have much rather. I got filled in my nat gas. I would much rather sell something higher than just the 72.5, because again, what worries me is potential overnight risk, which is I think becoming a real big thing again. So I'm going to stay away from that strangle, but I like your idea of selling downside at some point.
What's next on the calendar? It is non-farm payrolls day. That's out at 8:30 a.m. Eastern, 7:30 Central Time. We'll also get the wage figures. We'll get the unemployment rate. There's Michigan consumer sentiment in the afternoon. The headline sentiment figure probably doesn't matter so much because we know how partisans are behaving entering those surveys at this point in time and the great flippening that occurs after presidential elections. What we do care about, however, is the blended results, in particular what independents are thinking about inflation expectations for the next 1, 3, and 5 years. That, to me, is the market moving aspect of that report. Pay attention to literally nothing else. Other than that, Jamal, we talk a brief bit of education here at the end of these Future Power Hour episodes. It's a new month, sort of. So we're starting the course over once again. Head over to tastylive.com, top banner, learn beginner futures, or you can find this great coursework put together by the fine folks on the Tasty Live research team. First off, if you're entering the course for the first time, there are a bunch of videos that have been put together by Frank Caberna and Pete Momet, who I'm sure you know and love from other Tasty programming. But why do we even talk about futures? The futures offer direct product exposure to a wide variety of instruments. They are effectively accessible all day long, but from 5 to 6 p.m. Eastern time, when there's batch order processing, you can hop onto your platform and trade the S&P 500 overnight. You don't need to worry about SPY opening up or hoping that your broker offers, after hours trading, if you will. But with futures in particular, you can materially enhance your capital efficiency. We talk about these defined risk trades here, Jamal. I want to be bullish, and I can do it by buying an out-of-the-money call and selling a deeper out-of-the-money call here to give me some upside convexity at a fraction of the cost it would be to take out a full ES futures contract or buy the equivalent amount in SPY itself. I highly recommend that people learn more about the futures market, if only as a tool to use to help inform your trading. I think it's the best market to trade. So come learn more. tastylive.com, top banner, learn beginner futures, or click the link here at the bottom of this slide. It will take you there directly. Jamal, you're back later today, engineering the trades on 45 minutes. But before we get there, we have a one Dr. Jim Schultz for From Theory to Practice. Good luck trading. We'll see you on the other side of a quick break.
How much does it cost you guys to do simultaneous hair flips?
Years of practice.
Everybody wanna be like me, yeah. Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
I'm Jim Schultz, and this is From Theory to Expected Move Butterflies. Welcome to the show. Not only are we going to do one for Amazon later today, of course, but we have a couple of victory laps to take in Google and AMD. We nailed both of those guys on Tuesday. They never made it to the follow page, because Tom was working my fingers to the bone while I was in Chicago, and so I was totally off my rhythm. But if you saw the show on Tuesday, then it's our little secret. You saw the Google, you saw the AMD. We hit those guys, got the perfect possible prices in basically both, and I took them both off on Wednesday morning. So we're going to take no less than 11 minutes on each victory lap here in the next couple of minutes. But welcome to the show. I'm so glad that you are here. If you're watching over on the Tasty Live Network, then I would actually bounce bounce on over to YouTube because you can join the conversation and you can join the discussion and you can troll all of my trades in real time. We are due to have a significant streak of losers any minute now. And of course, you can communicate with your brethren that are also watching the show, and you can celebrate if you are a bull, I guess, and commiserate if you are a bear. I've lost track. I'm not sure exactly where we are on the bullish, bearish celebration and commiserating. I don't know. I don't know where we are, but join the chat anyway, and it should be a good time to have most. All right, John, pop us in here. Pop us into the market. And, of course, if you have a question for me, drop it in the chat box. I'll try to get to as many as I can. I usually get to about 0.6 to 0.9 per show. All right, so what I want to do, let's have a little market commentary first and foremost. So we're looking at the market. It's still there. I mean, there it is, man. It's still doing what it does, right? Even the S&P is up 10, risk-free instrument up 53. Also notice the NASDAQ futures, extremely high-risk product. Boomer's down 185. That's a little bit surprising. And then you've got the Russell 2000 futures index down 9 on the day. You got bonds about unched. You've got oil getting hit down 50 cents. You got the shifties getting smoked a little bit today, down $17 on gold. You got the pound down. You got the euro down. You got volatility down. You got check on your local Bitcoin, bro. Bitcoin down 1,400 at 96,000. The next tick is 47.5. We've talked about this many, many times on the show before, and it should be any minute now. So you've got volatility is down, I would imagine, the old VIX, the old cash volatility price, which sometimes it counts and sometimes it doesn't. Sometimes it's real, other times it's imaginary. You can never really know for sure where you're at, but VIX down 30 cents, down to 1547. So there's my market commentary, and all I can say is, guys, I'm nervous. Are you nervous? Because tomorrow morning at 8:30 Eastern, 7:30 Central, there will be 1:30 Hawaii time. We have the most important economic print that has ever hit the wire. I mean, my stomach is in knots just thinking about what could possibly happen tomorrow morning when that imaginary number is released in terms of how many jobs were created, how many jobs were destroyed, like how many jobs are we going to cook up in some laboratory that isn't actually reflective of the United States economy, but is some number that's some, BLS intern. That's what I was going for. BLS intern cooked up in the last 8 or 9 minutes. And so, guys, it's not good. It's not good at all. And so, is it BLS? Yeah, it's BLS. I always get BLS and NBER mixed up, but it's all one and the same, man. It's all fake and imaginary. It's going to be revised 19 times into the future, and even those numbers don't really mean very much at the end of the day. But either way, it's it's going to be an injection of volatility. It's going to be an injection of something. That's for sure. So, all right, let's go ahead. Show's already off the rails. It's not good. Let's go to the activity page. Let's try to find some semblance of something here. All right, so let's take a look at what did we do on Tuesdays. Okay, so February 4th, these are the 3 trades that we did. This was, if you guys saw the show on February 4th, I mean, I rushed into the studios right after the live bash recording, which, amazing, by the way. Amazing time in Chicago. It was absolutely terrific to not only get to see so many of my coworkers and colleagues and just kind of shoot the breeze with them and all those kinds of things. But then, of course, the Monday night pop-up was terrific. And then the Tuesday recording, I thought it went pretty well. And I thought it all worked out reasonably well. And so I'm very curious to see what the end product looks like. But, when you're working with me, there's only so much you can do to make it look better. Like, there's only so much lipstick you can put on a true pig, but our production team and our graphics team is quite remarkable. So I think they might be able to do some things that they might shock you. They might absolutely surprise you. But then we darted into the studio, and we were able to do these 3 earnings trades on February 4th. Again, these never made it to the follow page. And in fairness, I was like, well, I'm not going to push out the winners on the follow page. That seems a little disingenuous and dishonest. So I was like, well, we didn't put in the trade entry. We didn't push out the trade entry. We're not going to push out the trade exit, right? This is just going to be our little secret, like me and you and the other 600 people that are watching the show. Like, this is just our little secret. Nobody has to know. But, we're still going to take our rightfully earned victory laps. I mean, we take plenty of our victory laps when they're not even rightfully earned. So you can bet your bottom biscuit we're going to take a couple today. So if you look at February 4th, we did Google, AMD, and Chipotle. Chipotle didn't really work out, so we're not going to talk about that. Just pretend that didn't even happen. But Google and AMD, we'll talk about Chipotle. Google and AMD. So we did expect to move butterflies in both, right? So you can see we played them both to the downside. Again, this was pretty obvious, I think. Essentially common knowledge in terms of being bearish on Google, being bearish on AMD. I mean, I was about 30 to 35% confident in both trades going in. And so the fact that we hit both, that's pretty nice. Got to be honest. So on Wednesday morning, so look at let me grab my Diet Strawberry, which we're back to the Diet Strawberry, which we only have here in St. Petersburg, Florida. No Diet Strawberry up in Illinois. And so if you look at the short strike on both of these strategies, you can see that the short strike on Google was 190. The short strike on AMD was 105. Google basically opened at 190 on Wednesday morning. And what's crazy, it's still at like 190 right now. I mean, I can see it right up there in my upper left-hand area because I was kind of peeking it. I was kind of peeping it out before the show. I'm like, where is Google right now? Like, should we have held the trade? I mean, obviously the rearview mirror is batting 1,000. In hindsight, always 2020 and those kinds of things. But Wednesday morning, this guy opened up at about 190. I'm like, man, that's a great opening price for us. AMD, I want to say it opened up at like 107 or 108. So it wasn't quite as perfect as Google, but still, I'm like, we've got two nice trades on the board. Man, let's go ahead and book these guys, because if I had the show later that day, it might be a little bit different. Maybe I would hold it so we could talk about it, so we could have a real-time victory lap. Like these kind of post-mortem victory laps, not nearly as fun as kind of like in the moment. It's happening. You guys get to see the closing trade. Like I like to do that as much as I can, but I was like, all right, I don't really want to hold these beyond today, since on Wednesdays I'm with Arrow for today's assignment. Let me close both of these right now, and we'll talk about them here on Wednesday. And so we did the expected move butterfly in Google. Again, playing it to the downside, just reading the tea leaves, right? Just flipping our weighted coin to help us figure out which side of the market we wanted to play, and we got super lucky. I mean, I don't know if it was cloud revenue, or if it was rain revenue or lightning revenue or thunder revenue, but some type of revenue for Google came in light, and the market did not like it. And so AMD, I don't even know what it was. I mean, it might have been a chip tariff. It may have been a guacamole tariff. It could have been a lot of different tariffs that Trump is cooking up these days that, didn't really help AMD too much. And so if you look at the closing trades, you can see right here, let's grab our Miami Dolphin teal here really quickly. So for Google, we bought the butterfly for $287, and we sold it out for $760. I mean, look at that, man. We almost made, $5? Almost made $5 on an expected move butterfly on a Wednesday? I mean, you need the perfect price for that to happen. And that's what we got, right? We got super lucky, very fortunate. It landed exactly where we needed it to be. And and it was amazing. I'm curious what that butterfly is selling for now. So had we held it any longer, up until today, let's say, so this would be another day and a half, like another, 30 hours or whatever it is. I'm going to look at the same butterfly. Let me write this down because I'm going to navigate away from this screen in a second. 177.5. So we got the 77.5, 90, 202.5, the put butterfly. I'm curious what that sells for. I have no idea. I haven't looked at this before the show. I'm going to guess that this butterfly today, I'm thinking it's only selling for $970. I don't think it's over $10. I don't think it's close to max value, because to really get like max value, you've got to be right on the doorstep of expiration. You've got to be like minutes away. You've got to be like maybe an hour away to really extract the most juice out of that orange. So I'm going to say it's 970, maybe 980. And so, but even still, Wednesday morning was a great trade. I'm like, all right, I'm not going to hold on to this any longer. It doesn't make any sense. Let me close this down and just be done with this. So that is Google. But then AMD. And do I have another color? Yeah, let's grab red for AMD. So for AMD, I bought it for $214, and even AMD not being, as perfect a price as what we saw with Google, man, we still got $3 out of it. We still got $3 out of it. And now right now you've got AMD at, 110, a little higher than where it opened on Wednesday morning. And so I would anticipate this butterfly is not going to be nearly as profitable as it was for us on Wednesday morning. Let's look at that one too, just to really leg out these victory laps. And rightfully so, because we are on a tremendous hot streak with these expected move butterflies. So I'm going to give you one. In fact, I'm going to give you two. I'm going to give you the Amazon expected move butterfly. And then, of course, I'm not going to let the most important economic print of our lifetimes go by. And I'm not going to play that. Of course, we're going to play SPX for NFP tomorrow morning. But just get ready, because this mean reversion in my results is going to slap, and it's going to slap hard. So just be ready. You have been forewarned in terms of what to expect. So, all right, let's look at these butterflies, though. Let's go to Google. Let's do Google first. If I go into Google, I go to 1 day out. What am I at here? 77.5. So it was this butterfly. I can just set it up like I'm doing a new butterfly. It doesn't really matter. 77.5, 90, 202.5. I don't think it's over $10. I really don't. 954. Look at that. Guys, it's almost like we've been doing this for years. Man, it's almost like we've got a little bit of experience. We've got a little bit of skill that comes from, all the years that we've sunk into the markets and all the money that we've sunk into the markets and all the stress that we've sunk into the markets and all the emotional attachments and all those kinds of things. It's only selling for $9.55. So it's like, man, we're still at the perfect price. We would have had to wait another 30 hours, right, to get another $2 out of the trade. That doesn't make a lot of sense to me, right? That really doesn't make a lot of sense to me. And so this is a great example of, at any point in the week, Monday, Tuesday, Wednesday, Thursday, whatever, you put out an expecting move butterfly, you get the perfect price. The perfect price, which essentially means right at your short strike, maybe not perfectly, but within $1, within 50 cents, whatever. I would think long and hard about keeping that trade on. That would not typically be something I'm looking to run any longer beyond that point, because it's like, do you really think the stock is just going to sit there? Do you really think the stock is just going to sit there? Now, what's interesting about that comment, look at Google. It did just sit there. Look at Google. It didn't go anywhere. Obviously, it's back and forth. It's whatever. It's still at 191. You only got another $2. You only got another $200 out of the trade. And you had all the risk inherent in it getting away from you, which has happened to me more times than I care to admit publicly, even privately. And so it doesn't make a lot of sense to me. Hopefully this, is kind of educational for you guys that might be new to butterflies, new to trading earnings, whatever. It's a great strategy. I love it. Again, we're going to do it again today because it's a cheap shot to, take a directional bias in the stock. And if it works out, you can make, 1x, 2x, 3x, whatever. But you just have to you got to be mindful of what you're signing up for. So that's Google. Let's take a look at AMD really quick though. So if I go into AMD, I do the 1 day cycle. What do I got here? I got a 95, 105. 115. Hold on. Let me try and do the same thing I just did with Google. So I thought Google was 970, 980. It was actually selling for 955. That's pretty close. For AMD, what did we close it for? We closed it for like $6, right? We closed it for $5. Okay. I think this thing's selling for less than $5 right now. I think this thing's selling for, I'm going to say, I don't know, 385 maybe at the most, maybe. So 95, 105, it might be $4. I'm going to say 385. 95, 105, 115. So let's do, let's do that, 115, and then we'll see what it's selling for. I say 385. It's selling for 401. Look at that. Man, I'm telling you guys, it's almost like we've been doing this for a minute. I did not look at those before the show. That is the honest to God truth. I did not look at these before the show. I have no idea what the prices were. I was just trying to figure out what I thought they might be. And you've seen, if you've been following the show for a long time, you've seen me do things like that all the time live. Where I'm like, I bet you will get filled. I'm 100% sure we're going to do this and that. And a lot of times I'm totally wrong. So that's going to happen too. But all right, AMD and Google, that was pretty fun. All right, so now this is what you guys came for. You guys are here for something that's very tradable and fadeable. Right? So what's about to happen in the next couple of minutes? I'm going to give you two doozies. Two doozies. You have plenty of time to take the exact opposite of these trades. Is it time to start fading the old doctor? Is it time to start George Costanza in my trades? It might be. I'll let you decide. But I see you guys in the chat. I'm going to get to as many of you guys as I can here in just a minute. Man, look at you guys. Brian Watson in the house. Man, I see Sergio. I see Richard Price. Theta Trader Junior Mac. Mr. Green. Steven Jr. I even see Athlete X in the house. And I appreciate you guys. Ruben, T-Port. I'm going to try to get to as many of you guys as I can. But let's go to Amazon. All right, so I've had a little bit of a change of heart. So if you saw today's assignment with Errol yesterday, which I know every single one of you did, and you guys would not miss it, you've probably seen it twice by now. You saw that I told Errol that we were going to be bullish on Amazon. And up until basically this morning, I was bullish on Amazon. I was going to play it to the upside. But then I just started thinking about this market. I started thinking about, I'm like, all right, the market's been pretty strong. The market's been quite, resilient the last couple of days, last couple of weeks. It feels to me, take it for what it's worth. I don't think it's much. It feels to me like this market is looking for a reason to go down. Now that could be, Trump slapping a tariff on Kentucky, right? That could be Trump, slapping a tariff on Montana. Like all these things are coming, right? So maybe that's what's going to happen. But I'm kind of thinking, I don't know, man. I think it might be the two obvious low-hanging fruit that's staring us right back in the face. We've got Amazon earnings tonight, and we've got, NFP tomorrow morning. So I kind of feel like, man, what if both of these guys disappoint? Like, what if Amazon has a problem with the cloud revenue and the rain revenue and the lightning and thunder revenue? Like, that's going to be problematic for the stock. So I'm kind of thinking little change of heart. So I've kind of George Costanza myself here, which is good for me because then tomorrow I can say, see, I told you guys, I was right. It was either my updated prediction or my original prediction. I mean, the content's not going to write itself. So AMZN, I should say. Let's play this guy to the downside. And we've had such an incredible run with the expected move butterflies. I'm going to dance with who brung us. I am not going to reinvent the wheel. It's working quite well in its current circular format. Here's what we're going to do. Here's what Amelia's got for us. She's going big. She's going big. She's like, Dad, you've got so much extra cash from all these earnings wins. Let's light a nice, big, thick one on fire. So let's do it. 37.5. We're on the put side, of course. You've got the stock at 239. For people that might be listening to the show and not watching the show, you've got Amazon, AMZN. The stock is at 239. We are in the 1-day cycle, so this is going to expire tomorrow, which is my preferred time to do butterflies because if we are right, you kind of wake up on third base the following morning with a lot of the extrinsic value already gone, and you can have, this is where you can get your 3 extras, 4 extras, 5 extras. Again, you got to get the direction of the move right. You got to get the magnitude right. These are two difficult things to do, but if you are fortunate enough to do that, then you can end up with a really, really nice winner. And so Amazon, 1 day away. Stock at 239. The expected move takes us down to just under 225. So I'm going to do a $15 wide butterfly. 237.5. And again, this is Amelia's play. This is not my play unless it works. 237.5, 222.5, 207.5. It should be about 370. I did look at this before the show. Okay, so 360. It's actually gone down a little bit. All right, excellent. So, we're risking about $3.50, about $3.60, $3.60. The maximum profit is over $1,100. That's not really a realistic goal for us, though. You would have to pin the short strike, carry it to expiration, have it expire exactly there. That's not going to happen. But is it possible? Is it possible if Amazon opens up tomorrow morning at 222? Is it possible that we close this for $10? Definitely. Is it possible that we close this for $11 or $12? Yes, definitely. So that would be a $7 winner, $8 winner, $9 winner. That is possible if we get the right move tomorrow morning. So this is how we're going to play Amazon. We're playing Amazon to the downside. And again, I don't really think, you don't have to overthink this. And you don't want to underthink this. You want to appropriately think this. I don't know how you can't be a bear in Amazon. Just think. Do people actually use the product? Does anyone actually use the service? Exactly. So we got to play Amazon to the downside. I'm thinking that we go with this expected move butterfly. So 237.5, 222.5, 207.5. This is it. Let's push it out and let's see what happens. And then we've got, all right, boom, filled for 362. All right, beautiful. So we're in Amazon with our expected move butterfly to the downside. And it's a beautiful thing. So now we go to SPX, playing the old USA tomorrow with NFP. Man, I can't wait to see what those line cooks cook up with this NFP number. It's so fake. I love every second of it. So SPX is, let's see. We got the stock at 60.70. We look at the trade page. We look at expected moves. You go, we're looking at a 1-day trade now. We're looking at tomorrow's expiration. Expected move takes us all the way down to 60.25. I'm kind of thinking, man, again, let's go big or go home. Like, let's do it. What's Amelia got for us? She's thinking 60, 50, 60, 60. She wanted to go $50 wide. All right, that might be a little too much. I'm not sure who she thinks she's dealing with, but it ain't Shooter McGavin. 60, 60, but I'm going to go with her original trade. Let's see what it looks like. 60, 60, 60, 10. We're on the put side again. You've got SPX at 60, 70. We're buying a 60-60 put. We're going to sell 2 60-10s, and then we buy a 59-60. We double up on the guts there, and that's 770. Okay, that's a little too crazy. So we're going to adjust this a little bit. Again, I know Happy Gilmore 2 is coming out in a few months, but, the Shooter McGavins are not here with you today. And so 60-60, 60-10, 59-60. I mean, relatively speaking, it's a nice looking trade in terms of how much you're paying relative to the width. I would like to take this down underneath 2% of the account, working with about 30,000. I don't even typically go over $6, or even around $6. I'm usually $3, $4, $5 on most of my expecting move butterflies. But this one, with it being a big dog, and let's just press our luck. Like, let's just see if we can spin it just one more time and avoid that whammy. So let's do it. But let's adjust the strikes just a titch. I'm thinking we go 60-55. We'll leave the guts at 60-10, and then we go 59-65. 615. It's a little bit high. Yeah, but let's do it, man. No whammies. No whammies. Let's do it. I'm feeling good. You're feeling good. And this is our net right here. Actually, I mean, the net actually goes way down here too, but there's our net. Right? That's what we need. We need those line cooks to just do it up right tomorrow morning. NFP. Let's go. All right, so this is going to be the trade. It's going to be about $6 dip, about $6.20 or so. And 50, it's 60, 55, 60, 10, 59, 65. So it's a $45 wide butterfly. So you can see the maximum profit there is gargantuan. It's $3,800. We're not going to get anywhere near that. Again, it's a Thursday going into Friday. Is it possible that we 2x it or 3x it? Yeah, it is. I mean, if we get the right move in the morning with the NFP print and then even the opening bell for the SPX pits, then we'll be in a really, really good spot. But, man, let's give it a go. 60-20. Now I'm extra nervous. I mean, I was already super nervous because this isn't your grandmother's NFP print tomorrow morning. Like, this is serious business. But SPX. All right, so we're in SPX. We are in Amazon. I will post those out on the follow page because I'm right back to my normal routine. And, yes, we'll get those guys out. So, all right, where are you guys at? Man, I appreciate you. Where are you guys at? Let's go. I see you guys in the chat. David Galmore's in the house. What's going on there? David Galmore says, I'm a little sick today. I will just lurk in the background. Hey, man, I hope you feel better. I hope that you recover quickly. Obviously, hit the echinacea. Obviously, hit the elderberry, but you already know all this. And so, because you are an elder amongst us, so you clearly know about elderberry. It's right there in the name. And so I hope that you feel better very, very soon there, David Galmore. But thank you for tuning in and watching the show. You're part of the core position, man. And so I really appreciate you. Richard Price says, hey, Dr. Jim, what is the winning Amazon butterfly? I can't answer that, but I gave you my Amazon butterfly, which is likely to be on the other side of that discussion. But I gave you one to work with. You can workshop your own now, kind of up from that. But that's what we did. And again, part of me wants to. You know what I actually wanted to do? So Amelia gave me these two trades, which, by the way, if you're brand new to the show, welcome aboard. I'm so glad that you're here. I have an intern for my show. I have a trading assistant. She does all of my analysis. She does all of my trades for me. She is Amelia May. She is my 5-year-old daughter. She is amazing. She's doing a rather nice job. She's right there on that B- quality, which is what I look for. Like, that's what I'm scouting out. So it's perfect because it lines up very well with my own abilities. And so Amelia gave us that, but I actually wanted to, for Amazon specifically. Let's see if we can do it. I actually wanted to go into March because I'm feeling rather bearish on Amazon now. I've kind of amped up the bearishness. And I kind of wanted to finance the butterfly with an out-of-the-money call spread just to kind of, some might call it doubling up on the downside. I prefer to call it a strategic hedge. And so 245... 245, 250. It is doubling up on the downside, by the way. I know sometimes I have to be a little bit clearer when things are meant to be humorous and sarcastic. And so that time I will clearly outline the sarcasm. But I still won't do that too often. 245, 250, a $2 credit. I think we're going to add this into the mix just to kind of, you can't go in and do the same thing all the time. Otherwise, your muscles get used to it. You got to keep them confused. Right? You got to keep them guessing what's coming next. Right? And so here, I think we just do a 245, 250 call spread to add on top of the butterfly. What could possibly go wrong? As Mike Butler likes to say. And so, I like the trade. We go to $1.99. Boom, there you go. Fill there, $1.99. So now we are playing Amazon, not one time, but 2 times to the downside. And those are the 2 ways that we're going to do it. So there you go there, Richard Price. There's the butterfly and the additional short call spread to add on to the butterfly. Let's see. No username says winning Amazon butterfly, winning pins trade. Oh, Pinterest? And a winning AFRM trade. Not asking for much here, Dr. Jim. No, you're not. Pinterest has earnings today. They're still in business? No way. Wow, they are. $33. Man, look at old Pinterest. So let's think. Let's just use basic Pinterest strategy. When does Pinterest really shine? We've talked about this before on the show. This is basic stuff. Pinterest shines in the fall. Pinterest shines around the holiday season when everybody is looking for blueberry cobbler recipes. In February, are people really looking for blueberry cobbler recipes? Not really, because nobody's cooking for Valentine's Day. They're going out. Like, I don't know about y'all, but I'm going out for Valentine's Day. I mean, in theory, we're obviously staying home and getting takeout, but most people are going to go out. If they're going to do anything, they're not making peach cobbler for Valentine's Day. That's a Halloween, Thanksgiving type of deal. So if I was going to play Pinterest earnings, I would have to play it to the downside. In fact, just to give you guys another tradable, fadeable opportunity here, let's do that. Let's go into, I think I'm going to keep this really simple, though. I'm going to make this uber tiny because I haven't really thought too much about Pinterest. I'm shocked that they're still solvent, actually. $33. I mean, what if we sell a call? What if we just sell a naked call for Pinterest earnings? What do you guys think? That's a little crazy, right? Because when Pinterest comes out and announces that they've merged with, Snapchat or whatever, do two insolvent companies make one solvent company? I don't know. We're going to find out. We're going to find out later on tonight from the Pinterest earnings call. Yeah, let's sell a 34 call. I don't want to buy an at the money put spread because the strikes are too tight. I'd have to, buy a bunch of them. I don't really want to do that. Let's sell a 34 call. We're right there at the money. I mean, what could possibly go wrong? Again, we're on a little bit of a hot streak. I'm just thinking, this is probably like what Michael Jordan felt like in the finals all those years, right? It's exactly how I feel right now. So Pinterest at $33. Yeah, there you go. Short call on Pinterest. Boom, there you go. No username on YouTube. There you go. So Mr. Green says, I'm about to roll some calls into tomorrow. There you go. I like it. I like it a whole lot. Sergio's in the house. Says, hello, Dr. Jim. I traded an AMD short strangle in December 2024 after 12 defensive rolls. There you go. Inverted once. The P&L is plus $60. The position is now a 100 put and a 125 call with 43 days to go. $4.10 in credit. Would you close it or keep it? Oh, that's easy. So if you have a profit, as I'm reading this correctly, you close it. You 100% close it. You're at 21 days to go. You don't really want to take an undefined risk trade inside of that too much. I mean, 17, 18 days to go is fine. It's not that big of a deal. But it's like, hey, you already have a profit. It's somewhat economically significant, especially after that type of battle. I mean, the fact that you're able to scratch this thing at all, let alone get a little bit of a profit, I wouldn't think twice about it. I would close it and I would move on. And then, it's a nice trade, man. It's a nice trade. That's a nice job out of you with the adjusting and the patience and all the things you did to get to this point. I don't think I would test it anymore. You've got AMD. Yeah, the stock's at 110, right? We just looked at this a second ago. I mean, it's right where you want it to be. So could you possibly roll it out and play it longer? You could. I personally would close it though. I would be done with it. So Rance Rhythm's in the house. What's going on there, Rance Rhythm? I appreciate you. Scott S in the house says, let's go. What's going on there, Scott S? Man, the market's taking a little bit of a dive here. Apparently everybody's getting bearish on Amazon because they're watching the show, of course. Right, so that makes a lot. I mean, it's all lining up for me. But you've got the E-mini S&P's now down 4. You've got the risk-free down only up 10, only up 9 now. That's the NASDAQ futures, which are about to be even. Actually, you got the boomers now down almost 300. You got the Russell 2000 futures index down 19. And so I don't know, man. Did he tariff Kentucky? Is that what happened? Did he slap a little deal on North Dakota there? I mean, that could be. You don't know what's going to happen out of him. He's a loose cannon, man. So, RC, Dr. Jim, why'd you put the hair away? We all loved it. It has nothing to do with that. It just gets there's a ceiling on the craziness that I'm willing to let into the world. And trust me, this is for your benefit. I promise you. And today, I'm not afraid to say, I just did arguably the manliest thing I've done in the last 6 months, bar none. Bar none. So when Hurricane Milton came through, give me 60 seconds to share this story. When Hurricane Milton came through, we had 110 mile an hour winds, right? That came right over my house. And so like the roof got all messed up. The fence is completely destroyed. Well, we're getting a new roof on Monday. Like it's been tarped and whatever. So I mean, we're fine, but we're getting the new roof on Monday. Okay. Well, one of the things that happened was some of the palm trees that are in the front of our house, they got blown into the gutters. And so they're like leaning on the house. And so I had a palm guy come out and say, hey, can you do this for me? Whatever. He's like, we just got to cut it all down. And I'm like, I don't love that idea because these palm guys and these tree guys in Florida, they're always looking for business. They're always looking to cut down everything. They're like, oh, look at that tree. It's too healthy. Cut it down. I'm like, yeah, no, we're not doing any of that. So I started popping in the old YouTube machine. And I was like, is there another way that we can do this? And I see these guys. They're all from Kentucky, too. They're grabbing toe straps. And they're pulling the palm tree to straighten it back up. And then they're taking some 2x4s and they're nailing them into the ground. And then the thing just straightens out. And in 12, 36 months, you take out the 2x4s and boom, your palm tree's fine. So I was like, hey, so I called up my buddy and I'm like, listen, man, I need you to come over, bring all your tools because I don't have anything. I'm like, but I have an idea for this palm tree. And we did that this morning. So early this morning, I got up, before the market opened or whatever. And I'm pulling this palm tree with my bare hands to straighten it out. He's nailing in the 2x4s. And so now we got the palm trees are all straight and all ready to go. We even had the big palm tree. We hooked the toe strap up to his forerunner and we had the forerunner pull the palm tree to straighten it out. And then we nailed in the 2x4s, and there we go. Wow, look at this. Look at this market. So there's my manly story of the year. You won't hear another one like that, I can assure you of that. But look at this. Look at the NASDAQ down 50. Did he hit Kentucky too? Did he hit Alabama with a little molasses tariff? Man, I don't know, but he's got to be doing something out there. That's some crazy stuff. And so don't worry, Brian. It'll come back. But I got a lot of palm tree juice in my hair that I gotta wash out. So Dr. Jim says, oh yeah, that's RC. Brian Watson, the Dr. Jim with hair is AI generated. No, sadly it's not. That hair is actually real. You know what's funny? Another quick story. It feels so good, man. It just feels so good to be back with you guys. It's like stepping back into an old pair of slippers, man. I'm back in the St. Petersburg studio. We do as many tangents as we want. Tom hasn't seen the show in 8.5 years, so it's like whatever. It's all good, right? So I'm at TSA at O'Hare in Chicago, and I'm coming back to fly back to St. Petersburg on Tuesday night. And the airport was super empty. The flight was super empty. It was great. So I'm going through TSA and I hand the guy my Florida license, right? And this was taken back in 2020 or whatever. And it's when I had my short hair and all that kind of stuff. And he looked at it. He looked at me. He's like, that ain't you. I'm like, but it is me. He looked at it. He's like, oh, I can see it. He's like, yeah. He's like, new hair, new you. He's like, I like it. And I'm like, there we go. That's what I'm talking about. And so the TSA guy, I threw him for a loop there for a second there. But we got through. And so Dav Nico's in the house. What's going on there, Dav? Appreciate you for being here. RC's back. Dr. Jim is the only way to get an edge on buying options, reducing the cost basis as much as possible. RC says, absent some other factor indicating a good price to buy. That's a great question. And, I'm actually of the mind, I don't know that an edge can be gleaned from the long side of the option contract. And the reason why is simply this. The minute that you buy an option, the probabilities are working against you simply because you're paying for that extrinsic value, simply because you're having to overcome that daily theta churn that we pick up on the short side, right? Because you have to overcome that, I'm not sure that you can ever get above water. I'm not sure that you can ever get above, some baseline level of just 50-50. Now can you buy in the money options to minimize decay and things of course, you can definitely, there's maybe some ways around it to minimize, kind of the negative impact, but I don't know if I would ever go so far as to say that there is an edge that can be gleaned. So now the market's rallying back. So apparently the Alabama tariffs are over now, which that's about right. About a 6-minute tariff deal for Trump. That's about right. That's actually a little bit on the longer side of the tariff times. And so all right, so that's good. The market should be green again in just a couple of minutes. And so Theta Trader, Dr. Jim, Tom made at least 4 or 5 positive comments about you and your presentation. I don't know what happened to cause the unusual behavior, but I'm very concerned. You should be concerned. I'm very concerned hearing that from you. And so I did not know that. That's news to me, but that's good stuff. I will take it, and I will remind him of this when I go in this summer to negotiate my Juan Soto-esque contract when we have contract negotiations in the summer. So Theta Trader, actual question that I'm probably too late for now. You're not. You got plenty of time. You got all kinds of time. CCL earnings are tonight. I have a 100 lot of shares. What about some kind of calendarized ratio to tack on? I'm probably going to pass because I already have a lot of stacks of cash that are at risk. for tomorrow and into the morning with Amazon, SPX, etc. But this is Carnival Cruises, right? Yeah, I'm not a cruise guy. I've gone on a couple. CCL? CCI. Maybe you meant CCI. Yeah, this is your Crown supplier. That's right. So you said they have earnings tonight? It says 212 on here. Maybe that's wrong. I could be wrong. But yeah, I'm gonna, you have inside knowledge of the back alley Crown market. And so I'm going to pass on this just because I have so many things to do. But if you have shares and you want to tack on some kind of calendarized ratio, you could certainly do that. Here's something to think about, and this might be what you're kind of thinking. You have long shares. If you tack on a call ratio, you kind of end up with like a juicy covered call. In fact, if you actually, I haven't talked about this in a while, but I've talked about this before on this very show. If you go into the Google machine and you pop in, from theory to practice, juicy covered calls, that's what I refer to them as. Some people in the other or in the world of finance might call them stock repair strategies or stock replacement strategies or whatever. I like the juicy covered call because it's my own term, and so that's kind of fun. But I would go ahead and I would Google juicy covered call, and you'll see me talk about that very strategy. It's definitely an idea, definitely something that you could consider. And so let's see. Stephen Jr. is in the house. What's up, Doctor? What's up there, Stephen Jr.? Appreciate you, my friend. Very much. I hope that you know that. And it's really only because of you guys that we can do what we do, man. This show, the live bashes, like whatever it is, it's only because of y'all's support. So thank you guys so much for tuning in, whether it's live or in the archives, and spreading the word and telling your friends, telling your family members, hey, telling your enemies, like all the eyeballs, man. I mean, YouTube counts them the same. So it's all good for us. Athlete X says, Jim, would you do anything management-wise on a 3-7 $22 Sony covered call that's underwater? The cost basis on the stock is $20.80 and the stock's around $23. Didn't get great premium when entering the trade. Yeah, so this all goes back to the whole idea of covered call. Is it a trade or is it an investment, right? If it's a trade, then maybe you're selling a 30-40 delta call to try to minimize the losses, and then you're just done with it when it comes time to be done with it. But if it's an investment, that's a little simpler in my opinion. If it's an investment, though, where you're like, hey, I don't mind holding Sony for a while. Like, I like the company. I'll hold it for years. It's not a problem, whatever. Now you want to be more mindful of not necessarily selling calls that kind of put you underwater right away. I mean, you're already underwater, but you don't want to cap your upside, in my opinion, on a longer-term investment where you're playing the positive drift, the positive risk premium, blah, 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 blah. So if that's the case, I would just sit on the shares, man. I wouldn't be afraid to just sit on the shares and just play clean delta to the upside. There's nothing wrong with that. There's no rule that says you can't do that. Yeah, I mean, Tom hates it, but that's more of a reason to do it. Right, and so hold the shares and play the clean delta to the upside. And then if you get a pop where, Sony right now you said is at 20, just under 21, maybe you get a pop to 22, maybe you get a pop back to 23. Now you can sell some calls and feel a lot better about it because you're kind of right side up in the position. And so that's how I would view it. Take it or leave it. I won't take it personally. So Mr. Green, assuming this report is expected to be negative, yes, that's how I feel too. Excuse me. Well, actually, I don't know what the report's going to be. I mean, it's all made up anyway, but I think that the reaction to the report is going to be negative. Yeah, obviously, you don't want to be a sucker. The first 19 moves are never the move. So don't fall for those traps. But that 20th move, keep your eyes open. That's going to be the real deal. And so Scott S., let's see. Scott S., Dr. Jim, are you back in the slides or are you rocking those new Skippies? No, we're back in the slides. And I put my coat away. Like my big winter coat, which I'm really glad I brought that. I couldn't believe I still had it. But I put it back in the back of the closet, and I'm like, I had to say goodbye. Like I had to take a moment of silence because I'm like, yeah, this thing ain't coming out for probably another 4 or 5 years. Because while I'm negotiating this Juan Soto-like contract in the summer, I'll probably just have to settle for not coming to Chicago in February. Like I'll start with Juan Soto as my opening offer, and if Tom says, I can't give you that, but I won't make you come to Chicago in February, I'll probably just say done. Done and dusted, right? That's it. And so the coat can stay in the back of the closet, which is she's still going to make me come in March when it's still like 30 degrees outside. Everybody knows that. Like March in Chicago is it's the biggest scam job of all. Like it is the biggest scam job. Like you think that spring is close. Spring is not close. It's not even close to being close to close. You're still at least 8 weeks away, probably 10 or 11. And so, yeah, March is probably still going to be on the table. But yes, we got the slides back on, and all is right in the world. Ruben C says, Dr. Jim, I hope Florida is treating you well. Can you speak about choosing a strategy based on pop? Like some 50% pop with better risk, 1 to get 2 is better than 70% pop. I see. Iron Condor. Ruben C says, I was running back test, and it shows that buying 5 Delta put over a 3-year test produces better P&L than selling an Iron Condor by a big margin. Interesting. I guess the question is about expected value. Yeah, so a couple of things. Long premium, you always have to take like back test results and even like research results. You got to take them with a grain of salt, right? Because you have to understand that, I joke about this a lot, but it is the title of the show. Going from theory to practice, it's a journey. Like there's a bridge you have to cross. And the reality is, just because something worked in a lab or worked in a study or worked on a back test doesn't necessarily mean you're going to have the same results in real life. And that's just the way that it works. And so if you are able to kind of form fit and data mine your way into finding like a 5 Delta long put that worked for the last 9 years or whatever, I wouldn't necessarily hang my hat on the fact that that's going to be something that's going to be consistently repeatable over time. So I'd be very careful with saying, all right, I should, maybe consider buying some of these low Delta options, to have that big upside, whatever, because the results show X. The reason why is because underneath that long put is still things that are very problematic, like low probability, like battling the time decay, blah, 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 blah. When you sell premium, though, whether it be with an Iron Condor or even with naked strategies, is obviously going to be a lot clearer. Now you have things that, even outside of the data, outside of a back test, are working for you. Right, like implied volatility being greater than realized volatility, right? Like higher probabilities, like, volatility mean reversion. I guess that could work on both sides, but it's a bit more effective on the short volatility side. And so when it comes to long premium, I just want to make that, I don't have a lot of time left, but I want to make that quick comment I think that might be the most important thing I could say in response to your question. But as far as pops are concerned, being a premium seller, being a high probability trader, I am always going to, give the check mark to the higher probability play over the lower probability play. Now, I do plenty of 50-50 shots. You see them on the show. The expected butterflies are less than 50-50. So there's a time and a place for all these things. But as the bread and butter, as the peanut butter and oatmeal of what we do on a day-to-day basis, the higher pop is going to be the place. 60, 70, 80, whatever it ends up being. That's going to be the thing that's going to be driving the train mostly. So hopefully that helps a little bit there, Ruben. But guys, I'm out of time. It goes so fast. It goes way faster in St. Pete than in Chicago. Maybe it's the heat that's making it move quicker. Although you would think that the cold would actually make it go quicker. Or I don't know, man. But hey, I appreciate you guys. If I missed you guys, come back tomorrow because we could have more victory laps to take. We could have lots of commiserating that we have to do. It's going to be a good show nonetheless. But I appreciate you guys. If I can ever help you guys in any way, please shoot me an email. I'm Jay Schulte at tastylive, or we can connect on Twitter. I'm at JSchulte3. I would love to hear from you guys on there as well. But stay tuned. We do have Jamal coming up next with Engineering the Trade. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys tomorrow.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Decision to build Thinkorswim was a byproduct or derivative of 20 years. In our minds, the future of finance meant that we were going to move away from something that was very manual and move to something that was tech-driven.
What we did with Thinkorswim truly changed the industry. To do it a second time was a challenge that I just had to take. The platform is just leaner, cleaner, a little meaner, legitimately built from scratch.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
What's going on, everybody? We got a big jobs report tomorrow. I really don't know how the market's going to react, but we will find out really soon. We'll talk about some of the things to expect there. Bank of England, the latest central bank to cut their rates. How about it? Where is all this stuff going? Who the heck knows? I really don't. And then finally, before we can get to the big jobs report tomorrow, we got a really big earnings tonight. Amazon, that's right, another one of the Mag 7 is presenting earnings, and should be a good one. So we'll talk about those three things and more. We'll take a look at some of the other earnings trades that I have been sort of contemplating here and there, and just trying to figure out why markets took a downturn. We'll talk about all those things. But first, welcome to the most dangerous show on the tastylive Network. Folks, it's Engineering the Trade. I'm your host, Jamal Chandler. Last night, I haven't talked much about my youngest kid and his basketball exploits recently, but last night he absolutely dominated in this practice, and it was kind of fun to watch, man. He's a pretty big kid. He's a 12-year-old. He's playing with maybe a grade under right now, but it's just the winter team. You know, you got to find things to do in this wintertime period, December, January, February. This is the rough months, particularly here in the Midwest and Chicago. So you got to be indoors in a gym doing something. Can't let time go to waste. So it's been good, man. It's been good. He balled out last night. It was fun to watch. I think he's ready. I think he's getting ready. We're working on his confidence. We're going to get him there. He's figuring it all out. I'm proud of him. But, yeah, he just dominated last night. And then he fouled this one kid pretty hard. Because I guess the kid was talking trash to him. And again, this is just pickup, you know. This is just pickup, and yeah, that kid was so upset. And my kid told me later, he was like, "Yeah, I fouled him hard because he was like daring me to. He was like, you can't foul me, you can't do anything to me." You had to put the beef on him. You had to let him know. Sometimes you got to do that. Sometimes it makes sense. Let's pull up the slides. Let's talk about what we're seeing here today. 10-year yields. They're a little bit up today, but I tell you, they're at 7-week lows ahead of this big jobs report tomorrow. Now, they're expecting 170,000 new jobs created. They've been positive, right? Like all the jobs reports have been positive for quite some time, basically since, the offset of COVID. The last couple of job reports come in pretty hot. They were above 200,000. I think in January, too, after the January report, they do revisions for the entire year, so we'll kind of revisions are kind of, whatever. But we'll get an idea of what the real numbers have been on the recent job reports. But they've been hot. I mean, they've been hot for the most part because the economy is doing well. Everybody's been waiting on this point where economy is going to be there's going to be a downturn in the economy, and then we'll, as far as jobs, and then we'll have to lower rates. But I tell you, there's a whole lot underneath the surface of this upcoming jobs report. You got tariffs, right? Tariffs have kind of been enacted already, at least for China. They've been on pause for Canada. And that in and itself is supposed to be inflationary, right? They're going to make goods more expensive. I don't know. We'll see. Is Doge actually reducing government? Is it making the government more efficient? Is it actually reducing the balance sheet of the government? I don't know, but that's another thing that'll factor into what we need to do with interest rates and if they need to stay high or do they need to drop them. So there's a lot there's a lot underneath the hood of this upcoming report. And while I think it'll be, the report will have meaning, I wonder, again, there's a lot that's changing currently and going to change. And so I think a lot of the times when we get the report, like we take it at face value, right? Like, oh, the economy's adding jobs and it's doing well. And it's going to continue adding jobs because all of these things are remaining the same. Like the interest rate is remaining the same. There's really no major change in government, right? But now there's going to be changes in governments. There's going to be change in government. There's going to be changes not to obviously fiscally, but there's going to be a lot of different changes overall. And so that's going to affect whether or not they have the ability to cut rates. And so I think while we can take this report for face value, there's a lot going to be changing. And I wonder if the market is going to take that into account. And so, for example, if we get a hot number, will the market, typically the market would drop big after that, right? Because it's like, oh, we can't cut rates and all this movement, to the upside. And the S&P 500 has been on the press, on the sort of press, the idea that we would be able to cut rates. So I just think there's a lot underneath the surface that's going to be kind of fleshed out here in the coming months. And you can only take this thing at face value. You can't necessarily assume that because we get a hot number now, that's going to be the case. Even a month from now, things might change drastically, right? Like there's a lot of people taking packages in the government. Is that going to factor in? I guess we'll see. Market's only giving a less than, it's a 47-point move. So what is that? I feel like that sounds like a 0.8%, 47-point move divided by 60, 100, let's call it. That's 0.7%, 0.8%. So that's not that much realistically, but we'll see if it outlasts that. Bank of England was the latest central bank to cut rates. Now, what's fascinating about this is because I haven't heard any. I don't think it's hard to follow along with this tariff story. Everybody's getting a tariff, right? So are they going to get a tariff next? And if so, is this rate cut going to affect them? They're still fairly elevated. They're at 4.25, just like we are. You look at some of these other central banks that have dropped below 3%. I think, ECB is at two in the orders. Canada's dropped, I think they're around 3% or something like that. Like some of these other countries are fairly low. They're hanging in there, and I feel like things have gotten better. The economy has gotten a little bit better in England, but it's just another central bank that is continuing to drop rates, even though we're holding our steady. So I say all this to say I think there's going to be more volatility in the currency land, which, if it gets wild enough, could eventually seep over to the equity markets. But hold tight for that. Nevertheless, another cut. Finally, Amazon has earnings. Now, we know they have a bunch of segments of the business, but cloud is the number one thing, right? Amazon Web Services, that is the big thing. And you just wonder, when you hear these things about, other companies in the industry that are struggling on that very thing, cloud, you wonder how this is going to go for the leader in cloud in Amazon. I wonder what's going to happen here. And so I couldn't help it. I placed a bearish bet, again, using the classic patented, they should be patented at this point, Jamal Chandler calendar spreads, but I did put spreads this time. I know, a departure from the normal. I did put spreads this time on Amazon, and that's my play, and I'm sticking to it. We'll see how it plays out, but if it goes higher, I got what do I have? About $472, $480 worth of premium. If it goes higher, then that's cool. It's just 1 day premium, but I'm playing to the downside. Look, Microsoft went down, Google went down. Most of the issue was cloud. I'm playing Amazon to the downside too, especially since stock, is near highs. Why not? I figure it's a good play. You know what I'm saying? Anyway, leftovers. California has some of the longest tenured homeowners in the nation. Let's move to the next slide. I found this a little interesting. Median home ownership tenure. Los Angeles, California. The median homeowner has had their house for 18.7 years. Very long time. Very long time, especially in a place like that where things change so often. And again, you would imagine because things are so expensive out there that people don't have the ability to sort of pop in and out of houses, move from place to place, right? Like you can go down south and you can move that. You could upgrade to a bigger house at some point because it's just not as hard to do. But when you get out there, slim pickings, especially when you look at San Jose, Los Angeles and San Jose and San Fran. Those are the highest ones, as you can see, 17.8 years on median in San Jose, California. San Francisco, 16.7 years. That's quite a long time. I've only been in my place for going on 9 years. So, yeah. I was a little late on that. It could have easily been earlier. But I didn't do it. You know what? It was the first time I thought about buying a house was, or even a condo, with 4 kids. It was actually around the time of when they were coming out with those adjustable rate mortgages, those ARM. They were, they were popping, they were hot, and it made it. I was in graduate school, so I really thought about it. But ultimately, I didn't do it only because I was. What's funny? It's stupid now when I think about it. I was living in Wisconsin. I was living in Madison. And I was in graduate school, and I just figured I wasn't going to be there forever. So why should I? But I definitely should have bought a house in Madison, Wisconsin, because Lord knows I've gone there a whole lot over the last 20 years. And I got a kid there now. It would have been a really smart thing to do if I would have known, but I wasn't thinking for the long haul. Sometimes I don't think, especially back then, I didn't think for the long haul. I don't know. Philadelphia, 16.1 years on median. Median in Baltimore, 15.6 years. Median in New Orleans, just exactly the same. Pittsburgh, 15.5. So now you're getting into some, smaller cities in there. Baltimore, New Orleans, Pittsburgh. NYC, 15.4 median. Chicago, 15.2 median. I do feel like people are in their houses here for a while. Again, I'm on the lower end of that. Washington, D.C., 13.6. Seattle, 13 years. Miami, 11.7. Yeah, you would figure. I thought Miami would be shorter, honestly. I just feel like there's been a lot of changeover in the last, 20 years or so. Minneapolis, 10.3. That surprises me. I figured there would be longer homeowners there. Denver, 9.3. Tampa, 9. You would figure that would actually be lower. Atlanta, 8.9. That's probably about right. That's a place where, homeownership shifts a lot. Phoenix, 8.6. Yeah. And Vegas, 8. Who owns a house in Vegas? I don't even know anybody who owns a house in Vegas. Let's move to the next slide. What are near-term yields telling us? If you've noticed, just like I said, despite what you see today, a little bounce here, and I think that's because we're heading into the meeting, and you can see VIX actually picking up here too. But I think 10-year yields and 2-year yields being up is just a little pre-jobs report shenanigans. But mostly we've seen the 1 years and the 2 years kind of fading, while and a little bit of the 10s too. 10s are, it's hard to tell in this chart because this is going back over a year and change, but we've definitely seen a lot of fade in the 1s and the 2s, which makes you wonder, is there more rate cuts along the way? Even though we're not expecting too many, maybe 2 this year, maybe. But you just got to wonder, what is it really telling us? And I think this is probably one of the more interesting trades right now, bonds, and one of the more confusing as to know what to do, because there's just so many things happening, like I outlined at the top of the show. What's going on with the government? What's going on with, tariffs? All of these different things that are factoring into play. So I think this is going to look really different in about another 6 months and maybe even longer. But it's a very interesting play right now, bonds. Let's move to the next slide. Metals have been on the move. Yeah. I had an MGC contract a week ago. I closed it out on Friday because I just didn't like the way that we ended the week last Friday. And sure enough, we had a big down move on Monday, which actually gold ended up going up on that. But I just wanted the capital to be able to make some plays. I expected us to have another huge down move within this week, and it just didn't materialize. Nevertheless, I decided to get back into gold yesterday. I'm long gold call spread, the 29.53K. I'm playing it for a bounce above 3K. But yeah, metals have been rocking and rolling. Even copper has gotten back into play. We just had copper, of course, is so tied to China. And we just had the Chinese New Year. Markets were closed in China for Chinese New Year. As they've come out of Chinese New Year, you've noticed copper has started to resume its bounce. It might be, eclipsing its recent high. Gold, of course, is at a new high. Silver's got some ways to go. Silver is one of those, it's a lot more volatile than the rest. But keep an eye on metals here, man, with all the, fiscal drama and all the talk of tariffs and all that stuff between countries. There's a lot of uncertainty. Usually when there's a lot of global uncertainty, that's when you usually see metals, particularly gold, go higher. So keep an eye on that. Let's move to the last slide. So for earnings, obviously Amazon is the big dog, but you got ELF for earnings, you got Net for earnings. AFRM is another play for earnings. Pinterest, another one for earnings. Take Two, Expedia, SKX, and SIBO you got for earnings. Honeywell, big move to the downside, surprisingly, because usually when a company announces that it's splitting into 2 separate companies and it's creating more value, usually you see that company go up. I'm actually a little surprised to see them as down as much as they were today. AADP report, of course, we had the JOLTS report, which showed the least amount of openings since September. Then you had the ADP report, which beat expectations. Typically, there's no tie between ADP and NFP, but I always look at it like this: if ADP shows that we had more jobs than NFP is probably going to do about the same. I don't know. Number of SP 500 stocks above the 50-day moving average, still hanging around 50%. I don't know what's going to change. I don't know. Because, again, this was one of those days where it was a little bifurcated until recently. Now all the indices are down. But earlier in the day, it was just Dow and IWM, small caps, and Russell and NASDAQ and S&P were up. And usually on those days, you see the difference in breadth, right? And again, that's what this metric looks at, is the difference in breadth, meaning how many stocks are doing well versus how many stocks are not doing well. 50%, we could swing either way from here. Let's move to the platform, please. Amazon. Stock being at all-time highs is not necessarily a reason to play the stock to the downside, but that, coupled with the fact that I think they might miss on cloud revenue, is why I'm playing it to the downside. So I started off at 225. That's that 50-day moving average, as you can see right there. I feel like it could, if it does fall, it'll probably drop to that level or maybe through. I'm playing it for a level through. Maybe it drops down to, maybe it drops down more. But right now, it doesn't matter what I think is going to drop down to. The expectation here is a $15 move, right? And so again, telling you guys the other day, like I usually play, I usually sort of get an idea of where what kind of move is expected from the stock on earnings, right? If I'm trying to play a direction. So now all of a sudden I'm like, okay, $15 down, that gets you down to 222, right? And then you just figure out where possibly support is. In this case, like we said, it's 224.79. That's the 50-day moving average. So truthfully, if it drops just to that, that's not going to help me. I really need a $20 move, honestly. 217 would be great for this trade. But again, if it doesn't, I'm risking $458. I think it is total. Like it won't kill me. It really won't. I'll live. Another earnings play is AFRM. This one can be, pretty volatile on earnings. I was talking over with a buddy of mine, one of the viewers, he was mentioning it to me, brought it to my attention. I kind of forgot about it. But this is one that can be pretty volatile on earnings, so I figured it would be interesting to play. Last time around, I think the last earnings was here, February. I'm playing it to a move above a new high, above this, what was this high here? 73.34. So I played it for I played the 72, the 70. Its expected move, I think, is let's see, 61. So $8.50 expected move, right? Gets you to almost 70. So if it beats, and it really beats, then you're at 70. But if it really goes, because this thing has a little bit of short interest in it sometimes. So I'm playing for a move to 75, and I did the 70, 72, 75s. We'll see how it plays out, but that's another one. I'm going to slow down on some of the earnings here soon. It's been kind of fun, but as earnings are slowing up, I'm going to start to slow up. But those have been some of the trades more recently. You know what? I also just saw something. I don't know if you guys have noticed this. This was not something I mentioned in the notes to preparing today's show, but some of these agricultural names have been getting rocked, and I think some of it has to do with what's going on. I think maybe some of it is what's going on with aid and what's going on with, Ukraine. I'm not exactly sure, but I noticed the whole space when you look at ADM, a lot of these names, MOS, a lot of these agricultural names have been really getting rocked. And I just found it interesting. So I decided to sell a put in CF, sold that a little while ago. What did I sell that for? I sold that for $265. Did I really? Wow. Well, that's working out nice so far. But yeah, these names have gotten really smacked. And this was just one I found really fascinating. So I decided to sell a put in this one. I was going to sell more, but some of these other ones, I just don't have enough juice for me to want to do it again. This one, I'd have to basically sell at the money. I don't necessarily know if I want to do that in ADM. MOS, kind of low dollar name. Can't really get to it, but haven't done that. Yeah. So that's another play I got on more recently. What else did I mention to you guys? Yeah, I mean, keeping an eye on bonds. I did do a I did do a bond trade today in ZB. So it would seem as though bonds have been on their high horse recently. How much further it can go, I don't know. I am selling vol in ZB, right? Like that's kind of the main play. I am short this iron condor that is getting kind of up there. But I do feel like, when I look at, when I look at this chart, I look at bonds trying to make some inroads higher. I look at, same thing with ZN. Making inroads higher. Where it goes, nobody knows. When I look at the 10-year yield, and I talk about how yields have really been getting rocked more recently, and sometimes they have a trend heading into like the next meeting, like for example. And Chris did a great job on Futures Power Hour showing this today when we were on. Go back and check out the show so you see exactly what I mean. But he did these different partitions, right, on this 10-year yield chart. And you can see what it looks like in between meetings. And in December, from November to December, we saw a big climb into the Feb 18 meeting. And here, since January, the last meeting, we've seen some big drops and it's heading lower. So I guess, by playing bonds higher, bond ZB and ZN, that is, I'm playing for a lower 10-year yield, and we'll see how that ends up playing out overall. But I just, it might be the time. It might be the time in bonds where they go higher. For Christ's sake, it's about time. Sooner or later, you got to do something. Metals, as I mentioned, gold, a little weakness today, but actually it's moving higher as we sit here and talk. Gold, I got the 2950, 3000 call spread here, and I'm playing for the move to 3000. Right? You gotta play to win. This is a little pullback, but again, when you look at this pullback, it traded below its 1 week moving average and bounced above. If it closes above, that's a good thing. This was just a consolidation day, and we'll take that anytime. Anytime. Here, I'm just looking at the chat here. Just want to make sure I didn't miss any questions here from you guys. Hey, who closed my poll? So yeah, I was wondering what you guys are doing for earnings. Tasty fam, what are we doing for earnings today in Amazon? Short vol, short delta, short vol, long delta, long vol, long delta, long vol, short delta. I don't know who closed my poll. We had more votes to go, okay? Poll was closed fairly early, but it would seem as though short vol, short delta is the prevailing trade here for a lot of you. 38% did that. Again, this is only for 47 votes. Short vol, long delta was 27%, and then long vol, long delta, another 27%. So doesn't seem like there was any long vol, short delta plays, but that's essentially what I'm doing. So I'm very much in the minority here. Very much in the minority. I did mention this, and I might do this again. I might do it tomorrow if I remember. I am probably going to look at it depends on what happens tomorrow after the jobs report. If we drop down big tomorrow after the jobs report, I probably won't do this trade, but I might look for a wider butterfly here, put butterfly to the downside. Now, when I looked at this earlier, it was $5 and change. Again, it just really depends if we move up. And this would all just be for weekend risk because, again, there's been some weekend risk here more recently. We've seen markets drop fairly big on the past two Sundays over whatever different reason. 1 minute it's DeepSeek. The next minute it's tariffs. So I think there's a fair amount of weekend risk nowadays. I personally believe the next time we have a big down day like that, this one's going to be for real. It's going to be the big one. So I'm going to look to do a put butterfly, and I'd probably wrap it around 6,000 because I feel like the market likes those big numbers, right? 6,000 or 60.50. It just really depends. That's only 59 handles from here. But again, that's for today. I'm going to see where markets are tomorrow and then assess. Like I said, if we do a big one down, I probably won't be as interested, but we'll see. Sunflower, what is long vol? Long vol means long vol, short delta. It means like, say you just bought a put, right? Like that's long vol, short delta, or even, what I have on, which is put calendars. Those are long vol because I'm long volatility further out months, right? Like that's long vol. So just think about something like that. But these agricultural things, something to keep an eye on. Hopefully there's not more downside to it. I would like to do some more of these. I just don't see any other ones that I like. I really don't. I don't know. Is it worth it? I mean, ADM is probably a better one. I could go further out. I mean, this is really kind of ugly here. And when's the last time it was this low? Let's see. Was it 4 years ago? I mean, it hasn't been this low. I just don't know when. So, speaking of, what's going on with corn? 6C. What's going on there? Not 6C, excuse me. Slash ZC. I'm losing my mind. Corn is up. Interesting. So it's something just affecting these names, right? Corn, soybeans. Soybeans are, they're not flashing the same thing. So it's interesting. There's nothing going on with the grains, but there's something going on with these companies. And it makes you wonder what the deal is. You don't want to get too overexposed in here. Again, this was another one I was looking at. I was looking at March. I could go further out, March, but then there's June. I wish there was a May. But it's not a whole lot of premium, and it's not that explosive, like not that high of all. Again, I did, CF just felt like a no-brainer to me, and I usually don't like to sell things ahead of vol, but ahead of earnings, but I like this one, and especially being down the way it is. 2 days in a row. If we get a third day, maybe I'll do a little bit more. I do have to, I think, my bottom line here is the 81.79 200-day moving average. I'll keep an eye on that. But if I see more of these, you'll definitely see it pop up in the trader page. Folks, that is the show. Thanks for watching. And as always, be smart, be patient, trade them small, and trade them often. I'll see you.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Know someone who needs a better broker? For 1 month only, earn $500 for each qualified person you refer to Tasty Trade. See how it pays to have friends? Terms and conditions apply. Tasty Trade.
Hello, everybody. Well, this will be the last day of my remote show. I'll be off tomorrow, and I'll be back on Monday. Usual digs. So tomorrow, actually, over the next, 16 hours less, a couple of big events. One is the Amazon report. That'll be just after the close today. And that's the last big report of the earnings season. And we'll take a peek at the chart in a bit. And then tomorrow morning, the hour before the opening bell, is the monthly jobs report. And I'm looking at the charts, it seems to me that if the bears want to have any kind of chance, it kind of has to go down tomorrow. Because things are about as high as they should get in terms of this kind of trend rally. Otherwise, bulls are going to get another lease on life. So let's look at the charts and talk about that. We begin with a spider. I've zoomed in nice and tight in advance here, and I want to draw your attention to kind of a parallel going on. So what we've seen here is 1, 2, 3 independent stripes of market action. So we had the 1 and then a plunge, 2 plunge, and then 3. So here we are right now. Now, the simple conclusion would be like, I guess we're going to plunge real soon. Maybe. I'd like that. but ain't necessarily so, because let's dial the clock back a few weeks. Let's look what happened here. Here's 1, and then 2, and then 3. So here also we were getting lower lows, lower highs. We were getting these surprise drops. And so with respect to the you are here kind of moment, could be along this bar right here. And if tomorrow the data is agreeable to the bulls, we could jump above that and just start this new leg higher for a few days. So if there's any surviving bears out there, it's pretty crucial that we go down tomorrow. There's really not much room left. Looking at the diamonds, kind of the same idea, although not as intriguing. We are near lifetime highs. We are retreating from the strength earlier today. And, but yeah, we've got a line in the sand there, which if crossed would provide some new animus to the bulls. XLI, different ETF in the industrial vein, and much weaker. Just its composition leads it to being weaker, in sharp contrast to the diamonds, which, as I said, are right close to lifetime highs. Now, the two, I've got 3 ETF bearish positions. The first one is EFA. And this is a great example of like, it just really can't go any higher at this point because here, let's back up. Here's the trend line, that's key. So this wedge has been around for years. This blue trend line is vital. We broke it a while back. We have showed exceptional strength for many, many weeks here. Today, we tagged the bottom of that trend line beautifully. A retreat from this area would be just what the doctor ordered. So yeah, this is about as high as I'm going to allow it to get before I just throw my hands up. So that's EFA. EWZ, Brazil, much cleaner pattern, but has been annoyingly strong. We're even actually pushing a tiny, tiny bit into this head and shoulders pattern. Not by much, because the activity down here below that dashed line is very skimpy. So I'm not really bugged by that. But just to kind of overdo the point here, it really shouldn't go much higher than this. And yeah, okay, so we'll get to the third one, XHB, is not related to those, so we'll get to those later in the show. So earnings, Qualcomm was one of the big ones last night. It fell. The chart's kind of a mess, so it doesn't really amount to much of anything. It had been a really interesting chart until about here. And then we started pushing higher, got out of the pattern. So now it's just sort of floating around there. It undid a few weeks of progress, but it's really kind of a snoozer. Not a snoozer at all has been Roblox. This plunged earlier today. It has undone most of the plunge, but at its bottom today, it undid months of progress. This base here, this big green zone, we even pushed a little bit into that. There was so much selling going on. As we zoom in tighter, you can see, still very much a down day. The majority of the plunge is gone already. So people have been gobbling this up, but pretty ugly stuff. You've got to believe there were a lot of stops hit on the way down, because as you can see, for weeks, just steady, 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 up, 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 steady, steady, steady. And at one point, just like green at like every single day almost. And then just undid months of that, just lickety split based upon some pretty grim revenue projections. Tesla, we talked about this yesterday. We talk about it just about every day, but yesterday was of note because the Fibonacci's, well, they're starting to crack, and now we are below them clearly. As I had said yesterday, and there's more and more articles coming on about this, because weeks ago I had offered the idea that, it's not often you have a corporate CEO pushing himself into the political scene, and he's done it in a way that the footprint he's making in the political scene is bigger than most former U.S. presidents. I mean, he's gargantuan, and that's really turning some people off. And the stock's down to almost 30% at this point, definitely 25, hundreds of billions of dollars, hundreds erased over the past couple of months, less than a couple of months. Not because, of anything core, like suddenly everyone stopped buying all cars. I think it has a lot to do with just the sentiment, the psychology, the press. But the fib is clearly broken, and this really opens up this pathway all the way to a little north of $300. So yeah, the struts have been kicked out from under this one. NVIDIA had recovered pretty massively over the past 4 days. We are getting pretty close to a big zone of overhead supply that should represent resistance. It also, we're getting close to the peak we had right here. So again, it really shouldn't go too much farther. If we do get, if the bulls get more wind in their sails, then we could push back into this, and it opens up all the way up to this gap up here, way up there in terms of the next zone of resistance. What else is out there? Oh, AMD. This was the one that had a big plunge yesterday. I was wringing my hands about what to do with it. I did nothing. That so far is a decent decision because it's the weakness has been resuming. So it pushed higher, kind of counter trended itself all day long yesterday. It's losing some of that already. And so my long-term target is still way down there. So we'll see if we can hang on that long. But yeah, I just crossed my arms, and so far so good on that. I noticed that the big retailers, the big box retailers, are just eye-poppingly expensive now. These are incredible success stories. This chart of Walmart, we are in the triple digits now. On a split adjusted basis, the old prices, like way back here, are so low, they don't even register. It shows as 0.00 because I don't have this program to show fractions of a penny. So I don't know how many tens of thousands of percent this thing has gone up. It is unbelievable. One of the most successful stocks ever. And of late, it's been a little bit absurd. Look at this. I mean, look at that chart. It's just hardly a wrinkle in it. And so we are at lifetime highs on this. Keep in mind, this is Walmart. We're talking about, toilet tissue and lotion and foot deodorizer, and it's got a PE of about 50. So that is an amazing chart, and this is on a log scale. Likewise, Costco, for all your 50-gallon mayonnaise vat needs, lifetime high, big shooting star on this. Perma-bear though I may be, I don't go within 100 yards of this thing. It's just too strong. But I'll say, as an objective observer with no position at all, I bet this is going to be some kind of peak because that is insanely high, and we've got the shooting star there, and it's way above any sensible level. So yeah, just astonishing strength on those. But we've talked about Costco before and how it teases the bears with these round the tops that do not mean a thing. What else have we got going on out there? Oh, here's a new one, New Core, NUE. Never traded this before in my life, but decided it'd be a fine day to get some puts on this. Got some June puts, 140s if I recall. And so far so good. We've got a real clean neckline right here. That's my stop. And we've been selling off a little bit today. So that's NUE. That's a new position for you. Eli Lilly, I didn't check. I think they had earnings this morning. I could be wrong. Could be this evening. I think it's this morning though. You would think so because it's having a very strong day, but I just want to draw to your attention another important price gap right up there. We got quite close to it today. I'm kind of out of buying power, so I didn't have anything left to take a position on this, but if I did, I'd probably get some bearish position on this as well as it got close to that gap. So it's very intriguing on LLY. Now, we're going to talk a little bit, I'm going to watch my time here, about gold. GLD is doing a little bit of backing and filling. Does this from time to time, and that's okay. As I've said so many times, very bullish on precious metals long term. Silver SLV, God bless it, has actually managed to shake off its own selling, and it's pretty much unchanged on SLV right now. As I said yesterday, this gap is important to conquer. That represents some resistance at this point. If we can muster our way past that, that'll really grease the skids, as they say. Weeks and weeks ago, I talked about a few specific miners, precious metals miners that I liked. Just wanted to highlight a few of these again. We spoke about Equinox yesterday, I think, EQX. That's looking real good. This is another, it's selling off some today, but it had a terrific day yesterday. This is SKE, big move yesterday. So we've got a new support level like so, but that's been very successful. And another one, which is a more handsome pattern longer term, it's a larger base, Wheaton precious metals. So like all those miners, as opposed to just plain old GDX. As I mentioned earlier, XHB, the home builders, still in position there. You've seen this chart many times. Just to recap real quick, this has been trading for literally decades inside this cool price channel. We mashed right up against the top of that price channel not that long ago, right up here, and also here. And since then, we formed this cool little pattern, fell hard, retraced, fell again. And as we zoom in, we have sealed up this gap, and we want to make sure it does not exceed that price level. So maintaining those three ETF positions, again, EWZ, EFA, and XHP. Also, I'm not in a position on this, but this is looking really good too. XOP, I've still got my XOY and DV inputs, and XOP is reversing very nicely. And so I think the prospect of ultimately finishing that pattern is still viable. So anyway, the big one tonight is Amazon. I love charts, I love patterns, but with these monster ones, I just kind of shrug my shoulders. I have no opinion about this. It's obviously near its record highs. It's about $2.6 trillion mega cap. It's vitally important psychologically to the market. So I'll be watching with great interest, but I really have a zilch opinion in terms of direction on this. And I would also mention, although it's not really related to Amazon, keep an eye on the semiconductors as well by way of SMH. We've had a big bounce the past 4 days, as I said, with NVIDIA as well. It would really help to poop out at around these levels and start reversing away from there. So it's the bottom of the hour. We made it through. Thanks for accommodating the slightly suboptimal setup here, but you know what? We got a nice fast connection, and all in all, it worked out great. So appreciate your time and attention. Like I said, I'll be out tomorrow. Good luck tonight with Amazon and the jobs tomorrow morning, and I'll be back with bells on Monday. So take care of yourselves, and I'll see you then. Bye-bye.
Know someone who needs a better broker? For 1 month only, earn $500 for each qualified person you refer to Tasty Trade. See how it pays to have friends? Terms and conditions apply. Tasty Trade.
If you missed the live show, here's our cherry on top weekly recap.
You think I'm not listening over here? I know you call me silly a couple times and stuff like that, but you know we're idiotic and stuff like that. But I got 2 ears and I can't close them, although I'd like to sometimes. Like my eyes, I can close those, and I do that often while we're on the show. I can't.
Let's go to the next slide, Beth.
I don't close my ears. Take a quick 90 seconds, because your throat's hurting. You're not feeling good today.
No, I feel fine.
Yeah, you look great.
Thank you.
You look great. This is where my ears stay open, but my eyes get closed.
Hey, I want to say gung hei fak choi.
Yeah.
It is Happy Chinese New Year.
It is.
For you
Oh.
today. Yes, that's pretty good, right? My Chinese is pretty good.
That would be pretty good.
Yeah, it's the year of the snake. So I looked this up
I'm a
before
rooster.
the show. You are a tiger.
You bet your sweet boopy I am.
No, it says here the tiger has a mixture of traits and can be aggressive, courageous, candid, and sensitive. Ding, ding, ding. I am a goat, and goats are elegant and creative. Oh my God. Compassionate and amicable, and will avoid confrontation when possible. The chicken or rooster is a pioneer in spirit, devoted to work. This focus on work and knowledge can mean that the character is often seen as selfish and eccentric. Damn, China, you didn't have to go this hard.
Welcome, Typhoid Mary. How are you?
I'm back, and I plan to get everybody here infected.
I could see that. I can see
Yes.
that.
You still don't know what's wrong with you medically.
I'm perfect. No, I feel fine. I just have a cough.
But working your way back by not going to a doctor, not taking any medication,
I'm on
not
tons of
getting
medication.
rest and fluids.
Over-the-counter medication. You never went to the doctor. Never got any.
But you don't know what's wrong with you. What are you treating? Like, is it a cold? Is it COVID? Is it allergies?
No, it's all.
Is it karma?
Karma. Yes. I hate when being an emergency contact.
Yeah, that's.
I don't want to be that.
Yeah.
I don't lie.
I used to have this guy that would be like, "Can you be my emergency contact?" And I'm like, "Why?" He's like, "Go well. If my alarm."
Because I'm your son.
Come on, Dad.
Our new store is about to open. We partnered with Threadless and we did. We partnered with Threadless and
this is a collab. It's just a
hats, socks, shirts, pants, sweats.
You should model all the clothes and show as a
Nicky,
lookbook.
he doesn't.
What are you talking about? I already am.
No, I know, but
he
on
doesn't
the
know.
site.
Yeah, what do you think's in there?
Oh, it's all you? Okay,
Yeah, it's just pictures of me.
Oh, beautiful.
Yeah, it's just
beautiful.
me in different outfits.
Yeah, we want to put our the foot one.
The socks, the
Stop.
pants,
How about the thong?
the shirt.
Get the full scoop by checking out the archives at tastylive.com.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Ring the alarm. Hey, ring the alarm. Boys, turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Mikey, we are back, my friend. We've got E-mini S&P 500 futures basically unched on the day. They're up 5. We've had about a 36-point intraday range. Big old nothing burger in my book. NASDAQ's up 32. You got the Dow down 199 and the Russell down 11. So Russell and the Dow, the laggards of the group. Oil selling off a bit, /CL 7056. Volatility futures have remained at 1680 for basically the entire session. Bonds down 2 ticks. You got gold down $13. It was down 30.40 at one point today. Silver down 30 cents. It was down about $1 and change at one point. And then Bitcoin sitting at 96,000, lower end of where we've been trading. Spots down 1,300. You got the futures down 700. What say you at all-time highs? Amazon reporting earnings. You got a couple other ones. Cloudflare, which is net. You have a firm in there. Fortinet, Pins, Elf Beauty.
You
Any of
name
those
it.
Stick out to you besides Amazon?
Yeah, Amazon's interesting, of course. Sitting near highs at 240. We're calling for what? Up and away? That's where you're positioned for, I should say.
I would think so. I'm playing it to the upside, but who knows? The Google move kind of spooked me because I thought Google would be inside up type thing like the rest of them.
But yeah, I mean, it's a almost 14-point expected move through tomorrow. Just over 5% of the stock price here at 240, but still making a substantial chunk of the rest of the expected move through like March and April. April's only a 24-point expected move. You're looking at 10 points less for one day. You also have some interesting non-farm information, non-farm payroll, and that's coming out tomorrow morning. We were looking at that earlier. SPX still has a 50-point expected move for tomorrow. And you have, Amazon, big player for an earnings report too. So we could still see some big market movements, even though today we did not get that.
For sure. Today has been, relative to the rest of this week, a very, very slow day. E-minis have only traded about 900,000 and change contracts here today. If you remember on Monday, I think it was about 2 million or 2.5 million-ish futures traded. So it certainly seems like there's a little, everybody's kind of waiting whether it be for the Amazon earnings, numbers coming out on Friday, or maybe just kind of taking some chips off the table into the weekend. We've seen for the past 2 weeks, Mondays have been kind of where you get your craziness.
Yeah.
Both of the big down moves since the start of this year really have been on Mondays the last 2 weeks. And so maybe people are just taking chips off the table into what has been a nice little bounce back from this Monday's little dip. But the weekend risk, shockingly, hasn't been, in my opinion, priced in. When you look at implied volatilities, like if you just pull up SPX going into tomorrow, obviously you have a little bit of heightened volatility there. But when you look at Monday, Tuesday, I mean, there's nothing really at a 12% implied vol. It's telling you that the market really doesn't agree with me.
They're saying past events do not influence future
results. Yes.
But yeah, I mean, I totally agree. I think the fact that there's only a 12-point difference in the expected move for tomorrow versus Monday is kind of odd. Especially, like you said, we've seen some craziness over the weekends, the last couple of weeks, and that has resulted in big market moves on Monday. So, yeah, I think maybe some people are, like you said, sticking on the sidelines, not really participating, at least today. We'll see.
Tom is on his way to Vegas, big time Blake Shelton fan.
Yeah.
So he's going to see him live. We have seen in past times when Tom leaves and Tom is on an airplane, we do tend to have some volatility come into the markets. You are also gone tomorrow. We internally use you as a proxy for when something will break on our side, whether it's a stream issue, a YouTube issue, an upload issue, the power is out. Does that spook you that both of you happen to be out of the city tomorrow?
I think it certainly adds to the underlying implied volatility of the Tasty Nation. But at the same time, I think we're kind of waiting and seeing what happens in the market. Amazon reporting earnings, I think, is really the big focal point for after the close today. Yeah, it's hard to see where it could go given a 13-point expected move, but I don't know. They're doing a lot of stuff, and they've swiftly recovered from the lows back in August. The stock is up, almost 40% from the lows from August. So craziness.
Some of the big movers and stories of the day. You had a couple earnings after the close yesterday. ARM down 7 and change here. You also had Qualcomm down 7 and change. Of course, we had AMD the other day. It has been just absolutely murdered over the last couple months, if not year. It's basically been only NVIDIA, and even since the DeepSeek kind of sell-off here, it's been relatively strong. I think we've had $3 or $4 up moves over the past couple days. Do you think any of those chip names have a little bit of a catch-up? If you look at SMH, it's gone basically nowhere. It includes all those stocks. Have you been dabbling in any of those, buying any of those dips?
I did buy a dip in NVIDIA today.
Okay, I like that.
So NVIDIA was one of the trades I got into today. I bought the April 70-day call at the 130 strike. So getting further than the upcoming earnings announcement, getting out of that perceived volatility crush as much as I can. And then I sold the 140 call against it 15 days to go. I got that whole package on for $10.20. So basically the width of the diagonal spread there. But the Fed monthly cycle is right before earnings, so I have the ability to roll out a week and pick up a ton of premium. The difference right now between the 140 strike with 15 days to go and 22 days to go is almost $500. So huge, $300. Huge premium though, nonetheless, to just roll 1 week out. And then if that fails, I can roll to March and still have that April-March diagonal spread on. So I like the way that this sets up, especially leading into the earnings announcement 20 days from now. So yeah, that was the dippy do that I bought today after finally catching a little bottom here, seeing 4 days of green in a row.
Until proven otherwise.
Until proven otherwise, that is the
you'd say.
phrase. Yeah.
One other stock that's been catching my eye, Meta. I think it's had like 30 straight green bars. I mean, this is a lot. What do we go back to? Middle of January here when it traded at 600 into earnings. You had a tiny bit of a pullback in the overnight session, and then it was off to the races again. Basically at highs here, the 52-week high, 718 and change. We're just 10 points off that. It's been super strong. Are you a Zuck fan now? I know we've gone back and forth. Are you on the Zuck train?
I mean, his glow up is really impressive, but yeah, I mean they're leading the way. I think it's interesting to see what stocks went the opposite direction during the DeepSeek release or news that came out. So if you just look at January 27th, that was when NVIDIA had that historic sell-off. Meta on January 27th rallied the opposite way, and like you said, it hasn't really looked back. So sure, I could see Meta continuing higher. It's just crazy to kind of see the velocity of these moves to the upside. But yeah.
Couple other big movers in the market. I like to look at this S&P 100 list. To the upside, you have Philip Morris, which had earnings after the close yesterday. It's up $13 and change, about 10%. Long live the Zins. Hopefully the Zin shortage is over soon. Eli Lilly having a nice move higher. It looked like it was going to open lower this morning, up $27 and change. I mean, you got Goldman Sachs on this list, McDonald's, FedEx, NVIDIA. On the downside, some of the bigger movers, you got Ford, which had earnings after the close yesterday. I think this has to be multi-year lows. It's definitely a 52-week low today at $9 and change. CRM in there, you have Qualcomm, Honeywell, IBM giving it up a little bit, down $10 after its earnings move. None of those really stick out to me, other than the move in CRM, I guess, which has been relatively strong after earnings, or at least has given up the earnings move there in the last couple sessions.
Yeah, I think a lot of these stocks are participating in what we're seeing in the general market today, just kind of chopping. If you look at the S&P 100 list, there's only a handful that are over 5%. There's actually only 2 in that list that are over 5%. Everything is within 4, 3, 2, 1%. And then to the upside, there's only one stock in that list today that's over 5%. That's Philip Morris. So yeah, I think we're seeing just a general chop, kind of that expected range chop today. But still a lot of implied volatility for tomorrow. So the week is not over, to say the least.
Another stock that I've been getting emails and chats about, Palantir. I mean, this stock has gone absolutely banana land to the upside. It's trading at 109.88, the high of the session. I have some short delta there, but it seems like all of the risk is priced into the upside. Even if you look at the 43-day expiration, which is the March monthly, you go 20 points out of the money. We'll call it the 90 strike on the downside. We go to the upside, the 130 strike. You've got about $1.50 in call skew relative to that put. So the put's trading at $2. The call is almost at $4, right? It's at $3.50 and change. Massive skew to the upside. Does that lean you toward maybe a little bit of a nibble on the short side after what has been, let's call it a 400% run in a year? You're looking for some short delta?
If you're looking for some short delta, yeah, this is one of the top candidates for sure. Especially because when you think of, the magnitude of the move to the upside, how quickly that has come to fruition. Like, the stock has almost doubled this year already. This was trading at $60 in the beginning of 2025. And that was after selling off from 85 all the way down to 65. 63.40 was the low on January 13th. So not even a month ago, the stock was trading for 50% of what it's trading for now. So yes, that tells you that the move has been crazy to the upside. If you were bullish, you got paid. But you could see this thing come down swiftly, especially if you consider shorts coming in, longs covering, taking some profits. You could easily see this thing reverse. Even if it's not for the long term, you could see it reverse in the short term, considering the continuation of this move today. It's had a 10-point range today, and we haven't really had anything happen in here.
Yeah, 64% implied volatility. So
yeah,
definitely some juicy premium there. A little bit high on the buying power requirement, though.
Yeah.
E-mini sitting here 4 points off the 6,100 mark. We're just about 1% from new highs, maybe a little bit over that. It's been a swift rally here from the lows. Got into we had a 5 handle to start this week, and it looked like it was going to be a 5,800 handle at one point. Crazy. I do want to mention Fast Market.
Yes.
tastylive.com/fast market. I know Kai's been listening to this whole time and waiting for us to put that up there.
Yeah.
tastylive.com fast market. Put your trades in. You'll have the pleasure, the honor, and the pleasure of having Liz and Jenny take your trades this time. So you get a new little spin on it.
Yeah.
Versus the Tom and Tony show. So it should be good.
And I gotta say, the bat is always welcoming of the trades. Tom can be a little rough around the edges, for lack of better terms. But if you're looking for a feel-good Friday morning, I guarantee you, Liz and Jenny will take that trade. They will place it. They will love it.
Yes.
They will nourish it. They're not going to get too much negativity out of the Liz and Jenny.
The real talent of Tasty Trade.
Yes.
Of Tasty Live, I'm sorry. And they will be hosting the entire session tomorrow morning, which will be awesome. And I will have a special guest, my very own, the Big Bat, my dad, Tony the Bat Batista, will be on the show with me in place of Mike, who will be gallivanting on the mountains, hopefully with some fresh pow.
That is true.
Also, if you want to get our digital collectibles, you have gyms coming up in the next 2 weeks here on February 22nd. You can still sign up for that. We already had the live event for that. And then Mike and I and Katie have been working on our slides and our presentation for our March event. The digital collectible will be coming out on March 29th. All you got to do is sign up. It's free. You create your little wallet. You get the digital collectible. You can have it, watch it whenever you want. It's great.
Yeah.
It's going to be good content. Both these are good content.
Very good content. Multiple trade anatomies, multiple ways to think about managing positions. It's really all about managing positions. It's a step past what Dr. Jim brought to the table in terms of laying out the beginner stuff in an amazing way. We're taking that one step further to give you those stair steps of how you can move on from 1 to 100 in terms of trading options.
E-minis chugging along. We are now at that pin, of course, at 6,100 here, up 16 and change. Let's see if we're getting some movement from Amazon. Amazon is moving a little bit higher, up $1 and change. Apple basically unchanged on the session. Is Google catching a bid finally? Nope, it's going nowhere. It's really Nvidia and Amazon and Meta, of course, taking the cake. Tesla down $6 and change. Does this spook you at all? The low of the year. Are you off the Elon bandwagon?
I don't know. I mean, you saw the rally after the election results came in, and we've seen kind of the air taken out of that one, but I don't think it's done yet. I think the volatility in Tesla is going to continue, the realized volatility in Tesla, I should say. What's kind of shocking to me, though, is Palantir has 112 million shares traded today.
It's just a flip of the cards all day long.
It's insane. It's almost 4 times as much as Amazon, who has on a very important earnings announcement after the close.
Yes.
Where you usually see plenty of volume or peak liquidity around an earnings announcement. So just wild to see that.
Yes, pretty crazy. Seeing a little bit of craziness in the currency markets as well. In the platform, you can pull up DXY, which is just the basket of currencies versus the US dollar. If you put the $ DXY in there, this just charts the dollar strength. It's been obviously very, very strong throughout the last 6 months or so. Some of these currencies, although they have 5 or 6, 7% implied volatilities, they have certainly been moving. You got the euro a little bit lower, as well as the Canadian dollar, which was we've been trading MCD that one's had some big movement over the last couple sessions. Another story for the weekend tariff announcements. If you can guess which country is getting the tariff, it's probably a good trade to put on in the next 48 hours.
True. Yeah. The volatility is real. It's been a wild couple of weeks, but that makes for good trading environments for both bulls and bears.
Love it.
Or neutral traders too. But yeah, real quick recap of what we did today. Got filled on that NVIDIA call diagonal spread, sold a put in Southwest Airlines, followed you in your Apple call diagonal spread, long April, short March. But yeah, just keeping things small, keeping things defined risk, making sure that we can withstand any and all variance that comes our way. That's the name of the game here.
Yes. E-minis, 6,100. We got the NASDAQ at up 76. You've got the Dow and the Russell still lagging the group. Oil sitting at $70 on the dot, or just a skosh above that. You got any oil position?
I do.
Thinking about one?
No, I smashed the buy button yesterday. Bought the micro crude contract. So again, keeping it small, making sure we have the ability to withstand that variance. But I bought it at 71.
We got the boys.
I see them.
I didn't know they came in to crash the party. Gentlemen, how are you? Good morning. Good afternoon, I should say. There he is.
Oh, hi.
How we doing?
Hello, boys.
Hello.
First things first, what's the Super Bowl pick? I saw your segment.
Anybody but the Chiefs or the Eagles.
Chiefs, Eagles.
All right, we got to go one by
not
one.
the Eagles. And not the Chiefs.
Perfect.
That's the consensus, Dylan, though. That's, everybody's rooting for that.
I think that's pretty much what everybody in America wants, is a non-Chiefs, non-Eagles Super Bowl.
Yes.
That is actually exactly
you have to be the bet is Chiefs and the under. That's the sad Super Bowl bet.
Yeah.
Is what it seems like.
That's like the biggest
the last time
bummer.
the Eagles won, stocks had their worst year since 2008. Are you really sure you want the Eagles to win?
He's saying Chiefs and the under.
Yeah. And we talked about this earlier. The market's not pricing in the volatility risk of the new administration, but they should really be pricing in the Super Bowl result potential volatility from that as well.
Like if the Eagles win Monday morning, we're buying 0 DTE, 3,000 S&P puts. Great. Like that's the plan.
Every day for the rest of the year, and we're all going to retire and move to Mars.
That'd be great.
Perfect.
Beautiful.
Love it.
Chris, do we blast off to new highs after Amazon? I know what Ilya's going to tell me. Ilya's going to say the downside. I think Dylan's going to be in the middle. Chris,
my knives are sharp.
What do you think, Chris? What's our move on Amazon? You got E-minis at the high of the session, 6108.
If we look at how the other semiconductor companies have been performing, how semiconductors have been performing, not well. Then we go that a step further and we go into the cloud providers, and they've been struggling a little bit here. Google didn't have good results the other day. Perhaps to balance that out, strong consumption. I think about the GDP report we just had and how Visa and MasterCard earnings were much stronger after that GDP report. Consumers are buying stuff still. So maybe net, Amazon has good earnings, but the AWS picture could cloud it. So actually, I'm sideways to lower on Amazon earnings.
What's your take, Ilya?
I mean, I don't really get stuck at this point on one company's earnings or another. They don't seem to be having a tremendous impact on the markets more generally. The individual stocks have popped this way or that, and it's been kind of granular. But when you look at the indexes, I mean, where has the NASDAQ gone basically since early December? Nowhere. Where has the S&P gone? Nowhere. Yet we've had all of these things that we're being told to say they don't matter. And in fairness, on the downside, they haven't mattered either. But it's not like we haven't sort of powered to new highs because we've shrugged them all off. So we get the DeepSeek thing. Everybody goes, don't worry, this is not a thing. We get the tariffs thing. It's there. It's gone. Oh, this is not a thing. Okay, so if we have all this optimism, where's the new highs?
So I think we're waiting to really make up our mind, but I'm not nearly as chipper, because if this market was really shrugging off bad news, it'd be shrugging it off, but it's not.
This has been a spot where we've kind of started the weakness. 6,100. I think we've hit this spot 10 times over the last 2 or 3 months. So I feel you on that. Dylan,
we're basically right in the middle.
Dylan, we got no, we're stopping the shipments in of Temu and all that stuff. How does Amazon go down from here?
Amazon goes up from here. Bezos is the man. It is the most dominant of all the tech platforms. I find the mealy-mouthed, middling positioning to be offensive to my sensibilities. If you don't love Amazon, you're not an American. And I think that everybody here would like to think of themselves as an American at the end of the day. And even if they're born in Russia.
I love Amazon with my Prime subscription, but not with my investment.
There you go. Okay,
they're actually my doctor now. They purchased my doctor's office.
Yeah, they purchased mine too, actually.
They might purchase the Chicago Bears.
Yeah.
Rest in peace, Mom.
Amazon is. Come on, Amazon is. I understand expectations. I understand Temu. I understand all the things. The numbers will be good. The guidance will be better. The stock will go higher.
The boxes I have to break down in my garage later speak to my affinity and to their spread,
and to their numbers, So I feel very good about Amazon. In fact, of all of them, other than maybe Meta, is sort of probably my favorite of the big boys. But Amazon will probably be my second favorite of that whole batch.
Meta hasn't had a downtick for what seems like a month and a half-ish here, sitting at 712.
Meta is the data overlord.
Well, you would have thought Google would have been the data overlord too. I mean,
we would have thought that, but they're not run by an evil Zuckerberg.
The glow-up evil Zuckerberg. It's all an illusion.
This guy is amazing. Yeah.
All of it. Well, E-mini S&P 500 futures sitting at 6105, up 18, near the high of the session. Amazon, the last of the big boys to report earnings until NVIDIA. Mikey, up, down, sideways, Amazon.
I got to side with Dylan here. It's up and to the right forever and ever.
I'm taking that as well. Gentlemen, thank you for joining us. We'll see you when? Tomorrow?
Wednesday.
Illy and I
You're
will be
back
doing
Wednesday?
last call tomorrow. Yeah.
Yeah. I'm gone. I'm peacing out until we know who wins the Super Bowl, till we know how the market reacts, et cetera, et cetera.
And there's the last call. E-mini's up 20. We're going to take a quick little 90-second break, come back with these three boys for overtime. You're listening to Tasty Live.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Amazon earnings are out, and they're not that good. It is Thursday, February 6th, 2025. This is Overtime. I'm your host, Chris Vecchio in New York, Dylan Radigan in Milan, Ilya Spivak in San Francisco, to take you through this hour as we wrap up the trading day. If you're on YouTube, come over to the platform. Tell us what you think of these Amazon earnings, or rather, trade the Amazon earnings on the platform. Come over to the chat and tell us what you think of them and how they're trading right now. Gentlemen, 227 here in the after hours. Just a quick brief update on that Amazon. Earnings per share are much better than expected at 186 versus 150. The net sales, 187.79 billion versus an estimate of 187.32 billion. However, Amazon Web Service net sales, 28.79 billion versus an estimated 28.82 billion, and they are guiding for their first quarter net sales in the range of 151 to 155.5, whereas the street estimate ahead of time was 158.64 billion. So a miss on guidance here. The stock is down after hours. The NASDAQ futures take a hit. The S&P 500 futures ultimately take a hit, which were trading up near 6105 or so before the release. Net, though, when we take a step back and we look at the markets here today, what kind of day was this today? We really didn't do anything.
Nothing.
A market that grinds sideways in the S&P. The NASDAQ's a touch warmer. Dow, Russell, a touch softer. Yields are twisting across the curve as the ramifications, perhaps, of what Scott Bessent, the Treasury Secretary, said regarding the Trump administration's targeting, for lack of a better phrase, of the 10-year yield. We see that gold and silver have a day where they pull back and then rally by the end of the session. Oil continues to break down, and in the world of currencies, did the Bank of England just make a policy mistake? The British pound down today, but off the lows. Guys, let's go right into this because this is an abbreviated edition of Overtime here at the bottom of the hour. The prediction trade is back this Thursday. Myself, Jeff Joseph, sitting down with John Rothschild. He wrote the book on how to handicap sports betting, particularly for football. It was a very interesting conversation. If you're interested in the Super Bowl, go check it out. It's going to be here right after Overtime at 4:30 Eastern, 3:30 Central. Intro done. Ilya, it's the day before non-farm payrolls. All was quiet in the house, even the mouse. What do we take out of today's equity index? Lack of anything.
I think what we take out is that economic data matters once again, because when we got those ISM numbers yesterday and those PMI numbers, that's where things got moving. And the important thing here from a Fed perspective is that Fed policy expectations have done absolutely nothing for weeks. That's through the DeepSeek fiasco, through the tariffs that were here and then not here, through the Fed policy announcement itself. Fed policy expectations, as the markets see them, baked into Fed funds futures, they've been stable. And that tells us the markets are speculating perhaps on something else. The curve has also flattened significantly as the front end has held, because those expectations have held, but the long end has significantly moved, especially, of course, yesterday on those ISM and PMI numbers, which were much, much weaker and, of course, very worrying in an environment where the U.S. service sector is the only thing powering the global economy. Not just the U.S. economy, the global economy. And when the news is that you've hit a 12-month low on U.S. growth and it's the cooling in the service sector doing it, and new orders are down, and all of the things that you might expect at the beginning of a downturn, and that's the driver, well, you're probably going to expect lower yields downwind, which is exactly what we've seen in the bond market at the longer end without the front end moving. So this makes for a really interesting setup for non-farm payrolls. It ultimately doesn't need to do a whole lot but unlock the markets to keep doing what they're doing. The PMI numbers told us that employment actually was relatively stable. That wasn't why the aggregates were low. But we also know that employment is relatively lagging. When new orders are down, but employment is stable, you sort of look downwind and go, well, if new orders are right, then employment will catch up on the downside. That's where the pain comes last. So when you look at these numbers, you sort of wonder what the markets will take of them. If they come out relatively in line with expectations, which has been generally the tendency for U.S. economic data recently, you sort of look at it and say, all right, well, if the PMIs are right, then there is no impetus here for the Fed to change course near term, but downwind, you probably still have economic weakness as a building risk. And that ends up being higher bonds and maybe stocks that start to trade differently than they have been. They've been so sensitive to Fed policy odds. Maybe now they actually start to trade recession risk.
Dylan, Amazon misses a little bit, obviously a bit of a disappointment, but the longer term picture here is of a company that remains at the center point or close to the focal point of this next stage AI revolution. With Amazon trading in around 230 right now, it's bouncing back a little bit here after hours. Is this a stock, if you see a discount here, would you be willing to buy in at this point? For
sure. Absolutely. Absolutely. But I say that because I don't own the stock. I mean, I own Meta as a stock for but not from a trading perspective. Like I own Meta to own it.
Sure.
And I would love to own Amazon to own it. And so I would look at any sort of meaningful price declines as a way to own it, a moment to own it. For I think all sort of blatantly obvious reasons.
If only to contextualize, what Amazon's doing here, there was a company that had its earnings yesterday, rather this morning, that we've mentioned as part of our, phase 2 AI basket that we've been watching, IQVIA Holdings. They are a medical company that does clinical trials and uses AI to help speed up diagnoses. They had a very good earnings report today where the share price hit a high of 220. This is the kind of company that's going to rely on Amazon Web Services to continue to scale their business up as they offer those application level AI agentics to their consumers, if it's business to business or in this case, patients. They're already seeing some results and a bottoming here, a downtrend that's breaking. If companies like IQV are starting to see and realize the potential of AI in their own business, then weakness that we see in AWS. Is that really something to be too worried about? I personally don't think so. I will be looking to buy the dip on Amazon tomorrow morning. I'd like to see where we settle out.
You're doing that as an investment, though, or you're doing that as a trade?
Oh, as a trade. I mean, look, if we couldn't get knocked down by DeepSeek and we rebounded right away from DeepSeek and we had the trade war and we rebound right away from the trade war headlines, the reality is those are the big macro wins. And in the short term is what matters right now, then we still have a clear path higher for stocks, at least as far as I'm concerned. But I am beginning to get worried, not because I think the economy is sliding, not because I think that the economy is going to fall off into a recession anytime soon, but it is worth thinking about how some of these policies could actually impact growth. We were talking about this briefly on Futures Power Hour today, thinking about the non-farm payrolls report. Most of the expansion in the U.S. labor market over the past few years has been because of an influx of foreign-born workers. And those foreign-born workers, they haven't been displacing Americans. In fact, the natural-born population workforce unemployment rate is lower than the foreign workforce unemployment rate right now. But the fact is that we've seen millions of people come in over the past few years. We're now ramping up deportations. One observation that a number of economists have made, including those at the Federal Reserve, has been that absent the flow of immigration into this country, you may actually see net zero jobs growth altogether. The companies or the industries that have been, feigning the most concern over a potential shift in immigration policy have been those in hospitality, food sector, right? Not a surprise there. In agriculture. I bring all that up to say that if we go into a world where we take away labor market growth, and then all of a sudden you're looking at all this aggregate demand taken out of the economy, you're probably facing down a bit of an economic slowdown moving forward, regardless of if the tariffs are put into place here, Ilya. So I'm not ready to lay out any bear trades just yet. I'd like to see something like XRT, for example. Goldman Sachs research has put out studies showing that if you're trying to prepare for a recession, XRT typically is the most sensitive sector ETF to articulate that point of view. And it's not like this is screaming to the downside here. It's a weekday up by 0.19%, but generally speaking, this is a chart that has been moving bottom left to top right over the past few years. And so arbitrarily trying to say like this is the top, we need something more right now. But as the policy begins to crystallize and you see what these shifts could mean, there is a certain amount of math that needs to make this work. If we cut government spending, we reduce the size of the workforce, where does the actual GDP growth come from? And if that GDP growth isn't there, what do corporate earnings look like? What's the Fed path look like? Yada, yada, yada. So not at that threshold yet. Maybe soon. Tomorrow's non-farm payrolls, though, Ilya, it is economic data. It does matter. 170K expected versus the prior reading, obviously north of, I think it was 256.
256, that's right.
The unemployment rate is due to stay on hold at 4.1%. Wages doing at 3.8% year over year from 3.9. What makes the state of the labor market so remarkable here is that we don't really need that many jobs in order to keep the unemployment rate on a path to stay below 4.5% by the end of this year. According to the Atlanta Fed jobs calculator, we need 57.1 thousand jobs per month through 2025 to achieve that. So my question to you is, at 170K, is that the kind of number that produces the economy's overheating type of reaction, or is that the Goldilocks, not too hot, not too cold kind of result?
I don't think that a reading too far from expectations looks likely based on the way that economic data has evolved, nor do I think that's the market moving component here. I don't think the markets are going to meaningfully react to the substance of the number, because that would imply that near-term Fed policy expectations are in flux. And all the evidence seems to suggest that they're not. I mean, look at the difference between the way the 2-year has behaved really since, let's call it early November, late November, give or take, of last year. It's gone nowhere. It's been in a tight range between about the low 102s and the low 103s. Nothing's going on. The markets are not actively speculating on how much the Fed is going to move this year. They're happily sitting at a slightly more hawkish reading than the Fed for next year, and nothing's really going anywhere because the Fed is loudly saying, we are not in a hurry. This is a year for us to watch data for the most part. We'll tinker here and there a little. So the markets are, I don't think, going to be that reactive to the substance of the number. I think they're going to, unless, of course, it's some wild surprise. I think what the numbers are going to be catalyzing is the intent that markets have, but for the presence of this event risk. So once the event risk is out of the way and the markets don't have their baseline disrupted, I think they go on. And
I mean, isn't the risk at this point, Ilya, that the number's much weaker, when you consider the other sort of, mild indications of slowness?
Yeah.
If the labor market shows some meaningful weakness, would that not validate some of the other data earlier this week and maybe escalate concerns? I just feel like the risk in this jobs number is that it's a bad number.
Yes, I think this is actually an environment with Fed policy expectations, at least in the near term, as anchored as they are, and yields starting to really crack lower. I think especially at the long end, of course, I think the key thing here might be that, once again, bad is bad on economic data and good is good.
That's what I was thinking. Mm-hmm.
Which is different than what we'd seen, let's say, over the past several months, where it was like, okay, more cuts, good, fewer cuts, bad. The reflation idea was starting to kind of invert on the markets. It didn't really bother them, to Chris's point, made over and over, which I agree with. From mid-September, to basically the beginning of December, the markets didn't really care that Fed rate cuts were falling out of the outlook. But they started to care in December as you started to approach that line in the sand at only one cut. And by mid-January, when you got to one cut being baked in, that's when the markets went, whoa, okay, hold on, wait a second. No, bad. And there you start to see things turn. So the markets are seemingly benchmarked at that line now. Now it looks like we're betting on longer-term rates. And after yesterday's data, longer-term rates very much told us we're expecting cheaper credit downwind. That's an expectation of some degree of weakness. And given that it happened with fairly shocking service sector data, it seems like bad is bad, good is good. We're trading downwind recession risk, not the near-term Fed at this point.
Dylan, this weekend, obviously, we may be facing some more, weekend gap risk. This is our last show of the week, so we're not going to be able to talk tomorrow. I was talking with Sosnoff about this morning. He actually thinks that the odds of a significant gap lower this weekend for the third weekend in a row would be quite low, if only because we're going through this desensitization to some of the, daily tweeting and news conferences, but also because Trump's going to be tied up at the Super Bowl on Sunday. He's the first president, I think, to actually go to a Super Bowl. So it's going to be a little bit of a scene. So maybe he's not going to be talking about tariffs before the market opens up. When you think about just general risk, is there another environment that we've been in like this where we almost have to throw away the entire framework that we operated in for the past few years? Or is that just what 2016 was?
Yeah, I actually think economic data is more important. I think that the Trump show is less relevant than anybody thinks. I don't think that the Trump show is actually that relevant. Trump is an entertainer. And so he drives great joy from wildly provocative daily commentary, very little of which will he ever actually implement. And so I actually think that the economic data, I think the risk is that people become excessively preoccupied with the president of the United States and the president's, reality show, and to the detriment of, Amazon earnings, the jobs number, and ISM numbers. So I actually think that, but I also think that the market is has pretty quickly adjusted to that.
Ilya, we can go around the markets here before we wrap this up in about 10 minutes time. The biggest place of interest outside of what was happening in stocks and bonds today, probably in the metals. Gold prices take a little bit of a step back. They dunk down into the 2850s before rebounding. 2876.70 here at the close. After hours up another few bucks, $3 there. Silver, same type of price action. You had a steep pullback early in the day. We recover back above that 1 week moving average. And copper prices, they traded up, they traded down, and ultimately they settle higher here. What's your read on the metals market as we go into non-farm payrolls and this coming weekend? Is $2,900 an ounce the new high? Is that the new ceiling for gold?
I certainly hope not, but I do hope that we get more of a pullback. I kind of missed the boat on getting long this when the opportunity presented itself. The breakout happened actually earlier in spot gold than it did in the front month futures contract. And typically I look at spot as this kind of an early indicator because you oftentimes get the true impetus of the price action before the futures reflected for sort of carry cost calculation reasons and sort of the slight differences in the way futures are set up in the pricing than is the spot. So you can sometimes see the spot front run the futures in terms of technical confirmation this way or that. And so I'm kind of hoping for a number out of NFP that's about in line with expectations and that gives a little bit of relief perhaps in doing that on yields. Yields come back a little bit to sort of suggest the Fed doesn't need to be in a hurry, and sort of takes a little bit of that event risk out of the equation, and that lets gold come back in some, because I think we're looking at a bullish breakout, and the bullish breakout probably targets somewhere around the 3,000 mark as its next major inflection point. I'd just like to be let in at a better value.
Dylan, I know that you haven't come into the cornering of the silver market with your single futures contract or call anytime recently.
I'm ready. I got a hair trigger. I'm ready. Given the
locked and loaded.
You know, I saw a comment a few days ago.
I keep the account funded and liquid, baby. I'm ready to move.
I saw a good comment a few days ago, like, are you making fun of Radigan when you tell him he's going to corner the silver market with one call? It's like, no, I'm saying that as a legal disclaimer so that no one sends this to the CFTC and says the overtime guys are trying to corner the silver market with their one
OT Hunt LLC is trying to corner that silver market again
with a single futures contract.
It just goes to show that how big my bark is. If I just move one contract, it ripples through the entire global silver market. Yeah.
If that's the case, can you maybe please jump in? Because I have these 33 and a half calls that I'd really like to see.
All right. I'll do it first thing in the morning. First thing in the morning.
That's a mensch, Ilya.
I'm in. I'm ready. I'm good for it. I'm feeling easy.
Ilya, you think about gold
I'll
and
take
silver.
one over coffee tomorrow.
If you're in New York, and by the way, Ilya's going to be in New York in mid-July, so if you want to arrange a trip out of here, the three of us do a show together in person.
Yeah. We can do it.
Make it happen. Metals, it feels like, are following the opposite of yields to a certain extent, right? Did you notice today that yields and oil were kind of trading in lockstep together? As oil has a bigger pullback, bond yields are able to kind of back off their gains for the day. Yeah. The correlation between bonds and oil remains quite strong. If you're looking at a 5-day or 1 month, it's been oscillating, but not perfect, but close to near negative perfect or negative correlation, right? Mm-hmm. Bouncing between like negative 0.85 and negative 0.96. So is that really what we're on the watch out for here, Ilya? Like, is the bond yield story just an oil story that we're all thinking about tariffs and Trump and the Fed? And really, it's just that simple. It's an oil trade.
Yeah, but why the oil trade? So I think when you look at the bonds and the oil trade, they're not so much having a relationship in my mind where one affects the other. It's that they're both reflecting the same thing. And that looks like an expectation of weaker demand. And that expectation of weaker demand is ultimately a business cycle story. So I think in both of these, what you're seeing is the return of, wait a minute, is the economy going to turn? Because again, last year from May through December, the story is very simple. 58% of global GDP is three economies: the Eurozone, China, and the US. Of those three, only one had strong, positively trending growth, and that was the US. The Eurozone and China both decelerated at that same period of time. Global growth stands on one leg. That's it. You kick out that leg, there's nothing else. There's no safety net. And so when this is why I make such a big deal out of these PMI numbers. This is how these things start. The PMIs tend to show them first, especially the S&P Global PMIs, which have been much better the past several months than ISM. ISM's kind of jumped around a little, but this time they're in agreement. They're showing exactly the same thing. And the problem with what they're showing is that it's centered on the U.S. service sector, the one indispensable thing you can't lose.
The one thing that we can't lose is the U.S. service sector. The U.S. consumer is still in decent enough shape. Still seeing a rise in auto loan delinquencies, seeing a rise in credit card delinquencies. Broadly speaking, though, people are holding it together, at least in the fourth quarter, as we saw for those Amazon earning results. They see a good deal of sales, but it's not necessarily coming from the AWS side. For those that missed it, we did read this off at the top of the hour to start the show, but earnings per share 186 versus 149 expected for Amazon. Their revenue was 187.79 billion versus 187.30 billion expected. The AWS revenues were just a touch softer, and their guidance was weaker. They are expecting sales for the forthcoming quarter, the first quarter, to be between 151 billion and 155.5 billion. According to consensus forecasts afforded by Bloomberg News, we were looking for 158.5 billion. So some weakness. We hit a low of 221.77 here. We have a share price back to 232 after hours. The S&P and the NASDAQ are holding up, right? This is the highest closing hourly candle that we've seen in the NASDAQ this entire month so far, which we're only 6 days in, so I don't know if that's impressive. Tomorrow morning, Ilya, NFP game plan. Last time, it was a good number. I went out to go get car tires, and I said, good number. I'm going to go pay for these car tires by buying some zero DTE out of the money calls. And then the market didn't treat good news as good news. Is tomorrow a day where if the market sells off on a good headline figure, I can go and pay for those new tires and then the losses from my previous trade?
I think you have to be really careful with essentially interpreting whatever happens in the price action after NFP as related to the substance of NFP versus as related to the passing of NFP and in the clearing of event risk out of the market's way. I don't think the substance is going to matter very much unless you really deviate dramatically. I think what the markets want here ultimately, and what probably helps them, if you want to talk about sort of uplifting risk sentiment, is a mildly weaker number. Because I think what the markets want is maybe some extra hope for lower yields and a final kind of push for Fed policy expectations now for next year, because this year is basically dead in the water at this point. If you don't get that, I think the worst of all possible outcomes for markets is something in line with expectations, because that just defaults them to where they were yesterday, and that's probably a risk-off conclusion. If you get a strong number, I think you're probably in good shape. I think the markets are going to cheer that.
Dylan, we're not going to see you until Monday. Do you have any final closing thoughts as we wind up this week on overtime?
I'm a little nervous about a week's jobs number, and I'm a little nervous about a weak economy. And I'm not that I don't know anything. I'm just saying I'm a little bit, I think it's one thing to tolerate a wild president with a strong economy, and it's a very different thing to deal with a wild president with a weak economy. So I'm a little nervous for evidence of weakness, just because I think it'll be much more dangerous, more risky than we want to deal with. So hopefully we'll get a strong labor market.
With that, overtime is out of time for this Thursday, February 6, 2025. We'll be back on Monday, same time, same place, as always, right after Last Call, 4 p.m. Eastern, 3 Central. Ilya and I will be back tomorrow for Last Call. We're hosting that, so be sure to check that out. Of course, after this, because it's an abbreviated version, the prediction trade is coming up next. Myself and Jeff Joseph, we sit down with John Rothschild, a sports handicapper, wrote the book on it, literally. He's working on his third one right now. Let's talk about the Super Bowl. So for Ilya Spivak and Dylan Radigan, I've been Chris Vecchio. Good luck trading. See you after the break.
Well, that takes us to the big games. Chris, what are we looking at here?
Eagles +2. Is this a good line for us?
I think
right
it's
now?
down to 1.5 now. Is that right?
Oh, it shifted over the last 2 hours.
I think the line's wrong.
The line is wrong.
All you timeless children with your predictions and flashbacks, trying to get ahead. What makes you think I can see you? What makes you think I believe you? Dreams, cyberpunk. Have you heard the tale? You said that I'm wasting shot from the past. All the dreams were flying, all the thoughts are flying. You heard something fast.
Welcome to the Prediction Trade. I'm your host, Chris Vecchio. I'm with my co-host, Jeff Joseph. We're back for a brand new edition, a brand new format of the Prediction Trade here in 2025. And we're getting things started with our Super Bowl edition. Jeff, it's good to see you again.
It's good to see you, Chris. It's been a long time since the election. It's good to be back in the saddle with you.
It is good to be back. And before the Super Bowl, we have a very special guest coming in today. But before we get there, let's talk about why we're talking about this particular topic. We see here that sports betting is now legal in 39 states and the District of Columbia. Over the past year, 20% of Americans have placed a sports bet, up from about 12% a year ago. People who are betting on sports are doing it not just for fun. They're trying to make money. 65% of sports bettors say that they're doing it, in fact, to make some money. And among sports bettors, the Super Bowl is the attraction of attractions, Jeff. 79% of sports bettors, according to a recent NerdWallet survey, are saying that they will be betting on the Super Bowl. I'm a Jets fan. You can probably see that little sad, pathetic helmet in the corner here. Quite frankly, I don't really care who wins. Do you have a bet on this year's Super Bowl?
I'll definitely have a bet on this year's Super Bowl. I'm a hack bettor. You know, I'm an avid prediction market wager in the same way that you are a avid options trader. When it comes to sports, for me, it's more entertainment. I've always appreciated the science and the skill of proper sports wagering. To answer your question, I know there's a lot of Kansas City fatigue out there. I would fall into that camp. Since I have no real dog in this hunt, I don't have to check any bias going into this, and that's why I'm really interested in listening to what our guest has to say.
Sure, and before we get to our guest, John Rothschild, who is a legend within the industry, we'll talk a little bit about the Super Bowl. Super Bowl 59 is going to be held in New Orleans in a few days' time. The Chiefs, who are 15-2, the AFC champions, are taking on the Philadelphia Eagles, the NFC champions, who went 14-3. Chiefs have a three-peat on the line. This is a dynasty in the making here, so there's a lot riding for Patrick Mahomes, Travis Kelce, among others, Andy Reid, of course, the head coach. But this would also be the second time that the Eagles would have won a championship in the past decade. It's a different team, though, Jeff, when the team won last time. Carson Wentz went down with an injury, so you have Nick Foles step up. He's the MVP of that game, and they beat the New England Patriots 41-33. Jeff, this is a really tough game for me to pick a winner, so I guess I have to be dispassionate when going into the betting odds here.
So what I asked our crack research team at Luckbox to do was to find somebody who's like the insider's insider from a handicapper standpoint, somebody who, you know, really kind of knows this game from the inside. And that's what we found in John Rothschild. He's an interesting guy. First of all, he wrote this book, this book right here, which I'll be referring to, Football Betting Made Easy. I've gone through it this past week, taking a good look at it. In fact, one of the things I like about what he says in his book, in this one chapter, Chapter 14 is angles that work best for the NFL. And he has 25 different plays. Things like when a double-digit favor covers in the first half, take the under in the second half. This has been hitting a little bit more than 65%. Favorites after a big loss cover 62% of the time. And what is so interesting about John when we found him and started investigating him is, unlike most of the charlatans out there in the betting world, he publishes his track record. He has for years. It's all on his website over at precisionhandicapping.com. We'll show his track record too. And he's the first to tell you that when it comes to gambling, you need only a 54% average to beat the house because of the vig and because of the way the numbers work. And he publishes his track record in football and horse races. Lifetime record on college and NFL football is 59% against the spread. So he has a auditable lifetime record. He's got a master's degree in statistics, studied behavioral finance and game theory. He's kind of our kind of guy, right? So with that, let's bring on John. I think he might be waiting in the wings out there. And well, welcome, John. It's good to have you on. We've enjoyed the time that we've spent getting to this point with you, and you've been gracious with your time. And what you have in common in your approach is how we approach the financial markets. It's a measured, risk-taking approach. It's not about gut instincts. It's all about the math and all about the numbers. So,
yeah, John, I really appreciate your time. And coming from a family where my brother has worked at FanDuel, now at SportsGrid, I don't get any picks. I don't get any information. So this is a delight. I get to brag to him that I got to speak to the great John Rothschild. So tell me, you've been in the industry for a long time now. In an era of advanced analytics and big data, what's one old school handicapping principle that you still swear by that may seem counterintuitive for modern bettors?
Everything is a compilation of lots of factors. Only thing I could think of is that football players are basically animate chess pieces. They have circadian rhythms, biological clocks. One thing you might want to look at is if a team plays 3 or 4 times away Instead of playing at home like we saw with the Washington Commanders, who I think won their 4th away game last week. After beating Detroit, pretty much didn't have a game left. They're a pretty good team. So travel is important.
John, we focus a lot on certain metrics over here at tastylive. We look at things like volatility, implied volatility, IVR. It's an important metric for us. Is there any significant market efficiency or metric that you've identified in football betting that's maybe part of your secret sauce, or you believe most handicappers are missing or don't value its utility as much as you do?
Yeah, and it's sort of also a way, it's called CLV, which is closing line value. We're just sort of judging how well we're usually doing. Getting good closing line value doesn't mean you're going to win your bet. Certainly gives you a little more confidence. And you want to basically beat the closing line. So, for example, maybe we got the Eagles at +3 and they go off at +1. We got 2 points of value. And there's a better chance that we're going to have better EV, better chance of making money. One thing I'd like to bring up is that there's a lot of buzzwords today. EV, people throw around a lot of things and they don't really know what they're talking about. Closing line value is wonderful. It's not as great later in the week because betting limits open up. Maybe you could bet $10,000 on a Tuesday, $20,000 or $30,000 on a Friday. Your CLV may drop. You'd still like to see that you've got better value, but it's not quite as important later in the week.
If you have positive closing line value going into game day, does that give you an opportunity to increase that wager or no?
You can. It's up to you. It depends on so many factors. I wish I could tell you there was a magic formula. We do lots of research. I am basically what you would call a bottom-up guy. I figure out what side I think I'm going to like. I process information, and then I have a team that go out and place the bets. That's their job.
All right, and you are paid a percentage of your wins, basically. You operate, when you described your business model to me, yeah, it's pretty much like a hedge fund manager. You're taking a percentage of profits essentially for the advice and counsel. Yes.
In what scenario do your gut instincts ever override your statistical analysis?
Never.
Never.
So again, the answer to your question, I don't have a gut stink on anything.
John, what's the most single dangerous psychological trap you see successful handicappers fall into once they start making constant money?
Believing that you're better than you are. I sweat every game like it's my last. If I have a winning streak, I'm always afraid it's going to end. If I have a losing streak, I don't know when my winning streak is going to start. Just don't think you're a better handicapper than you are. Things happen in a game. You know, we saw Buffalo last week. If Buffalo had converted one of their 2-point conversions, and all game scenarios change, they cover.
Is there a long-held handicapping belief you've had that you've recently reversed as a result of new information? Or
yeah, I would just say angles change constantly. You try to stay ahead of the market. They're absorbed by the market, and hopefully they're good for a few years. Then you've got to move on. So there's nothing that I hold that near and dear that I know is going to work.
You mentioned talking about college winning streaks when we were chatting. What's changed there? It's something that I know a lot of gamblers really believe in, college winning streaks. Is that something that you ascribe to?
That's such a great question. Okay, one of the best angles I ever had, which doesn't really work anymore, is that if a college football team, after let's say week 7 or week 8, depending on the scenario, loses its first game or gets taken out of a major playoff spot, or they think they're taken out, they don't cover the next game. The handicapper will say, my gosh, they're going to play harder the following week. That doesn't happen. Now, because that's sort of out there, it's eaten up by the market. And look, the college football and NFL football is maybe next to European soccer, the most efficient betting market out there. Your angles change. We've got to come up with new ones.
What's one type of bet you see sharp money consistently making that the average bettor thinks is crazy or not really worth their time? Walk me through some of the logic behind it.
So a lot of times I would say that might be a negative bet. So maybe if you're saying, I think a draft odd, a team is minus 1,000 or a player is minus 1,000, there's a pretty good reason why they might be. The betting public likes to see action. They like to see scoring. All of us, we remember big scores. We don't really remember too many big tackles. We can remember touchdown passes. We remember Barkley's run to start the game last 2 weeks ago.
You're saying that big negative numbers are something that sharp money focuses in on?
The idea is to make a profit. You're not going to get rich overnight. And a lot of our competition, they weren't just fired from NASA.
Yeah, I think that plays well into the behavioral finance equation of the loss theory. that essentially the people worry about losing more than they enjoy winning. So if you're looking at laying 480 to win 100, that doesn't reconcile, I think, with the average gambler. Doesn't want to risk 480 to win 100, regardless of what the probability might be. One of the things you've said in your book is that, it's often when you're seeing football or sports handicappers, they speak to a conviction level. This is a high conviction level wager. This is a low conviction level, or this is a 3-unit bet, not a 2 or 1 unit bet. And in your book, explicitly, you refer to something, and in fact, I'll read it right here. It says fixed dollar wagering. This goes against almost every analyst's recommendations. Most assign point values or units to individual bets. Not me. There are no locks or guarantees. One large losing bet can wipe out 3 winning ones. Bottom line is that you, for the most part, assign relatively equal amounts to all of your bets. It reminds us of a tasty philosophy, which is trade small and trade often. So you're not trying to make it all on one wager. You're trying to beat the odds over time, and you've done that with your 59% against the spread, win rate. But is that still the case? Do you treat pretty much every bet?
I mean, on any one weekend, take out the weekend coming up, you have 80 or 90 games to choose from. Pick those 10 games that you like the best. Maybe for some reason you like a game more than another one, and you might want to put a little bit more money on it. But I'm fine with fixed dollar wagering. Again, this isn't something, and everybody needs to know this out there. It's a learned process, and it's involved, and you can make a great living, but it's not going to happen overnight.
Well, and when you talk about things that you shouldn't do, betting among college students has really proliferated as a result of BetMGM and FanDuel and DraftKings apps, and they love parlays, where you clearly, and there should be no surprise to anyone who can do a little bit of math, that parlays are just not worth your investment, parlays and teaser bets. Can you say more about that? Has your thinking changed?
Teasers are okay if you play through a key number, 3, 7, even 10 or 17 in college. So I'm okay with teasers if you hit the right number. Parlay the mess. Math does not usually work.
But Jeff, let's talk about these prop bets. I think we should just start with what's a prop bet for most people. A prop bet or a proprietary bet for the Super Bowl are bets that are made outside of the standard odds for the game, not the spread, the money line, but these are specific game occurrences, team and player performances, as well as happenings during the game itself. Jeff, we have a framework here that we want to talk through with John. We're not going to talk specific bets per se, but let's talk about some of these prop bets that are on the board here for Super Bowl 59.
Analytics do play a much more important part in the Super Bowl with props and games during the rest of the year. So we said before, public like scoring, big payouts. If you want to do an over, do it now. If you want to do an under, wait.
We're looking at some of these other prop bets here, Jeff. I see total completions by Patrick Mahomes this year. We're talking about a 24.8 average over the last few seasons, somewhere in between 22 to 26 per game. John, what are you thinking about for the total completions here for Mr. America, Patrick Mahomes?
He had 18 against Buffalo. He had 16 against Houston. What side are you going to take?
Fair enough. Rushing
Eagles
attempts
have the better defense than both of those teams.
They do indeed. So the next one for Mahomes would be the number of rushing attempts. He's averaged about 3.86 attempts per game in his career. Do you think that this Eagles defense shuts that down?
Here's where to go the other way. I don't want to call this a gut feeling. It's just my analysis of the game. I think during the season, he might have played a little bit more controlled. I think now it's all out. It's a Super Bowl. It's a three-peat. He ran 11 times last week. He ran 7 times against Houston. The number's now up to 5.5. I would take the over.
All right. Travis Kelce, you gave us that. Averages 5.7 yards in terms of his reception yardage. It looks like, according to Circa's numbers, that 5.5 is going to be the number. What do you think?
I had 6. I don't know if I'm comfortable with 5.5, but I'll tell you why I did like 6. Public money. Is this the only time of the year, the Super Bowl, when public money does affect the odds? They all see Travis Kelce. They see Taylor Swift. I heard a little girl in an interview the other day. Somebody asked her who her favorite football player was. She didn't say Travis Kelce. She said Taylor Swift. So a lot of the money is going to be going on the over. Also, it's a little bit skewed because last week the Eagles played the Commanders. Zach Ertz, a former Eagle tight end, had 11 receptions. It's pulling the number up. Take the under.
Can we take the under on Taylor Swift receptions during the Super Bowl?
Yeah, well, you're going to need negative value on absolute value on that.
Saquon Barkley, 2 rushing touchdowns. This season, he has a career-high 13 rushing TDs in 16 games. Can he hit 2 TDs in the Super Bowl?
Okay, this is the Super Bowl. This isn't the regular season. He averaged 1 a game during the season, foul 1 a game, 1.1. Look at the over. And that means that he's going to have, it's not the over, he's going to have 2 touchdowns. I think you can get plus 350 on it. Have some fun. Don't bet the mortgage for the car payment. Have some fun with it.
Hicks, the chief safety, will he have over 3.5 tackles this year, 1.35 average tackles per game in his rookie season?
Okay, this one I like a lot. And this one really involves homework. Hicks had 5 tackles in his first 7 games. He had 18 in his last 4. He's a rookie. I think he's out of Washington State. They didn't play him that much in the beginning of the year. He's now playing 80% of his snaps. I believe the number's wrong. I would take over 3.5. That's total tackles.
All right. Well, next you gave us the first turnover will be a fumble. And I was really curious about this. Apparently 30 to 40% of turnovers are fumbles. Less than 3% of passes are intercepted, and less than 1% of run plays end in fumbles being recovered by the defensive team. But you have the first turnover will be a fumble. Obviously, this is a fun bet with a. What's the number look like on this? First of all,
minus 160. Basically, bet $1.60, make $1. Again, that could change. But there have been 17 straight games where Kansas City and Philadelphia cumulatively have not thrown an interception. On the Eagles side, that includes a couple of substitute quarterbacks. It's still 17 games. So I think the odds are a little bit better with these 2 teams, especially after you saw what the Eagles did to Washington last week. They're great at causing fumbles. We're looking to see a fumble before an interception.
So that's interesting. So whereby typically 30 to 40% of turnovers are fumbles, you're saying based on the fact that these quarterbacks just haven't thrown interceptions in heads-up matches, or generally speaking, that the odds of that is lower. That's an interesting bet. I like it. I'm going to look for that.
These are 2 of the most controlled quarterbacks in the NFL.
We're talking about passing here. There's a prop bet up for Ken Gainwell, the Eagles running back. His first reception will be over 4.5 yards. In the notes, you point out that he's averaged 7.3 yards per reception this season. Quite frankly, I don't think much about Ken Gainwell at all, but this is an interesting name to bring up here.
I was surprised he made the team, but he looks good. He's a great backup. He could block a little bit. Again, he's got to have a reception. If not, you lose the bet. In the playoffs, he's averaged 8.3 yards a catch, so that's a no-brainer right now.
Well, Gainwell's a running back. Let's talk about the running game here a little bit. The total rushing attempts by all players in the game right now, at least the lines that I saw most recently, Kansas City was at 26.5 for the game. Philadelphia was at 36.5. That gives you about a 63 rushing attempts total for all players on both sides in the game.
Yeah, so Kansas City has had 26.5 rushing attempts per game, and Philly 36.5. So what does the number look like here?
Well, I think I was talking about total players to rush for the game.
Oh, number of players, I say.
Number of players. And this is where I think we have a good side. And again, I'm not looking at the regular season. I'm looking at the last 3 games that counted, not the last regular season game when starters didn't play. And the average was 9.33 runners per game for the 2 games combined. You get 8 runners right now. I would look at the over. And just so everybody knows, a sack does not count. In college, it does.
You gave us another fun one sounds like a trick play here. It's that Mahomes or Hurts will catch a pass. So I looked at this. There's not a lot of instances. And Mahomes caught a pass in 22. He caught one in 24. He's caught 2 passes in the last 112 games, or his 112 career games. Hurts caught 1 pass in 77 games. In his rookie season.
We look at 2 really aggressive coaches who have 2 weeks to work on things. Maybe we see a Philly special, although that wasn't Nick Sirianni, at plus 1250, plus 1300. This will be just a fun thing to watch the game. Again, we're not betting the mortgage on this. We're having fun. We're hoping for one of the quarterbacks to catch a pass. And if you're going to give me 13 times my money, I'll take it.
So you had a plus 1250 or plus 1300. You also had the plus 350 with Barkley getting 2 or more rushing TDs. Any other high ROI bets that you're looking at?
I'm pretty obsessive. If anybody wants to email me, go to my site. I'll give you some other ideas.
And of course, John's site is at precisionhandicapping.com. He's also the author of this book, Football Betting Made Easy. which you can find at precisionhandicapping.com as well. Well, that takes us to the big games. Chris, what are we looking at here?
Eagles +2. Is this a good line for us
I think
right
it's
now?
down to 1.5 now. Is that right?
Oh, it shifted over the last 2 hours.
And I tell you a little bit of a pet peeve, something that really bothers me is analysts, they'll pick a side, and they're like early polygenist scientists in the 1900s, they'll cram data into this to make it look like it should work. And you know what? You're going to believe them. But these analysts hit less than 50%. So take that into consideration. Again, remember, public money affects the number, which is actually probably going to go towards Kansas City. So with that being said, I think a lot of people remember 4 turnovers against Washington had against the Eagles. A lot of people know that the Chiefs have a dynasty, but this is probably the best defense Kansas City has faced. I know this has been run through the market a lot, but I'm not real religious, but there's some kind of divine intervention going on with KC. I mean, they just cover every week. Or win every week. I'm sorry, they don't cover that often. On Philly's side, and you probably know where I'm going right now, Eagles have a tremendous offensive line. Here's something that's really interesting. Do you remember the line last year with San Francisco?
2.5?
They were -1.5. I would say that Kansas City's not quite as good as they were last year, and that the Eagles are better. I think the line's wrong. I like the Eagles.
The line is wrong.
All right, there's our big pick. Likes the Eagles, laying 1.5. Is that where you're looking at? And you'll like the Eagles at a pick up until where?
That's a great question because, this is not really that key a number. Going from 1 to +1 to -1, wherever we stand, it's basically winning and losing the game. It's not going to end a tie. I think I'm going to stick with my Eagles at +1.5.
Is it going to be a high or low scoring game? The last thing left to cover is the total points in the game. The Eagles have averaged 27 points per game this season. The Chiefs have averaged 22. That comes out to 49. I think that's where the over-under line is right now. In fact, going back to your closing line equation, I think you've seen some closing line value in the drift from what opened to be a 51.5 over. It's come down to 49.5. Is that what you're seeing as well?
I would stick with the under. Again, public money, it's probably going to push that number up. So if you like the under, wait on it.
Well, it's a theme that I recall in your book again, is that you said that generally speaking, the public likes to bet overs and they like to bet favorites. And one of the best long-term strategies is unders and dogs overall. I thought interesting insight.
And again, it's a low-scoring game, maybe compared to the rest of the year. The playoffs have been just a ton of scoring.
Again, in terms of bankroll management, you like to treat most of your, of course, the gimmick wagers like the +1250 and the +350, you wouldn't put those bets on parity with your other bets because they don't need to be, right? Because the payoff is so strong, I would imagine. But
I'm sorry, it's just one game. We're just trying to make some money.
Bet small, bet often. It seems pretty well aligned with how we approach things here. So you'll end up how many prop bets will you advise to your clients for this game?
We might get up to 15. There is no set number. It's what we find has good value, and we take it from there.
And these 10 that we just discussed are among those 15. All right. How long you been at this now?
I guess 22 or 23 years, and I was talked into it. This wasn't something that was on my list of things to do growing up. And also after syndicating racehorses, I thought, gosh, this has got to be so easy. It's a binary choice, one of two teams. It's tougher than picking a horse race.
Oh, that's fantastic. Well, we'll be watching closely. We'll be thinking of you. We're going to make sure that all your picks are included. We'll put some graphics up in the segment as well, so you'll be able to see what John is recommending on his short list for prop bets, and we know his big picks for the game. Chris, what else you want to tell our listeners?
Well, if you want to learn more about John Rothschild, head over to precisionhandicapping.com. He's currently working on his 3rd book. You can also pick up his first book, or at least the last book on football handicapping, which Jeff has shared here on air a few times. But until then, good luck trading the Super Bowl this year. This has been the prediction trade. As always, as we like to say around here, thanks for tuning in. Always wager responsibly. Believe in your math, master your trade, and join us next time on the prediction trade.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, $4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
How we respond to the most difficult situations is ultimately how we learn to build on our successes.
It takes the guesswork out of retail trading.
If you missed the live show, here's our cherry on top weekly recap.
You think I'm not listening over here? I know you call me silly a couple times and stuff like that, but we're idiotic and stuff like that. But I got 2 ears and I can't close them, although I'd like to sometimes. Like my eyes, I can close those, and I do that often while we're on the show. I can't.
Let's go to the next slide, Beth.
I don't close my ears. Take a quick 90 seconds, because your throat's hurting. You're not feeling good today.
No, I feel fine.
Yeah, you look great.
Thank you.
You look great. This is where my ears stay open, but my eyes get closed.
Hey, I want to say gung hei fak choi.
Yeah.
It is Happy Chinese New Year.
It is.
For you
Oh.
today. Yes, that's pretty good, right? My Chinese is pretty good.
That would be pretty good.
Yeah, it's the year of the snake. So I looked this up
I'm a
before
rooster.
the show. You are a tiger.
You bet your sweet boopy I am.
No, it says here the tiger has a mixture of traits and can be aggressive, courageous, candid, and sensitive. Ding, ding, ding. I am a goat, and goats are elegant and creative. Oh my God.
Come on, Dad.
Our new store is about to open. We partnered with Threadless and we did. We partnered with Threadless and
This is a collab. It's just
hats, socks, shirts, pants, sweats.
You should model all the clothes and show as a
Nicky,
lookbook.
he doesn't.
What are you talking about? I already am.
No, I know, but
he
on
doesn't
the
know.
site.
Yeah, what do you think's in there?
Oh, it's all you? Okay,
Yeah, it's just pictures of me.
Oh, beautiful.
Yeah, it's just me in different outfits.
Yeah, we want to put our the foot one.
The socks, the pants,
How about the thong?
the shirt.
Get the full scoop by checking out the archives at tastylive.com.
All right. Perfect. I would like to buy Park Place.
No,
What?
there is no Park Place in this game.
Yes, there is. I'm looking at it.
No,
I
this
will
is mine.
take
It's mine. You don't get it.
Okay, alrighty.
You know what? $500. $500 to the electric company if you want to keep all of your power on all these houses and hotels. And
You can't negotiate. I landed on it. I can buy it if I want
I'm
it.
the electric company. I'm the most powerful thing here.
Excuse me, to the person who owns one property on Monopoly. This is the mayor, and I am overturning everything, and
You're
I am
in over
allowed
your
to buy.
head.
Excuse me?
You're in over your cute little head.
Don't
right.
patronize me.
You
This
don't
is a
come
board game.
down to where the big chimps play and expect to get a banana, sweetheart. You gotta earn it.
Chimps. Okay, asshole. Give me my money back. Come on, let's keep
Whoa.
playing.
Whoa. Whoa. Asshole. No, my father was an asshole. I'm king.
You are so wrong.
I'm very right.
Did you even take a wallet? Did you just eat my piece?
You don't have a piece now.
Seriously,
The
it's a
dog is
game.
gone. The dog is gone. You have nothing. I have a car.
Are you seriously pissed off because you're losing the game?
I'm not losing. I'm winning.
You are clearly losing. Look at the board game.
Every utility, 2 of the railroads. And what do you just have? You have a bunch of hotels and houses. Which in this market is ridiculous. A nice, simple house on Mediterranean Avenue. A beautiful car worth 10 times more than your dog who is gone. Cut a deal with me. Come on.
Okay, I quit. If you're gonna be an asshole, I quit.
Then I win. the old bait and switch. I got you. I told you I'd never lose this game. I've always got a plan. And you fell for it. Boom! Shalaka!
Here's what your buddies mean when they say to catch a falling knife. Ever seen a stock make a huge move lower? And maybe you had the thought, I'm gonna buy that stock. But then it just keeps going down. That's a falling knife. A falling knife is a stock that makes a big move lower and then continues to move lower. The contrarian trader has the idea to go long that stock in the hopes for a bounce, catching that falling knife. But you gotta be careful trying to catch those falling knives.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade.
Wolf! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
James Blakeway, Carthage College. Number 25, my percentage profit target for straddles and big lizards.
Tracy Aljo, Ohio University. Number 21, because that's how many people have asked me if Tom's hair is real. It's real, ladies.
Katie McGarrigle, University of Illinois. Number 44, because I like to trade underlines with an IV rank higher than 44.
I like the looks of that lineup.
Well, being mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
Know someone who needs a better broker? For 1 month only, earn $500 for each qualified person you refer to Tasty Trade. See how it pays to have friends? Terms and conditions apply. Tasty Trade.
Clip thy waxen wings, thou economic Icarus. Discard these feathery adornments, thy flight's too vigorous. Rather, garb thyself with the soft fur of the bear, and dwell in low burrows of the valley fair. Forsake thy previous highs and perilous summit, for lo, I am short, so I must needs thee plummet. O market, I implore thee, make no high. Like some comic Fozzie, unclip thy bow tie. If thou dost tumble, I shall offer thee up a succulent hoagie. So, ye markets, remain as bearish as beloved Yogi. Follow thee the lead of Kipling's Baloo, and may the move be sweet as honey to Winnie the Pooh. With joy I watch descending chart lines straighten, run down with quickness and sweetness, like Lord Walter of Peyton. Let curious traders admire thy Berenstein way, and joyfully stealing some porridge, let us now say, sweet bearish market, never would I cage her, but admire her drop like some terrestrial Ursa Major. Come down, ye markets, to this sylvan glade, and let the bears have their day at Tasty Trade.
It's that time again. The market's in relative standstill here as everybody waits with bated breath for U.S. jobs data. It's only right. It's the first Friday of the month directly in front of us, and this is when the markets get the official report that so much of their thinking about the U.S. economy and that, of course, Fed monetary policy is going to hinge. So, as we consider what is going on here, we, of course, have to take a look at what is expected of the data and then how it might actually drive markets as we go. So, what we'll do here is break down that here on Macro Money. As ever, I'm Ilya Spivak, head of global macro here at tastylive, and then hopefully arrive at some sort of a trade implication at the end of our analysis, because indeed it looks like something of a change is developing in markets, and we're going to try to put our finger on what that is and how this data may well alter what this data does for stocks, for bonds, for currencies. Let's begin here with a grounding in expectations. So 170,000 jobs expected to appear for the month of January. That would be a little bit of down step from the 256,000 in the prior month, but certainly not catastrophically so. We can see the overall setup here is still well within recent ranges. As we take a look at what the labor market has done over recent months, I think we can quite clearly see we've sort of anchored into a range going all the way back to the beginning of last year, where U.S. job creation really hasn't made a meaningful break one way or another. We kind of cooled from the middle of 2021 into this range and have been sort of oscillating without much movement. A similar story expected from the unemployment rate. The monthly reading from last go round at 4.1% expected to hold steady here. And indeed, if we look at the way that U.S. economic data has tended to perform recently compared with expectations, the argument seems to be toward a slight positive bias on this Citigroup Economic Surprise Index that measures outcomes not in absolute terms, but relative to forecasts and scales them to the volatility that the releases generate when they come out. What we find is 0 is neutral. So this is where expectations and realized results match. We're a little bit above that, so the tendency is gently toward outperformance, but we're very, very close to 0. And so the overall sort of sense here is a tendency to be within striking distance of expectations, relatively close. And indeed, in so much as the ADP report, the private sector estimate of payrolls, isn't usually a very good indicator for what official figures will show, it does give us a preliminary view that suggests relative stability. The number earlier this week came out a little bit better than expected, 183,000 private sector jobs created versus 150,000 that the analysts had on their bingo card. But nevertheless, the overall story, very little changed. 30,000 jobs difference for the size of an economy like the U.S., not really a huge amount of deviation. And indeed, the general story here, that of relatively stable job creation all through last year at least, is about what you would expect. In fact, you can see here a very similar story on the official reading, even if the aggregate figures are a little bit different. The same thing comes from the Institute of Supply Management's numbers published earlier this week. We got updates on both service sector performance and manufacturing, and we can see here the service sector in particular showing steady employment growth. These numbers in the logic of PMIs, and this is, of course, just the employment component of that survey. Above 50 is growth. Below 50 is contraction. The further you go above 50, the faster the growth. The further you go below 50, the faster the contraction. The takeaway then here is the service sector, which employs the lion's share of workers in the U.S. and accounts for overwhelmingly most of economic output, something on the order of 75% of the economy is services, and even more of employment, close to 80% of employment is services. So that we have stability here tells us a story about the overall labor market, and we can see that that has very much offset the weakness that we'd see in manufacturing, where we can see employment has been contracting up until January, where it actually peaked its head above water again for the first time in a while. Not since early last year, late last year, did we see a little bit of a sliver of positive manufacturing sector growth. And it looks like in January we managed to somewhat arrest the preceding weakness, at least a little bit. So all of this seems to point to a relatively stable labor market, and the likelihood that the numbers that we're going to get out of the official figures probably endorses that view continuing. So, what's there to trade here? As ever, the markets operate in a way where it is the deviation of reality from expectations that drives volatility. That's what actually motivates investors to go and change allocations, to trade this or that differently than they had exposure to it before, when they realize that reality isn't what they thought and they have to go rebalance portfolios accordingly. This seems to say that the labor market is going to be relatively steady. And indeed, to the extent that this data, and really any U.S. economic data, is an input into the Fed policy calculus, that policy calculus has been relatively steady. Consider all of the fireworks we'd see episodically, just even over recent weeks, around the unveiling of DeepSeek's AI model from China that purports to rival U.S. offerings, but at a much lower cost to train comparable models. Consider the here today, gone tomorrow U.S. tariffs saga at the start of this week, where the Trump administration moved to levy tariffs against Canada, Mexico, and China, and within 24 hours, only the Chinese tariffs were left. So the share of macro volatility here and just episodic out of left field event risk has been, let us say, not negligible. But nevertheless, we can see here from Fed policy expectations, we've not gone very far. Markets now baking in 44 basis points in rate cuts for this year. That's almost exactly in line with the Fed's own prognostication from December, 50 basis points expected there. And really the divergences for next year. Markets are at 21 basis points, so not even quite at one cut, although that one cut is pretty close to being baked in, just 4 basis points off. But the Fed had 50. So this is where there is a little bit more of a departure. In cumulative stimulus between this year and next, the markets are at 64 basis points and the Fed is at 100. So there is a non-negligible difference there in sum of close to 2 rate cuts. So perhaps the state of steady numbers here is coming at a time when the expectations for this year are relatively anchored. They've been so impervious to event risk that the markets don't seem to be of a mind to speculate there. And maybe that then puts the spotlight on next year. Because, again, if we take a look at near-term policy expectations, we can see not only have they been remarkably steady recently, they've been remarkably steady since November. This was the Fed's big dovish outing in September here, and we can see by November, as the markets start to reprice expectations to say the Fed's more dovish inclinations don't make much sense when you consider that the U.S. economy by then is heating up after a few months of slowing. Moreover, you have the election pass, and it passes with, obviously, a victory for President Trump, whose economic platform is thought to be generally inflationary, be it tax cuts and deregulation that ostensibly boost growth and thereby drive up inflation. Growth and inflation tend to walk hand in hand. But also the possibility of tariffs and of some sort of a labor market disrupting deportation campaign of migrants that would purport higher taxes on imported goods. That's inflation. And likewise, a higher cost of labor. That, of course, is a more expensive input into almost everything, and so higher end prices. With that, it stops to make sense that the Fed was quite as dovish as they were in September, and by November already the markets have made the switch. We can see here that thereafter, the subsequent meeting in December where the Fed makes the switch official, endorses it with their own forecasts, that's already barely moved from where we were already by November. And indeed, the most recent numbers here, following a Fed policy announcement just earlier this month, almost unchanged. Very steady here still. So already as of November, near-term Fed policy expectations, at least as far as the markets were concerned, seemed fairly well established. Stock markets have seemingly echoed as much. Note that for all of the gapping and the shenanigans with DeepSeek and the tariffs and this and that, what we've found is that since early December, the bellwether S&P 500 has gone basically nowhere. It's been stuck in essentially a 6% range. And while we've seen these sell-offs, this is the DeepSeek sell-off, this is the tariff sell-off earlier this week, while these gaps have closed, or at least tried to close, they've also not exactly shrugged off the bad news, else we'd be rallying. We'd be breaking these highs. But the market still seems somewhat circumspect here. It's not convinced, apparently, because we are still stuck in this range. And maybe the stasis of policy expectations, at least at the near term, has something to say about that. But where interest rates would likely be even more front of mind, that's interestingly on the move. And it's at the long end of the curve. That this is the continuous contract for the 30-year long bond. And what we see here is a significant rebound. And if we were to look at the benchmark 10-year, it's much the same story. Now, in line with relatively steady Fed policy expectations, the 2-year, so the front end of the curve, very steady, not really going very far at all. But interest rates are absolutely on the move at the longer end maturities, and more interestingly still, they are now at the lowest level in 8 weeks. Yields, of course, move inversely of bonds. So when we see this bond rally hit an 8-week high, the flip side of that is an 8-week low on longer end yields. Moreover, the bulk of this move has happened on just 2 days. This one, that's January the 15th, and this one, that's yesterday. This right here is that DeepSeek news that gives us a bit of a pop that we then stop to digest. But it's really this move here and this one that do the heavy lifting. And tellingly, those are both economic data days. The first, the US CPI report, that gives us slightly lower core inflation than expected. We can see here the headline comes in line with expectations, and that's to be expected as we get easing influence on energy, as the rebasing of these energy contributions becomes less negative. We can see core inflation comes up, or headline inflation, comes up a little bit. Core here has been steady, reflecting the conditions of the core services contribution here, which itself has been fairly steady and which has been, of course, the focal point for the Fed. But the aggregate numbers are a little bit softer, 3.2 versus 3.3% expected. So that's one jump in bonds and one lurch lower in yields. And the second come just yesterday with disappointing U.S. PMI data that showed us the slowest U.S. economic growth in 12 months. Worryingly, that came not as you saw a little bit of a perking up in manufacturing, again, coming out of contraction territory and actually giving us a positive result at 51.2, but a slowdown in the service sector, which had been, of course, the main engine powering this strength all of last year. Moreover, even though employment was relatively steady in the parallel ISM PMI numbers, the actual headlines were also weaker in aggregate because of services. Again, a slight beat on manufacturing, but the meat of the economy is services, and here there was a disappointment. Of course, putting this in context by component, yes, indeed, as we saw earlier, employment relatively steady, but the price component as a implied demand gauge lower, and perhaps more worryingly still, new orders significantly lower and approaching standstill. Now, this, of course, is worrying in a much broader sense, because what this implies is that this very state of affairs is starting to show some wear and tear. Now, to see that most inflation here sits in the service sector implies that most of the demand is there, that the abiding driver of the U.S. economy is the service sector. Note, there is virtually nothing comparable on the goods side. That inflation is fractionally negative. So there really is no major growth in goods demand. It seems to all still be in services, and indeed, that's how this slowdown in services gives you the lurch lower in the overall composite. Now, with that, the global aggregate, this is now global PMI, as we can see, looks very much like its U.S. version. Relatively steady from mid last year until we get this lurch lower. And that really speaks to just how sensitive overall global growth is to this single point of failure, the U.S. service sector. And that, of course, is because global growth primarily is made up of just three economies: the U.S., the Eurozone, and China. That's 58% of global GDP. The remaining 42% are mainly vendors to the former three. Think Canada and Mexico, appropriately enough for the U.S., Central and Eastern Europe, Nordic Europe for the Eurozone, commodity producers in Asia, in Latin America, in Africa as well for China. So it's only right that global aggregates start to break down as the U.S. service sector breaks down when we consider that since the middle of last year, it's been the U.S. shouldering all of the burden on growth. These are composite PMIs that we just got updated this week, showing what happened with overall economic activity growth in China and the euro area over the same period. And now in January, we can see for China, it's slowdown. For the euro area, it's slowdown. And they've only just barely managed to return to growth here, only fractionally at or above 50 here. But the U.S., that's where the strength has been. That has been the global economy. And it's this lurch here, most recently, that then powers what we see here. Things are steady, and then down we go. What does all of this mean in aggregate? Well, if the bond market is willing to do this, while Fed policy expectations remain relatively steady, as we see here, then the story really isn't about what we are going to get this year. What that is seems pretty well anchored in place at this point. And that the bond market is doing these things around slightly soft-footed economic data at first and meaningfully soft-footed economic data yesterday next, all that seems to suggest that what is emerging here is more of a cyclical concern, a sign that maybe the U.S. economy is starting to cool finally. And while that may not alter Fed policy expectations immediately, it may very well start to alter the pricing for next year where, as we've just mentioned, the markets are lighter than the Fed. The Fed is at 50 basis points. The markets have only baked in 21. What does all this mean for the jobs report? Well, if the tendency is for this to come out broadly in line with expectations, then the report might be more impactful in its passing than in its substance. If we get a number or a set of numbers that's relatively close to expectations, as we might expect looking at this, then we are looking at a situation that's more of a roadblock overcome than anything that ought to alter the course of sentiment. And then the markets are free to do that which they have been doing, near-term Fed policy expectations notwithstanding. That, of course, is this. So once the numbers pass, it may very well be that bonds just continue to move higher because a roadblock has been pushed out of their way. Moreover, the stasis in stock markets may start to give way on the downside if, in fact, what the markets are starting to position themselves for is cyclical cooling. And of course, whether that breaks the larger range here from early December and finally gives these markets some directional conviction after now almost 2.5 months idling, having broken the uptrend from August, that we'll have to see. And that's macro money for today. We're here Monday through Thursday, right after Overtime, show that I co-host with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and where things may go there from. I'm likewise on with Chris for Futures Power Hour Mondays and Fridays. That's tomorrow right after the jobs data. We'll break it down. I am likewise on with Victor Jones for the Price of Truth on Tuesdays. Back with Victor and Tom for First Call on Sundays. Writing for the News and Insights portion of tastylive.com and commenting at Ilya Spivak on the platform formerly known as Twitter and on Blue Sky. If you're watching on YouTube, like and subscribe. Macro Money's back next week. Take care.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
Know someone who needs a better broker? For 1 month only, earn $500 for each qualified person you refer to Tasty Trade. See how it pays to have friends? Terms and conditions apply. Tasty Trade.
I think I've always been interested in finance. I have a degree in management and I took a lot of heavy finance classes, and I've always loved it, but I've always done passive investing. And so as I went through life, I decided that I needed to have a bit more control over my finances. I started to dabble in the options world when I opened up a brokerage account in probably 4 different companies, and none of them worked really well in terms of education until I got to Tasty. And Tasty Live in particular, because of the educational background that they tie in every single day on how to learn how to trade options. It started with the Where Do I Start series. It's outstanding. Tasty Bites, market measures, from theory to practice. I don't think there's a show that I don't like, to be honest. That education piece is highly important. I found that Tasty offered that.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Forbes called us best online for options trading. With stockbrokers.com, we're #1 for options and futures trading. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
What is going on, everybody, and welcome back to the Bad Taste segment. We got Gus and I today. We're going to do a little tour to market, break down some of these after-hours movers for earnings. We got things like Amazon we'll check out, and then get into some of the fun games that we do towards the end. But before we get into that, Gus, my guy, how are we doing today?
Man, I'm doing well. It was a good day of trading. It was one of these days where if you basically just go long anything, it'll work out. I caught a nice gap on Eli Lilly this morning. Picked up added a little bit of Ethereum. Crypto lacking a little bit. Feel like that's going to come back. So I'm happy. It's been a good day.
Oh, what are your no financial? What are your thoughts on XRP?
XRP, man, I used to be really, really high on Ripple. I actually probably still have a few $100s of it laying around in a Coinbase somewhere. And it's done well. I was buying back in like 2019, 2020. I'm not admittedly not well versed enough on crypto to really have a justified opinion on how it fits into the wider space and the blockchain and all that good stuff. But from a purely financial stock sort of perspective, I'm a fan.
I got you. I love it. Well, we can't not talk about what we're about to bring up next. Over or under on the Chiefs? Are you an Eagles fan right now? Is what we all want to know in chat, Gus.
Yes, of course. I'm a Chiefs bettor and I am an Eagles fan at the same time. It's I'm not going to fade. I'm not going to fade Mahomes in this spot with all the narratives.
You're not going to fade the refs.
Well, yeah, you got to fade Mahomes, you got to fade the refs, you got to fade Taylor Swift. It's a lot of people to fade. I'll tell you where my money is on Travis Kelce proposing if they win this game. I think that's what's going to happen.
Really?
Yeah.
Is there a poly market for that setup?
Oh, there might be. That's a good thought.
Yeah, let us know, because if we have an extra few minutes, maybe we can just hop into poly market. Just also check out what the standings is looking like for the Chiefs, and they do have it.
Yeah, 5% chance is what the market has it at. It's been as high as like 20.
Okay, if you don't mind leaving that up, and then we can get into it here in a minute when we have a few minutes. I'm curious to see what that's saying. But Lone, what's going on? Lone says he's sick and tired of the BS with Swift. Well, don't get too tired yet, because we still got a little bit more coming, especially this Sunday with the Super Bowl. There's no way she's not going to be in some ads, first of all. And then when you're watching the game, we're going to always get those shots of her up in there. So Lone, you got some more Swift to digest. But anyways, what's been going on in the market? We got Amazon earnings after the bell today. And I mean, as you can see right away, very volatile to the downside, upside. I remember I was watching this live. It's kind of funny. Sometimes you'll just be sitting at the computer and you have the chart up, and then you just see like a 50-point drop on one of the underlines. You're like, oh yeah, I forget there's earnings. But I did say, I think last year I wasn't going to be doing too much earnings. It was kind of one of my New Year's resolutions along with Julie. It's like, what? Earnings, we'll put that off to the side. We'll watch it from the sidelines. But this year, Dr. Jim has gotten me into a couple earnings, Gus, and they both went in my favor, which was last week, Microsoft and Meta. So I was like, you know what, Dr. Jim, I like statistics, and so far we're 2 for 2 on the year, so I'm going to go ahead and get into Amazon. We did an expected move butterfly in Amazon to the long side. And as you can see how that's playing out, not too hot right now. So we'll see how the market opens up tomorrow. Other than that, bro, I have that Amazon position. I have the SPY position. I sold a 43 days till expiration out of the money SPY call yesterday, I believe I put it on. That's down a little bit on the day today. We had a little bit of a rally today, especially into the close. Did that one just to express my opinion in a longer term duration. And then I also have the QQQ position on. So this one's looking like an iron condor right now. I originally sold the call spread to the upside. I sold the call spread to get some short delta on, and then we had sold off pretty significantly the next day. So then I legged into the iron condor, sold the put spread. So right now, we're up a little bit on it. I guess, I could have taken off the call spread when we had really sold off, because again, this one expires by the end of the week. But instead, I decided to leg into the iron condor. So far, if hopefully we can get a sell-off tomorrow or some type of downwards move, and then I can profit on both sides of those trades. But if not, I think the out of the money calls, or the out of the money put spread that I sold is going to finance, a little bit of that call spread that I sold, because I might take a hit on that side of things. But other than that, that's what I got in here. We have Amazon after the bell. Again, I sold the 250 strikes, bought the 240, and then bought the 260. I've never been the biggest fan of butterflies, but Dr. Jim always nudges me to apply some of those butterflies whenever we're trading around earnings. But that's all the action I got going on over here, brother. I mean, I know we have Lulu you had mentioned as well, but is there anything else that's kind of been top of mind, or you got any thoughts on any of these positions, or where are you at right now?
Yeah, Andrew in chat saying Dr. Jim changed his mind on Amazon today and put a bearish butterfly on. So you gotta give him some grief that he didn't say anything to you.
This man baited me in there. Yeah, he probably sold the butterfly that I bought. All right.
He probably did. Yeah, I can attest. A lot of people around the office were very high on Amazon today. Nick as well. I know he was none too pleased on his way out the door. I like your QQQ, and I think that's a great story and a great lesson in position management and being able to take some risk off. That's smart. I don't have anything too crazy going on today. Christopher Vecchio got me in on this IQV. I don't even know if he realizes he did it. It's just trickled down through the chain of command that I've wound up on this IQV. So what's up?
What's going on over here?
IQV, it's I really can't. Vecchio could do a much better job of explaining it. Essentially, he thinks that this is the next big thing in AI. Is where we're
AI
related.
IQV.
I don't mean to speak for the man. I would let him defend himself on that one because, like I said, it's a game of telephone for this to even get to me. But I am liking this IQV. I picked up 10 shares yesterday. Just a very normal, very brain dead play. Just grab some shares, but that's paying off well for me.
Yesterday, because we had pretty big gap up overnight. So yeah.
Yeah, yesterday. So that's paid me well today. And then I also caught Eli Lilly. There was a nice gap that formed there this morning after earnings. It felt oversold, and so I grabbed some of that like right before the there's a big candle on the 1 hour. But yeah, took a gap down after earnings. High on Eli Lilly in general as well. I'm a major bull on all of these pharmaceutical companies with the weight loss drugs. I think that these weight loss drugs are going to continue to rise in prominence. America is only getting fatter. Is my line of logic. So
Hey, you're from Texas. Bigger is better. Yeah.
Yeah, everything's bigger in Texas. Ask Charles Barkley about San Antonio. You know.
Hey, in terms of you ever think the weight loss supplements or whatever it has to do with your health, I don't think that industry is ever going to go away. Huh? I feel like there's always something in each decade where it's very attractive that's in relation to weight loss, the way you look, and just overall nutrition. So it kind of just seems like that's always going to be one of those industries that's always going to make some type of underlying pop off. But
for sure, yeah, and the efficacy of these things is only moving in the right direction as well. So yeah, I'm high on it. Legalize steroids. Let's get that going.
As long as it's legal.
Legalize trend. I'm buying that stock.
Legalize trend. Yo, you ever never mind.
I haven't. If that was your question, I have some friends at the gym who are questionable, but I have not.
Yeah. Look, I'm not going to take that. I think I'm going to stay natty. I'm going to stay natty, but man, it would be nice to.
Oh, it's tempting sometimes for sure. Especially, I'm well past all the newbie gains and everything now. It's really hard to gain a pound of muscle. So, I would. Some stimulants would be great.
No, I hear you completely on that. Other than that. The volatility index, really not too much of a change heading into this year. I mean, it's kind of been the same story with volatility, but if I can type this in correctly, it's kind of been the same story. We'll see whenever we get any type of significant pullback in the market, but it even just seems like any type of, the gap down over the weekend, whenever there was some of the tariff talk originally, I think that occurred on Saturday, and then it had the market gap down opening into Monday. We saw a little bit of a spike in volatility, but really nothing too significant. Maybe I know we have the 30-day pause, maybe when things come to fruition with that, and if those do really materialize, maybe we actually get some type of expansion in volatility. But until then, it's kind of been the same story since the beginning of this year. So just been keeping an eye on that. I know IWM is another one I'm going to be keeping an eye on as we head into the rest of the year. Volatility and implied volatility is just a little bit more attractive on IWM. I'm really such a QQQ SPY kind of guy. Like those are my ETFs. Those are the indices I really like to focus on. But the premium is attractive in IWM. So I'm going to keep an eye on that. But other than that, I know we can check out oil quickly. Pretty big sell-off in oil. Oil is one of those very sporadic kind of products. I don't know if oil is one that you like to get into at all, but I haven't taken part in oil, in some time. But
I don't do commodities in general, and highest on that list is oil. Oil it's a whole scary world that I do not engage with. Oil and natural gas both. I respect you.
So energy,
if you're a natural gas trader out there, I respect you because holy cow.
No, 100%. I know sometimes when I did get involved with oil, I think one of the last times I was really actively trading oil might have been around the time when, when a barrel of oil went negative. So it's like, of course, our experience or, experience trading some of these products was whenever we had some anomalies within that specific sector or market.
I tried to convince my friends to buy a pallet of oil barrels. They wouldn't listen to me.
Bro, imagine though, oil was dumping around zero. Oh, I know. Let's just store this oil in our crib. But imagine
in the garage. Seems a little crude in the garage. Never hurt nobody.
Never hurt nobody. Imagine oil selling off around $1, going to zero, and then I could just imagine the margin calls that some people might have had whenever oil did go to below zero. I mean, that's something that would have caught me off guard, and it's one of those things I think I'm gonna have to learn from other people's mistakes, because I could see myself seeing oil going down near $0 a barrel and absolutely oversizing on that, not expecting oil or barrels of oil to go negative. But that's one thing that's always kind of replayed in my mind.
Well, yeah, you certainly as a trader are wired to think that if you're playing things to the upside, that there is contained downside risk. So yeah, all of a sudden when something goes completely negative, yeah, that would throw me off too.
Yeah, no, completely. Other than that though, brother, that's pretty much what's been going on in the market. We have Amazon earnings. We can quickly just check to see which other earnings we can expect coming up, and then we can get into our Connect trade. Have you played that one before?
I haven't, no.
It's actually pretty fun. So I know you're familiar with Tradle.
Yes. It's like Connections. I got a brief look at it before we started.
Oh, what is Connections? Yeah, go ahead.
Oh yeah, Connections. It's one of the New York Times games. People are big into those. They I think they started it. I mean, the concept has been around for a while. But it's you get 16 things that are randomly assorted, and you have to make groups of 4.
And is it about specific countries as well? We might be talking about the same thing.
No, it can be anything in the world, and they try to get you. Like they might throw crimson in there, and then there's also 3 other cells that say red and pink and fuchsia, and you think that it's shades of red, but then crimson actually goes with the football teams or something like that. It's meant to confuse you.
No, makes sense. We'll hop into that here in a moment. Just looking at Rivian before we do that. I've been keeping an eye on things like Tesla, GM, Ford Motors. Just again, if the tariff talk materializes, I know we get a lot of automotive parts and things of the sort from Canada. So been looking at some of these underlyings and sectors and industries that might be affected whenever those go into place. But lastly, before we do shift gears, any thoughts on Rivian? I know, again, Rivian's one of those EV companies where I see a lot more of their vehicles around, but I haven't been keeping up too much with Rivian. Is that something that's actually going to be able to compete in the EV market, or is it just the talk of the town?
It's looking like it. I certainly was in the camp of just thinking it was this trendy stock there for a little while that might not take off. Like
that's what it felt like.
Nikola, something like that, which of course that ended in scandal. But I didn't necessarily think that. But I am starting to be a buyer. I don't hold any Rivian myself. Obviously Tesla is still just so dominant in that space. But like you said, you notice. I mean, I'm seeing Rivians pop up left and right. I don't even think a thing of it or point them out when I see them anymore. And there was a time when it was a unique thing. They're super luxurious, and I think that Tesla is going to. They are expensive, and I think that Tesla is taking the angle of trying to be the Ford of electric vehicles. First to market, very affordable to the average consumer, all that good stuff. And so when you talk about Rivian, I feel like there's a space in the market for that, especially as Tesla's production ups and they become cheaper and cheaper for people to buy. I think luxury EVs are wide open, and I think Rivian's here to take it.
Yeah, no, that's a great point. I mean, if you're a believer in Rivian, it's an absolute steal right now. Hey, just my opinion, but it's been getting absolutely beaten down over the past few years. But other than that, we can go ahead and shift gears here. I believe it is Connect. Let me know if that looks good on your end.
I'm good here.
Connect trade. So this is not what you were previously speaking about a moment ago.
No, it's not, but it is. It looks, it's conceptually the same.
Okay. Awesome. If anybody is new to this, it is where we find groups of 4 products that where they share something in common. And it'll give us a little bit of a hint if we paired one correctly and if we need to pair another one, if we're missing one or if we're missing 2. So if you're familiar with the segment, you know exactly what we're about to get into. But do we have any we want to start off with, Gus? Any of these kind of catching your eye right off the bat? We got... okay.
Well, I don't know. There is really nothing super jumping out to me. I want to start with Chile, but I don't see anything that jumps out to me as being distinctly Chilean. I was gonna say mollusks, but we have North Mariana Islands, which is kind of a wild card in here.
Right.
I'm agreeing with the pairing you got going on here.
Particle board, recovery paper, right? Kind of tomato a little bit.
Sure, yeah. Yeah, I feel like we need to just throw in a guess and try to get some information here.
Otherwise, containers. We'll go. Okay, two more. What kind of relates? We'll go. You know what? We'll go mollusks just cause.
Sure. So throw a wild card in there.
Yeah, we'll just go ahead and do that, and then
we can go. Want to go nitrites and nitrates?
Yeah, let's do it. That I just got PTSD from.
Yeah, I did too.
Don't say that out loud.
I saw that and I had to. My eyes darted all over the place. I was like, wait. Okay.
All right. So we have particle board. That's in its own category, so it's not with recovered paper. But at least we know that we have recovered paper and mollusks go together. I would have not guessed that one. And then we have nitrites, nitrites and nitrates, and that is within its own category as well. So we have recovered paper and mollusks. We can choose a new 4 and kind of go from there if we want to do something like that to be able to pair these up. We could,
wider data.
Unless we want to do recovered paper or mollusks.
No, I agree. I think especially because it kind of tells us the groupings. Yeah, we might as well just try to get more data.
Okay.
All right. Let's try fabrics and plant foliage. And
fabrics.
Yeah, the pile fabric.
Okay.
And then
let's see. There we go.
And if we're doing the plant foliage, let's throw the fertilizers in there. I think.
Fertilizers. Where is fertilizer? Over here. There we go.
Yeah.
Recovered paper. Is that what you had said?
No, I said the plant foliage. It's
on the
left of them there.
There we go. We got 3 here. Throw one more in there.
I don't know. I feel like nitrates go with fertilizer. Not really a big farm guy. Somebody in the comments correct me if I'm wrong on that.
Not a big farm. You gotta be. You're from Texas.
I know the farm people. I am not.
I know of the farm people. Where is that?
The nitrates and nitrites on the right.
Oh, there you go. We'll just group it in there.
See if we can get somewhere here.
Awesome. All right, so we pretty much paired not a single one on that one. So we got pile fabric. That goes with recovered paper and mollusks. Potassic fertilizers, plant foliage, nitrites, and nitrates are also in its own category as well.
Okay. So we got 3 yellows.
We have 3 yellows, 2 blues. Is that green? I'm colorblind. I think that's green though.
It is green, yeah. I don't even know what country the yellow is. Anybody have any ideas? Pile fabric, recovered paper, mollusks, how those could possibly go together?
Honestly, do we even need to know the country?
Well, I mean, you don't, but like it would maybe help try to figure out the 4th if I could establish which one that was.
Pile fabric. Oh, not that one. Recovered paper, piled fabric, and mollusks. We haven't done iron gas containers. We haven't done beer, rapeseed oil, gravel and crushed stone, carbonates. Carbonates and nitrates got to go together.
You would think.
That's what I would think. Let's
go for those 2. Carbonates. Throw paint in there. The other paints on the left.
Other paints. What else would go with paints? We could do rapeseed oil, halogens.
Sure, either one.
Go either one of those. Go here, see what we get. So that's green. So we're missing 1 out of the green. So we were pretty spot on there. Yeah, nitrates, nitrates, carbonates.
Okay. Are there 4 we haven't done? We haven't done whey, molybdenum.
Oh, we only have 3 lives left. Okay. Makes sense.
All right.
We'll go.
Should we try 4 that we haven't tried, or should we try to play this game?
We should do 4 we haven't tried. You're completely right.
All right, let's go whey and milk products. The top left, or I tried to pronounce it once.
Potassic?
No, the top left. What is that?
Oh,
molybdenum or?
Yeah, that's all you. That's all you.
Yeah. My apologies to the audience for having to listen to me say that.
We haven't done beer.
And then gravel. We haven't done gravel.
No. All right, this will help us for the next 2.
Surely.
Yeah.
Okay, we got 3 blues. We have all 4 reds.
We have all 4 reds.
Yeah, beer, gravel, other plants, or other paints, rather. Plant foliage.
And plant foliage.
Second row, 3 up.
Wow, that was a mission to get that one row. Particle board. Let's go blue.
I like blue, yeah.
Particle board, potassic fertilizers, and then milk. This is tough. Yeah, this is a tough one.
The fertilizers and the milk are giving fields. You got farmland, right. You got fertilizers, you got cows. So I
see the vision.
I lean Belarus or maybe Chile. Maybe the oil. That's something to grow. Maybe.
Recovered. Oh, rapeseed oil. We could do that one. That one's a good one because we haven't.
Have we tried it yet?
We haven't even. I don't believe we've tried. I'm feeling good about this, so we're gonna go ahead and send it. There we go.
Hey.
There we go. There we go. All right, we'll go.
We got yellows going.
Paper. Yeah, let's knock this out.
Mollusks and pile fabric. And then what goes with these?
It's got to be halogens. If we haven't done halogens yet, I don't think we've clicked on halogens.
I thought we. Oh, maybe we didn't.
It's either halogens or.
Halogens is green.
Oh, okay, it's green. What about iron gas containers?
I don't think we've done iron gas containers.
It may be this.
I think because we know that halogens go with the nitrates. Have we tried the carbonates? We have. Those are green also. Yeah, I'm liking this.
Iron gas containers. Full send?
Yep.
Any objections?
I like it.
All in favor? All right.
Yeah. Yeah, anybody?
Uh-oh. Oh, there. I didn't click. I didn't click it. I thought I clicked submit. I was waiting to see if we got our. Never mind. There we go. There we go. Easy work.
Hey.
There we go. Buzzer beater at the bell.
All right.
There we go. Other than that, brother, we'll see what we get heading into tomorrow. I think tomorrow, this morning we had initial jobless claims, but there's really not too many significant red folder news top of mind. I'm just going to be looking out for a lot of these earnings. Yeah, we got red. Sorry.
We have the Trump administration back and the volatility that comes with it. So all of a sudden, you can just any day in the middle of the day, all of a sudden have some giant catalyst.
On the extra monitor, I make sure I have a news feed going 24/7 nowadays, just in case, because things are turning on a dime. So.
Oh yeah, he'll hop on that podium anytime and just change the whole landscape.
The entire sentiment of the market. But no, that's gonna pretty much do it for today's Bad Taste segment. Is there anything else you wanna leave off on, Gus?
No additions. Always pleasure streaming with you. And for fans of the segment, I'll be around a lot more moving forward, it looks like.
Absolutely. So that's gonna pretty much wrap it up today. Thanks for taking the time to hang out with us today. We'll see what we get in the market. We'll manage these positions as we should throughout the rest of the week. We'll see how Amazon ends up by morning. Things can change, but I will have those trades posted on the trader page, and we'll see how those kind of turn out. Great seeing you guys, and we'll catch you guys next time. Peace.
Everyone have a great rest of your day.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
How we respond to the most difficult situations is ultimately how we learn to build on our successes.
It takes the guesswork out of retail trading.
Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade.
So, Venmo is an app that is free, and you can send money to people who also have a Venmo account. So you downloaded Venmo.
Because I need Venmo.
For what?
So, like, when you go, can I have $5 or $10?
I never ask for $5.
When you ask for $20, sometimes I don't have the cash.
Okay.
I only have hundreds.
Oh. So one thing you noticed with Venmo,
Yeah.
when you downloaded the app,
Yeah.
was that you could see what other people were sending other people.
Why
Only
does
$10.
anybody want to see what anybody else is doing?
It's just like creeping, like Facebook creeping or something.
I know, but
I don't know.
people like this?
You do, clearly. So right now you owe me $10. And I know you won't remember, but we made a bet about solitaire where I said, you don't know how to play solitaire. And then you showed
And I said
me.
I know how to play.
You said you did.
Yeah, and I
then
still
you,
do.
Then you showed me that you really do not know how. So you owe me $10.
Right, so how would I, if I
How
want
would
to
you
send you
send
$10?
me money? Well, you gotta add money to it. Is a thing you gotta do. You gotta link it to your debit card.
Lindsay Grotta.
Yay! And you wanna pay me, you can put in the amount you wanna pay me. Or you can request money too.
I'm going to request money from you.
Okay.
Because I am a nice person.
$2?
I'm testing.
That's a little insulty. Then you can click pay.
Pay.
There you go. You paid Lindsay Grotta because I am a nice person. Tom paid you because I'm a nice person. $2.
I like it. I'm in.
What do you think you'll use it for? Do you
I
think
don't
you'll
know.
use it?
Probably for you.
For me. Woohoo!
What's up?
What's up?
Dope.
Dope. Have you ever heard someone say, it's Gucci?
It's Gucci.
Yeah.
None of my friends.
Nah, it's Gucci. It's Gucci.
It's cool.
Yeah, like, oh, it's all right, man. It's all good.
Okay, that
Like,
makes
it's all
sense.
good.
It's Gucci.
It's Gucci. Yo, B.
Yeah.
You ever have someone say it's Gucci?
Yeah.
Yeah?
Yeah, it's Gucci. I'll never use that term, but it's okay. Now I know what it means.
You won't use it.
No.
Do you have a song that you put on that you like? You groove to, you jam to?
No, not really.
But do you ever hear a song and you're like, oh, this song slaps?
No, I never say that. This song slaps.
Yeah, I
What does
came up with
mean?
that one. Me and Mike Butler say that now.
This song slaps.
Yeah, song slaps.
Never heard it.
You've got to know it's lit.
It's lit.
The market's in your favor.
It's lit. Yeah, it's going good.
Yeah, it's lit.
Fire?
Yeah, did you ever have someone say fire?
I don't know what it means.
Oh, those cheesesteak sandwiches we had for lunch were fire. Yeah, a word maybe I wouldn't know.
Yeah.
That old people use.
I was cruising down the street, but I got the Kembade, so I had to make a right-hand turn.
What does that mean?
So I got you.
You got me on that one for sure.
He was a basketball player, used to block a lot of shots. You block something, so you get the Kembade. So now you learned one.
I'm trying to learn one. Yeah, they're gonna be.
You learned one.
Here's a new word for you. Learned.
Don't die like squirrel.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
All right, yeah, I'll talk to you. There she is. Good, you found the place. Good, you're not stupid. I dated 3 stupid girls in my life. I loved every one of them. So maybe you're the next one. Having a good day? I'm having an awful day. But then it got really good again.
Oh, good.
So I'm feeling all right. Hey, where'd you go to college?
I went to
University of Penn State Community College. You didn't know they had one of those, did you? Yep, the Fighting Rams.
Oh.
I'm one of the Rams now. Do you have any sexual fantasies?
Excuse me?
I do. My parents are watching. They're sitting on a rainbow. I'm a half man, half giraffe, and I'm dressed like Brett Favre. What does that mean?
I don't know.
Yeah, talking about it gets me pretty hot, though. Uh-oh, there it is. His pants just got tighter. I'm a vampire. Can you believe that? Does that make me more mysterious and attractive? Uh-oh, watch yourself. We don't want to get hit by a car. My brother did that once. He can't talk now.
Oh, my God, I'm not serious.
Yeah, pretty serious. Are we getting serious? I think so. How many kids do I want? 5? 11? First meal. Here we go.
That was rude.
This is on you. So much time is flying by.
Yeah.
You're very funny.
Oh, thank you.
Does anybody ever tell you that?
Yeah.
Well, you're not that funny, so don't worry about it.
That's interesting.
Not a big fan of Sam's anymore. But now you know everything about me. I feel like I'm opening up so much. God, I'm scared. This thing's moving so fast.
Yeah.
Oh, wow. I haven't cried like this in a long time. Are these tears? Uh-oh, here we are. Front door. Big first kiss moment.
Oh.
This is just moving a little too quick for me. You're a great kid.
Wolf! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Tony Bat Batista, the John Jay College of Criminal Justice. Number 69, because it's one standard deviation plus 1. And you know, I'm the Bat.
John McLaurin, Wisconsin. Number 2, because I'm Beth's right-hand man.
Vanetta Logan, the Indiana University. Number 3, because that's how many shots of bourbon it takes to make it through the first hour.
I like the looks of that lineup.
Well, Be Mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade. Wolf! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Christy Ross, St. Norbert College, Wisconsin. Number 85, because I like trades that have an 85% probability of success.
Lindsay Grata, University of Illinois at Chicago. Number 14, because that's how many times Tom asked me, where's my lunch?
Tom Sosnoff, State University of New York, Albany. Number 0? Really? You gave me 0 because I like being delta neutral?
I like the looks of that lineup.
Well, Be Mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
let's make this quick. I gotta get going. I make $4.97 every second that I work, and if I don't clear $145,000 by the end of the day, I'm gonna go crazy.
Okay.
It's a cute dress. Where'd you get it?
Oh, thank you. H&M.
$23, 10% off sale.
That's pretty good.
Probably not worth more than $4 now. That's too bad. You got to be aware of these things. Everything has value.
Well, not everything is value.
Everything has value.
I am pretty sure I can name a couple of things that don't have value.
Go ahead, go for it.
Okay, caution.
5 cents.
Feebleness.
That's a sad one. $1.12.
I have a toughie for you.
All right.
What about us?
Me and you?
Yeah, did we have a price?
Yeah. 2 cents. We should have sold that one a long time ago.
2 cents?
Yeah, we could have made a lot of money on that one. Oops.
2 cents?
Yeah,
I wouldn't even pick that up off the street.
Exactly. I think that's more on you than it is on me. Lord knows I'm trying. Hey, you know what, though? There's money to be made everywhere. Take you, for instance. Look at you. You're a young buck. What are you, like 37? I'm joking. How old are you?
I'm 26.
With your genetic makeup, you know, you're not putting on too much weight. I think you could sell those little lady eggs of yours and make quite a profit online. But I wouldn't wait too long. Next month, those would go down big time, especially if you keep eating the way you're eating. I gotta take off. Time is money.
Are you serious?
Yeah. Hey, look, can you get the check on this? I left my wallet in the car. I don't like to carry around bulky things. It slows me down.
Oh, yeah, it is Thursday, February 6th, a little bit after 5 p.m. Central Time, the best time. You know what that means? It's time for Tasty Live's evening show. A little podcast, a little podcast called The Price of Truth, the show where we like to explore the incentives that govern our world. And good God, Miss Molly, good golly, Miss Molly, are there a lot of incentives and a lot of people trying to govern the world. We will sift through it all here in just a bit, but before we do, we should say what's up to the people. Shout out to everybody watching on tastylive.com, as well as Tasty Trade desktop and mobile applications. But if you want to be part of this crew over here, this screen name and comments, both appropriate and otherwise, there's only one place to do it, and that's on the evil Google YouTubes. So head on over there on your interwebs, and find the Tasty Live channel, jump in the chat, and move those phalanges and metacarpals. Why? Because the more active you are in chat, the more they're going to put this 12-hour live stream in front of people. In front of people. I don't know. I don't know if it gets the premium placement in the Google algorithm. 12-hour blocks of streams. But it will... we'll spoof the Google algorithm into putting this in front of as many people as possible. Speaking of the people, we should say what's up to the people. What's up, chat? Are you there? I think mine's disconnected probably. What's going on, everybody out there? As soon as your names pop up, I'll start shouting you out. There you are. I knew you were in here. I don't know why it does that sometimes. Google. What's up, Lone? Andrew, Todd, Brian Watson. Brian Watson, let me shout you out, my friend, is the GOAT when it comes to tags. I'm telling you, you should graduate from my stream, man. You should be over on Joe Rogan somewhere doing the timestamps because you are incredible. Katan, what's going on? Jared. Oh, so many. Absolute beginner. What's up, son? What's up? Weird ass market. Amen to that. Amen to that, brother. Lucas. What's going on? What's up, everybody? Y'all have a Trump there in Singapore? Not really, man. They just Singapore's 60 some years in? You know, it's a baby. It's a teeny tiny baby. And for most of that, it was run by one person who just passed away. I think when I visited the first time in 2015, he passed away. So basically their version of George Washington led the country for a really long time. And they are on, the second or third leader since then? Third? And I don't know if I don't know if it's like a Trump situation. It's a democratic kind of. It's an interesting system. I don't really know how to explain it. It's an interesting system nonetheless. What's happening, baby? What happened to LNG today? I'll take a look at that in just a little bit. It was getting punched. What's going on, everybody? I was trying to, it's the same day for me. No, it's a different day for me, same day for you. I was on this morning with Tom Sosnoff for the morning show. Tony's out doing his thing on a well-deserved vacation, so I had the extreme pleasure of being able to join Tom this morning, and I thought they were trading heavy for most of the day. I think I was right and wrong, I suppose. The S&P 500 traded or finished in positive territory, up 1/3%. The NASDAQ up 0.5%, the outperformer on the day. A little pump fake this morning on the Russell outperforming the NASDAQ, or basically outperforming other majors. The Dow Jones, guess what, everybody? 30 basis points. 28 basis points if we're being specific on the low side. I feel like we're in a simulation. I also don't know what's up with my pattern recognition. Because am I crazy for picking that out? Are we not moving exactly 30 basis points in the Dow 95% of all sessions? That might not be, maybe 85. The Russell down 0.2% as well. So not a great day for the Dow, not a great day for the Russell. The NASDAQ did outperform. And as Scott Sheridan was on going through the top 10 or 15 symbols going through the system this morning, as he was spitting them out, I was typing them in one by one. And all the tech names he was mentioning, they were all positive on the day. And so some part of the back of my brain was going, uh-oh. If you're playing for a rollover, when all the constituents, some of the major constituents were positive, but the index itself, given the way it's jiggered, wasn't necessarily exhibiting the strength. It's only a matter of time before it catches up most of the time. And it did. The NASDAQ outperformed 0.5%. So I think I was wrong. I thought we would end emphatically negative. They looked heavy. Why did they look heavy, in my personal opinion? Just because of the way the dollar was trading. Volatility was muted, so that wasn't really what I thought. I thought we had the chance to get a little bit of an uptick in vol, but it didn't happen. Nobody cared. Brian, you're a good man. Enjoy the Tom show, the Victor and Tom show this morning. That's the Tom show with Victor as a lowly guest host, but it was fun. Super low volume the past couple of days? Huh. All right. I'm not sure how to do anything about that, but I'll try to talk louder if I can. But let's keep cruising. Vol at 1550. I just don't get it. To me, that is just dry tinder waiting to explode higher. Or there isn't a fear in the world in the marketplace, and people are making a big deal. The media's making a big deal. I'm making a big deal out of existing risks in the marketplace, and I need to get on board. Because the market has, I've always made this case that the VIX is sort of like this diffuser. Like when the market knows not what to do with information, VIX goes up. When the market can figure out what to do with a risk, it will transfer that risk or unknown into the correct price of an asset or set of assets. So I'll give you an example. If the market doesn't know what to do with something, VIX explodes, and then over the next couple of days, gold goes higher, maybe interest rates go higher or lower, maybe some particular sector gets discounted, maybe some particular country starts to trade at a premium or region. I've long seen sort of the VIX as sort of this one of the reasons for its mean reversion is you get the initial reaction in VIX because people run for protection and premium to protect their positions. Then they get the opportunity to think through price, to think through second, third order effects, and then they appropriately discount the price of assets, and therefore perhaps the need for protection is muted a bit, or you can monetize your hedges, things of this nature. So I kind of see it that way. And I think while there may be risks in the world, there isn't necessarily a need in some ways. And that's sort of I don't want to say it like that's it. It's what it is, because it's not mathematically, that's not what it is. But I think it's like sort of a way of thinking about it for people that aren't as familiar with VIX, or why would we be low in an environment where there are elevated risks. But I still think, I just don't know that I'm getting paid the appropriate amount to sell out of the money risk. And I know a lot of people here are going to disagree with me, and you probably should, because if you're playing that game, you have to play it consistently. You know what I mean? It's like the rules in blackjack. As soon as you start going away from optimal play, you're probably you're giving edge to the house. But as long as you're staying as optimal as possible, you're giving very little edge to the house. And I think for a lot of people who are selling vol here, you got to be mechanical about what you're doing. I'm not that guy. I trade a little bit differently, for better or for worse. And whether that level of discretion is good or bad, I don't know. Time will tell. I just don't think I'm getting paid. I don't think I'm getting paid to come in here and sell S&P puts with at 6,100 and 15 vol. Call me crazy. So that's not the game I'm going to play. But here's what's going to happen. All you guys that are playing mechanical are going to have a terrific spring and summer. And then I'm going to come in here in the summer, and the show's going to be, oh, hey, welcome, everybody. Can you believe vol's at 12? Statistically, there's a higher probability of that happening. But I don't know. Still, I can't get over the fact that vol at 15 seems cheap. And even if I was going to play an up market, I'd probably play it differently. But that's my style. Contract volume, not the mic. Thank you very much. Okay, that makes a lot more sense. I'll stop screaming into the microphone now. And yeah, I agree. Volume. It's like, where'd everybody go? I guess there's some places in Asia. China's on holiday, right? Are they back? I don't think they're back yet. So I suppose there's less like vol through Asian hours, which sort of probably has this cascading effect. Just need to find a guy named Jerry so you can have a Tom and Jerry show. Zing. Is that even a thing anymore, Tom and Jerry? I'm sure there was probably some reason to boycott that show and take it off the air. It was 4:20 exactly, 4 minutes in Denver. Was it? I can tell. I know some part about your lifestyle, Prince Caspian, and I wish I could partake with you. That's one of the tough parts about being in Singapore. It is a beautiful country filled with beautiful people and safe, orderly city, an efficient government. But there is one glaring downside. When you get on the plane, not that I would ever do this. I don't sell drugs. I just kind of participate in the miracle that is Earth's herbal remedies. But when you get off the plane to land in Singapore, they take the liberty of notifying you that the penalty for getting caught in Singapore for trying to sell or smuggle or distribute any kind of controlled substance is instant death penalty. And it's really funny to look around a plane when they make that announcement and you can tell who's going to Singapore for the first time. Because hearing that out loud, sort of kind of a wild experience. And so you just kind of look at the people's faces and you can tell who's hearing this for the first time. It's kind of funny. Disneyland with the death penalty. Exactly. Singaporean parliamentarians are very well paid too, I heard. Yeah, the ministers all make $1 million plus salaries, if I'm not mistaken. And it's for a reason. I think Lee Kuan Yew, who is that George Washington figure, effectively wanted to create a structure that would be as impervious to corruption as possible. And so how do you perhaps insulate a minister from taking money to do things that would be perhaps against the people, the will of the people, or the best interest of the nation, I should say? You pay them a decent enough salary so that they can act with integrity. I like the concept. It's also an incentive. How do you get some of the smartest and best minds to want to go into that line of work? You pay them a really good salary and offer them a really good lifestyle. And so you encourage some of your best and bright minds to want to go into government or government service. I'm down with that, actually, when it comes to the U.S. I'm actually down with tripling the salary. And it's not, I wouldn't be down for it to pay the existing crop triple their salary. The idea would be you triple the salary in order to encourage really bright minds to want those jobs and positions. And you get a new crop of people that compete against the existing crop. That's sort of, I'm down for that. I get that a bunch of people are not going to be down with that. But what, you want to pay Congress or Senate more money? No, I want different people in Congress and Senate to get paid more money. And then that position to be so competitive that if you're bad at your job, there will be so much competition for you, it'll be hard to keep it. That's what I want. And couple that with no more career, couple that with term limits so we don't get these career politicians. Anyway, I gotta get off on this topic. Anyways, VIX at 1550, so right at 16. Why not live in Thailand? Because I don't make, that's not like I'm married with 2 kids, Tom. That's not the sole focus and purpose of where I go. Can't be where can I smoke a fat blunt. It has to be, schools and safety. That I got to do. The other part is just sort of the bonus or the not bonus. You know what I mean? I can't make my decisions just solely based on where I can light up. But I appreciate your sentiment, Tom, and your enthusiasm for helping me navigate the laws here. You guys are the best. Anyways, 1550, basically the rule of 16, if you've heard of that. If you wanted to know what your expected vol is on a day-over-day basis, I know most of you know this, but you take the square root of the amount of trading days. So there's approximately 252 trading days in a year. You take the square root of that, it's 15 and change. So people round it up to 16. So whatever the VIX is, you divide it by 16, and that is your expected vol on a daily basis. So 1550, where it is now, that means that's your expected vol annually divided by 16. You basically should be expecting about a 1% move or inside of a 1% move 2 out of every 3 days, and perhaps an outlier move or something more than 1% 1 out of every 3 days. But if you're seeing more than 1%, then you were probably underpriced in vol. You go a couple of days, 1%, 1.5%, then we shouldn't be at 15 or 16. And in fairness, it was a quiet day today, right? 0.3% or 0.36% move in the SPX cash and 0.5% in the NDX. It's hard to make a case that vol's underpriced relative to realized volatility of today. But that's not the VIX's job. The VIX is to overstate future realized volatility. And if you're telling me that the market sees future realized volatility as 1% or less, one, God help put sellers, and two, that's going to be a boring next couple of months. You know what I mean? You think you don't like 18 or 20 VIX or spikes up to 21 or 22 or trade disputes or DeepSeek blowing up NVIDIA. You think you don't like that stuff, or it's hard to manage. You get heart palpitations, or you're in the fetal position under your desk. But you only think that until you get into a 12 VIX environment and you're just like, oh, will you move already? Do something. Do anything. Just do something. I mean, even interest rates today, you know, you just want to poke them with a big old stick. Say, are you alive? Front end didn't move much, traded down slightly. So the front end of the curve lifted. Back end didn't do much, but they did rally just a few ticks. I would, kind of. I guess I saw them at 115 and like 22, 30 seconds, something like this. So at least from where they were trading when I last looked at them, they rallied a couple of ticks. So the bottom line is, I think the curve probably flattened out a little bit today. LOL, Victor, get your priorities in line. Oh. That was the thing about Bali too. Bali was just absolutely beautiful. Totally beautiful. I mean, we were exploring old volcanoes that had gone off in the 1960s, completely destroyed villages, but it then had left this area with like this black lava. Hiked up cool mountains, beautiful hot springs where the volcano is heating the water naturally and creating these hot springs. We went to this monkey sanctuary with just God knows how many different species of monkeys. We just walk around in them, next to them, over you. Hundreds of them. No, I mean, there were thousands, but like hundreds at a time. Nobody protecting you. And, but Indonesia is like, just like Singapore when it comes to that stuff. It's like, come on, people, chill, bro. Just chill. That would be like, can you imagine if the simulation went slightly different and like the whole of society was like adamantly against oranges or some other thing that came out of the ground? You know, it's kind of wild that we do this. And for really ridiculous reasons, if you go back and you explore the history, I don't know. Somehow, I get on these kicks, man. I'm sorry. I'm going down the rabbit hole of why we've outlawed these substances. I can get synthetic. I'm behind the outlaw of synthetic substances. I'm down with that. Like I'm not in favor of caffeine and added sugars, meth. But I mean, come on. A leaf, bro. A leaf, chill, son. All right. Not much action in the yield curve. I normally bring up the pictures of the yield curve, but I honestly think, given the muted response here, there's not a real reason. There's not much delta in the last time we looked at those pretty little pictures and where we are now. But you know, I suppose if you're long bonds, it's probably no volatility is good volatility, right? We are now approaching sort of this area of previous support right around 116, and it didn't act. We didn't play around this level for very long, so I wouldn't expect it to be a heavy resistance area. But 116 is a little bit of a line in the sand, and if we can get through it, likely the next area of resistance or previous resistance was right around from 119 to 120 in bonds. And I had this conversation with Chris yesterday. You're equidistant in this move. You could just as easily get to 120 if the cards fall in the right direction as you could be trading at 112, which is bottom end of this range. Do I think I think we've probably overdone it on the everyone getting super excited around the potential of future growth and inflation and the need for Fed hawkishness. I think we completely overdid that. As Ilya and I had been talking about, we're moving back the other way. We're finally getting that trader's bounce that I was hoping for. I don't know if it lasts very long. But man, it was like swimming upstream, waiting for this sort of trader's bounce in bonds. But you have to know it's coming, right? Like we're not going to. It was hard to imagine that these things just straight line it all year long. And at some point, once you got to 4.6 to 4.75 was sort of your first line in the sand. 5 was going to be your second one, and then things had to get sort of crazy, but it was in the cards to get to 5.25. And I think we stopped right before 5%. So we put pressure on anyone that got in early from 4.6 to 4.75. We pressed 5%, and it seems like we're backing off here. I'm just going to throw in front of you the GDP now, because the other day we had this massive revision. For those of you who don't watch this thing, but we were just on February 5th, on February 5th, the GDP now, which is effectively a real-time estimate given current data on where the Atlanta Fed sees GDP. And this is, let's see here. This is first quarter GDP. And it is now 2.9%. We're still above trend at 2%. It's still near 3%. But to put it in context, on February 3rd, it was 3.9%. So that thing dropped 1% in a couple of days. So it's a big difference in how the market is seeing growth. 1% haircut from 4%, which is crazy bonkers upside, down to 3%. And I think that has a little bit to do with what's happening right now in bonds. The flip side is it's sort of interesting, man. You have the Fed sort of talking up the risks of inflation. I forget who it was the other day. I think maybe it was Barkin, maybe it was one of the other ones, but basically talking about how inflation is resurging. Good call. But I think if you can continue to get base effects and downward pressure on inflation, what is that sound? If you continue to get downward pressure on inflation, and then, obviously growth expectations are cooling, why wouldn't bond yields drop? Why wouldn't they drop? I mean, I get the threat of tariffs and increased prices or whatever, but I also think I think people should remember the weightings of CPI. Do I think if maple syrup and the cost of eggs, do I think if that stuff goes up, it's going to be more painful for citizens? Yeah, I do. I think you're going to notice that inflation. But I think if you didn't go through this last couple of years and go, oh, some things matter way more than other things. And would tariffs impact the price of housing? Maybe, but to what extent? Maybe, the cost of lumber coming from Canada, if that's significantly higher, can that juice up the price of the cost of a house enough to move the dial in your month-over-month readings? Maybe, but those are the things that matter. It's sort of unfortunate to say this, but the weightings of what you're paying for at the grocery store at the end of the day, it really doesn't matter as much. And so I think that context you got to keep in mind. Most people need to keep in mind this like knee jerk. I'm not saying it's not inflationary. I'm saying on this tit for tat, if the cost of whiskey goes up, you guess how much impact that's going to have on this reading, and guess when. So the likely scenario is you get the knee-jerk reaction in inflation expectations, because that's what we saw. The tariff scare happened, and forward inflation expectations moved higher. But my bet, if that happens, is the overreaction to inflation expectations is probably going to overreact relative to how the number actually moves in the 6 to 9 months between the time it takes for all that stuff to actually filter through and start showing up in the data. China slapped a 15% import tariff on LNG. I got murdered by like 5% today. All right, that's growth in bonds for just a second. Let me see what you're saying. Wow, Victor, dry times, huh? Yes. You know what's crazy? You guys keep bringing me back to this topic. Clearly, we have similar interests. I'm a better person, like when I can slam a gummy at night. You put the kids down, or maybe just before bedtime, you throw in a gummy. Now we're playing lions, daddy lion and baby lions in the bed. It's the greatest. Reading a bedtime story, then they go to sleep, and then you get the opportunity to reflect on the person you were, the stuff you got angry at, or the stuff that you let impact you in some negative way. You start getting a new appreciation for any like amazing things that happened in the day, or the accomplishments, the moments you had as a family. And then you wake, you go to bed, get a good night's sleep, you wake up refreshed and a better person. It's not about the dry thing, because I don't like go around lit up. Just pop a little gummy at the end of the night. Think about yourself. See yourself in a new light. And then go, I liked that. Tomorrow I'm going to appreciate that more. I didn't like that. I'm not going to do that tomorrow. I'm not going to be that guy tomorrow. So that's why I like it. Without it, I'm just raw dogging life. I'm just raw dogging life, just by myself in a single consciousness. Shan says, then rip the absolute fattest dab. Bro, I can't. I don't know if you missed that part of the conversation. I cannot. Catan says, come on over, Victor. We get the pizza too. Now, see, you had me at the first part, but like, I try not to do the pizza stuff anymore, I'm like, just fruits. I'm trying to do the one meal a day and just fruits around it. So I wake up, eat fruit, maybe do like a light lunch, but mostly fruit, and then try to do the one meal a day in the evening. I can't mess around with pizza or snacks or any of that stuff right now. I'm on a mission. Perfect. Lone says, perfect way to end the day. Lone, I end my day, a hot cup of tea, a good book, and a fat ass joint. What are you reading right now, Lone? Actually, everybody, I'm curious. What are you guys reading right now? I'm not going to comment on all the books, but I'll go back and I'll read it later. I'm just curious. Are long bonds kind of consensus now? Ooh, that's a good question. Kind of looks like they are pressing resistance. That's really interesting question. I don't know. I think it probably depends. Around here, it probably seems like consensus. I would say in the macro world of people that I listen to or speak to, I don't think so. I think higher yields is probably the consensus. But I just think everybody knows, everybody kind of feels like you don't go in a straight direction. You don't go in a straight line. So I don't know. That's a really good question, son. So I'd have to go look at the positioning data. I'd have to go look at some of the survey data, which I haven't. But I will do that, and hopefully I'll put together something for next week. Really interesting question. Are bonds kind of consensus now? So the way that I answer that question, by the way, son, is I don't just give you my anecdotal take. What I would do is I would go look at positioning data on ZB and ZN, and you can kind of see the Z-score of positioning data. I look at vol, and then I look at surveys too. And I don't put a lot of weight into surveys, but I do think they help to tell a bigger, broader picture of when people are on one side of expectations and the trade. So the real answer, son, is I'm not going to shoot for the hip on that, and I love the question. Let me get back to you. A couple of movers before we get into some other stuff here. Palantir, what a freaking day. What a powerhouse. 9.8% to the upside. And don't say I didn't tell you. Don't say I didn't tell you. Anyone that's been watching me for a while, and every once in a while you get lucky. But, I mean, it's like I'm not excited about this company going to where it goes. I'm not excited about that future, but I told you guys, emotional hedge. Emotional hedge. With any reduced freedoms or lack of transparency, lack of privacy that you're going to get as this company ascends and has more private and government contracts, you probably want to get paid off as a sacrifice for that privacy and transparency, lack of transparency. Don't say I didn't tell you. But now, who's reading Thinking in Bets? Catan? Good book. She's written a few, right? I think that was her first one. She was so successful. She wrote another one. Annie Duke, poker player, who wrote a book, Thinking in Bets. But it's sort of what we do here, right? I think most people, when they start out in the trading world, they think about the world binary, up and down, long stock. They're basically long only, and they think, what stock should I buy? That's the question they ask, and it tells you how they think. It tells you sort of what level of consciousness they have with regards to the market. What stocks should I buy? That's where you start. Where you might head after a while. My level of consciousness, which I'm sure there are many more levels above this, is what do you think about XYZ? Meaning you could have a positive stance, a neutral stance, a negative stance. You could have a first order direct opinion. You could have a second order, third order opinion. So yeah, anyways, I like that book because it talks about sort of thinking about the world through the same lens that we think about things, through probability distribution. And so for her, I think poker taught her to think about life in this probability distribution, and for her it helped to become successful. She believes it can help you to become successful. I believe the same thing, that markets, not poker, same idea, but markets taught me to think in probability distribution, and that taught me to think in probability distribution in all parts of my life. Whether I'm a parent and I'm trying to handicap the risk of, my kid bonking his head on the corner of a table or something like this. It's not binary. It's like the range of risks. Whether it's to take a big leap of faith from a career point of view or perspective, take a big leap of faith when it comes to moving. I've done crazy stuff in my life, and all of the time it's sort of thinking about the outcomes as ranges of possibilities. Anyways, I don't know how this turned into endorsing Annie Duke's book, but good one. You guys have got some good books out there. Eric Simmons reading The Real Anthony Fauci. You're going to be a different person on the other side of that book. You're going to see the whole world in a completely new light. Congratulations. Another good one along the same lines is Deception by Rand Paul. It's sort of like it's the same idea, but RFK wrote that book sort of in the midst of everything that was going on. So it was a bunch of pretext. And then Deception by Rand Paul is sort of like everything after, which is an interesting read as well. All right, let's keep cruising here. Good stuff from you guys. Anyway, Palantir just absolute insane to the upside at 111.28. I would not be chasing it here. I'll put it this way. I am not and would not be chasing it here. That doesn't mean it can't go higher. It just means I don't know that I would chase it here. And if I was going to play this, I would do it with the minimal amount of risk possible. So like upside call spreads, and I would definitely spread it off because the upside implied vol, because retail traders are going after this thing like rabid dogs right now. And sometimes when that side of the boat gets too heavy, it's not necessarily a good sign. So front month implied vol right around anchored from the mid 60s to 70%, which is about anywhere from $8 to $12 move over the next 30 days. That's about $15 over the next 30 days. So I'd play that as your range, maybe double it and play that as your range. So the potential of 30. So if you put a position on and you can't stomach a $30 downside move, that position might be too big, or the risk you have on might be too big. So what I might do is just put on some little cheap upside call spread, go out of the money, put on some cheap upside call spread. Why? Because you're selling that out of the money call against your out of the money call to help offset some of the dumb call skew that's in here. Because people are paying up for out of the money calls because that's what us retail gens do. If something moves high, the bet is it's going even higher. Everyone sees it's up 10%, so they bet it goes up even higher today. On a super short-term basis, we're already closed here. But would you bet up or down tomorrow? Tomorrow, I'd bet down. So if I was going to get long and you get weak tomorrow, I'd bet long. If you get weakness tomorrow, you bet up tomorrow. If you're so degenerate that you think this thing goes higher, bet it long into weakness and do it with an upside call spread where you have very little risk. Upside out of the money call spread, you have very little upside risk. And if for some reason this thing does keep cruising higher, you get paid. But I wouldn't chase. I personally would not chase this thing. It's already 60. I said this morning, and I think CNBC ran this thing. I don't make a habit of, I've got a lot of respect for CNBC, and they let me come on and talk sometimes. I don't know why. I got a lot of respect for them, but I do think sometimes the articles, you got to be careful. You got to be careful listening to the signal from the articles. That's all I'll say. Anyways, but it did put out that the price to sales ratio in Palantir is like 60, and the next closest in the S&P 500 is 30, and that's a company called Texas Pacific Land. It's an energy company. And then the next one after that is Intuitive Surgical. It has a price to sales ratio of 21. So these companies, it is more than double the next closest price to sales ratio. That's not always bad. It just means the market is anticipating more sales, and this company could grow into its price to sales ratio. That's possible. But a lot of good news is priced in right now. All right, let's see what's out of the money. Broken ring butterflies on Palantir. I like that too. That RuPaul guy, Rand Paul, my friend. Should Elon leave Tesla, Catan? I think you ripped a big spliff before asking that question. Why would you even ask that? Of course not. Of course not. Why would he? People say this all the time. You know what? people tend to talk, they project themselves. So when people talk about, like, Elon running so many different companies, here's what will happen. As long as that's going good, nobody will say a damn thing about him running multiple companies. They didn't say anything about Jack Dorsey when it was going okay, and it was mind-boggling, the idea that a person can run 2 publicly traded companies. But when it's going well, they don't say anything. Whenever there's a hiccup, they go back to the same talking points. And the talking point is, he's got his hands in too many things. He needs to focus. And they always say that same thing. But I suppose my question back would be like, who can they announce is running Tesla? If you're a Tesla shareholder, who could they announce who you'll be just as excited, if not more excited, and you wouldn't dump part of your position? Can you pick a person? And if the answer to that is no, maybe 25% of Elon's time is worth 100% of almost everyone else's. And I also think because you can't imagine yourself running 1 company or 2 companies, let alone 5 companies or however many he's leading right now, that doesn't mean other people cannot. And perhaps he's the richest man in the world, or one of them, the public, there are others. He makes this claim that Putin's richer than him. Because even though they're not his assets, they're some oligarch's assets, they're really his. But anyways, the point is, perhaps you get to that place because you're really good at time management. You're really good at priority. You're really good at sort of seeing a matrix that other people cannot, and figuring out not only how to solve problems, but when to do them, when to delegate them, who to delegate them to, how to hire really well. He probably created a really good team. So anyways, I don't want to go so far on this, but no, I don't think he should leave. And I don't think he's problematic as the leader of Tesla. Do I think he's impaired the brand equity he's built with his existing customer base? Yes. Do I think he's opened up the brand to a group who wouldn't have previously held the brand in high esteem? I think he has. I don't know the net effect of those 2 things. And that's why I think it's left out of the conversation. Has he offended previous brand owners? I think there's no question about that. The only question is, how many new buyers has he opened himself up to? And is that offsetting? And does it even matter? Like a rising tide lifts all boats. If we're headed to 3% growth, I don't know if it matters. If we're not headed to that world, if we're headed to trade disputes, less growth and less money dollar availability, I don't think it matters, quite frankly, because in that case, we're going to have a lower tide across the board. What do we think about crypto being pretty heavy against stocks at all-time highs? Chris asked this question the other day. I think stocks are so damn stubborn. It takes them longer. That's one. I would bet. I'm betting down as sort of this binary, and thinking about this in a binary way. But I also think Bitcoin rallied in the same way like Tesla had this initial upside momentum, and it was really election fueled. It was the possibility of Trump being so close to the presidency and policy making. But at some point, the optimism ends and you sort of have to price what's the actual impact. Now that your initial demand for the instrument, for the security is over, now it's like, okay, let's go do some pricing. Let's go do some work on this. And we're already $100 off the high in Tesla. It doesn't feel like it, but we are. It might not feel like it. I'm sure it does for some. In the case of Bitcoin, I think it's fairly similar, right? There is no Bitcoin reserve. There was a commission to explore whether or not we should create a Bitcoin reserve. So I think in some ways, you know, replacing Gary Gensler, going a different direction with the SEC is probably net positive. In other ways, some of the campaign promises are probably going to get lost in this commission, right? Is the commission going to come back and say, yes, you definitely should? No, that's not how commissions work, right? They give a wishy-washy, mealy-mouthed answer, and that'll ultimately leave it up to the main stakeholder decision maker. And so this is probably a big kick the can moment on the whole Bitcoin the whole holding Bitcoin in reserve at the Treasury. So, you know, I think maybe some of that initial excitement and upside of sort of the first crypto president or whatever the moniker was, I think probably some of that's gone. And that comes out of the price. And so the election premium, that Trump trade, I think it was unwound a little bit over the last couple of weeks. That's what I think. Do I see it as anything more than that? I don't know. It's probably too early to call. I think with Bitcoin at 96, I don't see it as some sort of broken. It's like broken. It's a new barometer for risk assessment. I don't see it at 96. We've been here before. We've been at 96. We touched 90 a few times, and I think we're probably lower end. We're getting towards the lower end of that range. But until we break the range, I don't see it as signaling anything about risk assessment. I think we're in a 95 to 105 range for the last 3 months. And so it shouldn't surprise anybody that we're at the lower end of the range. So don't think too much into it, is kind of what I think. I swear I'm trying, but I just don't get excited by any crypto. I don't think anything's worth buying except Bitcoin. I think the other stuff, I don't know, fun might be the wrong word. I have not traded anything else except Bitcoin, Ethereum, and a stable coin, USDC. And I do not get why I would. Even Ethereum to me is sort of out there. I don't really, I get the value proposition in theory, but without the scarcity, I don't really get why I would be too excited about it. Ethereum is just a direct network play. So in the same way that Facebook has value because there's a network effect, trading Ethereum has value because of its network and the values extracted directly from the network. But that value can be diluted, so I don't really get why I would want to trade a non-centralized asset versus trade something that's centralized. I'd rather trade something with centralized clearing than not, if I'm going to go that direction, where you can dilute me as a equity holder. Bitcoin, I get. I think I do. USDCs, I get. I get to hold my money in my possession without you being able to lend it out, with the possibility that I show up to take out my money and you say we don't got it. I know that's a very low, we're past the, what's that Christmas movie? Every time a blah, 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 an angel gets its wings. What is that movie that's on the Great Depression? Whatever that movie is. It's a Wonderful Life. It's a Wonderful Life. I know we're likely past a world of bank runs, right? Because with the click of a button, there's more money to deposit into somebody's account to make the number look like it's there, which is really all people care about. You know, we're probably mostly past a world of like bank runs. Famous last words. But I still like the idea of having that money in my possession, which probably, when I think about it, is probably like a crazy, because even if it's in my possession, it can still be diluted right? I can still be inflated away even if it's in my possession. So what are the odds that if you just put it in Bank of America, well, if they have some liquidity issue, they're just going to get loaded up. Or if you put your money in JP Morgan, they have some liquidity issue, God forbid, they push a button, they've inflated all of our money away, but everyone's got what they need. So what's the point of USDC? I don't know. If you consider that some banking institutions are too big to fail, I don't really know now that I think about it. Tell me what you think. That was a long way of saying I get Bitcoin and the value proposition. I can even, in some cases, understand USDC as just a potential diversifier against a low probability outcome. But everything else I don't get. It's just it is so clearly a game of greater fool. Some people would say that same thing about Bitcoin, and I don't know. I'm not going to argue against that. But everything else is so clearly a game of greater fools. Anyways, crude oil off of its high over the last 2 weeks from $80 down to $70. That's probably what you want to see. The current administration wants to see it. Probably a $50 handle in a lot of this stuff. Natural gas down a little bit lower. Let's look at some of the movers here for the day. Beyond Palantir. Don't worry. Let's bring up. Here we go. All right. Whoa. Skyworks, Huntington got murdered. Ford got killed today, down 7.5%. This is sort of an interesting one, Ford. Because I've always thought of these companies, they're kind of too big to fail. They were like some of the original too big to fails. Just because there were so many unionized auto workers, it needed their voting block. And there's still a decent amount. And I think they still probably are, even with Trump. They still probably are. Do you take a bet here? Do you take a flyer on Ford? Tell me what you guys think. Is it cheap enough to take a flyer on Ford? Every once in a while, people hate me for it, but every once in a while, Ford and GM get so cheap that I will buy them on a relative value trade, and all the Tesla stands and the Elon stands, they come after me. They absolutely hate it. Oh, are you kidding, bro? How could you recommend, or why would you buy GM and Ford? Don't you understand Tesla's the future, and their cost structure and blah blah blah? And they're always wrong. They're always wrong. Eventually, GM and Ford do this catch-up trade, and it is not a bet on GM or Ford winning this sort of future race. It's just Ford and GM are too big to fail, and whenever they look dire, it's probably an interesting bet because they have hundreds of thousands of people that your politicians need their vote, so they have to throw bones over there. Worst case scenario, there will be liquidity. I don't know if it's super cheap right now. It's not like pandemic scare cheap at $4, but at $9, is it cheap enough for us to take a little flyer on Ford and GM? Maybe not GM, maybe Ford. What do you guys think? Am I crazy? Let's see what you guys are saying. Vic, holy God, Major C coded. I'm going to read this, but you just took us in a wild direction, my friend. Vic, I don't know if you want me to read this, but I'm going to do it anyway. Vic, I've done X, meth, heroin, fentanyl, acid, etc. Mostly meth, though, and I had a good time. I got a kid now, though, so I can't do it no more. Now I slang. You're effing with me. Now I slang 0 DTEs to get my fix. You're totally effing with me. Ben says 7.8% dividend. Brian Watson says agree on GM and Ford. I don't know. I think I just talked myself into going long Ford. And I sort of hate myself for doing that. But here's the thing about those factories. They can easily be repurposed. If you catch what I'm saying. Repurposed. Isn't that what we did back during the World War days? Repurposed our manufacturing, stopped making cars and washing machines and stuff like this. We started making bombs and munitions. That's the thing about those factories. They can be easily repurposed. Nah, I'd rather take a flyer on Rivian than Ford. I own Rivian too. Oh gosh, that's not it. I think it's this one. I think I own Rivian. I think I own a little bit. But I actually think this probably died. I think the opportunity for this, I'm guessing here. I'm gonna look at a daily chart, and I bet on the election this trade died. Watch, let's see. Yeah, look at this. Look at this slide into the election. It's recovered some since, which is interesting. So I might be completely wrong, but my thought was that if Trump lost the election, I thought Rivian was a no-brainer. Because I thought, given how the incumbent administration felt about Elon, they were going to make his life hell for 4 years, and they would likely prop up a lot of the domestic competitors. So Rivian, Lucid, and a handful of others. So I owned those as a hedge against what could happen if Trump loses. And I think I still own it. I didn't have a bunch of expectations for it. I'm kind of surprised to see it's. I haven't looked at this since the election. I'm surprised to see the upside. Those factories can produce the robots that will replace us. I think that's actually probably a more likely outcome, right? We stop building Tesla cars, and he starts building those Tesla robots. Oh, God. All right. We've made it to the end, so now I can talk crazy. There's a part of me that doesn't understand why we're all... I do understand why, right? Because the incentive structure says you all have to feed your families. But we are all currently in a big prisoner's dilemma, which is we're all acting in individual self-interest to pay the mortgage, to put food on the table, to pay the daycare, pay for school, pay for trips, whatever your thing is, avocado toast, coffee, whatever your thing is. We're acting in individual self-interest. And but prisoner's dilemma says people need to band together. And I just don't get how people don't understand that once you create both intelligence work and physical labor, and you put those two things in one entity that costs $20,000 to manufacture, I don't understand how people don't see that outcome, what that means. And people can wax poetic about some like utopia that brings us all to. It'll bring some to utopia. It'll bring capital class utopia. But I think what happens to everybody else is totally unknown, and nobody's asking for or demanding a plan. And they're just marching towards this eventuality. I do not understand it. It's like moss to a flame. Everybody's going towards this light. They all know that that's where we're headed. Our smartest, brightest engineers can get paid the more they advance us towards this. all of you log into ChatGPT because you think it'll save you time or give you added convenience, thereby helping to train these models, thereby eventually helping to, it's like, if everyone knew game theory, maybe we'd take a step back. And people will go, okay, I understand what happens when I use this thing. And the short-term convenience does not outweigh the long-term potential risk. So I'm going to stop using this, and he's going to stop using this, and she's going to stop using this, and I'm going to stop developing this, and I'm not going to take one step further until we develop some sort of plan that all of us can get behind. I know what I'm saying is sort of impractical and improbable, which is why it doesn't happen. But I'm sort of fascinated by this sort of weird momentum of society pushing towards this eventuality, and we all don't really know what happens when it comes. Nobody knows. Some people are better prepared than others, therefore some are less fearful than others. Some people don't really have a choice or think they can't impact the outcome. So we just, as a society, are floating towards this outcome. Most of you, if I had to bet, you don't want it either. There's a handful of strategic opportunists that are like, this is coming, so let me figure out how to make money off of it or position myself well. And there's no real thought to whether or not you want the outcome or the outcome's going to be net positive, net negative. It's just, it is what it is. So let me figure out how to monetize this. That's probably, I don't know. I'm sorry, I'm just kind of ranting now, but I cannot get over this weird feeling that we're all moving in unison as a collective society. And I also can't shake the feeling it's not the outcome that most of us want. Most. Nobody's doing anything or saying anything. It's just sort of this monotonous glide. Anyways, all right. And by the way, I'm not scared. It's not like I'm scared of the future. I'm not scared of robots. I'm not even scared of intelligence. What I'm saying is once you give the power away, you lose leverage as a labor class. Your leverage is in your labor. It's the only thing you ever had. It's in your labor and in the potential of your dissatisfaction leading to a violent revolt. It's the threat of violence. Those are the two things that the labor class has as leverage in a constant negotiation that forms society and reforms society. You're about to lose both of them. You're going to lose your value as a labor participant. You're going to lose your value as a knowledge worker. And with AI and drones and robot police, the threat of you revolting is like, what are you going to do? And nobody has an issue with this. To me, it's wild. Nobody cares. I'm sorry. Son says, I love AI. I use Grok daily. I know. And you liked Facebook too, right? Now somebody's got all your data. And some of you liked 23andMe to find out you were 1/8 Swahili or something like that. Now somebody's got all your biometrics. The point is there is always a trade-off. There is a convenience trade-off for some piece of information or privacy or control. And at some point, my question is, when does everybody wake up to the trade-offs? That maybe it's not worth that swipe or that dopamine hit because somebody liked your photo. When do people wake up to that? And that's when it gets interesting. But maybe everybody's whacked out on whatever their 7 deadly sin is. Whatever your thing is right now, you can get a ton of it through your phone. Whatever your method of dealing or coping or getting that dopamine hit, wherever that's coming from, social media just amplifies it. You can get infinite amounts of whatever it is. delivered to your doorstep. And as long as everyone's dopamined out, I think we just keep marching towards this eventuality. I'm sorry. I don't know why I did this. Victor, I think you might be overestimating the intelligence level of the general American public, says Donna. You are far, far above the average. I'm definitely not. And I don't think I'm overestimating the intelligence level. I just think a lot of people don't have time. And so they're following their incentive structures. I don't think I'm more intelligent than people. I think I took a year off work and I had a chance to just think about stuff for a year. And most people don't get that opportunity. I think with that opportunity, I think people start seeing a lot of things differently. Major coded, true story, 4 years sober. All right, man. Well, I didn't mean to make a joke out of it. My apologies. And I appreciate you sharing. Congratulations on 4 years, my friend. And 0 DTEs are a hell of a way to get your fix. and better that than anything else. So Matrix Decoded, I salute you, my friend. Congratulations. It's got to feel really good. I can only imagine. And thank you for sharing. Hey, if I could press a button and go caveman, I would. Here's the wildest thing. The wildest thing is when you stop buying shit and going for the short-term convenience and you take, let's say, you just make your own salsa. The amount of gratification you get from not going fast, going slow, knowing what's in your food and then getting the outcome, even though it took you an hour and a half to make something so simple, you get way more gratification from it. So the irony is way more convenience, less gratification, less sense of purpose. So are we living in a world with a bunch of cool stuff? Kinda. But is anyone, I don't know. I think the people that are happiest probably aren't just going around thinking they can buy their way to it. Like the more shit I order on Amazon, the happier I'm going to be. I'm guaranteeing the people that probably score happiest on a happiness index, I guarantee they don't think anything like that. Google ex-workers warned of some of this. They made a documentary, says Joshua. I haven't seen it. Can you put the title in here? I'm going to go live in a van down by the river. Shout out to, or RIP, Chris Farley, one of the GOATs. I work in live events. Robots are rigging moving lights on trusses 30 feet in the air or sound systems. I'm safe for a bit longer, I think, says Jared. I know, bro. We all know it's coming too. We are trying to convince ourselves that it's not coming. You know what I mean? And there are a few people in powerful positions that are saying the same, but we know. Look at the labor force participation rate since the internet and the smartphone. Go look at it. And they can tout the unemployment rate all they want because they think people are stupid. Go look at the labor force participation rate since the internet. And you're crazy if you think hundreds of thousands of these things are not going to create massive structural unemployment. You're crazy. You're out of your mind. You're living in a fantasy world. Labor has an opportunity to advance themselves, such as I have, learn a new skill, prove that you are competent, and then raise your rate. I've been doing it for 10 years, thank God. So, Jared, I agree with you 100%. I agree that, I'm not one of those guys who just sits around and goes, this isn't fair. I want to think through solutions. And I do agree. You have to constantly improve yourself to make yourself more marketable if your game is selling wage for earnings. Some people, that's not their game, right? They use capital to make capital, not wages. But if that's your game, I agree. The only thing I'm saying, Jared, is if available jobs shrink, you can everyone can be adding skills and there's still going to be losers from that. So I'm sort of talking at a macro level, not at an individual level. At the individual level, you're forced to compete, and that's what I'm saying. The incentive structures make you have to use ChatGPT because you're trying to be competitive, you're trying to save time, you're trying to have the best output that gets you ahead, that gets you the promotion, that gets you whatever. So your individual incentive structure says, I must use the tools and technology available to me to make me the most productive. I'm totally with you on that. But I'm also saying at a macro level, if it's cheaper to hire a thing for $25,000 and I don't have to, I can work this thing 24/7. I just have to pay its maintenance costs. I don't have to care about HR because this thing's not going to come complaining. It's not going to take sick days. You get what I'm saying? Like at some level, then there are going to be less of those types of jobs. So regardless of those people who have worked to add skills, there's going to be losers out of that pool. And I'm talking about the macro level of the incentive structure that we're likely creating, not the individual, you need to work hard and add more skills. I get